Tamil Nadu, West Bengal and Kerala will be a part of phase 2 of the drive. Good morning, you're watching Power Breakfast here on CNBC-TV18 in the Mumbai News Centre. I'm Hormuz Fatakia. It's the monthly expiry session of the NSE contracts. It's an earnings heavy day, lots of global cues to track as well. We'll bring you all of that in the next 30 minutes. But first start off with how the Asian markets are trading. And unlike yesterday's Wall Street session, the same can't be said for the Asian indices today. It's a bit of a red screen that you're seeing, barring the Taiwanese index, which is just above the flat line. Most of the other indices are trading with losses. The Hang Seng down 0.25%, but the Nikkei, after crossing 50,000 yesterday, seeing some profit booking, 0.4% lower. The Kospi also witnessing some profit booking today, 1.5% down on the South Korean benchmark. And the Shanghai Composite 2 is trading with gains or with losses of just around about 0.25%. So most of the Asian indices are trading lower this morning, failing to pick up on how Wall Street ended overnight. We'll get to that in just a bit, but pull up the GIFT Nifty. That will give you an idea of how our own markets are likely to start off. Well, a 42-point uptick. So if that goes as per plan, we would most likely open above the mark of 26,000 at the start of the monthly expiry trading session. But to set you up for today's trade, we have our research team here with the trade setup, the stocks that you need to keep an eye out for, and the setup on the F&O side of things as well. Firstly, Vinny joins in to get all the market cues that you need to watch out for. Vinny, good morning. What is on your radar this morning?
Hi, good morning, Horma. So firstly, just let me take you all through what happened in the US market. Indications that are coming in positive start as of now. Dow Jones, S&P 500, and Nasdaq, all of them managed to close at those record high levels. Hopes are of that US-China trade deal that will come in through the week, plus a lot more trade deals as well, as President Trump is meeting, his Japanese counterpart as well, the South Korean counterpart through the week. So that will be important to watch out for. Also, Donald Trump did make a comment saying that, he feels good about the deal with China. So all hopes are going to be on that one. And obviously, when you're seeing in terms of the domestic flows that have come in, FII flows, they've actually been a seller in yesterday's trading session. 55 crores of sell coming in from FIIs, while DIs were continued to be a buyers for 2,400 crores approximately. Now, important cues that we're keeping an eye out on, the 2-day FOMC meet that starts today. So 2 days, we'll watch out for that. IIP data on the domestic front, keep an eye out on that. We have AB Capital block deal that will be taking place today. So individual stock move that we could see coming in here. And a lot of earnings today. We have Adani Green Energy, Adani Total Gas. Then we have Happiest Minds, Nugent Software, GSPL, Mahindra and Mahindra Financial Services, TVS Motors, among some of the important ones that we're keeping an eye out on. Do not forget, in terms of yesterday's trading session, Nifty intraday did cross the 26,000 mark. So it will be important to see in today's day, will we continue that momentum? Also, most of these frontline indices were seeing gains. Broader end of the market also did see gains, but the breadth of the market, that was very neutral. Nifty implied open indicating a 42-point uptick like you mentioned. Keep an eye out on that one.
Indeed. Vinny, thank you for that update. Over to Gaurav now, who will list out the stocks that you need to keep an eye out for today. Gaurav, good morning. What's on your list?
Well, let's talk about ISCL. A good set of number because net profit that came in at around 7,610. It was higher than our expectation, and margins, those were also at around 8.2% higher than what we had estimated at 7.4%. Sona BLW, again, good set of number what we saw here, because net profit that came in at around 173 crores, which was higher than our estimates, and at the same time margins also were higher than our own estimates. Apart from that, JK Tires, if you look at the results, net profit that increased almost by 64% on a year-on-year basis. Now it stands at around 221 crores. PNB Housing Finance, good set of number is what we saw. NIM compression was something which is a hiccup, but at the same time, net profit that increased almost by 33% on a year-on-year basis. Canara Robeco, AMC, the recently listed stock, if you look at the result here, now profit that has declined almost by 3% on a year-on-year basis, so stable quarter is what we can call it. Indus Tower, when we look at net profit, that declined almost by 17%, but what remained positive is the EBITDA margin. We have seen expansion sequentially, so that is something key positive here. Apart from that, when we talk about Mahindra Logistics, there we saw company reporting net losses once again on a year-on-year basis at around 10.4 crores. And lastly, let's also focus on Bata, because we saw net profit declining almost by 73% on a year-on-year basis. Apart from that, RVNL, now this company has recently won an order worth 165 crores. Dilip Buildcon, this company was declared as L1 for an order worth 879 crores. And lastly, as Vinny mentioned earlier, AB Capital will be on our radar because the stock price is going to happen, the deal is going to happen at around 304.55 rupees per share as indicated. So definitely watching out on all these stocks in a trade today.
Gaurav, thank you for all of those stocks that you need to keep an eye out for. These are just earnings reactions, and there's a whole host of earnings coming out later in the day as well. Lastly, Sudarshan joins in with cues from the F&O space on today's monthly expiry session for the NSE contract. Sudarshan, good morning.
Good morning, Harmas. So historically, October has always been the month which has seen a big move. So this time also we have seen Nifty moving almost 5% higher in this series. But for today, two contrasting cues that we are getting. FIs have turned sellers again, and despite being the long exposure remaining around 25 to 26%. But the options data is indicating a range for Nifty that is likely to be in the range of 26,000 to 26,300. So we have to see exactly do FIs or our options data, whichever turns out correct, that we'll get to know in the near term. But as far as today is concerned, GIFT Nifty is indicating a start in the green for our market. In all probability, Nifty will open about 26,000. Yesterday on the flows front, FIs have sold almost 56 crore, while DIs have bought more than rupees 2,400 crore in the index futures. Two FIs have sold more than rupees 240 crore. FIs long exposure remains around 26%. They have added long positions, but the worst part is they have also added short positions of more than 5,300 contracts. As I told you in the options data, 25,900 put and 26,000 put have seen huge increase in the open interest, but at the same time, premium has seen a sharp fall. On the call side, 26,500 call was very active. So support for Nifty remains around 25,720, resistance 26,100. Two stocks remain in the band. Those are SAIL and Saman Capital. Keep an eye on two stocks, Indian Bank and Exide. Both these stocks are seeing fresh longs.
Indeed, keep an eye out on both of these names, Saman Capital and SAIL, remaining in the F&O ban. Sudarshan, thank you for that update. Now, the government has announced that 6 companies have received approvals under the government's electronics components manufacturing scheme. Now, the investment that has been approved for the company stands at over 5,530 crore rupees. Now, Union Minister Ashwini Vaishnav has stated that with these approvals, India will save close to 20,000 crore rupees on its import bill. Listen into what he had to say.
It's about 18-20,000 crore rupees import bill will be saved by these plants. But then there are many more plants which are in the pipeline. As you are aware, 249 applications are there, and we are working day and night to complete the entire process at the earliest possible time.
Let's also now listen into what the management of Syrma SGS had to say on this scheme and their demand outlook going forward.
We have filed 4 applications. The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity, with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month, and by about December 26, we expect the trial productions to begin. The architects have been finalized, the contractors are being finalized, and we were waiting for this approval, and I think we would be there by December 26 with the trial production. And I think this is one of the most significant steps of the government to bring India onto the component manufacturing map. Currently, we are only doing assembly of electronic products. And with the PCB and other components which are being approved, the polyester films and other things, I think in coming years, India will become a hub of component manufacturing. I think this is a very, very commendable step that you move up the value chain and from assembly to components to materials, and as the minister was saying, to the machinery and design. I think this is a long journey. We have just taken the first few baby steps of electronic assembly and now into the components.
I just want to get a sense of these product categories that you've entered. You're clearly committed to that. You've announced a big plant as well in Andhra Pradesh. What picture can you tell us in terms of the demand outlook, number one, and number two, competition that you may continue to face as far as imports are concerned?
See, competition would be there, but currently India imports about 90% of its PCB demand. At current levels, the PCB demand is approximately $5 billion, which translates into 45,000 crores. We import about 40,000 and make 5,000. Now, PCBs typically have a turnover ratio of 1 to 1.3x of the capex. So if the three companies which have been approved today have a cumulative capex of about 3,000 crores, what we would be supplying is 4,000 crores, and that's what the minister said. So I think the demand will be there, the global demand will be there, but we have to be working very efficiently, quality, scale, to meet the global demand. And I have no doubts in my mind, we have been exporting for the last 30 years to Europe and America electronic products. And our exports are approximately, last year they were 860 crores. And I think our company is well poised to enter the component export market in times to come.
In fact, Ashmit also spoke to the management of Keynes Technologies on this scheme. Listen to what they had to say.
Manufacturing is concerned, our land we have acquired, our building has come up already. We are almost in the completion stage. Whereas machinery we have ordered, it is in the pipeline. So considering all these things, to meet the timeline what ministry is expecting, we will be there well within the timeline.
Take a short break here on Power Breakfast. On the other side, all the global updates. Stay tuned. We'll be right back. Welcome back. It was a very strong session on Monday for the Wall Street indices, all of them ending at a record high. The Dow Jones gaining nearly 350 points. The S&P 500 is now very close to that 6,900 mark now. And the Nasdaq also saw gains of close to 2%. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major averages in Monday's trade, all hitting new record highs after the U.S. and China signaled progress on trade talks over the weekend. The Dow gained 337, the S&P 500 up 83, the tech-heavy Nasdaq added 433. Amazon's planning on cutting as many as 30,000 corporate jobs starting Tuesday. That's according to Reuters, which reports the company is looking to reduce its workforce after overhiring during the peak of the pandemic. Amazon employs more than 1.5 million people, but these cuts would amount to about 10% of the corporate workforce, the largest layoff since about 27,000 jobs were eliminated starting in late 2022. Shares of Qualcomm surged more than 11% on Monday after announcing it'll produce new AI chips. The move's putting Qualcomm in direct competition with chip-making giant NVIDIA. In the past, Qualcomm has focused mostly on semiconductors for mobile devices, but it's trying to break into the exploding market for AI software and services. That's what's happening here in the U.S. Back to you in Mumbai.
Kate Rogers, thank you for that update. Now, the U.S. Federal Reserve's two-day policy meet begins today. The investors are widely anticipating a quarter-point cut in interest rates this time around on the back of signs of a slowdown in the job market and easing domestic prices. Economists are also expecting the Fed to usher in a third cut in its December meeting as well. Now, let's listen in to what former Fed official Loretta Mester had to say on this.
The CPI report for September is not going to dissuade the Fed from cutting 25 basis point at the meeting. But, it really isn't a strong case. You do have employment weakening and risk to the downside on that part of the mandate. And you have the government shutdown effect on federal workers being a new factor for this quarter. So I think the Fed will take another insurance cut, but inflation risks are still to the upside. And I think we shouldn't lose sight of that. And the Fed shouldn't lose sight of that part of the mandate. It's really important for them to keep both of those, employment and inflation, in mind, because 3%, is still well above 2%, the goal. They're going to have to keep policy a bit restrictive if they want to get back to 2%, which I know they're aiming for.
Meanwhile, Citi Wealth's Kate Moore is of the view that big earnings reports from this week are going to be of higher importance to the market than the U.S. Fed's interest rate decision. Listen in.
One of the key things that we've anchored on has been that, most of the return this year has been driven by earnings. And this week, because of the big tech names, the mega caps that everyone has really anchored in their portfolios, are reporting, I think it's going to be really, really important for sentiment. Perhaps as important for sentiment or even more than the policy decision from the Fed, where, of course, the market's pricing in close to 100% probability of a 25 basis point cut. I do think that we need to hear consistently from the market leaders, as well as from companies leading their sectors and industries across the board, that they're getting benefits from the AI and technology investment they've made throughout the course of 2025, and they have great hope and expectation for what that will be into 2026, and may cite productivity gains or enhancements that will lead to better earnings and stronger margins over quarters ahead.
Microsoft, Apple, Amazon, all of these mega tech companies reporting earnings over the next 2 days. Keep an eye out on all of them. Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some profit booking continuing in gold, but prices are back above $4,000.
Oh, yes, that is the case. But I want to start with crude oil prices because, after those very strong gains in the previous week and yesterday as well, crude oil prices also have seen a decline as OPEC says that it may be increasing production. This is to tackle any sanction on Russia that may impact supply disruption, really. So we're looking at crude prices coming off as well. And as you mentioned, well, yes, gold and silver is now trading at a 3-week lows. Gold fell 3% overnight. Silver is down 3.5% as well. So we seem to be breaking those important psychological support levels right here. But then it is all about US and China closer to major trade agreement and the risk appetite leading money back into equities rather than gold and silver. So there is some profit taking that the markets believe can just about continue. That actually is quite positive for the Indian markets because the festival demand has been seen strong, and now we are getting into the wedding season, whereas well the markets believe that investment and jewelry, both of that demand in India could continue stronger.
Indeed. We'll keep an eye out on that. Manisha, thank you for that update. Now, the formal process to extend Meli Mistri's term as a trustee at the Tata Trusts is still in progress as per sources. Now, Mistri's current term ends today. Now, sources are telling CNBC-TV18 that the Tata Trusts initiated a circular resolution seeking a unanimous approval from all trustees to reappoint him for another term last week. Now, while some trustees have sent in their replies, others are yet to send in their views. Now, after Bihar, the Election Commission has announced a pan-India special intensive revision of electoral rolls. Sandhya is now joining in with more on this. Now, Sandhya, did the Election Commission field questions from the media on a number of issues? Take us through the top 5 highlights from that press conference.
So the Election Commission today announced phase 2 of the nationwide special intensive revision, which will cover 12 states and union territories. Here are 5 key questions and answers from Chief Election Commissioner Gyanesh Kumar's press conference. The first question was, why Tamil Nadu and West Bengal, where elections are due in 2026, are part of phase 2 but not Assam? Remember, the northeastern state is scheduled to go to polls next year as well. C.C. Kumar answered that the Indian Citizenship Act has a separate provision for Assam, and the checking of the citizenship program being carried out under the supervision of the Supreme Court in Assam is almost complete. Hence, the nationwide SIR order of 24th June does not apply to Assam. He said a separate revision exercise will take place there. The second question was whether the EC will prepare a list of mentioning the number of foreigners whose names were wrongfully included in the voter list. The CEC didn't say anything about this, but mentioned that during the first enumeration, the EC will cross-check where the voter or their relatives were in 2002, 2003, 2004. In case of a mismatch or missing information, notices will be issued and those individuals will be asked to furnish documents and explain their whereabouts in 2003. The third question was that while the EC says there were no appeals in Bihar SIR, the opposition parties have opposed SIR in Bihar. So was it limited to political statements? CEC Gyanesh Kumar responded and said that the EC does not comment on political statements. He clarified that the Commission does not believe political parties opposed SIR in Bihar. The district presidents of all parties actively participated in the process and statewide representatives welcomed it during EC meetings. The fourth key question was why SIR has been announced in Kerala despite upcoming local body elections. Kumar noted that local body elections in Kerala have not yet been notified, making it appropriate for SIR to be conducted at this stage. On TMC's claim that SIR will not be allowed in West Bengal, CEC Gyanesh Kumar reiterated that every constitutional body must fulfill its duties as mandated by the Constitution. He added that maintaining law and order is the state government's constitutional duty and expressed confidence that states will continue to do so.
Sandhya, thank you for that update. All eyes, of course, on that all-important Bihar election. With that, we take your leave on this edition of Power Breakfast. Bazaar Morning Call on the other side to set you up for the day's trade. From me and the team, thank you so much for watching.
morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios, Tuesday morning, and lots to track. Overnight action, I think, is positive, is constructive, like it was yesterday as well. Will we be able to sort of build on yesterday's session? Yesterday, of course, there was a bit of a pullback, but then the market moved up after that. So continued strength is the question as we begin this Tuesday morning. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, morning. Welcome back, Prashant.
Yep, good to be back. I think Muhurat, right? Three of us were together, and now the full house is back. Overnight action, all good. I mean, markets, trade deals, everything happening, except one piece of news that kind of stayed with me: the layoffs. I mean, Amazon, almost 30,000 people are going to be perhaps losing their jobs. That's what reports are indicating. They're not done. The figure could go up to 500,000 over the next couple of months. So that's the reality of AI, but we have to deal with it.
Oh, that's right. That's a bit of a worrying aspect, but otherwise, markets looking pretty okay for us. And today's the final day of the October series.
Everybody seems to be with the Trump administration. Everybody seems to be moving ahead.
This is dance in Malaysia.
Nothing for us so far.
Did you catch the dance in Malaysia?
Okay. Well, so a little constructive in terms of US-China trade talks. And this is, of course, yesterday's news. And I think the markets around Asia, etc., traded on the back of that. That it's kind of low on detail what eventually is going to happen. No, I mean, 100%, no 100%, rare earth maybe delayed, etc. But those were the two things which stood out to me. Otherwise, looks like, no further hostilities. That seems to be the broad directional view which markets are trading. So yesterday, markets around the region did very well. And I think, US traded last night, so you got a bit of that. So S&P 1.2%, fresh record highs. NASDAQ 1.8%. You had the Treasury Secretary in the US, Scott Bessent, saying that, we basically have a very successful framework for Trump and Xi to discuss this at their meeting on Thursday. Both deputies on both ends have met and discussed, and now there's something on the table for Trump and Xi when they sort of take this forward, meet face-to-face on Thursday. In terms of single stocks, there's always some bit about AI one way or the other. So Qualcomm was the story last night, 11% move, and they've sort of unveiled chips and computers for AI, the very lucrative AI data center market. And on the other side, as Surabhi also mentioned, you got this Amazon news flow, right? Now, we don't know how much of this is on the back of AI advancements and deployment of AI, which, reduces the need for people. But I'm assuming there is that bit as well. And by the way, this is corporate workforce. This is, I've not read the full story, but this is the other big story, which we will get more details on as we go along. Now, this week is important for a couple of reasons. So big tech earnings as we go forward. So Meta, Microsoft and Google will report numbers. So with regards to large, big mega cap tech companies in the US, it's a big one. Apple and Amazon will report on Thursday. So those are the two big dates, and big week for central banks as well. So you've got the Fed, which will sort of announce a decision. There's the ECB, and then there is the Bank of Japan as well, which will be announcing decision. For the Fed, is going to be, as always, Thursday morning. When we come back, we will have the Fed decision with us, which will be announced US Wednesday night. Consensus increasingly expecting that the Fed will end the quantitative tightening program this week. So we'll see if that comes to pass. Gold prices, right? I mean, had a one-way move and they fell another 3% last night. So under $4,000 is where gold prices are at this point in time. Now, just to time this and circle in the levels here. So Nifty, the resistance is the recent high, just very, very immediate levels, 26,104. Yesterday, by the way, there was a bit of a shakeout, but then the market did not break very short-term moving average levels. Maybe that shakeout is complete, we'll see. But 26,104 is the first level. That's the recent high. 26,277 is the all-time high, which I guess we will have to wait for. And support is the swing low, recent swing low, which is 25,718. Bank Nifty, of course, also made a strong comeback after the prior session. And here the immediate resistance is at the high of 58,577 and then 58,961. And support is at the low of 57,482. So those are levels. Overnight positive handover. And generally macro markets, I mean, not very much. Yields, dollar, etc. I looked at, not very much has moved at all. So you got a 40-odd point bump at the word go. That's the indicative opening as far as GIFT Nifty is concerned. Nigel is now standing by with what the F&O positioning is looking like. Nigel, over to you.
Well, the October series has been a good one, and the bulls will look to end the October series on a high. Can they? Well, we'll know in today's trading session. But at the start of this series, we had made this point. Markets appear to be at extremes, and when we see extremes, we do see a bit of a bounce. And that's the way it's played out, right? Because the Nifty as well as the Nifty Bank, both of them have seen a very, very good series with gains of around 5.5% to around 6.5%. And the point we made on the extremes, the FI net short positions in percentage terms was at around 94%. That's the highest we've seen at the start of the series. That's come down to around 74%. So we've seen a massive short covering bounce, and the series has been a very, very good one. What about the flows? The FIs, the previous couple of series, they had turned aggressive sellers. Now, in this series, that's one of the big changing points, right? Because occasionally they were buyers and occasionally they were neutral, which is okay because the DIs continued to show the money. And yesterday's trading session, if you look at what they did in the F&O market or on index futures, well, there's some shorts are back into the system. So they almost added the equivalent amount of longs as well as shorts. Short positioning continues at around 74%. So not at extreme levels, but still it's a net short market. On the other two data points that we get in from the FIs, on stock futures, there's there is normally a strategy that takes place out there. And out there, you did see some shorts that did cover out. Even on the option side, they wrote more puts than calls in yesterday's trading session. In fact, the calls that were written, they were packing their bags because the markets ended closer to the high point of the day, unlike what we saw in the earlier two trading sessions. So good amount of put writing is what we saw. And we should get a couple of strikes up for you. Given that today is the monthly expiry that will play out, the 25,900 put, the 26,000 put, the premiums on both those two crashed closer around 50% in yesterday's trade. Which brings us to the levels. And all through this series, even on bad sessions, we have been making this point that this market seems to have got into a good rhythm and it had turned into a buy on dips market. So now, in fact, in the near term, the support level comes at around 25,800. That's going by the options data. And the swing high is going to be important both for the Nifty, that's up for you in the screen, and the Nifty Bank as well. On October 23rd, we had the swing high of around this 58,700 and 578. Support going by the options data is at around 57,500 odd. I'm going to be looking at two pockets in terms of stocks in news. One is the fall in gold prices. Muthoot will be a stock that's in focus. It's trading at 3 times price to book. It's had a good run. So keep an eye out on this because sometimes you have a sentiment impact on the stock. So this one will be one stock. And the other one is yesterday, the OMCs. They ended at the high point of the day, and there was a good amount of long build-up on all of them. Crude oil prices showing some weakness. Earnings are looking pretty okay. Some of these stocks are near their 52-week highs. So I'll continue to keep an eye out on all these three names.
Absolutely. And gold indeed was quite interesting because the profit taking did take gold, international gold prices, that is, down below $4,000 to the ounce. But now they've kind of recovered just around that handle once again. Let's pull up some of the Asian markets because there's a round of profit taking across Asia after a very strong start yesterday where markets were hitting historic levels in Japan and in South Korea. There's in general a sense of profit taking today. Most of the regional markets are down. Pull up the GIFT Nifty and the implied open. We had a consolidation day yesterday, but with a very clear positive bias, and the sense is that the bulls will want to build on that with that 37-point uptick at the open. So we'll deal with it as we get closer to market opening. For the time being, let's welcome in Richard Harris, Executive Director at Port Shelter Investment Management. Thanks very much, Richard, for joining in. So, the whole Asia tour, President Trump's Asia tour is catching all the headlines, and he's going around doing these trade deals and trade frameworks with all countries except India. I mean, at least the talks are still on, but there's no real headway. If indeed, the deal comes through with China, purely from an equity market sentiment perspective, could it drive FPIs further away from this market? Because we saw some glimpse of FPI buying about a week or 2 weeks back. That's again changed to a trickle now.
I don't think it's going to drive people away from the markets. If anything, it might actually lead to a further run in the bull market. I mean, what we're seeing really is Trump going around. He's negotiating with counterparties, but we've got precious little information from it. All we're getting is a series of declarations of victory from the US side. There's very little detail from the Chinese side, and relatively little detail elsewhere. I mean, he's meeting with Prime Minister Takaishi of Japan today. I've kind of feel that that's probably going to go quite well. You know, Trump is rather soft on iron ladies. It's the same with Giorgia Meloni in Italy. And I have a feeling he may actually get on well with the Japanese Prime Minister. So all the talk of the trade deal that was done between Japan and the US just a month or so ago, which was extremely onerous, I think will just fade into the ether. So it's very difficult to see what's real. It's very difficult to see what's not real. And there's ample opportunity for all sides to pull back later on. But I think in the very short term, it just has to be bullish for markets.
But that includes India, Richard? It's not disadvantage India?
Yes, I think so. I don't see why India should necessarily be penalized. And don't forget, we do have the opportunity in the future for India and the US to have yet more talks, because it is an extremely important trading relationship. Don't forget that many Indians, first and second generation Indians, are the very highest levels of Silicon Valley. So I think this is going to be very much on their heart. So I would also hold out hope the same sort of thing is going to happen between India and the US. But at the moment, clearly, with a trip to East Asia, it's going to be a focus on those countries.
Richard, gold prices seeing a bit of a shakeout after that incredible run. Any prognosis here?
Yeah, it's not surprising that gold would have come back. It's come back below 4,000. It may actually start to find 4,000 is a little bit of a resistance level. But I think gold is interesting. Just around 2005, when the equity market started to move, gold started to move as well. And it powered through 2008 when equity markets came back. And it didn't really stop rising until around 2011, when confidence had come back into financial assets. So I do think gold is interesting to be in. I think certainly if we do see some sort of reversal in these markets, and by reversal, I mean something like a crash, because we are heading for that sort of territory. I mean, Jamie Dimon and Ray Dalio have been saying the same thing. We just don't know the timing. It could be 2 years out, but we are headed for some sort of reversal. And I think in that environment, investors will continue to accumulate gold. They'll continue to accumulate cash, just in fear of something quite serious happening a little bit further on.
All right. Hi, Richard. Good morning and good to see you in. What are you making of the mother market, which is the US market? You know, there are calls that maybe, in fact, that's getting into a bit of a bubble territory, particularly tech, AI, you know, some of those names out there. The NASDAQ is up more than 25% in a single year. But if I look at earnings coming out of the United States, and just looking at S&P 500 companies, the earnings growth of there is high single digit to double digit, you know, which is very, very encouraging. What is your call with regard to the US markets, and also comment on this so-called tech bubble? Do you think it's reaching that territory, or do you think it has more legs?
Oh, I think we're deeply into that territory. If you look at some of the greats who've studied crashes in the past, it's things like high valuation, high debt, reduction of regulation, and a big story. Don't forget, in the dot-com bubble, we had the dot-com story. In 2008, we had the housing story. Now we've got the AI story, with companies basically lending to each other through the supply chain. NVIDIA's lending to OpenAI so that OpenAI will buy NVIDIA chips. And these companies can raise vast amounts of money. That money ends up in the stock market, either through earnings or through inflation of valuation. So, no, I think we're in the bubble already in the US. But, you know, bull markets die hard. It could be quite a time before we actually see it really come to a head. And then it may be due to some kind of unknown event that we just have no idea what it is likely to be at this moment in time.
But I guess caution would be well advised then at this point in time if you're saying that the US market, at least with the AI stocks, is already in a bubble. We'll remember that, Richard. Thank you very much for joining in, and we look forward to more conversations again, a couple of weeks down the line. You have a good day.
Thank you. You too.
Thank you. Well, with that, let's tell you what else we've got lined up for you on the show. Plenty of interactions coming up at 8:35. We'll be in conversation with the management of Canada HSBC Life Insurance, talk about their second quarter numbers. At 9 a.m., Prabal Sen of ICICI Securities joins in. IOC has reported numbers. And beyond those numbers, how are some of these refineries dealing with lower sourcing of Russian crude? What does that really mean for GRMs? We'll ask Prabal. At 9:20 a.m., Gautam Trivedi of Nepean Capital will join in. He's our market master of the day. At 9:30 a.m., the management of Bata speaks with us. It's been a rough quarter for Bata, so we'll find out what the next steps look like for the company. After that, we have Anshuman Singhania of JK Tyre and Industries joining in, talk about their Q2 performance. And at 9:50, we have Harshit Kaparia of Elara. He tracks the capital goods space, and we discuss the expectations from the sector ahead of Q2 numbers. Towards the end of the show, in our special segment, It's the Economy, Lata will be in conversation with Samiran Chakrabarti of City India and Harish Damodran of the Indian Express on the strength of rural demand after the Kharif season that has just ended.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We'll get to that in just a bit. For the time being, giving you a sneak peek. IOC, Indus Stars, Marscon Dock, PNB Housing Finance, Sona BLW Precision, JK Tyre, AB Capital, and K FinTech. On the flip side, we have Bata India as well as HOEC that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names. Welcome back. You're tuned in to Bazaar Morning Call. The last promise, our research team is standing by with all the top stocks you need to track. And let's start off with Sonal, who's here to tell us about IOC's numbers. Hey Sonal, morning.
Good morning, Nigel. Well, it was a strong set reported by IOCL, a top-down beat led by improvement in their refining segment. So if you look at the numbers versus the poll, revenues higher, EBITDA at 14,583 crore rupees, margins have come in at 8.2% versus a poll of 7.4%, and profits also higher at 7,610 crore rupees. Their gross refining margins higher than the poll at $10.7 per barrel. And if you look at the trend as well, this is the highest level that we've seen in last 7 quarters. So refining outlook is definitely improving. Jeffrey says even their marketing margins on diesel and petrol came in higher on a quarter-on-quarter basis at 7.4 rupees and 11.6 rupees respectively, but now margins have declined in quarter 3. But there's still room for strong margins, even if there is some excise duty hike that could come by. However, they say the outlook on refining is now weakened because sanctions on Russia will lower availability of advantageous crude. However, the numbers were strong, and that's why going with green on this one.
All right, Sonal, thanks very much for that. Let's move on. Indus Tower went up yesterday after that Supreme Court relief for Vodafone Idea. But there's more. Rima is here with details. Rima, morning.
Hi, morning. So there are two positives in Indus Tower's numbers. One, the EBITDA margins were a beat. EBITDA margins expanded by 180 basis points sequentially to 56.3%. One of the key drivers for that is that the company has been writing back provisions that it made for Vodafone Idea. Vodafone Idea has been making its monthly dues, and in the current quarter, the company wrote back a provision of 195 crore, which is higher than the 88 crore provision that they've written back in Q1. But even if you strip that out, analysts point out that margins look good. So that's reason number one. The second one is the tower acceleration in Q2. So in Q2, the company added about 4,300 towers, an expansion versus the 2,500 that they added in Q1. Other numbers largely okay. Revenue growth 1.6% sequentially, and a profit jump of 5.9% quarter-on-quarter.
Okay, and the stock did well yesterday as well after the Vodafone verdict came out of the court. We'll see how it does today. Rima, thank you very much for that. Let's move on then. Defense majors also in the limelight. Mazgaon Dock has reported numbers. Upasana, morning. How do the numbers look?
Good morning, Surbi. Well, overall, if we see, the numbers are quite steady this quarter with robust margins. Now, revenue grew by 6% on a YoY basis. This is likely due to a slower execution this time around, while EBITDA margins have seen an uptick of 520 basis points. This is likely due to delivery of P-17 stealth frigates and even the provision reversal which has happened this quarter. Now, we look at the order book of the company. It stands at 27,400 crores. And now coming to the guidance for full year, the company has given a revenue growth guidance of 8 to 10% with the EBITDA margin guidance of 18%. And the company, if we look at the H1 figures, they are well within the guided range. The revenue growth for H1 FY26 is around 8.6%, and margins also stand healthy at around 18%. Now, Phillip Capital says that the revenue growth could improve once the additional order of P-75 submarine is under execution, that is FY28 onwards. Now, coming to the numbers, the revenue saw an uptick of 6% as mentioned earlier. EBITDA saw a growth of 36% on a YoY basis. Margin stood at 23.7 versus 18.5, and PAT stood at 749 crore with an uptick of 28%. So overall, if you look at the numbers, they look quite steady this time around.
All right, Upasana, thanks very much for that. PNB Housing Finance financials now have been, of course, all the talk of the town with lots of deals, but this one with Gaurav. Gaurav, morning.
Well, yes, when we look at PNB Housing, I'm going with green today, and the reason being that when we look at profit, we saw a strong growth. So let me take you through the numbers. Net interest income that increased almost by 14% on a year-on-year basis. Now, in this quarter, we saw some pressure was there on the yields, and I'll come to that. Apart from that, when we talk about PPOP, which is pre-provisional operating profit, we saw around 16% growth in line with the street's expectation. Now, provisions that were negative once again at around 116 crores, and that is the reason why when we look at profit, that increased almost by 24% on a year-on-year basis. Now, coming to the ratios, when we look at net interest margin, we saw a bit of a decline of around 7 basis points. It is something which is quite negative because it was not something that the street is expecting, but at the same time, it is in line with the guidance. Apart from that, when we look at the loan book growth, that was at around 16%, and this is driven specifically by the emerging market and the affordable segment, as always indicated by the company that they want to focus on these segments. Apart from that, when it comes to guidance, they are guiding for loan growth of around 17 to 18%, so management is almost there. Apart from that, net interest margin guidance of around 3.6 to 3.7%. Credit cost, they say that it is likely to be negative in FY26. And another hiccup in this result is that today is the last day of Mr. Kosgei as MD and CEO, and there is still uncertainty, and management did not call or indicate what is the roadmap going ahead in terms of the leadership. So that is something that could be a hiccup, but in terms of number, good set of number delivered by PNB Housing in this quarter.
Okay, all right, got that. Thank you very much, Gaurav, for the details there. Let's hop across to Sudarshan now. He's looking out for numbers from Sona BLW as well as JK Tyres. Good morning.
Morning, Surabhi. So first talking about Sona BLW, as far as numbers are concerned, the numbers are looking much better than estimates. While all the headline numbers, you talk about profit, revenue and EBITDA, everything has seen a double-digit growth, while margin has seen a fall of almost 200 basis points because of adverse operating leverage and product mix. Now, BEV revenue also has fallen by 17% to 265 crore. But apart from the earnings, there is a separate announcement. If you remember, in July of 2025, company had announced that it would form a JV with a Chinese company that is called Jinet Machinery. And there was an expectation that client for the JV would be BYD. Now the fresh announcement that company has made is that JV announcement that it had made has been put in the abeyance. So that might be taken negatively, but I'm going with mild green just on the basis of the earnings, but we have to be cautious. Second, the stock is JK Tyre. It has announced earnings that is looking very healthy. All the numbers here also have seen a double-digit growth. Margin also has seen an improvement of more than 200 basis points, and revenue was largely led by healthy volume growth that company has seen in both for India and Mexico business, where India business volume has grown by 15%. In Mexico, the volumes have increased by almost 13%.
Okay, all right. In fact, we'll have the management of JK Tyre and Industries who will be joining in at 9:40 a.m. to decode the past quarter's numbers and how do you see the quarters ahead. That said, let's hop across to Mangalam. He's here to tell us about Bata India. Morning, Mangalam.
Good morning. So, it was a GST-related quarter, so there was disruption on account of that. And at the same time, there was a disruption at one of their major warehouses in the month of July as well. All of this impacted Bata's performance. In fact, the company went ahead and looked to liquidate some of their inventory. To add to all of that, we had a VRS expense as well. So we put all those things into perspective. The revenues were down 4%, the EBITDA was down 17%, and the net profit actually saw a decline of 73%. There was deferment of purchases. The company said they saw signs of recovery in the festive season. EBITDA was lower due to inventory clearance and higher marketing spends, but premium products are showing robust growth. Expect the stock to open in the red, but may see a bit of recovery because for Bata, even the last quarter I had said, it's like that shoe in your cabinet which you don't wear, but you don't want to discard because you believe that at some point you will wear it.
I have plenty of those in mind. Oh, that touches a raw nerve, Mangalam. Thanks for that. Well, Gunjan Shah of Bata India is going to be joining in to talk about how they're looking at the second half once the GST normalization actually happens. So that's a conversation coming up at 9:30 a.m. All right, with that, let's head back to Sudarshan. We're anticipating a block deal in AB Capital, right, sir?
That's correct. So we might see a clean out trade in which block deal might happen for 2% equity, in which Jomi Investments is likely to sell its entire stake worth $184 million, and the price is 304.55 per share, which is a discount up to 2% to the current market price. But I'm going with green for two reasons. First, that it's a clean out trade. Second, it might happen in the block deal window.
Okay, all right, got that. Thanks, Sudarshan. Let's quickly get back to Sonal. She's watching out for some more numbers, I think, from KFin Tech and HOEC. Sonal?
Well, for KFin Tech, it's numbers. There's a news update on HOAC, but let me start with KFin Tech. It was a strong set this time around. Revenues are up 13% at 309 crore rupees. This was driven by growth in issuer solutions and international business. Their EBITDA was up 19%. The EBITDA expansion was around 234 basis points on a YOY basis. Their profits were also up 21%, so expecting a green there. For HOEC, it's a negative update because they supplied crude oil to HPCL, to which HPCL replied saying that the quality was not good. It had excessive salts causing corrosion and low output, because of which operations were impacted. And HPCL has now asked for damages on this supply. So HOEC will be in focus on the back of that.
Okay, all right. Thanks a lot for that. So now let's do a quick recap of all the top stocks we just discussed. A lot of ones with positive news flow. So let's run you through the list. IOC, Indus Stars, Mask on top, PNB Housing Finance, Sona, BLW Precision, JK Tyre, AB Capital, and KFin Tech. While a couple of them will be reacting to negative news flow, Bata India and HOEC. Well, that said, let's turn our attention away from the equity markets to the commodity space. Manisha Gupta joins us to tell us what went on overnight. Well, Manisha, good morning. After a while, I'm going to be hearing you say gold prices have dipped. Maybe it could be temporary, though. Tell us more.
Oh, well, yes, absolutely, Nigel. I mean, it's a second straight week where you have seen profit taking or a sell-off continue in case of gold and prices. It was long due coming because the kind of run-up that we had seen, it was overheated. It didn't seem sustainable beyond a point. And then you finally have this. Interestingly, you have the gold prices now trading below $4,000 an ounce. So after hitting a 43.80 of an all-time high, we've seen a considerable profit taking come in here. So when you look at gold and silver both, we're looking at a 3-week lows for both of these commodities. What also has gone into profit taking has been the crude oil prices. Well, last week was one of the best in many, many months. But when you look at the Asian markets right now, and this is coming in after OPEC saying that they may increase production if the Russian sanctions lead to supply disruptions in the global markets. So there you have it. There is excess supplies anyways. And if OPEC continues to increase production, given the fact that the demand isn't gaining as much, you could be looking at further decline for the crude oil prices. But what has been doing quite well has been the metal prices. While copper prices did see a sharp decline overnight, it is aluminum which is still looking at a new 3-year lows at this point in time, while tight supplies, bullish longer-term demand seems to be supporting.
All right, Manisha, thank you very much for that. So commodities in focus there. We're going to come back in just a bit from now. Parag Thakkar of Fort Capital with some fundamental stock calls. We'll put some of the earnings reactions to Parag as well. Ask him what to do about a few of these names. Stay tuned. Coming up.
Welcome back. You're tuned into Bazaar Morning Call. Well, as promised, let's get in Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you, Ben. Parag, I just want to ask you first about all these banking deals that we have seen in the last, 20 days or so. We had that RBL Bank, we have Sammaan Capital, from the financial space, and also you had Federal Bank, the recent one being Federal Bank. What's your view on these companies, and which one would you be most bullish on?
So I am most bullish on Federal Bank. There is no doubt. Of course, I appreciate that all foreign investors and even strategic investors like Emirates are looking at Indian financials very closely because they offer you double-digit growth, and right now asset quality is not a problem at all. Even in the unsecured part of the books, the problem has stopped worsening further. And just to tell you further on Federal Bank, I'll give full marks to Mr. Manian. Of course, the bank already had a very good legacy, 95-year-old legacy, and it is a very conservative and prudent bank from beginning. They have very low exposure to unsecured and risky assets. But after Mr. Manian has come, the ROA and NIM journey has begun in spite of repo rate cuts, which is actually obstacle in increasing margins and ROAs. But in Q2 itself, 15 bips QOQ margin improvement, led by three main factors. One is improvement in CASA QOQ, which is very, very rare right now in banks to improve CASA, right? The second point is increase in lending to mid-yielding assets like gold loans or construction equipment, tractors, commercial vehicles, and business banking. And third is, of course, fee income. So NII and fee income for Federal Bank were at all-time high. Fee was 1% of total assets, which was all-time high, and NII was around 2,490 crores, which was all-time high. And now Blackstone is coming in to buy 9.9% stake at 6,200 crores. So this will give them capital also. Of course, they are very comfortable in terms of capital at around 15.7% tier 1. So I would say that Mr. Manian has started doing all things which I expected in terms of to improve their ROAs. Because the Federal Bank always had a low ROA. That is a problem because it was a very conservative bank. Now, if they land to mid-yielding segments, at the same time they take steps to improve CASA, which they are already doing, I think it is headed for 1.4% ROA in FY28. And that is why I feel that stock should go to 300, 320 in next 1 year. And it is for the first time, I would accept that this is a stock which I am adding even at 52-week highs. For the first time in my life, I am doing this.
A point taken. Sometimes it just takes years, right? I remember many years ago, a lot of the top people at HDFC Bank had moved to Federal Bank, and there was a lot of excitement. This is about maybe 10 years back that it's going to, and a great deal of excitement, but never went anywhere. So this is like the second coming in that sense, where.
See, I'll tell you, the bank which does not already inherit any problems in terms of asset quality, when it gets a leader like Mr. Manian, who was in Kotak for 25 years, it's actually after the repo rate cut cycle is over, say by December, where I am expecting another rate cut in December. And that is the worst thing which will happen for banks. After that, I think next year is looking extremely good for all banks.
Absolutely. But it's all I'm saying is never one thing, right? It's a confluence of things which come together, which kind of, it all has to fall into place. And sometimes it does, as I think it is now Federal Bank. Parag, gold prices, right? So gold was going up and all these gold finances were going up. Now gold's falling a little bit after this astounding run. What's your sense for gold finances?
So see, in my view, as I told you, I never chase momentum, and that is why I accepted that for the Federal Bank first time. But still, I feel that there is enough room if you give it a time, 2 to 3 years. And of course, by the way, gold loan is 13% of the loan book for Federal Bank also. But I would say that see, if the US signs trade deal with important trade partners like China and India. And if there is no further worsening of geopolitical situation in Russia and Ukraine, I think then the gold is headed downwards. But of course, the first part of the puzzle seems to be getting solved, which is trade negotiations, which are going in a positive direction, at least right now. The second part, I am not sure about Russia-Ukraine. And so that is why I would say that 3,800 in my view in gold looks likely. After that, we'll have to see how geopolitical situation pans out.
Okay. All right, Parag, just stay on. We'll have more questions for you. Want to discuss more stocks, but we also need to get to a couple of important earnings calls. Now, Canara HSBC Life Insurance is the first management that we're speaking to on the show today. The company reported a steady set of numbers for the second quarter. To talk about this, we have Anuj Mathur, MD and CEO at Canara HSBC Life Insurance, joining in. Mr. Mathur, thanks so much for being with us, and season's greetings to you. Hope you had a good festive season.
And good morning to all of you.
Thank you. So the numbers that I have in front of me, I mean, total APE growth at about 11%, VNB growth of about 21% year on year, and the VNB margin has shown improvement at about 19.6 versus 18.9. Can you just walk us through some of the factors that drove the performance in this quarter, and more importantly, with the GST total exemption on life insurance, health insurance, life for you to zero, what does that mean in terms of the P&L from here on? Because there's that issue of the input tax credit, right?
Right. Yeah. No, sure. So I'll explain each of these things. So first of all, we had very good set of numbers for the H1. Very happy to report that our individual WPI, so this is the weighted premium income, which we monitor, industry also looks at it. We have seen 14% growth in WPI in H1 of this year versus last year. Compared to industry growth, and I'm talking of private sector average of about 8%. So we have outperformed the industry growth. In terms of VNB margins, they have improved versus last year. We have finished H1 with 19.6% versus 18.1 last year. So there's a improvement of 150 basis points or 1.5% in terms of VNB margin. Our PAT has grown by 16%. So across parameters, we have seen good growth. Not just that, our market share also has improved by 0.2% over this period. So very happy with the set of numbers. Our ROEV, return on embedded value, that is in the range of about 18%. So all these parameters are kind of very, very strong.
Mr. Mathur, sir, if I could just understand, because we don't have the specific numbers for Q2 per se. So maybe on some of the major numbers, maybe on the VNB margin, for instance, as of Q2, where is the margin?
So our margin has improved. I don't have exactly quarter-on-quarter movement because this is the first time we are presenting our numbers after listing. So numbers are positive. So our VNB growth also is positive in Q2 versus Q1. Similarly, in terms of AP also it is positive. And maybe going forward, we can share quarter-on-quarter movement also. But because this was the first time after listing, we thought we'll present the first half results.
Okay, and maybe from the next quarter, we'll have quarterly numbers to compare as well. Mr. Mathur, good morning. Good to speak with you. Prashant here.
Hi, Prashant.
Could you talk to us a little bit about, the full year numbers? Where do you see yourself ending the full year on APE and VNB? I think in H1, as you said, AP is up by 11%, VNB about 21%. H2 is generally stronger. So for the full year, what can we see?
You're right. As I mentioned, our WPI growth has been around 14% higher than the industry. For H2 also, we have similar guidance wherein our growth in terms of WPI will be in the range of 18 to 19%. That's our expectation on the top line. Our VNB is going to be very steady. In fact, despite short-term impact of GST, we expect our impact on VNB will be very minuscule. And we'll be able to maintain this margin of about 19% or so. And coming to the GST question, in terms of how it is going to impact us in short term and as well as long term, we have taken a number of measures to kind of reduce the impact on the VNB margin. Focus on protection is clearly there. Our credit life business has grown by over 40% during first half. We are focusing a lot on the term business. We see our term business going up, which will help us in terms of VNB margin. We have taken certain steps in terms of sustainable saves also, cost rationalization. So with all these things, we expect our VNB margin to be steady in line with what we have delivered in H1.
Okay, all right. Hi, Mr. Mathur. Good to speak to you on the show. This is Nigel on this side. A quick question with regard to ULIP. ULIP is high. I think it's around 50% of the APM. That's as of the first half of the year. To what point do you want to bring it down to? And if you could give us a sense, what would an ideal product mix for you look like?
Right. No, it's a good question. In fact, last year, around same time, our UL mix was 53%. So we have seen decrease in terms of the ULIP contribution. We expect this, but let me also share with you that there is a genuine customer demand which is coming for ULIPs. So we expect that our ULIP contribution would be in the range of about 45 to 50% as we close the year, which I think is a fair balance. In fact, we have taken few steps to actually optimize our VNB margin with this kind of ULIP mix. As I mentioned, we have gone ahead with riders attachment, which is helping in VNB optimization. We have actually moved our protection mix also in terms of credit life. So all these measures are going to help us in further improving the VNB margin.
Okay, all right. If I look at your embedded value grew by close to around what? Around 16-17% in the first half of the year. Do you think for the next few years it can grow by high teens, maybe a 15 to 20% range? Is that possible?
Yeah, that's the broad expectation. In fact, if you see, we are a consistent performer in terms of whether it is top line, VNB or EV. So we expect our ROEV also, our embedded value to grow in the range of about 17 to 18% consistently.
Got that. Mr. Mathur, what is the share of, what is the non-banker share for you in terms of sales channel?
So currently it's about 15%. And we have, in fact, recently launched agency channel also. We are going to grow our agency channel, which will help us to diversify. And this bank insurance share, which is currently about 85%, is likely to go down.
Okay. On that 15%, are there, as we understand it, there are some negotiations which are going on with regards to how to pass on this GST cut, how to go about it. Are they still ongoing?
So see, one thing which I'd like to mention about is that we are a very, very efficient company. We are a lean company. Our cost ratios are actually best in the industry. We would be in top 3 in terms of our cost ratios. So the impact on our company on account of GST is not much. We see GST as a positive enabler for the business. We expect volumes to go up. So we don't think so that we may have to resort to kind of cutting down the commission levels from where they are currently or reducing the GST on the new business, which we do with our bank partners. In open market, yes, we will adjust GST from commission in line with the market. But otherwise, our cost ratios, our commission rates in the banker channel are quite efficient, quite normal. And I don't think so there's a need for us to immediately cut or adjust GST from there.
You mean on the banker side, no, but on the market, non-banker, you will adjust accordingly?
That's right. That's right, yeah.
Okay. And that has not been decided. Those are still negotiations on with, or that is set?
No, we have already communicated to some of our distributors in the market.
Okay.
And the process is on.
All right. Mr. Mathur, we'll leave it there. Thank you very much for joining us. Good speaking with you and appreciate it very much here on CNBC-TV18. Good luck and look forward to our next conversation. Well, a quick note for our viewers. As you can see on the screen, there's a money control stock score just above the line graph. Now, this is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameter considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor / viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor regarding investment decisions. Okay, we'll take a break here. Up next, Sudarshan Sukhani, Mitesh Thakkar with us with some technical trading ideas. Stay tuned. Okay, welcome back. You're with us here on Bazaar Morning Call. There's, 12 minutes to go for the pre-open session to kick off. Hormuz is here with the big movers from yesterday, which saw heavy volume action. So just sort of what lay behind the price action. Hormuz, take it away.
Morning, Prashant. And the most talked about stock in yesterday's session undoubtedly was Vodafone Idea. After all the developments that happened at the Supreme Court, it saw a very volatile trading session after that. The stock at one point was up almost 10%, eventually came off those levels, eventually closing just around 3.5% higher. We'll take a look at the volumes though, and it was 323 crore shares of Vodafone Idea that were traded in yesterday's trading session. The 20-day average is just under 85 crores, so 4x of its 20-day average volumes in yesterday's trade. And out of those 323 crore shares, just around about 45 crore shares were marked for delivery. The 20-day average is just around 18.5 lakh shares. Interestingly, yesterday's delivery volume, which was close to 45 lakh shares, was the highest in well over a month for Vodafone Idea. Now, Firstsource Solutions, Midcap IT was buzzing in yesterday's session, more on the lines of anticipations of a rate cut from the Fed on Wednesday night, and Firstsource was up 8%, the biggest single-day gain since March. The volumes were also the highest since January of this year. We had close to 2 crore shares that were traded on Firstsource Solutions yesterday. The 20-day average is around 11.5 lakh shares, but out of those 2 crore shares, only 25 lakh were marked for delivery, and the 20-day average here is close to 6 lakh shares, so 4x of its average delivery volume as well for Firstsource. PSP Projects was one other mover yesterday in the broader markets. No specific news trigger behind it, but the stock was up 17%, the biggest single-day gain since its listing. The stock is up in 4 out of the last 5 sessions. The volumes were the highest since July, but the volumes on Monday were the sum total of the last 56 sessions put together for PSP Projects. 94 lakh shares were traded. The 20-day average is just a lakh, and out of those 94 lakh shares, 9 lakh shares were marked for delivery. The 20-day average here is less than 60,000 shares for PSP Projects. And lastly, RR Kabel, that stock was up and about in yesterday's trade, the third best performer on the Nifty 500 yesterday. The volumes were the highest since April. Yesterday's volumes were also the combined volumes of the last 26 sessions for RR Kabel. Close to 33 lakh shares traded. The 20-day average is less than a lakh for RR Kabel, and out of those 33 lakh shares, 3 lakh shares were marked for delivery. The 20-day average just over 60,000 shares. The stock also remains in focus because it reports earnings this week.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go back to Parag Thakkar. Parag, what's your view on the big boy Reliance Industries? You know, that's suddenly finding its form. There are a few triggers in place as well. A potential listing of Jio as well could be in the offing. And the business on the whole seems to be coming together. I think in the month of October, actually, it's been one of those outperformers. Your view on the stock?
Yeah, definitely. So it is one of our largest holdings in the portfolio, just to put a disclaimer. And we are very constructive ways. See, in near term, I would say refining margins have improved significantly last 1 week itself. That is a big positive. Jio continues to do well. We have seen the subscriber addition numbers, which are anywhere between 30-35 lakh subscribers every month, which is phenomenal. Plus, I would say the retail part delivered very well, 16% revenue growth and EBITDA growth in Q2, and that is likely to continue in Q3 because of festive. So I would say that all stars are aligning for Reliance, as you said, except for Petchem, in my view. Plus, you have a media business which is doing very well, Jio Hotstar and other media properties. Plus, you have a new energy business which will start coming in next year. So I would say that at current market cap of 20 lakh crores, you are getting media business, new energy business absolutely free, and half of O2C business is also actually free in my calculation. So I would say that anybody can expect 1700 or so. If this kind of traction continues on retail side at least, which is more sustainable, refining is of course very volatile and cyclical. But I would say that if refining and retail continues to fire, I don't see any negative for Reliance. And I would say another 15% move looks very likely in Reliance if refining and retail continues its momentum.
I have two sets of questions, Parag. One is Vodafone Idea and Indus. If you have any thoughts from here, from a stock perspective. And second, did you see the government has cleared, this projects which are approved for electronic components manufacturing scheme. So Keynes and Sirma, Amber, etc. Many of these were kind of known. the amount's perhaps a little different. I think for Keynes, it's higher, substantially higher than what markets assumed. If you have any thoughts here on these three on the back of the on the latest scheme.
So I would like to say that, see, on Vodafone, my assumption is that it is the ball is in government's court now. In my view, so I think there will be some relief and some material relief. The company operations ongoing, and that will help Indus Tower also. Of course, Indus Tower's dues from Vodafone has reduced materially, and they are coming on time, which is a great news. And we have Indus Tower, by the way, in our portfolios. And I would say that I have bought it with the logic that now, see, Bharti is also continuously increasing stake in Indus Tower, which is a very good indication to start with. On 1 lakh crore market cap, I think the cash profit is above 15,000 crore, which gives you 15% cash flow yield. And now that Vodafone situation is only getting better, I think Indus should do well. Plus, they are expanding into Africa for growth. And I think once Vodafone situation stabilizes, the Indus Tower management has said that they'll restore the dividend payout also. So I would expect a good dividend payout next year once the Vodafone situation stabilizes. So I would say that I'm positive, and I will continue to be very positive on Indus Towers.
All right, Parag, I wanted to ask you about the appliances space. Whirlpool, actually, the global company, came out with its set of numbers overnight, and the commentary on the India business said, yes, they're looking at bringing down stake from 50% to around 20%, but they also mentioned that most of the technical agreements for this is in place, with regard to the sell down of this particular stake, and they've mentioned strategic agreements are in place. The stock trades at a discount because of this overhang. From the space, I believe you still like LG, and a word on Whirlpool, if at all?
So Whirlpool, because of this overhang, we have not looked at it very seriously. Now, of course, we'll have a look. But LG Electronics we own, and we continue to like the stock. Even if you see Vijay Sales commentary, they have said that upgrade to LED TV has been a big theme of this GST cut, at least for consumer durable segment. And LG is a fantastic play on LED TV. They have a very significant market share over there. Plus, I would say that it's a company with above 60% ROIC and leadership in all the underpenetrated categories. So I would like to believe that LG offers a fantastic opportunity to play consumer durable and the underpenetration of that particular category in a very high ROC way.
Got that, Parag. We'll pick up on that Keynes Sirma question later. We're out of time. Thank you very much for joining us, and appreciate it very much here on CNBC TV18. We'll take a quick commercial break here. We are back with the pre-open rates. Prabal Sen of ICICI Securities will be with us. IOC reported second quarter earnings. We'll also tell you that lots of oil companies which are reporting are also, putting out the amount of oil that they're buying, Russian oil that they're buying, and it's all pointing to a steady decline of Russian oil purchases as a share of the total. So coming up in just a bit.
Welcome back. Well, we'll have a whole bunch of stocks that'll be reacting to their earnings and we'll start getting the pre-open rates in the next couple of seconds. Let's actually go across to our technical experts ahead of that to understand today's trading setup. Sudarshan Sukhani and Mitesh Thakkar are with us. Gentlemen, morning as always. Sudarshan, what's the approach at the index level? What would you be doing today?
Yeah, good morning. Well, yesterday we went long, took advantage of that quick correction, and that trend continues. You know, world markets are doing much better than us. So I would suggest that we should probably see a steady uptrend, but maybe not outperform. Still, so far as the trend is up, be a buyer, buy on a small dip, buy on a small consolidation to protect these long positions. Just keep your tight stops somewhere around 25,800. With that stop loss, stay long and be in the market on the long side.
Okay. So buy the dip and stay on the long side. That's Sudarshan's advice. What about you, Mitesh? Morning.
Good morning. So again, I maintained a positive stance saying that we'll hit the all-time highs, maybe even cross them. But till that happens, there could be some sort of profit booking. And I would agree with Sudarshan. I think buy the declines. Broadly, it's a market which is biased on the upside. But till it clears 26, 150, 220 zones, you could see, profit booking around those levels. So the idea is that try to take profits as we get close to about 26,200. And if you get a decline back to 25,800, wonderful buying opportunity.
Okay. Let's talk stocks as well. By the way, the pre-open session has opened out, but yeah, not really worth looking at. The rates are really all over. The Nifty right now 300 points lower. Let's just wait for it to settle down. Let's talk stocks in the meantime. Mitesh, what's on your list?
I have more of buy calls today. CDSL completed a multi-day pullback and gave a reversal yesterday on the upside. So buy here with a stop at 16.15 for targets of around 16.75.80. CAMS had some kind of a breakout pattern yesterday. So buy here with a stop below 39.19, 39.20 for targets of 40.50. Also buy on ABB, which is trying to give a reversal from the lower side, some positive crossovers. So buy with a stop below 5,200 for targets of 53.20. And one sell call, that's Excite. Keep a stop at about 386.5. Try to sell in the range of 380 to about 382 and look for a target of around 370.
Okay, got it. Thanks, Mitesh, for that. Sudarshan, coming across to you. What about your picks?
Well, it's all on the long side. AV Capital is a buy with a stop under 305. Bharat Forge is a buying opportunity, stop under 1280. And all PSU banks have very good charts. So Canara Bank here is a buy with a stop under 127. And Siemens, which comes again in my list, is a buying opportunity with a stop under 3100. This is a market, and just a question to Prashant. He's the geopolitical expert. I have a sense that India is likely to underperform because we are not in that same comfortable position as China or Japan is. Is that correct?
Prashant?
That's a question for you. Yeah.
No, I'm hardly the geopolitical expert, Sudarshan. But no, with regards to oil, Sudarshan, right?
Generally, with regards to the stock market.
Yeah, I mean, I just hope, we also get something done. And I was just actually, Sudarshan, before we came to both of you, we were discussing this in the studio, that maybe, it's there are local elections around the corner, right? The Bihar elections. So maybe, just thinking out aloud, maybe is that the reason why, we are, because, it's going to be give and take. So, will we wait for the elections to be over and concede if something needs to be conceded and get that deal with the US? I think that's essentially what we were just talking about. I mean, as I said, it's not some specific information or anything, but I was thinking aloud that by maybe November or something, hopefully, Surabhi, we get something done.
That's exactly what we were just discussing right now. So Darshan, Mitesh, look at crude, for instance, right? Now, the biggest sticky point right now is whether India will stop buying Russian oil or not. The US president has proclaimed that he has been assured by the Indian side that we'll stop buying Russian oil by the time this year ends. There is no official confirmation to that effect from India. But if you go by the commentary that companies are giving out, refining companies, then in their crude mix, the amount of Russian crude has been declining. In fact, gentlemen, thanks so much. We'll come back to you closer to market opening and we'll maybe discuss some of these stocks. But that's exactly what we're focusing on now. The reduction, or let's say the the reduced participation of Russian oil in the overall mix so far. We had IOC reporting numbers yesterday as well. Chennai Petro has reported. Let's get some of the highlights out of the way first with Sonal, and then we'll discuss this with Prabal Sen. Sonal?
Well, both these companies, all the three refiners so far have reported strong set of numbers, but the commentary was more important. For instance, IOCL did indicate that they will comply with US sanctions on Russian crude oil. They will be in touch with the government as well. The Russian crude intake declined on a quarter-on-quarter basis to 19% versus 24% on a sequential basis. And they are flexible to source from US or any other sources as well, whatever is efficient in terms of the cost for them overall. Reliance Industries said they'll comply fully with guidance from the government with respect to Russian oil imports and sanctions from the UK and the US. We spoke to Chennai Petro as well yesterday. They said the sourcing was as high as 40% earlier. It has come down to 20%. They have expanded the source of oil sourcing that they are doing. They are also started sourcing more from the US in terms of crude oil. Now, do remember when we started, as a country, started importing Russian crude oil, the discount was $15 to $16 a barrel, and now it has reduced to a single digit, around $3 to $4 per barrel. So that discount has massively reduced as well. Jefferies today in its note did indicate that the outlook on refining has weakened with sanctions on Russia lowering availability of advantage crude. As we'll see which way things go, but for now, yes, Russian crude in the overall crude basket has come down.
Okay. All right, Sonal, thanks very much for that. This is something we were discussing with Prabal Sen just a couple of days back as well, when those additional sanctions on entities like Rosneft were announced. Prabal, morning. Good to have you back. So now we have the commentary from the refiners themselves. What's your read-through? And for instance, for IOC, look at this mega margin they've reported, $10.70 to a barrel in the context of lower Russian crude in the mix. So what's going on, and are these margins sustainable?
Honestly, they have an analyst call today, so we would obviously want to interact with the management a bit more to understand where the margin beat has come from. It's definitely come ahead of what we were looking at. And I think what's showing on the screen, it's ahead of the poll as well. We were broadly near consensus at between $6.5 to $7 a barrel. So we have to understand where one of the things that is very clear is that diesel, ATF and gasoline spreads are the ones that are actually driving the margins. If you look at the trends in Q2, and if you look at what early trends in Q3 also indicate, very clearly those spreads are much stronger than what Singapore margins would indicate, which obviously is better for Indian refiners, since these three products are more than 65% of our product slate, compared to being less than 35 or 40 odd percent in the benchmark slate. So I think that's one of the reasons. Coming to Russian crude, again, the view hasn't changed. I think the data shared by Sonal was useful in the sense that if it is 20%, even if the advantage is, let's say, $3, you're talking about a 60-cent advantage in gross margins at the end of the day. So if you have to transition away and take some other crude, maybe even at $1 higher, the maximum impact you're talking about is essentially about $0.8 or so. And I think I spoke about that impact earlier when we spoke a couple of days ago. So I think in that sense, it is something that should be manageable to a certain extent. Obviously, it's not welcome that a cost increase is coming in such volatile times, but it's not something that will have a debilitating impact on profitability, let's say, given the strength in diesel product margins and overall margin environment, at least in the near term.
Prabal, that 80 cents will translate to, good morning, translate to what?
Morning.
Is about 5 million barrels per day?
In terms of earnings impact, every $0.50 hit, if you talk about, is basically somewhere between 4.5% to 7% hit on consolidated EPS, give or take. So that is the worst case impact I think that you're looking at. As far as the OMCs is concerned, the impact on Reliance is even less. If you talk about a 20% crude transition again, and I don't know what the percentage of Russian crude is in Reliance's overall portfolio, but given that OTC itself is now around 30% only of consolidated EBITDA, and within that, then you're talking about refining being maybe about 15 to 20% out of that, then you're talking maybe the earnings impact is maybe 1.5% at best, or at worst, whichever way you want to look at it.
So for OMCs, $0.50 more expensive crude
is around 4 to is a $0.50 more expensive crude, unless mitigated by product spreads elsewhere, is about 4 to 6% hit.
What are the GRMs you're working with, Prabal, on the whole? Because that's moved up. So in comparison to in your estimates, what have you factored in, and how does it compare with the current GRMs? Because GRMs have suddenly become very strong, right? So where are you at?
Yes. So we are actually at a level which is about $2 lower. We are working
$2 lower.
If you look at base case numbers for us, we're still working on a range of around $6 to $8.
All right.
Obviously, the current margins are much stronger.
So there is still some kind of cushion, in case cost goes up as well. You'll not have to tinker with your earnings, because as it is, you're $2 lower than what the current GRM is at. Is that correct?
I wouldn't want to speculate on what our numbers are going to be unless we publish them. Okay. But, I just told you what the base case is versus what the margin.
So $2 lower. We got that. Also, since you briefly mentioned about Reliance Industries, over the weekend, you went ahead and you upgraded the stock as well. Give us 2-3 factors at play, and what is the new target price? Because that one has suddenly, turned up in style for the last few trading sessions.
Yeah, I think it was, there are two or three catalysts. One is that our telecoms team published an excellent detailed note on the prospects for both Bharti as well as Jio platforms, if you know, and therefore the SOTP valuation was actually moved to an EV EBITDA valuation on par with that of Bharti by the team. So that anyways sort of, given that we rely on those numbers for overall SOTP valuation, that was one catalyst. The second catalyst is that if we see the earnings trajectory across businesses, the kind of momentum that is there in terms of the retail business, the kind of surprises that have come on the FMCG, revenue run rate and revenue momentum, and the kind of plans that they have in place for growing that business. Media business, for example, H1 numbers, and I think I mentioned this earlier, the H1 numbers for the media business itself are well ahead of what we were factoring in for the full year. And that has also driven, partly an upgrade in terms of our earnings post Q2. And that also sort of factors into our calculations, plus the higher visibility on the new energy businesses. If you look at the kind of clarity that is now emerging and the progress that is being made on at least the first phase of plans as far as solar generation and solar manufacturing is concerned, I think if you put it all together, there is a case to be made for re-rating, which is what we believe. There's a 15% earnings CAGR in EPS that we expect over FY 26 to 28. And more importantly, with the turnaround and with the sort of transitioning of Jio platforms into a cash generating entity in a big way, one of our major concerns or cautiousness that used to be there with respect to FCF yields and return ratios, that also seems to be getting addressed in a limited way. So that is where we believe that valuations do deserve a little bit more of a relook, and our revised target price of around 1735 has increased by around 130 odd rupees over previous target price. That's what's driven here.
15% earnings CAGR for Reliance going up to FY28 explains your bullishness on the stock. Good conversation, Prabal. Maybe we'll have you back once all the refineries have reported to take stock of, the sustainability of these margins. Once these calls are done, like you're saying, you're waiting for the IOC call today. Thank you so much. Have a good day, and we look forward to connecting again soon. That's a word from Prabal on the oil and gas space. Very quickly, going back to the pre-open session, which is now settled to a very, very, sedate kind of a 26-point cut. That's all we are getting. The Midcap index is flashing a little bit of green at this point in time. Let's quickly get to our 9-10 calls with our experts. Sudarshan, which stock?
It's AB Capital, buy with a stop under 305.
Okay, AB Capital. Remember, we've just seen the big block trade on AB Capital play out as well. And Mitesh, your stock?
I'll go with the buy on CDSL for targets of around 1675 to about 1680.
And AB Capital could actually be one of the stocks of the day, because we had Tata Capital on its listing. You saw a lot of excitement with regard to AB Capital. Return ratio is fairly healthy as well. I recall the stock was 295, 230 when we were discussing it here on Bazaar itself. And now this large trade gets out of the way. So that could be one of the stocks to track for today's session. That said, the other one could be Sona BLW. That's delivered a good set of numbers. We have Sudarshan who joins us to run us through a quick analysis on that. Sud.
So pre-opening session is indicating an uptick of more than 2% Sona BLW after company has reported earnings, and that was largely better than estimates. So two announcements: earnings better than estimate, and second, that JV that company had announced in China, that JV has been put in abeyance. But brokerages are largely positive. CLSA has an outperform call with a target of 570 per share. It says Q2 margin was 200 basis points higher than estimates, and this was higher despite BEV revenue decline and integration of lower margin of railway business. And BEV revenue declined as one of the key global EV customers continue to face challenges. But the positive parties, 3 competitors in Europe have filed for insolvency. That may lead to more orders for Sona BLW as per CLSA, and that can be very positive for the company. Nomura maintains buy call and increases target price to rupees 605 per share. It says company is delivering well in tough times, and Q2 revenue beat was led by railways and traction motor, and potential order wins from struggling auto component suppliers in EU will be key upside going forward. On the valuation front also, it's finding very attractive.
Well, keep an eye on that one as we open up in terms of trade today. We've got about a minute to go for the market open to kick in. So we'll just quickly look at the first rates and then, look at individual stocks, etc. So it's a quiet start, 25, 26 odd points lower is where the indicative opening is at. Maybe we just look at Keynes, etc. Keynes and Syrma and Amber. These are 3 companies, listed companies, where this where projects have been awarded under the Electronics Manufacturing Component Scheme. Some 7 odd projects, maybe I think, have been approved, and these 3, they're not. I think in the case of Keynes, perhaps the size of investment is larger than what the markets knew. So there you go. It's a positive start, but mildly so. Nifty Bank just flitting between green and red. Small cap index is up about 0.25%. The mid cap index is up about 0.2%, and even Stevens. I mean, it's too early to look at market breadth, but for what it's worth, 1,000 up and about 700 lower. That's how we are starting out straight out of the gates. We have it's kind of flattened out even more. We just quickly look at the Nifty heat map, how the 50 stocks are opening, and then we look at some of the individual movers. Indigo is on one end, and I think you've got Bharti, which is on the other end. So naturally, I guess we'll, in terms of single stocks, look at Idea, Indus, etc. as well, in continuation of what we're seeing out there as far as Bharti goes. Surabhi.
Yeah, I was just looking at, JK Tyre. It's one of the stocks from the entire earnings basket, which has shot through. We'll be speaking with the management in the next, I think, 15 minutes or so. Their margin has gone up from 11.5% to 13%. Revenues up, profits up 60%. And that stock's on a tear right now in terms of just the result reactions. But anyway, talk about the large cap screen and see what is working. Nifty's up 24 points. So what's leading it? SBI 1%, Bharti Airtel 1%. Tata Steel continues to shine through. A couple of brokers have been upgrading some of these ferrous names. And I think it was Motilal. Motilal has also upgraded Tata Steel, sounding quite optimistic. Eicher Motors is putting on about 0.5%. L&T is chipping in with a small 0.5% gain this morning. Lever, again. So it's small little incremental gains across some of these stocks that I've just named. So what is not working for the market? Interglobe Aviation for sure, it's down about 1%. Remember, crude has been sustaining at 65. So that's a bit of a sentimental issue as well that's playing out. What else? Axis Bank, ICICI Bank, HDFC Bank. All the banks are seeing some profit taking. Nothing much, just 3, 4, 5 rupees off the shares. But that's pretty much the red side of the screen. Other than that, it's just extremely quiet. A little bit of an undecisive kind of start to trade. 25 points up on the Nifty for now. Nigel.
Well, a few stocks that are getting hit actually. HOEC is down close to 6%. So big hit on that one. Bata, for the time being, the pair of shoes is kept in the cupboard. You don't want to throw it out, but you may not want to keep it as well because the stock is down close to around 5.5%. So big downtick is what we're seeing on that one. PNB Housing Finance, another casualty of the morning. So these are some of the top losers this morning. However, there are positive earnings reactions. As will be said, JK Tyres, that's doing well. Sai Silks, well, that stock is already had a good run. I'll be speaking to the management in the next hour or so. So keep an eye out on that one. For the timing, those numbers look rock solid. Up and about 8% and flying high. KFIN as well is higher in today's trading session. Some positive news flow. I recall yesterday to the close of trade where we had highlighted, that there was an approved list with regard to the component manufacturing projects. And one of the stocks that were mentioned out there was Syrma. That's opened up with a solid gain of close to around 3%. So that's bounced back well. I recall this was one of the stocks that we had highlighted towards the end of trade yesterday. Keynes as well as Syrma. And Suraj Estates as well. Another rank underperformer came out with a set of numbers, I think, yesterday. And that one as well. Up and about, in today's trading session. So pull back from very, very depressed levels. Decent start, 16 to 20 points higher on the Nifty, but the breadth of the market is positive. 1,500 stocks advancing. Yes.
Just one more stock on the results, hits and misses. Canara Robeco AMC. I mean, look at it. Stock slammed down about 8%. Yeah. Their margins have declined over 400 basis points at a time when, I mean, overall other mutual fund businesses have been doing well. Market doesn't like that at all. So it's a sharp cut on Canada Robeco.
Absolutely. I think, naturally, Idea is in terms of sheer volumes, the number one volume traded stock. It's though up just 1.5%. And Keynes and the others. Keynes is there, number 3 in terms of volume-led gains. Mazgaon is up 2%. It's got large volumes. Indus is up 2%. I think we mentioned Sai Silk, Kalamandir, which is up 9%. NetWeb yesterday was up 3%, and it's gone up a little bit more. I mean, fell to about 3,700, back to 4,000 in 2 days. Again, has done phenomenally well. K Fintech is up 4%. So, in 10 days, stock's gone from $1,000 to about 1,200. We've got, what else? Hudson, I think, was a big, massive mover, right?
Yeah.
Closed at 900 on Friday. From 900, it closed at, 1,080 yesterday, and it's moving up more. So 1,110 on Hudson this morning. Welspun Corp, almost 900. It's up about 2.5%. Volumes yet to pick up if I go down the list, but there is more action in that sense, which we will highlight. Supreme Industries reported numbers. It's down 3%. So along with Bata, that's the other one, which is taking a bit of a knock. We've Gautam Trivedi, who's now joining us right here in our studios. He's, of course, managing partner, Napian Capital. Gautam, great to have you with us here. Good morning.
Good to be up.
Good to be back in the country as well. I guess you're traveling.
Yeah, I was out for 3 weeks to the US, both East Coast and West Coast, and I've come back with a lot of stories. So I'm happy to share some of them.
Tell us a few stories.
Have you caught the investors? Did you catch them in your bag and bring them to India?
Yes, you've seen the market going up, and you've seen them coming back. So I'm partly responsible for that. But I think. Overall, the view on the market out there is that the domestic economy is so robust and so strong in the United States. Whether it's hotels, restaurants, flights, they're all packed. And if you look at the absolute numbers that the S&P 500 companies are putting to work in terms of cash deployment in this year, it's $4 trillion. That's all of India's GDP in just a single year. And of that, half of that is CapEx and R&D. And of the CapEx, about 27% is AI hyperscalers. So this is a number only of the top 500 listed companies. I'm not even counting the other, 4,000 companies, plus the unlisted private companies. I mean, obviously, OpenAI's CapEx is not captured in this number. So that's the extent of, the absolute amount of money that's being spent. If I break that number of 4 trillion further, 1.7 trillion is actually buybacks and dividends. So this year, U.S. shareholders / consumers will have 1.7 trillion in their bank accounts from buybacks and stock dividends. Next year's number is 4.4 trillion. So that's a 10 to 11% increase over this year. So the economy is very robust. I'm sure that message is coming out loud and clear.
But what about this whole debate around the AI bubble? What's the sense you got? I mean, are there more in the camp who believe that this is a bubble, but ride it till it lasts? Or is it actually, look at the layoffs, for instance. I mean, Amazon is a big story this morning, 30,000 people they're laying off. So, and then the cross-company deals that have been happening.
Yeah.
What's happening with the AI trade?
So the AI story is omnipresent. You could go to we went to Vermont and people were talking about AI. So it's all over. If you look at San Francisco, the Bay Area, I'd say about 80% of the billboards had some AI company advertising their product and, the use case. So, and I spoke to one specific investor who hosted a bunch of undergrad kids, about 30 kids for lunch. This is a bulge bracket firm, and they usually do that, meet students from other universities. And he asked them the following questions: how many of you use AI? Everybody put their hand up. Second question: how many of you use ChatGPT? He said about 80% put their hands up. I guess the others were using some other model. And if you look at ChatGPT, 800 million weekly users. That's 10% of the world's population. So AI is here. Is the business model broken? No. Is the valuation crazy? Yeah. Yes, it's crazy. And then, yes, a lot of people did complain about that. In fact, the question asked to me was, are there AI plays emerging in India? And in the listed, and of course, there's some in the private space, but specifically in the listed space, and we've seen NetWeb just now having a rally. But there are very, very few plays really at this point. So
does that come up as one of the reasons why I mean, because everyone wants, a slice this AI, big boom.
Yeah.
Bubble, we don't know, but boom, certainly. You think that's one of the reason why India's kind of lagged a little bit?
No, I think India's lagged not so much from the AI issue. It's more to do with the fact that the valuation's historically been expensive. So I don't think anybody's complaining about our valuation. What's amusing is that at 22, 23 times forward earnings, the US market for Americans looks very, very expensive. Here, people would say, what's the big deal? It's only 22 times. It's really not that expensive, right? But when the issue is high valuation with an earnings slowdown. So you put that together, then we have a real problem.
Yeah.
So the slowdown or the selling in the last 12 months from FIs has been focused primarily because of that. If earnings come back, and that's the question everybody asks me, when are earnings going to come back? And is the revival in demand with the GST cuts, is that sustainable? And I guess we'll know the answer by the end of December as companies start announcing their numbers, or early Jan, should I say. But the fact is, the interest at this point in India, surprise, surprise, actually is very high in interest. Doesn't mean they're coming back next week, but the interest on what's going on in India is very high.
Your note is pretty interesting, Gautam, and you make a mention, and we actually would have loved to that AI billboards on AI around. I think you put some pictures there as well. Wish we could show it.
That reminds me of college time, just the turn of the millennium, the dot-coms. Well, the internet companies lasted and they're thriving today, but not all dot-coms lasted.
Well, I made a analogy with when you go to Pune, 80% of the billboards are residential projects. Yeah. I mean, it's like as if this city has nothing else but housing.
Housing.
No, it's actually, I was in Bangalore. It's the same thing.
Same thing, right?
There's property everywhere.
Property. I mean, across.
Hopefully, we'll see more AI in Bangalore.
More AI in Bangalore. You write in your note that interest in China and Japan is peaking.
Yes.
That's the sense you got?
That's the sense I got. So let's make a case for India, and this is what I've come back positive, believe it or not. In spite of all that I've just told you, I've come back more positive on India than I was in the last, I guess, 12 to 18 months. First and foremost, if you look at our weightage in the MSCI, we've gone from a peak of 21% in September of last year, we're down to 15.7. We're now third highest in Asia, within the EM basket, not just Asia, so after China and now Taiwan, and we're number 3. Second is the average investor or allocator that I met is underweight India by 200 to 250 basis points. So that's obviously a huge underweight. If you look at the underperformance that we've had this year, and I'm just going to rattle out some numbers which even I didn't know until yesterday. This was the level of underperformance. Korea year to date dollar return 81%. Taiwan, China 35%. Hang Seng 30%. We're 5% dollar return. So a lot of this makes the case for India starting to look attractive. Plus, as you said rightly in my note, that interest in China and Japan clearly has peaked. 2 years ago when I was in the States, a lot of investors were talking about India and Japan in the same sentence, which was fantastic. But of course, that slowed down. As earnings slowed down, that went out of the window. But I think people are now asking the question that if China's and Japan, we think, have peaked in terms of absolute equity market performance, should we be deploying money in India at this point? And will earnings come back? And will the GST cuts result in a big revival? So that's, a lot is riding on the GST cuts.
Right. And I think, as you said, if earnings come back with the FIs being underweight and post our underperformance, hopefully we do see a gush of money. But earnings need to pick up first. Gautam, in your note, I was going through various aspects, and the chia seed pudding, that's an interesting one. Over the weekend, my wife served me one of those, and glad she's making it at home.
Exactly.
Looking at the costing out there, oopsie daisy, I think babe's doing well, making it at home.
No, but I think, yes, I don't know how much she's charging you for it, but...
No. It's made at home, so that's good.
Chia pudding this small, literally, and I'm on TV, so I can show the size. It's this small. It's $10 in New York City.
Oopsie daisy.
Sorry, what is this?
It's just a chia pudding, this small.
Pudding. Okay.
It's extremely good for health, Prashant.
Yeah.
I was told on this weekend.
But you need a couple of them, about $30 to actually make a real meal out of it.
And you've mentioned as well, hotel room rates as well are going skyrocket, right?
Exactly, yeah.
And okay, let's get back to another important factor for our markets, the trade deal. Our numbers not coming. I mean, we thought we would be top of the pops, maybe the first ones to get a deal. That's not happened. At least over the last month or so, some optimism is coming back. How important is that? India getting a favorable trade deal, in light of this entire foreign institutional holding here in India?
That's a very good point because, the question I think in some sense is that has the trade deal or the lack of it impacted our foreign portfolio investors from putting more money to work in India?
Has it?
To some extent, yes. Of course, it would be a emotional positive or incremental positive for India if that were to happen and whenever that happens. But I didn't get a sense that that was holding back investors from putting more money to work in India.
Okay.
Because the fact is, we're only 80 billion in terms of total exports to the US, less than 2% of our GDP. So I don't think people really cared so much as they did for China and the US.
So the trade deal doesn't move the needle too much.
No.
It brings back the annual spirits.
It brings back a positivity.
It brings back sentiment, which brings me back to earnings. Because
that's right.
I was hearing you say that, and it's so true, right? We kept, saying that 22 times, 23 times, we're always an expensive market. I mean, big deal. If you have to be in India, you have to pay a premium.
That's right.
But those were the years when we could boast of 15% plus compounding growth for quarters together, right?
Yes.
Now, what did you tell investors? And they're asking you about this, right? Is earnings coming back?
Yeah.
What's the sense? I mean, not 1 quarter or two. This is a bigger issue, Gautam.
It's a bigger issue, yes, undoubtedly. And I think, but there are two things. Again, we've seen over the past 3 to 4 years, the money that's coming into the equity markets is driving the equity markets. And the money is coming into the equity markets not because of earnings growth, earnings slowdown. It's coming in spite of the earnings slowdown. So why is it still coming? Because the alternative investment avenues yield lower yields. So as a result, are you going to put money in a savings account? My HDFC Bank account is 2.5% pre-tax. A 1-year, 10-year fixed deposit is 6.5% pre-tax. I think we're doing a good job of marketing the equity markets through CNBC and the media. So people are putting money, every single day, every week into the equity markets. And the other statistic, which I may have mentioned before, is that of the 120 million unique investors in India, 5 states account for 48% of those investors. So the equity culture, which has started to spread over the past 3 to 5 years in India, which is great, has not even reached the halfway mark. We're talking of more penetration coming over the next 5 to 10 years.
Which is great, but it's also a bit of, I don't want to be a big bear here, but that's also a bit of a risk building, right? Because that equity culture will keep growing and people from tier 2, tier 3, tier 4 will keep investing. Again, if you don't have earnings, then we'll be trading with our own money, we'll be trading at 24, 25, 26, 27 times because there's so much money chasing the same earnings pool. Isn't that a concern?
That is a concern, yeah.
A lot of supply as well, right?
And a lot of supply. Thank God for that, yeah.
Thank God there's supply, because if the supply wasn't there, then the market would be even more expensive. I mean, the secondary market. So it's good to see that there's more supply coming.
I was speaking to an investment banker just yesterday, off-camera conversations, and he was like, let's face it, at the end of the day, you've got to get the animal spirits fired up. People have to start putting money to work to create capacities, to create businesses, even if those capacities lie idle for 1 or 2 years. Till that happens, and it reminded me of what Mr. Uday Kotak said, right? I mean, if you're just about selling businesses, doing the blocks, running family offices, and then you complain earnings nahi aa raha hai. Can't have it both ways, right?
Yeah, absolutely. And I think it's a good point. Gautam, in terms of, markets is, of course, all about picking individual names, right? Individual ideas. So what are you doing?
So, what we're looking at financials are back. The good news is that you've seen a lot of M&A activity, strategic change in CEOs, restructurings. So the financial sector, and I mean the overall financial sector, not just the commercial banks, but even the NBFCs, the gold loan companies, etc., all of them are having events and triggers that are happening around them. So, that's a very exciting space to be at this point. Secondly, I think going back to AI, there will be more AI companies, much like, today there are a plethora of 15 EMS companies that are listed. 5 years ago, Indians didn't even know what EMS stood for. And now we have 15 companies. And Dixon, of course, is the poster child, but there's so many others that are doing extremely well. So I think there are emerging businesses coming, new IPOs of companies that, are very unique in different businesses, aerospace, defense. And I think AI, hopefully we'll see more companies IPO over the next few years.
Fractal's IPO is coming.
Yeah.
And I think next month, right?
I believe so, yeah.
But some $3 billion $3 billion valuation.
Yeah.
So we'll have to see.
But Gautam, since you're in the studio, you've given us a couple of themes.
Yeah.
What have you all done? If you could name a couple of, with due disclosures, what do you like? A couple of themes you like?
Yeah. So
if you could name, a few names as well, will be helpful.
Sure. Our way of playing AI actually is through power.
Okay.
So, based on what you've seen over the past 12 months, power is really the need, if you want AI to succeed. So the Wall Street Journal last week had an article which said that as of the end of 2020, 2% AI hyperscalers consume 2% of the US electricity total consumption. By 2028, it's going to be 12%. We'll have a similar situation here. I don't know what the numbers here today because we have only all of 1 gigawatt of capacity. But if going by all the numbers that are stacking up, going to 9, 10 gigawatts, we're gonna need a lot more power. So in our case, we played a power as a theme that's going to be sustainable for the next multi-decades. We like TD Power beyond that. Our portfolio is on our website, so no, we're not concealing anything. We like GSW Energy. We like transformers and rectifiers, so we have a bunch of these stocks, and we like Inox Wind.
All right.
IPOs, just give us your overall sense on valuations and whether it's a decent party, well-regulated party, or if it's getting a wild party. Lenskart asking for 70,000. And some of the new companies obviously don't make profits also. And you have to look at, I think it's coming at 10 times sales. There's been LG, however, on the other side, Urban Company.
But look at LG. I mean, I'm glad you brought that up because the valuation of LG India is more than the valuation of the parent. The market cap is more than the market cap of the parent. So what does that tell you? That domestic investors just don't care. They're looking for the next interesting stock, and they want to hold it for from 6 weeks to 6 months to longer. But I think that's where,
Are you comfortable with the kind of asking numbers?
Well, the fact is, Shubhi, you've got to put on a capital markets hat. We all do that when we buy and look at a stock. Yeah. When we buy the stock, the first thing we think about is how will the market appreciate this number? If it's trading at 35 times, is the market ready for 35 times? I'll give you an example. We used to own Varun Beverages for the longest time. It traded at 45 times earnings when people said, gee, this is so expensive. The market's comfortable with this number, so why are we fighting this? So, I think that's the other way to look at this.
Yeah. As long as the growth can justify it, absolutely.
Exactly, yeah.
And also one point with regard to this IPO euphoria, right? At times, since we just spoke about Urban Company, the stock is sub 150 rupees. Just post-listing, very good story, long runway. Yeah. You need to be careful at times with regard to this listing euphoria because the stock from 200, now it's at 150 odd. So you'll get your entry point. You need to time it a little bit better, I think so.
Absolutely. Okay, Gautam, great conversation. Thank you very much. And
thanks,
as always,
see you guys again.
Love getting those snippets from the ground after your US trip. So thank you for joining in on that. Have a good day. Well, with that, quick glance back at the market. Where are we? Okay, 65 points higher. So the dip is getting bought. And remember, both our technical experts were exactly advocating this. Wait for the dips. And if the dips come, then buy because the trend seems to be very much intact on the upside. So right now, we're at the morning session highs. Let's focus on a couple of stocks. Going back to Bata, has it recovered? Not really. Still down 5.5%. Not quite in step with the investors' expectations. Mangalam.
Well, there were a lot of wrong footings during this quarter for Bata. If you look at it, to take that punt forward as well, a couple of things happened. One, there was that transition from GST rates that impacted the last part of the quarter. In the middle of the quarter, we had, a disruption in one of their biggest warehouses. So that led to some sort of, impact. And more importantly, the company also looked at destocking some of their inventory at lower prices. So that impacted their overall margins. And then over and above everything else, we had a VRS that they started in one of the plants. And as a result of which, there was an exceptional loss of or exceptional expense of over 8 crore rupees. So all of that meant that right from the top line, the revenue declined by about 4%. And it wasn't on a high base either. Last year as well, the revenue was absolutely flat. And then because of the inventory markdowns and all the disruptions, etc., the EBITDA fell by about 17%. The company had to increase their marketing spends as well. And finally, the exceptional expense meant that it had a further impact on the net profit. And from over 52 crores, the net profit actually fell by 74%, all the way down to 13.8 crore rupees. The company said there were deferments of purchases, but they had a couple of green shoots. The one was that, there were signs of recovery in the festive season. So that's something that we'll obviously get a little more color on. And we had premium products like the likes of Hush Puppies, etc., doing a lot better. So could that mean that maybe the worst for Bata is over or not? That's a question that I believe that the management will have answers to. But for now, on the back of a quarter where a lot of things went wrong, the stock down 5%.
Okay, well, Mangalam, thanks very much for that. We'll take a quick commercial break here. Up next, we connect with the management of JK Tyres and Industries for their second quarter earnings coming up in just a bit.
Welcome back. Well, keep an eye out on a few stocks in the broader markets. We have Welspun Corp. The stock is showing strength after a while. Just looked at the exchange, and later this week they'll be reporting their numbers. The street, it seems, are coming to terms with that. Remember, from the recent peak, it saw a sharp correction. I think 950, 960 odd, went down to around 820, 830 odd. And last two sessions, actually, it's moved up. So maybe anticipating stronger numbers on this particular name. That said, let's focus on a good result today. JK Tyre reported a healthy set of numbers. The India business has been leading the growth. The Mexican business as well delivered a steady performance. To discuss this and what's the way ahead, we're joined by Anshuman Singhania, the Managing Director at JK Tyre. Hi, Mr. Singhania. First of all, good morning and congratulations. A good showing. The street likes what you've delivered. I want to focus on the profitability aspect.
Thank you for having me on the show.
It's a pleasure, Mr. Singhania. Let's get a couple of numbers out of the way, though. The margins, that's a pleasant surprise. You've delivered close to around 13% in terms of EBITDA margins. Even your gross margins, they as well are looking quite good at around 39%. Now, we know that raw material cost has perked up a little bit. What's the sustenance in terms of both these two numbers, EBITDA margins as well as gross margins? Please go ahead.
Yeah, sure. Indeed, JK Tyre has done well. Our margins have definitely expanded based on the raw material decrease, plus our push on premiumization. Our product mix has enriched, and we have also got a lot of excellence in our operational excellence as well. So going forward, it looks like the demand is going to be steady thanks to the GST and the general sentiment which is picking up in the rural segment. And there has been an uptake in the overall automotive industry. So we are very much hoping that for the full year, going forward, H2 should be looking good.
Okay, all right. So you believe margins could sustain around these levels, in the vicinity of these levels?
Yes, margins would sustain in this level going forward.
All right. Let's focus on the larger part of your business and the India business. You've mentioned 15% volume growth in the domestic market. Could you tell us where's the strength coming from? The replacement market, the OEMs, if you could give us a brief idea in terms of demand trends?
Yeah, sure. So we did a double-digit healthy growth in our domestic market, and our products like truck radial and passenger saw very steep growth in terms of the volumes, and even the farm, even in the OE and the replacement, did exceptionally well. So we see this growth being continued at least in the next quarters as well.
Anshuman, hi. Good morning. Great to have you on the show. Surabhi here. Can you expand on that point? Because that's really not a million, maybe $1 billion question. Whether the post-GST cut pop, this festive pop that OEMs have seen, whether this is really going to be a lasting trend for the coming many quarters. What's your sense? What are your channel checks telling you? And between the two markets, OEM demand and replacement market, for the second half of the year, I mean, what will the trends be like in both of these segments? And just break down that volume estimate. You're saying 15% volume growth. I mean, where will it really come from?
So I think starting from the OE, in the CV market, which was very much muted, we are seeing a mid-single-digit growth coming in from there. In the passenger, we are seeing a strong single-digit or a high single-digit coming in from the passenger as well. Even in the tractor, we are seeing a good, strong single-digit to a double-digit growth coming in. So overall, the automotive industry looks healthy. So we are seeing a 7 to 8% growth in the automotive industry coming in. In terms of the replacement market is buoyant because of the GST. I believe that the dealers have flushed out a lot of inventory. So that gives room to the fresher sale. We have seen a strong number of TBR volumes grow by 22%. We've seen in our passenger line volume, which grew by about 16%. So that's all indicating a healthy double-digit strong growth. And with our new introductions of products and going into the white spaces, I'm sure we'll be able to keep up this momentum very strong.
And would it be possible for you to share roughly, I mean, if you talk about the total top line, what is the breakup between OEM and the replacement market for you across the portfolio?
So the replacement would be about 60% and 40% would be the OE.
And you would expect this ratio to continue even towards the end of the year, the 60-40?
Yes, we would continue. We see that to continue in this proportion.
Okay.
Mr. Singhania, morning. So, one question a lot of investors keep asking is this GST-led boost to demand durable across categories, cars and everything across the board? So if I would have put that to you, because you would get a sense, right, from OEMs, how they are planning, because if they're seeing demand ahead or not. I mean, how would you answer that?
No, definitely the GST has given across the board a good boost to the overall sentiments of, and hence the demand across the sector has picked up. In terms of we seeing the robustness in terms of the OE, whether it is the CV or the passenger car vehicle, which is in terms of good production numbers which are coming our way. We are the largest in the truck radial space where we are catering to the OEMs. And we see a good boost in the entry-level vehicles also coming in the car. And I think that is going to be playing out going forward in the subsequent quarters as well. So overall, we see a healthy growth which is going to be coming in from OEM. And
so November, December, I mean, this will sustain. That's my question. Or you think once again from inventory getting corrected, you'll end up in a month or two, you'll end up with a situation of excess inventory. That's the fear.
No, actually, the underlying demand has been very good. In terms of the rural demand, which is picked up, the infrastructure push, which the government has been doing, that is leading to a lot of demand generation, especially in the trucking segment as well. And there has been a boost in terms of the cars as well. So that sentiment combined with rural sentiment, which we are seeing in the farm and the two three-wheeler. So that is a good indicator that it is showing that it is going to be continuing going forward.
Okay, all right, Anshuman, we'll leave it on that note. Good quarter, and you're expecting it to be a good second half as well. Shareholders will definitely hope it plays out that way. Thank you so much for joining in, and all the best for the rest of the year as well. Well, from JK Tyre, which has been reacting quite positively to numbers, to Bata India, which has had a bit of a rough quarter. Stock's still down about 5%. After the company reported pretty mixed set of numbers for Q2. A lot of the major parameters are actually down as the company has been going through the GST transition. We have Gunjan Shah, Managing Director and CEO at Bata India, to walk us through some of these trends. Gunjan, thank you so much for joining in. So for the benefit of our viewers, I'm just running through the numbers again. Your top line's down by about 4%, and profits have also been slightly sluggish, if I could say. Margin is at about 18% versus almost 21% same period last year. So just tell us, is the bulk of the GST pain over? What is happening with the inventory, and what is happening with your pricing strategy? Because that threshold where the lower GST comes in is at 2,500 rupees. So, will there be a propensity, say if you had, a product at about, 2,800, will there be a tendency to now reprice it in such a way so that it gets the benefit of the lower GST? So therefore, how should we expect this transition to play out over Q3 and Q4?
Sure. Hi to your viewers. Good morning and belated Happy Diwali. It's been a quarter that's got impacted by the transition, but we were well behind it on the 22nd of September when the effect went into place. It did obviously impact trade and consumer sentiments and therefore deferment of purchases. But I think post that there has been a I think a good uptick and recovery, in which we hopefully will pan out over the next couple of quarters. From a pricing point of view, Surabhi, what we have done is we have, as was also suggested and indicated by the government, we have passed on the entire benefit. The portfolio that has got, obviously will get repriced because of this is almost about 80%, and that has already been done. So that's already in market, right? So we will basically want to ensure that we stay with the principles of passing on the price benefit to the consumers. In addition to that, because we wanted to manage and lubricate the transition and therefore clear out inventories, that did have an impact on our gross margins temporarily till about 22nd. We are hopeful that all of that should now recoup back as things stabilize post the 22nd.
So some numbers here will really help. I mean, even if let's not look at Q2 alone, let's look at first half. Mangalam's helped us with the numbers there as well. Revenue is up just 2.2%, and your first half margins are at 19.7%, just south of 20%. So let's talk full year now. By the time this year ends, all this would have normalized, right? So full year, what's the expectation for top line and margins?
Yeah. So we are hopeful, obviously, of this recovery will sustain going forward. And in fact, actually, in my view, I think GST is a structural piece and therefore should have a structural demand recovery. In addition to that, there are a few other initiatives that we have done. I think one of the largest ones has been zero-based merchandising and the refreshing of our stores. So we have already hit about 250. We plan to hit 400 by the next quarter and 800 by middle of next year. So I think that refresh is giving us significant bounce back in terms of like for like in the stores that we have done. So that plus, I think some of the collection that we have launched, I think the Victoria Ballerina collection has been a big success. We expanded to almost a full store network as well as with much larger volume and variety, and that should give us an uptick. So I think a combination of the GST structural impact, some of the store refresh that we are doing, as well as the collections and the stories that we plan to present to consumers should augur well for us going forward. From a margin perspective,
Mr. Shah, sorry, just to come in, can you, for both revenue and you characterize the environment, would you be able to put some numbers to it? H2, what kind of growth?
Nigel, but what I do foresee obviously is a significant amount of bounce back coming through with obviously the GST transition pain under the belt.
Prashant here, sir, but you don't think there is you won't be able to sort of put some numbers on it?
Yeah,
your assessment.
I will refrain from giving you a forecast, but we are pretty positive post the 22nd from the response.
No, but can you sustain a 20% margin with the repricing? Like you just said, 80% of the portfolios had to be repriced. So can you still do 20% margin?
No, so we've done it. It's basically impacted, about 6% for pricing of products which are below 1,000, as well as about 11% for the ones that are above. And that is margin neutral. So that doesn't impact margins at all. I think this impact that we saw last quarter was largely because of the transition should bounce back.
All right. Hi, Mr. Shah. This is Nigel. Yeah, good to speak to you.
Hi,
premium products as a percentage of your total sales mix, how much is it?
It's about 30%. And obviously, even last quarter, despite the transition pains, premium has done well, which is hush puppies, power, floats, etc. So that continues to have much better traction. But we are hopeful the lower end also will see much better traction now with the, the tax arbitrage coming down.
The ideal sales mix be if premium is at around 30% right now?
Yeah.
What would the ideal mix be? Where do you see that number headed?
So it'll keep on creeping up as premiumization continues in the economy and consumers as well as in our portfolio. So my sense is that this will keep adding about 2-3 percentage points every year. So it should reach in the next about couple of years, I think about 40% plus.
Can you tell us about your e-commerce sales plan as well? What is it at? Where do you see it headed? And the measures that you are taking in?
Yeah, so e-commerce has been our fastest growing business, just like most other players, right, over the last 5 years now. Now it is low double-digit contributions to us. We've also been very conscious of making sure it is accretive in terms of profitability. So it's not been just, sell at the cost of anything. So we've been very conscious on that front. And I think we are expanding going forward. I don't see a reason why it should not be our fastest growing channel going forward. From low double-digit contribution in the next 2 or 3 years, we should be at about 20%, north of 20% contribution. So it will be a fastest growing and will drive growth for us.
Mr. Shah, just to press, without asking you to put numbers to it, but revenue growth has been low single digits. Do you see, I think margins are below pre-COVID levels. Could you give us some sense of how this is likely to shape up? Some analysts are cutting your expectations from where you are for FY26, FY27, etc. So how would you look at it?
Yeah, no, thanks, Prashant. So I think the way we are looking at it is that margins per se, I think, are a combination of both the leverage on top line as well as in terms of cost structures. I think in terms of cost structures, I feel very comfortable in the space that we are with the kind of structural corrections that we have done, including the one-time VRS that we have done even last quarter. So we've been more than happy to make sure that we invest in those cost structure corrections that we are working for the long term. So I think there we are pretty comfortable. Once the leverage on the top line comes through, the margin should bounce back.
All right. And there'll be some annual savings as well because of that VRS, right? You want to quantify it very quickly?
Absolutely. They give us paybacks within less than 3 years. So there will be, savings recurring for us perennially.
All right. The shoelaces seem to be tied and you're set for a bigger sprint in the time ahead. We wish you well, Mr. Shah. Look forward to chatting up with you. Past quarter may be a little bit softish, but you're guiding for better times ahead. So we'll track you to some of these numbers. Have a good day ahead. Well, let's move on then and let's shift focus to our special segment, Quarter Se Quarter Tak, to get you expectations from every sector. Today, Vinny is joining us. She's going to tell us what we expect from capital goods. Vinny, over to you.
Hi, good morning. So in terms of capital goods, this time we're expecting a mixed quarter coming for the capital good players in September quarter, end of 30th September. Now, a robust order book, that is what we're going to be starting with. That will start converting into higher revenues and selective companies will see margin expansions. Talking about the order inflows now, when in terms of order inflows, they're expected to see a bit of a drive coming in, and that'll be something that'll be driving the narrative of Q2 FY26. CG Power, that is expected to stand out in terms of order inflows, 27% growth on a year-on-year basis, and closely followed by Hitachi Energy, 17.8% YOY growth is what one is expecting there. Siemens is expected to deliver an 11% increase in terms of order inflows. Now, looking at ABB, they're expected to see a steady progress as well, while Thermax, that's where we could see a bit of a moderation coming in terms of order inflows, a decline of 11%. BHEL, a decline of 29% is expected in this quarter, maybe because of the legacy headwinds they're facing in terms of the orders. Now, other than that, when you talk about revenues, revenue conversion is expected to be good, and the backlog of the order book that is there, that will be something that will be supporting the overall revenue growth for the companies. Now, broad-based growth is what we're expecting across all the capital good players. CG Power is going to be taking the top spot with 36% growth expected there. And then moving on, BHEL and Hitachi Energy are 19 to 20% growth is what we're expecting there. Now, coming to Cummins, ABB as well as Siemens and Thermax, that will be providing some bit of a mid-single digit to high single-digit growth is what we're expecting this time from these companies. Shifting focus to the margins. Now, that's a very divided story among all these companies. Hitachi is expected to see a very good margin expansion, 500 basis point. And then following, obviously, CG Power, Cummins, Siemens, all of them are seeing 90 to 60 basis points, somewhere in that range is the expansion expected there. But what is not expected to do well, ABB, Thermax, BHEL, in terms of margins, they are expected to see a compression coming in this time. Commodity prices and some of the legacy project issues for BHEL is one concern that comes in, especially over there. Now, overall, just summing it up, Q2 FY26 expected to be a mixed quarter supported by strong order book backlogs, broad cost rationalization that will support the margins, moderating commodity inflation is supposed to support the margins as well. Execution, that is something that everyone will be keeping an eye out on. Private capex story, where is that headed? As well as in terms of prolonged monsoons, has that impacted the EPC side activities? That will be key to watch out for. Valuation surely have moderated from those peak levels, and that is indicating that slowing order inflows that one has seen coming in. Capex spending reduction over there as well. So keep an eye out on that. Only Hitachi Energy as well as CG Power are seeing some of those premium valuations, but they've come off the peak as well.
Okay, all right. Thank you very much for that, Vinny. That's a comprehensive wrap, and it sets us up for our conversation with Harshit Kapadia, Vice President, Industrial Defense, Railways and Consumer Electrical Space, as well as Durables. It tracks a whole bunch of these capex-intensive companies and stocks at Elara. Harshit, thank you so much for joining in. So let's start with the big boys from the capital goods space. Let's get your highlights and trends. Purely in terms of good execution, a pickup in growth. Which are the companies that will perhaps shine in Q2 and going forward in H2 as well?
So companies which will see a very strong growth are mainly power equipment related companies, because they have a very strong order book and largely driven by government as well as the power capex which is ongoing. That would mean companies like Siemens Energy, Hitachi Energy, GT&D, Quality Power, Power Industries, so cable and wire companies. These are some segments and companies which will see a very strong growth. Partly we have seen KEI and Polycab reporting their numbers, which has been in high double digits as far as volumes are concerned.
Okay, so some of the power equipment makers would be in double digits. Got that point. And what about the margin profile? I mean, are you expecting any significant changes in Q2 or Q3?
So as far as Q2 is concerned, we think margins for at least the equipment companies, the power equipment companies, should be better. Though going forward, that is in H2, we are expecting competitive intensity to increase, and especially we are hearing Chinese competition is also slowly increasing in some of these segments, which is something which we'll be watching out for very keenly. Hence, H2, there could be some pressure. But given that revenue growth momentum would be there, assuming that raw material stability is there, margins should be in the range of around 14 to 15% for most of the names.
That's interesting. Chinese competition in which segments and what kind of, what part of the power chain that you're anticipating in H2?
Mainly on the power equipment side, that is from high, medium voltage, and partly some of the HVDC projects as well. So there has been some rise in competition.
Okay. The good thing is, from an investor perspective, Harshit, that these stocks are now, they're a little off the peak. They were all quoting at 90 times, 100 times forward earnings, right? At the peak of the whole capex bull market. How do you find the valuations now? Where is the risk reward the most favorable, and what are your top picks?
So valuations are still high. It's not very high, given that the order inflow momentum has been a bit on the weaker side, except for power. There has not been much growth as far as capex is concerned, especially the private sector capex. So we would still expect some moderation to happen as far as valuations are concerned. Though there has been some activity happening on the transmission side. A week back, there was a report on the hydropower transmission capex. They are looking at close to around 2 lakh crores of transmission capex. Apart from that, the overall renewable transmission capex is looking at close to around 9 lakh crores. So we have a decent pipeline as far as transmission is concerned. So EPC is one segment which will be very positive about. Apart from that, on the power equipment side as well. So within this, what we like is Case International. We like Siemens Energy, we like Hitachi Energy, and KA Industries. This is something that we like. Something that we don't cover and we like is Elecon Engineering, Quality Power, and Apar Industries.
Okay, so you like players on the EPC side playing the transmission story. Nothing from the bulge bracket big MNC power equipment makers themselves, the Siemens and the ABBs of the world?
So if you look at over last 1 year, a lot of these companies have transitioned away from the power equipment to non-power equipment, because ABB got divided into Hitachi and Siemens got demerged with Siemens Energy. So large part of the portfolio for ABB India as well as for Siemens India is more towards private capex. The trigger which could be there for Siemens could be on the mobility side. There is one large tender which is coming for the local trains, which is in Mumbai. They want to completely air condition it. That is a big tender which is going to come out probably in Q3 end is when we expect. So that could be a trigger for Siemens India. Apart from that, private side, it's a bit on a slower side at this point in time.
Okay, all right, and that's going to be an interesting one, yeah. I mean, fully air-conditioned Mumbai locals, definitely something to watch out for. It's going to be a big story overall. Thank you, Harshit, for flagging off all that we need to watch as we get into Q2 earnings with these companies on the capital goods side. Thanks for joining in. You have a good day. Well, we'll take a break on that note. On the other side, Manisha with the latest commodity market action.
best.
Welcome back. We've got markets in focus. Nifty is down about, 65 points. So 25,900 or so is where we are at. OpenAI, some announcement at the bottom of the screen. We should have it back up. Look at the turn that we've seen, by the way, as far as the index is concerned. Maybe just look at the Nifty Bank before we go any further. There as well, there is a sharp sell-off which is happen. I mean, the high was made for both the Nifty and the Nifty Bank at about 935. And from there, it's been a very, very sharp reversal, which we have seen. Small cap index, I think, has also seen a sharp reversal. And I think something similar should be the case for the Nifty Midcap index as well. Yeah, all similar kind of price patterns. A strong start, open higher at about 930.35. There has been a turn in that sense, which has happened. Well, what's the commodity sort of story this morning? Precious metals are seeing a bit of a pullback. We touched upon oil earlier. Manisha, which one is it? What are you tracking?
Well, I'm looking at precious metals, Prashant, at one point in time, it was all about new all-time highs. But in the last couple of weeks now, we're looking at profit taking. If anything, if the overnight is anything to go by the way, we've seen a 3 and a 3.5% of decline come in for gold and silver, both of these. And with this, we're now trading at 2 to 3 week lows for these. Last 1 week for the precious metals also has turned into negative, and that has pulled a month-on-month chart also in the red when it comes to gold and silver. I mean, with the wave that we've seen most of 2025, this is a new chart that we are looking at. But when you look at this year until now, it clearly has been on the positive side even now. So you have gold, which is still 52% higher, and silver with 62% of gains stands tall. I just want to take one thing away from that chart, and that really is about the silver prices there. So clearly, gold is now trading below $4,000 an ounce. We've seen 43.81 as an all-time high, and from that 4,000 important psychological level has been given away. We've seen 39.60 as a low as well in the New York session yesterday, and that's pretty much that we have seen come in for silver as well. Should get that chart on your screens as well, because for silver, 54.5 was an all-time high, and from those kind of levels, we've seen silver prices decline to around below 48 as well. 3.5% of a decline overnight markets. That would mean a lower circuit for the Indian markets, and that's exactly what we saw on MCX yesterday. Today morning, we haven't seen that trade open yet. MCX did say that they'll start at 9:30 and then 9:45 and then 10, but we haven't seen trade start yet. And there are some reports suggesting that it would be by 10:30 or 10:45 that MCX perhaps could be trading therein yet again. Take a look at what really seems to be happening into the markets, especially when it comes to precious metal right now. One, it is pure profit taking. The markets were overheated, overbought from the beginning of September itself, and some correction is what the markets were perhaps waiting, watching out for, and is what you're looking at right now. And then it also is about the US and China closing to a major trade agreement, perhaps, is what the markets are reading in. The US president is meeting Japan premier today. There are more tariff agreements happening, and that has led to that safe haven buying coming out from the market. And we've seen risk appetite money go back in case of equities there. Strong withdrawals from the gold-backed ETFs also is weighing onto the space. And then the expectation that the US Fed meeting, when that happens by this weekend, you could be looking at 25 basis point of a rate cut coming in yet again. That is something that the street has already factored in, by the way. Come to Indian markets then, and much of that premium that we were talking about in case of gold and silver all seems to have gone away. But the good thing that has happened is that with this kind of a profit taking that we have seen on the street, the festive demand has come in on the stronger side there. Indian demand also has been higher for investment. So during the Dhanteras Diwali week, people tell us that there was more bar and coin sale rather than jewelry. So clearly, investment is what we saw happen there. Also, when you look at the Indian imports itself for the month of August, were a 10-month highs. The ETF buying has been record high for the month of September. So buying in that sense also has been quite strong. And the markets really are reading into this decline in case of gold prices as temporary, as consolidation, and a longer period consolidation perhaps could take prices higher yet again. That's exactly what most banks and brokerages are still putting forth. So you have JP Morgan telling us that they still expect the prices to be above $5,000 an ounce in next year. CPM Group talks about 4,500 in this year itself. And 5,000 is a level that various banks and brokerages have talked about, including Metal Focus, Citi, Bank of America, etc. You have Ed Yardeni also talking about 5,000 rather. And Metal Focus on silver believes that while we might be trading below $50 an ounce right now, but next year end could be $60. So Consolidation, well, yes. Correction, yes. Profit taking, yes. But long term, still bullish.
Right, Manisha, thank you very much for that. By the way, talking about commodities, look at the dominant commodity exchange, right? MCX trading yet to begin. And there was another alert which came up. So third time in 4 months. I mean, how can it be that this is, basic trading which is yet to begin? They're not being able to. And at the moment, we don't have further information from the exchange. We're trying to connect with them and maybe ask them to join us in the air as well to ask them what really is going on. On that note, let's just take a quick commercial break here. On the other side, it's our segments, The Economy, Lata in conversation with Samiran Chakrabarti of Citi, Harish Damodaran of the Indian Express on the strength of rural demand after the just ended Kharif season.
Welcome to It's the Economy. Much is being speculated about urban festive consumption, but has rural consumption held up? And more importantly, will it hold up in the second half? Rural India has recently been hit by two worries. One, food CPI or food inflation has been negative for the last 4 months from July to September, which of course impacts farmers' purchasing power. And secondly, the Kharif output for 2025 may be hit by the late rains, especially in the state of Maharashtra and adjoining states. To get an idea of the state of the rural economy and rural demand, I have with me Samiran Chakrabarti, Chief Economist, Citi India, and Harish Damodaran, Rural Affairs Editor, and by far perhaps the best expert you can get on Indian agriculture from the Indian Express. Harish, Samiran, thank you very much for your time. Samiran, first to start with you on the scene that we already know. How good was rural consumption up until September or October?
Thanks, Lata. So what we were observing was that the positive effect from last year's good Kharif crop as well as this year's good Rabi crop was feeding from agriculture into non-agricultural activities in rural area, because rural is somewhat of a circular economy. And that was leading into a much better employment growth in rural, not just agricultural employment, but also in non-agricultural sector, which in turn was feeding into rural wage growth being at almost at an 8-year high. And if you put all of this together, this was giving a much more sustainability to the rural demand prospects than what we had seen in the past, where the moment one crop fails, that would have led to lower rural consumption. So this time, this has been a much more sustained up move in rural, contributed both by the fact that the agricultural part was good, as well as the fact that this was feeding into the non-agricultural part of rural also through the labor market channel of higher wages, etc., which we have seen starting to reflect in much better tractor sales data, much better two-wheeler sales data. In fact, even the currency in circulation data, which is a proxy for rural demand because a lot of transactions happens in cash, that has also seen a significant almost 9% plus growth. All that is pointing towards a much better rural situation now than what we would have thought a year or so back.
Actually, yours is a very rich report. You are telling us that rural wages also are something like at a 10-year high, Samiran. If you could just elaborate on that part also, did that come as a surprise?
So yes, I mean, there has been for a very long period where rural wage growth was, at least in a real sense, adjusted for inflation, not moving up much. Finally, we have started seeing this happening. And this, our suspicion is that this is because the rural labor market is becoming tighter. We are seeing from high-frequency employment data that both the agricultural employment as well as the non-agricultural employment, and we sometimes underestimate the extent of non-agricultural employment in rural areas. The manufacturing employment in rural, that has seen significant growth. I mean, we have had almost 12 million new jobs getting created in rural manufacturing in the last 1 year. So this has started showing up not just in the fact that the NREGA demand is down significantly year over year, but also in the higher rural wages, which, as I said, is at an 8-year high now, especially if you adjust for the extremely low levels of inflation that we are seeing, then the rural real wage growth is even better.
Okay. Harish, would you want to add to this? Are we seeing an kind of an unprecedented level of rural prosperity, or is it just cyclical? Samiran seems to say that it's an 8-year high in terms of wages, real wages.
Yeah, the drivers very clearly are non-agriculture, and nothing to do with agriculture. I think what is happening is even migration. What is happening is there is less migration now happening to the metros, whereas we are seeing a lot of migration happening, maybe within, say, 200 kilometers of the origin of migration, Okay. So maybe tier 3 cities, tier 3 towns, district headquarters, those kind of things. And probably, the cumulative impact of all the, the investments in infrastructure, whether it is the highways, whether it is communications. I think all these, are having some kind of a cumulative effect, and probably agriculture, I mean, the good monsoons, etc., is a kind of a sweetener on top of it, But what Samiran is talking about could be probably a more secular kind of trend, where you have wages which are basically non-agricultural sector growth. Probably it could even be things like construction. It could be, say, services. And which is happening in small towns. In the provinces. And so I think that is maybe the big change which is happening. And probably it's now accumulating. And this will always happen with cycles. And as Samiran is saying, it's happening after 8 years. Yeah. Okay. So I would agree with what he's saying.
Okay. Now this is a new trend that economists and policymakers have to grapple with. We're probably not looking at data in tier 3, tier 4 cities. We stick with metro and perhaps tier 1, tier 2, and then rural proper. But something in between is getting lost. But Harish, the more important thing I wanted to ask you is, are the late rains spoiling the picture? We had a report from Financial Express, your sister paper, saying that it's possible that 171 million tons that the first estimate put out may not be reached. That record won't come and we may actually harvest a little less. How bad is the late rains in terms of impact on Kharif output?
definitely output has been impacted. There's no doubt about it. Okay, but what we must remember is that we had a very good Rabi crop. The last Rabi crop, I think it was a real bumper crop. And in terms of supply, like for example, we were running very low stocks of wheat, very low stocks of sugar, very low stocks of pulses, etc. So, and that is why you had, I think we underestimated the impact of the last El Nino, because I think we had record food inflation, very extended, I think 1.5 years, maybe.
Yes, 18 months. I remember very well, 18 months we had food inflation between 8 and 11%.
Yes. So I think the turnaround started happening from the beginning of this calendar year. Once it became clear that we are in for a bumper Rabi harvest, So after the bumper Rabi harvest, then we had early rains. The rains came, the monsoon came early and also left a little late. So obviously there has been some damage. Definitely, I'll say a lot of the like for example, say soya bean, even pulses. So in many places there has been damage. There's no doubt about it. But all these rains have also helped kind of recharge our groundwater aquifers. They have filled our reservoirs. So I think we are going to look. I think we are looking at a bumper Rabi harvest. The coming season is going to be bumper. Also the winter has set in. Seems to be likely to set in a little early. Because you always have the winters coming in after Diwali. This time the Diwali was early. So I think by October end, I won't be surprised we'll start seeing sowing of wheat.
Now, Harish, I wanted to ask you if this sustained negative food prices, negative CPI that we saw, food inflation that we saw, plus this lower than estimate Kharif, will that dampen rural demand in the second half?
Yes, in a sense, definitely, in terms of immediate income. But, see, farmers are generally, they are more forward looking, they look at I think the overall sentiment in terms of supply, I think is much better, and farmers generally, respond whenever the monsoon is good, when there is enough water, when there's enough soil moisture. So I think I would say that, I think you can see the real effects of the good monsoon, maybe from April onwards, April 2026, and that combined with what Samiran is highlighting, about the growth of the non-agricultural rural sector. I think we may be in for some kind of consumption revival in the long run.
Okay, actually, the rural MSP, the Rabi MSP also seems to be fairly high. The Press Information Bureau, PIB report says that on wheat, it is 109% rise over the cost, or margin over the cost.
Yeah. But it all depends whether farmers will realize those prices, But I think they seem to be quite serious about procurement, I think procurement of both pulses and oil seeds. I think they are focusing a lot, And so everything rests on how much the government will kind of procure, I think that's what matters. But overall, I would say that, I think the real swing states, just like you have swing states in elections, I think the swing states in agriculture are Maharashtra and Karnataka, and there I think there's a lot of sowing happening, a lot of agriculture activities happening there, and the sentiment there is definitely very good.
Okay.
Yes, price sentiment isn't
actually running out of time, Harish. Sorry to butt in, but Samiran, last word. Second half rural demand, despite these last rains, despite the negative food inflation, you are convinced, like Harish, that things will continue to be buoyant in terms of demand?
As of now, our sort of synthetic index to track rural demand vis-a-vis urban demand is still pointing to the fact that rural is likely to outperform urban for the time being, barring obviously this festive season data, which we are still crunching to figure out whether urban has done better than rural in this brief period of festive season demand boosted by the GST cut. But I'm getting more convinced about this rural recovery being a more sustained one, because it's now affecting things positively through the employment and the wages channel, and not just dependent on the relatively more volatile agricultural part of things.
Okay. Well, that's good to hear. I think, was it you or Harish who used the word secular when you all said rural demand and rural employment? That is extremely positive if we are getting there. Thank you very much, both of you, for joining me on this very brief chat, but an optimistic one. The rural demand is likely to continue to be strong. I'll take a rain check from both of you, literally, and check out on the Rabi performance later, and with Samiran on the urban demand once we get more solid figures for the October sales. We'll wrap up on Bazaar on that note. Chartbusters coming up.
Shares of Indus Towers trade higher as September quarter numbers beat estimates. The company's margin sees a strong uptick, while Tower Edition also sees an acceleration. Brokerages Jefferies, IIFL and CLSA issue bullish calls.
Jacob Tire gains on a healthy Q2 performance. The profitability jumps by 60%. Exports rise by close to 13% sequentially. The management tells CNBC-TV18 they expect growth to sustain and demand to remain steady following the GST rate cut.
Mazagon Dock trades higher on a steady second quarter. Profits rise 28% on strong operational performance, while margins see robust expansion.
Shares of Bata India, they are trading low after the company's weak September quarter earnings. The management tells CNBC-TV18 that GST transition impacted sales in the second quarter.
Sensex zooms on the back of a strong side in the second quarter. Profits grow 68% to 40 crores, while strong revenue growth continues. We'll actually be joined by the management shortly, so stay tuned for that.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. We were trading in the green around 45 minutes or so ago, but now we're dipped into the red. Looks like some expiry date related volatility is picking up as we speak. For the time being down, but I don't think we're out. Hey, Mangla.
Take that point entirely, not out quite. In fact, closer to around that 25,800 and 25,850. There could be some sort of support which the street is anticipating out here as well. But the stock on our radar is Sensex. The company reported a very strong set of numbers in the September quarter. Profits actually grew about 68%, and the street likes that. The stock is up nearly 10% as we speak. We have with us Bharadwaj R, who's the Senior Vice President, to break down these numbers. And we obviously have three important points that we will be focusing on: the strong growth and margin expansion. Will the second half see that? And the revenue guidance of 15% for this year, will they up that or not? And in fact, let's start with that one itself. The first half of this year, you've done, 34% revenue growth. At the start of the year, you guided for 15%. Now, being conservative and over-delivering is one thing, but, so off 15%, seeing a 34% growth, with the festive season being in the second half of this year. So for this entire year, do you think you can comfortably cross that 25-30% growth mark, and as a result of which revise your guidance upward?
Thank you first of all for having me here. I think as it's clear that a couple of things has been happening in our favor, especially from the beginning of this year, financial year. The major reason the growth is coming for us is because of a healthy pipeline of wedding dates, and we see that happening not just from April, and that continues for the second half as well. So that's a good sign that we have for the second half as well. And not to ignore the GST 2.0 reforms and the government initiatives such as union budget, increasing disposable income. All of these factors are paving us very, very comfortably for us, and that's where we see this majority of the growth coming in. However, with that being said, I think last year, half year was such a comparatively a lower half that we had, and therefore the numbers are in so certain format. But I feel like the second half of the year, if it continues the same trend, we should be able to end up a little bit more aggressively than where we end up at. But at this point of time, I'd still want to stick our guns to 1700, 1750, which is about 15% kind of a growth number overall. It would be a positive surprise if we end up much more than that, but I think I'd be able to comment better at the end of Q3 and early Q4 as well.
Okay, all right. So for the time being, Bharadwaj, you're sticking to 15%. Mathematically, it seems like that's not possible. You'll have to do much more when you see this sort of a growth in the first half of the year. Do you want to give us a more realistic number? Should we be working with something in excess of maybe mid-20s or something, going by the kind of growth, or you want to stick to 15%?
So there are a few factors that we have to consider. I think this year, Dussehra Diwali onset has been a little early, has been pushed to Q2 instead of having it in Q3 last year. And therefore, there's a little bit of a business that has moved to Q2. And quarter 3, quarter 4, yes, it does have a decent amount of wedding dates as well as festivities, but overall, there would be some balancing out in Q3 as well. So all in all put together, I think anywhere between 15 to 20% will be a healthy number for us to achieve.
Okay, all right. If you could give us a few more numbers, your SSG number, what was it for the second quarter? And for the year, what is the target?
Yeah, so for second quarter, we had an SSG growth of about 17.4% of SSG growth. And for the full year, half year, we had a 21% SSG growth. And for the full year, probably we should be able to end up a high single digit kind of an SSG growth, considering the fact that there would be some balancing out that will happen. But overall, the goal for us is still to maintain a double-digit SSG growth.
Got that, double-digit SSG growth. And what about margins then? And if you could give us a sense on product mix as well, because of the GST reduction, there would be a lot of products, the garments under 2,500 rupees, which will attract a lower cost, and above 2,500 rupees will be higher. So if you could give us a sense on what proportion of your portfolio comes in from there, what does the GST transition mean for your business in the second half and structurally?
Majority of our revenue falls under 5% GST category because we are a heavy sari selling company. We are dominated, and our leadership is in sari retailing, and sari retailing happens to be at 5% irrespective of the price slab that's there.
Got it.
However, on the overall other portfolio, I think close to 6 to 7% of our entire portfolio falls under the GST reforms that are happening. And what we are doing is that we are passing on the entire benefit to our customers by giving them a discount on the product that is actually being priced in our stores. So on the other end, right, like more than the GST impact having, it's the end of the day, we are able to see more savings in a consumer pocket. And I keep telling about this, the consumer behavior is also very much evolving. I often refer it to as the avocado toast and expensive coffee analogy, right? So people are willing to spend on small luxuries that will make them feel good and express their individuality. Now, with the big ticket items such as gold, real estate, and cars are increasingly becoming expensive, clothing is that one such category that has emerged as an accessible form of self-expression, right? And when it comes to weddings, occasions, and we are right at the center of this entire celebratory trend that is happening, and we are very much excited for that growth that is going to come up in the next quarters as well.
We take that point. In fact, what you spoke about right now, in the marketing terminology theory, it's known as the lipstick effect, where the consumers, when they find all the other expenses a lot more unaffordable, they try to make themselves feel a lot better by buying expensive lipstick, and that perhaps would be something that will play out in the sari world as well. But, just from a growth standpoint from here on, if you could break down that for us from a structural standpoint over the next 2 to 3 years, how much of that will come in from new stores? How much of that will come in from product mix? And how much of that will come from existing same-store sales growth? You've said 15% CAGR possible with high single-digit, SSSG. So that means the remaining 6% has to be via new stores and perhaps some premiumization as well?
See, overall, what we are trying to do is we are targeting about 4 to 5% of SSG growth year on year. This has been the trend pre-COVID levels is what we were running on. So we would continue to have that kind of a number in a long-term perspective around 4 to 5% of SSG growth. And the remaining around 10 to 12% will come from a product mix change as well as the new store expansion. So we need to keep in mind that this is not a product which has a same amount of pricing. So the pricing the product mix continuously keep evolving as we move to tier 1, tier 2, tier 3 stores. And as we speak, the growth for us is phenomenal here with respect to the presence that we have. Irrespective of the fact that we're talking about last year we did close around 1450 and this year on track with 15% growth, we should be ending around 1700 plus kind of a revenue number. And our city presence and geographical presence is still in about 4 states with about 20-25 cities as we present. So the market is very huge, and we believe once expanding our cluster model to newer clusters, I think that will attract a lot more growth that we anticipate to come in the near future. And we are still just a 4-state regional player, right?
All right. Bharadwaj, just one question. Your gross margins didn't improve substantially. Your product mix has been improving. If you could explain to us why is that it's actually steady, if you look at it on a sequential basis or even a year-on-year basis. And also you've seen such good growth, operating leverage could have kicked in, right? Where does the EBITDA margins head to? So comment on both gross as well as the EBITDA margins.
See, in gross margin, I think half yearly we did show improvement of 41.7%, and it increased up to 41.98%. Generally, Q2 is a quarter where we give a lot of offers and discounts to our customers to come back to us and shop. So, and therefore, we have been able to show marginal improvement in this particular half year. But I think overall, if you look at our trend in the last 3-4 years, we have been able to move our gross margin from 39% all the way up till 42%, which is about a healthy 300 bips in the last 2 years' time. And there is still a probability for us to expand another 50 to 100 basis points in the gross margin side. With respect to EBITDA margin, I think we have shown a clear trend. Last half year, we were at 12.09 kind of an EBITDA margin. And this year, we clocked about 15.6, I think close to around 300 basis points of improvement for last year. And as we grow, right, obviously the leverages will kick in, and we should be able to get to an EBITDA margin of healthy about north of 17.5%. All
right, north of 17 to 17.5% is your EBITDA margin guidance. So once again, thank you so much for joining in. Congratulations on a great set of numbers. You stick to your 15% target, but anywhere between 15 to 20% for the full year is something that you would be happy with. The street will expect something of that as well in the second half. But let's talk about the MCX issue right now. Trading is delayed in MCX again. In fact, there are tech issues there. Manisha joins in with the latest. Manisha.
Thank you for that. Yes, from what we understand as of now is that the MCX trading is yet to commence. It's interesting. It's quite bothering for the brokers as well, because today is the day that you have seen gold, silver, many of those base metals decline very sharply. And the point is that the traders cannot trade at this point in time. This is a second delay in sense of trading opening that we've seen in last 4 months. The last time was in the month of July. At that time, the trading was delayed by an hour and 10 minutes. But when you look at the street right now, it's 10:40. It's an hour and 40 minutes, and the trading is yet to begin. again. And as per the latest details or the statement that MCX has put out on their website, it says that the commencement of trading is delayed due to technical issues. Remember, it is TCS software that MCX uses, and we've seen a couple of glitches and delays coming in therein since that has happened. The trading, MCX also says, will start from the disaster recovery side, and the time of commencement of trading will be informed as and when the exchange is ready. So at this point in time, we have no delays on that, details on that rather. What the brokers also tell us is that they have been talking to MCX for last 4 or 5 months. There have been consistent glitches, especially when it comes to trading orders not getting confirmed, late arrival of the settlement files as well. So that is something that the MCX perhaps will have to work upon. Interestingly, again, MCX does have a market share of 98% when it comes to commodity derivative trading within India. And most volatile, clearly, in the recent days and months has been energy, precious metals and base metals as well. And today, even as 2 hours and year that has passed on, the traders, especially in the Indian markets, have not been able to hedge or trade within their commodities because MCX hasn't started work yet.
Thanks a lot, Manisha, for joining us and giving us that quick update. Well, it's time now to highlight our Super Pro chart of the day, powered by Money Control Pro. Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story, driving the markets and helping you understand the why behind the what. Here's today's chart and what it means for your next move. CESC is a stock on the screen, showing a cup and handle pattern and a bullish breakout. As you can see, the cup and the handle pattern is bullish continuation formation resembling a teacup, consisting a rounded price consolidation, the cup followed by a brief slight pullback, the handle. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro.
Well, Eternal is a stock which is doing well, and even as the market's holding around the 25,900 mark, there isn't a bigger fall beyond that level. So we'll watch out for that. And there is some news at the bottom of your screen for KPIT Tech too. But let's get in our tech guest. We have Somil Mehta joining in from Mirae Asset. Somil, you know, the market has been doing extremely well, over 1,300 points in October series so far itself. Do you think this is just consolidation and perhaps a pause for breath before we move further higher? Or one big leg is done and now we should brace for some consolidation as we move towards the end of this year?
Good morning to everyone. Yes, absolutely. It's just a pause. That's how I'm taking it as high top, high bottom formations. That's the most important part, that we are making these higher tops in monthly charts, and the momentum indicators on the higher time frames are on the buy side. So overall, the structure looks really good. And I think this should continue, and I'll be, targeting much higher levels, about 26,300, 27,000. In fact, even the next target in the medium to long term would be 28. But in the very short term, yes, as you said, it's a pause, a small consolidation around 25,600, 700 levels, which is a support zone for Nifty, and then again a breakout on the upside, resuming the uptrend. On the Bank Nifty as well, very similar situation. Very good rally on the upside, outperforming most of the sectors, and a consolidation around 57,500, 57,000 levels, and then again breaking out this consolidation on the upside, resuming the uptrend. Buy on decline should be the strategy, and I'm positive in the short term and medium term both.
Okay, all right, got that. Buy on declines. You're sounding quite optimistic. What about individual stocks? Fill us in with a couple of ideas.
My first idea is LIC. Today is a breakout day, taking support at 200 daily moving average. A small flag pattern has broken on the upside. Great momentum today. Stop loss would be 890. Target would be 975. Second stock is Bharat Forge. Bharat Forge is already broken out of its small consolidation, making high tops, high bottom formation, trading about 200 daily moving average. Great risk reward ratio for a medium term trade. Stop loss would be 1260. Target would be 1450.
Okay, all right. Thanks a lot for that, Samal. Well, let's move on then and move on to the big development in the Tata Trust battle. Sources close to Tata Group say that Mistry's reappointment on trustee as the Tata Board Trust Board is unlikely. Parishit is the one who's bringing to us all the exclusive information. He's joining in to fill us in. Parishit, take it away.
Well, this has been an important developing story with regard to the Tata Trust, the governing body of Tata Sons. And Tata Trust, remember, owns almost 60% of Tata Sons. Now, what we have seen is a divide within the trustees over several issues, the governance of Tata Sons and also on the possible public listing of Tata Sons. Now, when it came to the reappointment of Maheli Mistry, we believe that the trustees were divided, and at least 3 trustees have voted against this process. And we know from rules that even if one trustee were to vote against the reappointment of another, the process cannot go through. It has to happen unanimously. So this is exactly what has happened. Maheli Mistry's reappointment as trustee of the Tata Trust is unlikely to go through. Today was the deadline. His term expires on October 28. We believe that all the votes have come in and he is unlikely to be reappointed. Now, this comes just days after Venu Srinivasan, who is another trustee of the Tata Trust, was reappointed unanimously. And we believe from sources that Maheli Mistry had put a condition saying that he is only supporting the reappointment of Venu Srinivasan if in future all trustees are reappointed for life unanimously. Now, it remains to be seen what Maheli Mistry and what the Maheli Mistry camp will do here on. Will they accept this and move on, or will they legally challenge it? But clearly, the tensions within the trustees at Tata Trust are not over, and this issue could possibly spill over in the days to come.
All right, Parishit, thanks a lot for that. This is something that we will track as the developments take place over the days to come. We'll take a short break on that note, come back, focus back again on the markets and a lot of stocks which are moving around.
Welcome back. Well, as you can see to the top of the screen, all frontline indices trading in the red. And as we speak, the market's at the low point of the day. We'll wrap up on this edition of Chartbusters, but you stay tuned. The team of Trading Hour is waiting by.
Good morning. Welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Patakia and Reema Tendulkar. Good morning, guys. Well, we were just discussing it's already the monthly expiry. The time's flying. But we start the show with Nifty at the day's low. We started on the back foot and that has continued to be the case as well. But the last hour will, of course, be very important for our trading session today because that's when we see a lot of volatility. There could be a recovery or we can see further sell-off from these levels. For now, a 100-point downtick on the Nifty. It touched those days low levels, saw a wee bit of a recovery from there. The mid-caps, which were outperforming yesterday, they are down 0.2%. Bank Nifty is the one which is leading to a lot of losses today. It was a big support yesterday, but today at the day's low as we speak. Metal index doing well. We have autos which are supporting as well. PSU banking index, that is one space which continues to be on the front foot. That one is also in the green today, but that also has come off from the highs of the day. But all in all, we have to say that today continues to be a crucial day. We have the expiry, then a lot of earnings that we are tracking.
Indeed. And in the banking pack, it's HDFC Bank and State Bank of India. If you pull up that intraday chart, you will see the slide in these stocks in the last 30 to 1 hour. But so many individual stocks are already reacting to numbers. We'll discuss them on the show. But look at a Canara Robeco. Very disappointing margin. Stock is down close to about 7%. On the way up, you have a JK Tyre, you have an Indus Stars, and Sai Silk, which Hormus will also be discussing in Midcap Spotlight. In fact, that gives me the cue to toss it over to Hormus now. Hormus, what's on your buzzing stocks list this morning?
Well, earnings reactions are dominating the list today. It goes without saying because there are enough and more positive side on the negative side as well. But we choose to focus on the positives. And you mentioned the two top performers on the small cap index today are earnings reactions. Suraj Estates is one of them, and Sai Silk Kalamandir is the other one. Now, Suraj Estates, you take a look at the volumes here. 30 lakh shares have already been traded, almost 35 lakh shares. The 20-day average here is only 24,000 shares. Now, even for Sai Silk Kalamandir, the stock has been buzzing in the last few trading sessions, and even after the earnings, the stock is up double digits today, and 2.5 crore shares have been traded on this stock already in the first 2 hours of the trading session. The 20-day average here is only 10 lakh shares, and Hatson Agro, after the 20% upper circuit yesterday, is building onto those gains and is doing well for itself today as well. Now, the metals is one pocket that is doing well even as the market is not doing so well today. Welspun Corp, GSPL, Tata Steel. Look at the volumes here as well, and Tata Steel has received its third bullish reaction in the last 5 days, and that stock is among the top gainers on the Nifty today. And JSPL, of course, reporting earnings today, and almost 6 times its 20-day average in terms of volumes. And the stock on the list that I wanted to focus on individually was Spark. Sun Pharma Advanced Research is up 8% today. It's gained in 5 out of the last 6 trading sessions. And volumes in the first 2 hours itself are already at the highest level since May. So it's almost at a 6-month high already. We've had over 40 lakh shares that have been traded on Spark in the initial bits of today's session. The 20-day average here is less than 90,000 shares. It's not 8,700, it's 87,000. And the stock is now nearing its 100-day moving average, which is at 147, and the next important level to watch is the 200 DMA, which is at 149. And this, of course, is the first monthly gain that the stock may see after 4 consecutive months of losses. And despite this, the stock has been an underperformer this year, down 30%, and was down 30% in 2024 as well. So among the top gainers today, Spark, but has been an underperformer in 2025.
Take that point. Thank you so much for joining us with those interesting names, Hormus. By the way, just taking a look at some other stocks as well. We do have NetWeb, which is up 5.5% as we speak. Tata Steel is the other stock, which is higher, 2.5%. Of course, Metal Index is the top sectoral gainer today. Tata Steel is one of them, which is pushing that index higher as well. Indus Towers, we'll discuss that in greater detail. 2.5% higher on that one. That's a big story as well. But Bata India, that is on our radar, reported decline in consolidated net profit for its Q2. The weak quarter was also hurt by GST transition. We have the analysis coming in from Mangnam, who's joining us with more details on this.
If you look at Bata, this quarter was marred by a lot of one-offs, and it was actually a quarter where a lot of things went wrong for the company. Starting with July, where one of their major warehouses saw some disruption, so that impacted their sales. Add to that, we had the GST, announcement that came in, which while it's a structural positive, but remember 80% of their portfolio had to take rate revisions, and as a result of which there were stock-related transitions that impacted their overall sales. And to do all of that, to do away with that stock, the company had to liquidate that inventory, and that hurt their margins as well. So revenue was impacted, margins were impacted, and eventually the bottom line was further impacted by them taking some immediate upfront cost measures like that of VRS. So there was an 8 crore hit that came in on account of that as well. So as a result of all of this, the net profit of the company fell by over 70% on a revenue decline of 4%, and there was a decline of nearly 17% on their operational performance as well. The management said a couple of things, and as a result of which the stocks recovered a tad from the lows despite poor performance coming in the quarter. The first part was that the premium part of the business is doing fairly well, which accounts for nearly 30% of their sales, can be up to 40% over the next few years. And secondly, they have seen a good festive season, so sales are likely to see a bit of an uptick. They are doing portfolio refreshes, store refreshes, and at the same time, from a cost standpoint, they believe that they've extracted all that they can, and going forward, any incremental uptick in revenue would flow down to their EBITDA, and that would cause further operating leverage benefits, and they believe that margins would recover back to over that 20% mark as well. So all these factors have caused some relief in the stock from the lows, but it's still trading about 3% lower.
Thank you very much for that. Moving on then to the EMS companies, Keynes Tech and Syrma SGS are also surging after MeitY approved the first batch of component manufacturing projects. Upasana joins in with the details.
Well, certainly, the Ministry of Electronics and IT has approved 7 projects worth 5,500 crore under ECMS involving manufacturing of copper-clad laminates, PCB and even camera modules. Now, let us look at the key beneficiaries here. Keynes Circuit, which is a subsidiary of Keynes, has received approval in all the categories they have applied, which is multi-layered board, HDI boards, camera modules and even copper-clad laminates. Now coming to Syrma Strategic Electronics, now Syrma and Amber has received approvals in only one category versus the various categories that they had applied. They've received approval for multi-layered boards. Hence, we can certainly see both these stocks surging in trade today. Now, Elara Capital is of the view that the companies which are likely to benefit on the back of this, as mentioned earlier, is under ECMS is similar to the PINI and is subject to meeting the requisite criteria. It expects players like Dixon Tech, PG Electroplast and other EMS players also to benefit going forward once the approval for the second tranche comes in. It believes that this will help to continue the growth momentum seen in EMS sector as a whole, especially once the PLI ends in March 2026. So overall, if we see, Keynes and Syrma certainly in focus on the back of this.
They're both doing well for themselves as well. Upasana, thank you for that. In fact, hear out the management of both the companies as to what they had to say on this scheme.
Manufacturing is concerned, our land we have acquired, our building has come up already. We are almost in the completion stage. Whereas machinery we have ordered, it is in the pipeline. So considering all these things to meet the timeline what ministry is expecting, we will be there well within the timeline.
The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month. I think in coming years, India will become a hub of component manufacturing. I think this is a very, very commendable step.
All right, that's the big step. I believe 249 proposals were received, and of that, 7 were selected, and the beneficiaries Upasana spoke about. But moving on, Sona BLW has delivered a beat in the second quarter, largely driven by revenue growth from the rail business consolidation. Sudarshan joins in to explain what happened and what brokerages are saying.
So in the opening hour of trade, Sona BLW at one point was up almost 3%, but now it's trading near flat line. And the reason first why it's in the green. Earnings have come in largely higher than estimates. All the headline numbers, you talk about profit, revenue and EBITDA, all these numbers have seen a double-digit growth. Margin has slipped 200 basis points, but it's much higher than estimates. Estimate was around 23.8%. Company has reported around 25.3%. The reason it's failing to hold on to the gains is because the JV that company had announced with a Chinese company in July of 2025, now that announcement or that JV announcement has been put in the abeyance. And remember, there was an expectation that through that JV, the client that company was going to serve was BYD. So that is also weighing on the stock. As far as brokerages are concerned, most of the brokerages remain positive on the stock. CLSA maintains outperform call. Target is 570 per share. And the main positive thesis by CLSA is there are 3 main competitors of the company in Europe, and all the 3 competitors have filed for insolvency, which might lead to a big order wins for Sona BLW. That's one of the major reasons that why CLSA is positive. As far as Nomura is concerned, this is it also maintains buy call and target is rupees 605 per share. It says company has delivered very well in the tough times, and also Q2 revenue beat was led by railways and traction motor, and potential for major order wins is very strong going forward. And also on the valuation front, it's finding very comfortable or reasonable.
Take that point, Sudarshan. Thank you so much for joining in. So that's about Sona BLW. But with that, we'll slip into a break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back on Crypto Corner. We're talking about the month of October, which also is called Uptober when it comes to crypto as a lingo there. But that doesn't seem to be working out in 2025 till time, because in the month of October in 2025, cryptos are headed for the weakest October since 2014. October has been a bullish month in all of 10 years out of 12 years that we have seen, and 2025 clearly is not going the same way. An average return that we've seen on Bitcoin has been 20% for the month of October. When you look at, and this has been the case for the past decade, by the way. So just take a look on how October clearly has been for Bitcoin in last many years. So when you look at 2013, we saw Bitcoin gain up by 60% in the month of October. It was 50% of gains in 2017, another 40% of gains in the month of October itself in 2021. Even last year, even as it wasn't so bullish, but we did see 10% of gains for the month of October in 2024 as well. In 2025 till time, Bitcoin is trading in the negative because the high that we saw in this month was $126,000. That was on 6th of October. Now today it's trading at 105,000. So we have seen a very sharp decline come in within the month of October itself. So much so that October has seen nearly $20 billion in leverage trade being wiped off when it comes to trading within here. That's one thing about October, but October clearly seems to be going down with a lot of new various things as well, newer partnerships also. So when it comes to Web3, blockchain, especially stablecoin, we are looking at a lot of good news coming in that front. The latest has been Citi and Coinbase teaming up. This is done to explore stablecoin payments going forward. Now, on-chain stablecoin payments are expected to enhance speed, efficiency, and programmability as well. We have seen US do quite a bit in sense of regulation when it comes to stablecoin. Also, the Genius Act has been all about stablecoin, so much so that we've seen billions of dollars being done every month when it comes to stablecoin in sense of transfer of funds there. Coinbase now, of course, is working with more than 250 financial institutions worldwide, and Citi is just one more added to that list.
Take that point. Some interesting updates there from the crypto space. Thank you so much for explaining that to us, Manisha. By the way, Car Trade Tech's numbers at the bottom of your screen, 8.5% higher on that one. The EBITDA is strong, up 95%, and we do have profits which have grown as well. But that's about the crypto space and also what's happening with individual names. But trading is delayed again in MCX. There are tech issues. Manisha, tell us more about it. What's happening here?
Well, absolutely. And not very nice if you were a commodity derivative trader there, because the kind of decline and moves that we are looking at in gold and silver and nowhere to trade, because remember, MCX is 98% of overall market share when it comes to Indian commodity derivative trade there. Now, what we do understand is that the commencement of trade has been delayed at this point in time. The last time that happened was in the month of July. And the second time it's happening in last 4 months itself. When it did happen in July, it was a delayed start with nearly 1 hour and 10 minutes. But today, remember, the exchange is expected to start at 9. We already are at 11:15 right now. So it has been 2 hours and 15 minutes. And we still do not have a confirmation from MCX on when the trade will actually begin. What MCX has continued to tell us since morning is that the commencement of trading is delayed because of technical glitches or issues there. And the trading will, as and when it starts, will be from the disaster recovery side. We also do understand that the time of commencement of trading will be informed, so we still are awaiting for further delays there. But we have spoken to a lot of brokers, and they tell us that for last many weeks, months even, there are the confirmation when it comes to putting orders has been delayed. There also is late arrival of settlement fees, etc. So those informations, there have been concerns there. MCX has TCS as a technical partner there, and there have been concerns as we've seen in last 4 or 5 or 6 months therein. And this is the second straight time in 4 months that we are looking at a delay with MCX yet to begin trading today.
Manisha, thank you for that update there. More delays coming in for MCX. The stock has also slumped to the lows of the day. And just pull up BSE as well. That too has now declined to the lows of the day, 3.5% lower on that stock as well. And just before we take that break, look at Car Trade Technologies. We just spoke about the numbers, 12% higher now on that stock. And margins have seen a 12 percentage point jump from last year, 33% from 21% last year. So 11.5% higher on Car Trade Tech, almost 3,000 now, and is almost nearing 8.5 to 9x jump from the all-time lows that the stock had hit.
It's doubled this year itself.
You know, a
Why
lot of
today-
funds are also showing a lot of interest in
Interesting.
car trade tech. You had Mobius Partners who also bought a stake in this one. But we'll do one thing. We'll slip into a short break. Management of Heritage Foods will join us next to discuss the latest acquisition of dessert maker Getaway.
Welcome back. We have with us Money Control's super pro expert Dhwani Patel from Finversify, a SEBI-registered market professional who tracks market movements and helps identify trade-worthy trends for Super Pro subscribers every day. Dhwani, thank you very much for joining in. Quick word on the market, the profit booking that we're seeing, and your technical ideas, trading ideas for the day.
Good morning. Definitely, yes, we're seeing a certain profit booking coming in on the index right now. 26,000 on the higher side in the Nifty is acting out as a resistance, but this looks like a short-term resistance over here. Once we cross 26,100 on the higher side on closing basis, there's a positive bias that continues towards on the index over here. Bank Nifty also is showing certain laggard performance as compared to the Nifty over here, but then having crossed on the higher side 58,500 mark, we'll be seeing further action coming in on both the indices. So the view over here remains buy on dips in both the indices. And on the technical side, I'm eyeing up on two counters over here. The first one is from the metal index. We're seeing that metals are gaining in the session today, and in today's session, SAIL, Steel Authority of India, remains in focus over here. On the daily structure, we are seeing a demand zone over here around 128 levels. From there, a constant buying interest is being shown. On the higher side, the targets for this one extends up to 138, and on the lower side, 128 remains as a stop loss over here. And the second counter is one of the new age tech companies over here, where Eternal has been showing a buying interest on the lower side from 320 levels, and currently we are trading on the higher side. In the last two sessions, the buying interest has been positive. This is there to continue further till 355 levels, with a stop loss that one needs to maintain on the lower side at 325.
Take that point, Dhwani. Thank you so much for joining us. That was an insightful session. And for our viewers who want to access these kinds of actionable insights daily, check out Money Control Super Pro, where market expertise meets technology. Subscribe now and get an ad-free, data-rich and globally connected experience. And here's a festive bonus. 10 lucky subscribers every day stand a chance to win gold coins. Just scan the QR code on your screen or download the Money Control app to know more. All right, with that, let's move on and focus on a corporate conversation. Heritage Foods has announced acquisition of 51% stake in Getaway. The company's CEO, Shrideep Keshwan, joins us now to discuss more on the same. Mr. Keshwan, good morning. Thank you so much for joining in. You have announced the acquisition of a 51% stake and will also be acquiring 20% more stake in the company. At what valuation will you be buying the remaining 20% stake, and by when?
Thank you very much for having me on the show. Good morning to everyone. See, before I answer that, let me just give you a context of this acquisition. It was earlier this year that as a company, we announced our ambition to be the most admired dairy nutrition company in the country by 2030. And this goes by several objectives that we had laid down in this regard. And this acquisition is very much aligned to that. And one of the topmost reasons why we have gone in for this is that this helps us make our ice cream portfolio, which is the fourth biggest category that we are trying to build in our value-added product portfolio, a double engine for growth. And the answering specific to a question, the remaining 20% that we are trying to acquire in the month of March, what we've agreed on is a business performance linked pricing.
Got that. What's the size of the healthy dessert market right now? And I think the acquired company Getaway's revenues last year were 18 crore. Once you come on board and you scale it up with your distribution, what would the revenues look like, since you want this to bolster your overall ice cream business? I mean, what are the projections that you made when you went ahead and made this acquisition?
Yeah, sure. See, the healthy desserts is still a very small category, but it is growing at a breakneck speed. Just to give you a sense of it, you mentioned that Getaway as a company concluded, did 18 crores of revenue in the last financial year. That's a number that they've already achieved. In fact, they've exceeded that number in the first half of this year itself. And we expect this rate of growth to continue for several years to come. At this point in time, I believe that healthy nutrition or healthy desserts category is just about 1 or 2% of the overall ice cream as a category. But this in the next 5 years could eventually become even 10% of the category. What's more important for us and what's interesting for us is that this gives us access to the new age consumers, especially the Gen Zs, who are driving consumption and who will define consumption for the next 5 years or so. It is expected that Gen Zs would be influencing about 50% of all consumption choices by FY 2030.
Mr. Keshwan, good morning. Thank you for joining in. You mentioned that this healthy desserts market could go up to 10% in size from the 1 to 2% currently. Are you seeing that kind of interest that is prompting you to make such a projection? Because for a lot of us who are fond of having desserts, we would not want to involve a healthy component in it.
See, Hormaz, thanks for asking that question. It's actually a very important one. Let's take a step back and understand this category, right? Where is this growth being driven by? There are multiple forces that are aligned here. First of all, we should understand the channel in which it is selling. Getaway is actually a major player in one of the fastest growing channel that we have today, which is quick commerce. They in fact actually have 10% of the share of ice creams within quick commerce itself, which is quite significant, right? And quick commerce as a channel is helping consumers discover many of these new trends. The second most important thing that I would like to talk about is what is special in Getaway's portfolio. Getaway's portfolio is made, all of their products are high protein and zero sugar. Now, protein is a trend that we are seeing for some time, and it is actually going to stay for quite some time to come. These are not trends that are just emerging out of the blue. We have seen this trend for the last several years in the Western world, and even in India for the last 2 years, it has been tracking. The most important aspect here is that what we really love about this business is that these people have been able to craft ice creams with a lot of love, and it is not very easy to create a high protein ice cream, low sugar, which is indulgent as well. The products themselves are heavily indulgent, which is the reason why they have one of the highest stickiness rate in these modern channels. If I could just quote some of the numbers, in quick commerce, they have repeat ratios of about 35 to 36% across all channels. In food service, such as Zomato and all, their repeat rates are as high as 45%. These are not small numbers. And also, I also spoke about the kind of growth rate that they're tracking. With these kind of numbers, we are convinced that we can win in this particular segment. If I could just also remind the viewers, it was about a year back, exactly in this channel, that we had announced a capex of 230 crores to expand and build a new greenfield facility for making ice creams for ourselves. So this acquisition actually, which is about roughly 30% of our ice cream portfolio itself, so it not only expands our ice cream portfolio, but it complements it in every way. That is the reason why I said that this is going to be a double engine for growth as far as our ice cream portfolio is concerned.
Take that point. So it is going to complement your ice cream portfolio and will lead to growth from here on. That's about the acquisition that you're making, and will buy another 20% stake in this company as well. Generally on the business, I wanted to understand, what is the outlook on procurement prices? We have seen the sector buzzing post results. We are seeing that Milky Mist has received a SEBI nod for the IPO as well. What are the general fundamentals that you're seeing in the sector and the space right now?
The sector continues to be strong. This year we have had extensive monsoon, which was actually a small air pocket, as I would call it, in this long journey of growth. On the procurement side also, we have seen slight inflation in terms of prices. On the commodity side also, we are continuing to see a kind of inflation. The first half, if I could just give some numbers, the milk prices were up about 6.3%. And this, in fact, impacted the bottom line of most players as well. We have seen our EBITDA come down by about 1.8% on a like-to-like, year-on-year basis. But we are confident that we are now, as we are entering the flush season, all fundamentals remain strong. Our demand, on the demand side, we are seeing strong demand, except for the weather vagaries that we are seeing. And with the flush season coming in, we expect the procurement prices to cool down. And that's going to be great news for the industry.
Very interesting product, Shrideep. I was just checking the website. So the Belgium chocolate ice cream, 100 ml. Calories are 106. That's less than half of what you would get in a regular ice cream. And 8 grams of protein. Must try this. Thank you very much and all the best. Wish you all the very best. That's Heritage Foods for you. We'll slip into a break. On the other side, more on the market. Stay tuned.
Welcome back. Still 100 points lower on the index, trading in a very narrow band, although there is some profit booking at higher levels. Good time to get in Mangalam, who is at the FNO desk with the latest trends on the monthly expiry session. Mangalam.
A couple of things are becoming clear. While we're finding support at lower levels, staying above that 26,000 on the frontline index seems to be a bit of a task for the bulls. And that's exactly what we've seen over the last 3 or 4 trading sessions. In fact, every time we've gone past the 26,000 mark on an intraday basis, we've retraced from that. And that's taking place today as well. So case in point, you have the October 28, which is today high of 26,041 on the Nifty. Yesterday's high was 26,006, a little over 26,000. And all of that after the sell-off that we saw on October 23rd of 26,104. In fact, all these occasions, the Nifty actually closed below that 26,000 mark. So not only crossing 26,000 is important, but closing above 26,000 is equally important. And ahead of expiry, for the last 2-3 days I've been telling, even as the market is moving higher, the India VIX has moved higher as well. It would have been a lot more comfortable for bulls had the India VIX been moving lower, and a large part of the up move yesterday and the few occasions was on account of the shorts covering their position, especially on the options side. So today as well, even as the Nifty's moved off the highs, we have the India VIX, which is now around that 12.5 mark. So that's something we will monitor as we move towards expiry. Its inability to cross past 26,000 has had a lot of these bears ride the 26,000 call for a premium of almost 16-17 rupees right now. 3.5 crore shares outstanding there for the ones that expire today. So crossing past that 26,000, if it happens today, will lead to a lot of short covering. But bears don't believe that will happen. They have written calls out there. In fact, not just there, they've also written calls at 25,900. So that's something that we will be watching out for. And at the lower levels, however, there is some support coming in, and that's because there is a lot of writing that we've seen at 25,850 put and the 25,800 put. Both of them seeing a serious amount of writing as we move towards the expiry session. So all in all, it looks like a range-bound session after a series which has seen over 1,350 points in terms of an up move coming in. And the option writers see this expiry range at 25,750 to 26,050. My sense is it would be further narrower than that. 25,800 to about 26,000 or 25,950 thereabouts is the range that the option writers would be looking at.
All right. Thank you, Mangalam, for joining us with all those details. With that, we'll do one thing. We'll slip into a short break. When we come back, management of PDS Limited will join in to discuss their Q2 numbers. Welcome back. Let's focus on PDS Limited. In Q2, the company saw its revenue grow by 3%, but the net profit declined by 55% and EBITDA by 28% versus the last year. Sanjay Jain, Group CEO, PDS, joins us now to discuss the numbers and the outlook going forward. Mr. Jain, good morning. Thank you so much for joining in. Can you give us a sense of what the outlook is for FY26? What led to this profit decline this time around? And revenue growth came in at around 3.4%, which compares with Q1 revenue growth of 14%. Why was it lower on a YoY basis, and what's the outlook?
Hi, morning. I think these are very turbulent times, as you know, word over, given the tariff situation that has prevailed and also the retail sector in general in US and Europe being under pressure. Despite these challenging times, PDS, has tried to stay on top in terms of an 8% growth in terms of H1 over the same period last year. Yes, in Q2, we have a growth of about 3%. But what is important is that our order book today stands at about 5,300 crores, which is almost 15% up as compared to same period last year. So therefore, A, we've been trying to stay on top of the challenging times. B, entering the second half with a 15% growth in order book. In terms of profitability, I think there are two factors to it. One is for us, what is important is to stay engaged with the customer. If the customer has been facing pressures for the reasons I just mentioned, can I participate with them even if I have to pass some discounts to them, or even if I have to absorb part of the cost? That is on one hand. Secondly, we've invested close to 80 crores in terms of investment in new verticals, and they are under gestation phase. If I talk about the new verticals, while on one hand you experience a growth of about 4% overall, but the new vertical growth is about 46%. These are aimed at new geographies, new line of activities. So as two things, as the order book start unfolding into revenue, as we aim to cut the investment in new verticals by about 25% in H2, we believe the second half should be better than the first half of the year.
Sanjay, a couple of questions. Last time you gave a guidance, FY26 revenue growth to be in mid-teens. 8% done in first half. Does this FY26 guidance hold?
I think as I said, nobody had foreseen what happened to tariffs in the last 6 months, but what is important is the order book mid of the year is 15% up. So, we will keep a watch on how things unfold. We've been reading that India and US are likely to settle the tariff, interface very shortly. But what is important is walking in with a 15% growth. We'll keep a close watch as to how the H2 unfolds.
Okay, so you're unable to commit to that mid-teens revenue guidance as things currently stand right now, I guess. What about on margins? Because you are undertaking a lot of steps. There is cost optimization at the corporate level, the turnaround at New Lobster, even certain business verticals you're trying to restructure. What could be the exit margins that you're looking at the EBITDA level and PAT level, say this year and next year?
There are twofold measures that we started. A, on balance sheet, and B, on the P&L, things that you just asked. I think in the first 6 months, the balance sheet initiative has already started unfolding into results. We generated strong 590 crores of free cash flow operation in the first 6 months. Is because of the working capital squeeze that we started on one hand, and secondly, restraining on investment. So that I think is already unfolding to results. On the second bit, which is a P&L related initiatives, as I mentioned in response to previous question, we invested into growth. The growth investment is through P&L. It is about 80 crore hit in the P&L in the first half. We are aiming to bring it down by 25%. On one hand, that is an initiative. Secondly, we engage the services of BCG to try and help us improve our processes when it comes to procurement efficiencies, etc. We've come to near finality of their assessment. And as we start implementing this in the second half, we expect an improvement in the overall EBITDA margin as well as the profitability of the company. One should see at least minimum 1% improvement in the margins in the second half as compared to the previous half of the year.
Mr. Jain, you spoke of gestation periods. How long is this likely to last for your other businesses that are currently in gestation period? Now, once that gestation period ends, how does that improve your balance sheet? And since you and almost a quarter of your top line comes from the US markets, right? So in the middle of all of these uncertainties, have you tried looking at other geographies to diversify that 25% and try getting it from other areas?
See, all things remaining same, typically it takes about 18 to 24 months in terms of any new investment to start giving a PBT break-even. But we know that last 1 year has seen disruption in Bangladesh and then the tariff issue. So therefore, it is taking on an average 1 year longer than we anticipated. But we believe we are on the path now to start gradually inching towards a break-even. We said 25 to 30% reduction this year and next year about 50%. So therefore, to precisely answer your point, whatever investments we have committed to at present, I think in about 18 months, we should expect them on an average to be PBT break-even. That is on number one. And I think on geography, we've actually had a lot of focus in the last 18 months on US market. And in fact, in the first half of the year, our growth to US markets have actually grown up about 25% as compared to the same half last year. If I just annualize what we did in the first half, we should do at least about 2,500 crore of sales to North America. So I think that's something as a heartening sign. In our kind of business, as we inch towards growth, all these investments actually go through P&L. That's why one observes. And one more point I want to mention that if I draw a trajectory of the last 5 years of PDS, the last 2 years have been into an investment phase, into new verticals, into new lobster. But prior to that, as in the first year 5, 4, 3, as we were harnessing what we invested, our PBT margin inched to about 3.5%. So therefore, in the next 18, 24 months, as we work towards monetizing, harnessing our investments, that's the kind of potential that is there in the PBT trajectory of the company.
So does that also mean that your capex, which is reportedly down 50% in the first half, does that see a recovery in the second half? And debt has gone down as well. So does that continue to trend down as well going into the second half of the year?
Yeah, it would be our serious endeavor that we continue to contain our debt in the second half of the year. We've already brought it down to the levels you have seen. On the capex, last year we have seen significant investment into our PDS tower in UK and some of the other capex. This year, we clearly see a reduction in that. I think the next 12, 18 months, our focus is curtail investment. That's lesser of a focus. We are curtailing, but a bigger focus is we invested. Let's focus on harnessing what we're investing into.
All right, Mr. Jain, thank you so much for sparing time and joining us. Wish you good luck for the second half of the year as well. The management there of PDS expecting the second half of the year to be better than the first one. But here's a quick note for our viewers. If you would like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts and insights to power your investing decisions. Plus, the festive season, there is more reasons to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait, scan, subscribe and make your portfolio shine brighter with Money Control Super Pro. Take a short break, back on the other side.
Welcome back. You're still tuned into Trading Hour. Well, let's talk about the big story for the day. Indus Towers is on our radar. It is higher for the second straight day on the back of numbers, and of course some relief that is coming from Vodafone Idea as well. Rima, let's talk about the numbers first. How did they look?
So numbers have two positives. One, an EBITDA beat. And the reason for the EBITDA beat is that the company kept making provisions for the receivables from Vodafone Idea. But Vodafone Idea has been fairly regular with it's been regular with its monthly payments to Indus Towers. So therefore, every quarter the company has been reversing part of the receivables. So in Q2, they reversed about 195 crore, which is higher than 88 crore that they reversed in Q1. And that led to the EBITDA beat. But even if you strip that out, according to analysts, margin performance was strong. And the second positive was the tower addition accelerated to 4,300 in Q2 versus about 2,500 in the prior quarter. But the other big reason which you guys spoke about, the second reason why Indus Towers continues to see action is the relief on Vodafone Idea. Remember yesterday, Supreme Court said that the government now has the flexibility and the power to provide relief to Vodafone Idea on AGR dues. Now it's up to the government what form and shape the relief comes in. But the end goal will be that Vodafone Idea emerges stronger. One, the cash flow situation improves because immediately the AGR dues that they own to the government will perhaps reduce or come to an end if they get a moratorium. But secondly, maybe the company is able to even raise bank funding. So the cash flow improves. Once Vodafone Idea's cash flow improves, it can spend on capex. They wanted to spend 50,000 crore on capex. So now they can go ahead with that. Where is their capex? To a company like Indus Towers in terms of tower additions and getting tenancy there. So therefore, when Vodafone Idea gets stronger, Indus Towers benefits.
Indeed. So, and as a result of which a lot of these brokerages have also given upgrades, raised their targets. They're hoping that the dividends will resume as well. So what lies ahead now for Indus Towers?
I think the big thing is in terms of dividend. Right? The hope was, earlier you used to pay dividends, right? Then they stopped because of the issues surrounding Vodafone Idea. Then you got a sense that Vodafone Idea is improving. Then the company formed a committee to look at reinstating the dividend. But then nothing happened after that. 2 quarters back, that committee was formed, but they're still sitting on it. Then last quarter, you got the news that they're foraying into Africa. So that further put a question mark on when dividends will come in because there is going to be cash flow diversion for Africa. So, now that, Vodafone Idea is going to emerge stronger, when do you think the company can resume dividends? I think that's the biggest re-rating trigger. There is a conference call today. According to IIFL, there is a possibility that towards the end of FY26, we could see the company reinstating dividends or a buyback. But you spoke about brokerages and how they're reacting. Jefferies today has upgraded the stock. They say that expect a 6% profit CAGR plus a dividend yield that everyone's expecting, right? That would be 7%. So therefore, the risk reward looks favorable. CLSA has a high conviction outperform. They find the valuations attractive. And IIFL says that earlier the target price assumed some probability that Vodafone Idea doesn't survive. Now they have made that probability zero. They're sure Vodafone Idea is going to survive. And therefore, the target price for by IIFL on Indus Towers also goes up. And they're saying that in all the scenarios now, the downside for Indus Towers is protected from here on. So this is just a compilation of what brokerages are saying.
In fact, listening to that, I guess the shareholders of Vodafone Idea would be more happier that the probability has been put down to zero. But Rima, thank you for summarizing that big story for us.
The big story is also
the big stories are playing out on our screens as well, indeed.
Right
and still no update on the resumptions of trading for MCX. It's been 3 hours now. And the recent update also continues to mention the same, that trading has been delayed due to a technical glitch. There has still not been any form of attribution as to what led to the glitch, what has exactly been the glitch, and when is it likely to be resolved. So a lot of unanswered questions with regards to MCX. Trading still remains halted. It's been 3 hours. And
I think Sudarshan was saying the last time there was such a trading glitch and a trading halt was in February of 2023, where a system malfunction caused a 4-hour trading suspension, reportedly linked to the exchange's migration to a new trading platform. So
we're getting there almost for 4 hours, but still 2% lower on the stock. Now at the lowest point of the day is MCX. Take your leave on this edition of Trading Hour. The Nifty still down 100 points. From Rima, Sonal and me, thank you for watching. Halftime report on the other side.
Stocks sip back after a strong open ahead of FNO expiry today. Realty and consumer durables are the big drags, while metals and PSU Bank gain.
Indus Towers is in focus as the Supreme Court ruling has allowed the centre to review Vodafone Idea's AGR dues. And following recent collections, Indus Towers has written back a provision against dues from the beleaguered telco, and that has given the stock a leg up.
Indian Oil Corporation surprises analysts with a significantly stronger than expected Q2 performance on higher refining margins. The visible cutback in imports of Russian oil by Indian refiners recently, however, clouds the outlook.
Trading at MCX fails to kick off as scheduled, and the exchange points to a technical glitch for the delay. This is the second instance in 4 months when technical issues have disrupted trade at India's premier commodity exchange.
You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me as always, Ekta and Vinny. The Nifty down about 100 points. We're down, not quite out. Remember, over the last 3 or 4 trading sessions, every time we've crossed past that 26,000 mark, we've seen some supply to only close below that 26,000 mark. And today, all the more important because it is the October series expiry, a series that belonged fair and square to the bulls. Nifty, despite a 100-point cut, has seen a 1,200-point rally in the month of October. So that does fairly well today.
Hi, afternoon Mangalam, afternoon Ekta. So in terms of overall, you've rounded up, we're watching out for the expiry points coming in as well, and you know how that leads to some bit of a volatility. But look at the IT pack. That is also clearly seeing a bit of a sharper fall. Nifty IT is down 0.9%. So no support coming in there. The broader end of the market, that's subdued in today's trading session. And bank also is not something that is leading a support or lending a support to the market. It's also down almost 0.5% in today's trading session. So overall, sector-wise, also we're seeing some bit of a muted performance coming in from banks, IT. That is some pressure there.
Yes, absolutely. Hi, guys. Well, yes, it's turning out to be a weak session. It is FNO expiry day. We have the Nifty, which is below 25,900. And we also have the 2-day FOMC meet, which begins today. So that would be something that the street does have on its mind. In terms of results today, we have Tata Capital, Adani Green Energy, Adani Total Gas, as well as Happiest Minds, M&M Financial Services, Shree Cement, all of these companies which will be releasing numbers. So a lot of the broader market stocks or broader markets will be in focus on account of that. But let's in fact kick off the show with what is now turning out to be the news of the day. The trading is delayed in MCX again. It's around 3 hours of a delay that we've seen in terms of no trade, citing technical issues. Manisha is here to take us through more details on this and what this exactly means. Manisha, 3 hours, what's the explanation which is given?
Well, you know, as of now, we do understand that there's no direct statement coming in from MCX except telling us that there is a technical glitch there. The trading as and when it begins would be from the disaster recovery side. What time will the trading start is something that the exchange is not sharing at this point in time. Earlier, it was that it would start by 9:30 and then 10 and then 10:30. But since then, there only is one statement that has been blinking on the exchange website and that is that the commencement is delayed due to technical issue. Trading will start from disaster recovery side and time of commencement of trading will be informed. But remember, it's 3 hours done and we still have no timing in sight. It's quite bothering because MCX is 98% of commodity derivative market share in India. And this is exactly where you go to trade gold and silver and base metals and energy and some of those agri-commodities as well. And with no trade being able to done right now, especially given that the commodity markets are quite happening right now, is bothering brokerages right now. We have with us now Mr. Kunal Shah, Head of Commodities at Nirmal Bang. We also have Jaiprakash Gupta joining us from Dhan. But Kunal, to you first. And 3 hours gone and there is no trading happening right now. I do understand that there are other exchanges where you can perhaps take a position, but this is where you have your hedge, your trade and your numbers standing right now. What is it that the exchange is telling you right now?
So yeah, we've been told the same, that there is technical glitch. Beyond that, we don't have any answers to that. So we are awaiting reply from the exchange. And the moment we get it, then we'll inform our clients. But as of now, there's nothing coming out of from exchange rather than just a technical glitch. That is what we've been hearing from the exchange.
Kunal, I have been speaking to so many brokerage houses since morning, and we do understand that since TCS has come in, there have been concerns when it comes to trading orders getting confirmed, late arrivals of settlement fees is another thing. In the month of July is exactly what we discussed about, and now we're standing here in October talking exactly the same thing.
Yeah, so this kind of stuff should not be happening. So very difficult to know, but there are issues sometimes regarding the margin files getting delayed and all these things. So I think sooner these issues get resolved, better for the ecosystem, because there are no other exchanges where we can anyone can counter hedge it. So most of the volumes takes place on MCX. So the other exchanges which are persistent. The volume in gold, in silver, in crude oil futures is negligent. So I think in this kind of scenario, if any big movement takes place, so what if gold goes down by $100, $200 in a span of 3 hours, what we've been witnessing? So what clients will do if something like that happens? So this kind of stuff should not happen, and I think MCX will make sure it won't happen again.
Jaiprakash Gupta, thank you for joining in as well. And what is your sense right now? How are you dealing with this exchange not open for trade at this point in time? What are you telling your clients?
Yeah, hi Manisha. So I would just want to say that it's very unfortunate, on our trading sessions like currently, when our users want to log in at 9 a.m. or want to start trading and they're not able to do that, there is some kind of discontentment which comes from the user. And our team has been regularly in touch since 9 a.m. in the morning with the exchange. But till now, there is no resolution which is in sight. We are trying to salvage the situation by asking our clients to also look into the positions of the exchanges. So as of now, we are still awaiting any kind of clarification.
Mr. Gupta, you said you're telling your clients to look at positions on other exchanges, but what are the kind of volumes that we're looking at in those exchanges? And a day like this, do you think that could really work? Because as we've been constantly repeating that 95 to 98% of volumes actually do happen on MCX.
No, I agree with you. But, for a situation like this, when the clients have their open positions, since both the exchanges are having a different clearing and settlement, it becomes really tough for a customer, who has created a position with some kind of strategy to offset the trade in one exchange with the other. So definitely the users, the clients are facing the challenge as of now. But whatever little we can provide to them in terms of comfort, we are trying to do that.
Mr. Gupta, also, as and when the trading opens, as it does today, we will perhaps be looking at a gap down, because since the markets have opened today, gold has been continuing to slide down. So has been the case with crude as well in some sense. What has been the precedence earlier when exchange opens with a delay and there is a movement that we've already seen in prices? What is usually done in those cases?
No, for users who already have an open position, for them it's a dilemma now. Whether somebody is long and the prices are going to open gap down, they hardly have any room to salvage their positions. Either the stop loss gets triggered, or if they're lucky enough, they'll be able to exit the positions on time. Now, if we go strictly by the term being used, which is a technical glitch, we as members, we have to report it as a technical glitch to the regulator. Now, it's again, the clarification has to be given whether the technical glitch was from a member side or from the exchange side. So those clarifications will definitely be sought by the regulator. But for the time being, the client knows the member. Okay, any client who is trading, they only understand that the member or the platform which is being given, they should be able to allow the clients to square off the trade. So there will be a lot of concerns being raised to us. Our customer support desk is receiving numerous calls since morning.
Absolutely.
And we are trying to inform them that the issue is not with the member but with the exchange.
We understand that because MCX, of course, while it's talking to its members and brokerages, but it also is talking to the regulator at this point in time. The details of therein is what we are awaiting at this point. Kunal, when we look at, take a step back right now, and the last time we saw a glitch with MCX was in July 24th, 2025. Before that was in October 2023. That is when the TCS takeover in sense of a technical partner was happening. And before that, it was in Feb 2023. And at that time, the exchange was shut for almost 4 hours. There was a suspension. And this was because of the exchange was migrating to the new technical partner there. We've seen some of these instances, 2 in 2023, 1 and 2 now in this year is what we are looking at. How are you, what is the conversation with brokers as an association? What is the plan B really that you are negotiating with the exchange?
I think there will be serious concerns raised because this kind of stuff should not happen because technology transition is a one thing and during working hours. So actually the COMEX starts from early morning and from 9 o'clock Indian market starts. So it's already 12 and till now, we've not received any notification. So ever since the markets have begun, I think gold prices have already gone down by $50. So I think whoever is having a long position and if they want to square off those long position, they cannot. So what about the stop losses? What about the risk management practices? So I think these are concerns which needs to be addressed. And associations, all the commodity association, they will raise these concerns, but I think it lies in the hands of the technology partners of MCX and MCX to make sure that this kind of stuff doesn't happen. But from the market point of view, whatever is happening is not good.
Kunal, also a final one for me really on trading, as you said, as Jaiprakash also said, that other exchanges is where some clients are taking opposite position to ensure arbitrage positions perhaps to save themselves. But when it comes to BSE and NSE, and yes, both of them do have their commodity platform there, what really is the volume therein? And are these exchanges and that platform seen only when you have a problem here at MCX?
No, I don't think so that immediately today they can accommodate the volume because if I'm having a position on MCX and I'm getting relatively illiquid depth, okay, in both of these exchanges, then I would be skeptical to forward or do counter hedge. So I think right now there is no option, but in the interest of the markets, if other exchanges are liquid and vibrant, then definitely this would have been a very helpful day in this kind of moments. So I think the other exchanges should take enough effort by realizing that they do have a space. If this kind of event takes place, then they do have a marketplace where they can adjust and accommodate this kind of volumes and then eventually gain traction. So this kind of event will make sure that there is a need for other exchanges. And if enough efforts are given by the exchange and the market participants to make them liquid, then they may have a better future going forward.
Oh, yes. Jaiprakash, so with the kind of day that we are having in right now, you know, for commodities, it's not half a day done because we trade from 9 a.m. to what, 11:30, 11:55 p.m. in the night therein. So it's a long day really, and the US markets are yet to open. The European markets have opened. For all you know, because of the US Fed meeting going forward, there would be a lot of volatility in US as well today. How are you and how long are you willing to wait for the exchange to start opening? Would you rather have some statement from the exchange right now to know where you stand today?
See, we don't have anything to do now, you know, because it's all up to the exchange to let us know when they can resume the trading or when the trading can start. We have been representing the fact, you know, through associations. The concern has been raised to MCX top management, and we hope that, you know, going forward, you know, these kind of glitches are taken care of.
Okay, all right. Manisha, thanks very much for taking us through that conversation. Jay as well as Kunal for bringing your perspective in. So we will be tracking this story very closely. As you can see, the MCX stock is down around 2%. But Manisha, just before we let you go, you know, it's multiple times that this has happened. You mentioned that it's happened twice in this year itself, in this less than a span of 6 months.
Right.
Does it now slowly erode the confidence of the company's operational viability when it comes to, say, such large volumes? What is your editorial feedback on this?
So, you know, Ekta, this is a topic, and these are exactly the same words we've used the last couple of times as well when this really happened. But having said that, even after those last two glitches in 2023, and this is the second one in 2025 is what we are dealing with, even with that, the kind of volumes and the kind of participation that we have on the exchange, even after a day like this, we've seen people go back and start trading onto this one, because the kind of positions that you're holding, the open interest that you have, and the liquidity that you have is very, very strong. As Kunal was just telling you, it's unfortunate that you do not have another place to go when this happens on one exchange, because BSE and NSE, even as they do have the license and they do have commodities listed on them, they're not liquid enough. The exchanges, the other exchanges perhaps haven't put might enough to start pulling in liquidity or have more participants or develop their commodity sense so strongly that they can continue to function. So if you have to trade commodities, I'm assuming you have to go back to MCX yet again.
Okay, all right, Manisha, thanks very much for that. So this is really the fear of what a monopoly can also do. Thanks for joining in. We'll take a short break, but on the other side, we're going to get you the latest on the Tata Trust battle. Parikshit will be joining in for that. Stay tuned. Welcome back. Well, for the markets, it's weak, but let's concentrate on a couple of big stories which are developing. We spoke about MCX, but the other one that one needs to really look at is the big developments in the Tata Trust battle. Sources close to Tata Group says Merely Mistry's reappointment as the trustee on the Tata Trust board is unlikely. Parikshit joins in with more details on this story. Parikshit.
This is indeed a big setback for Merely Mistry, the director of Meher Palonji Group and one of the key trustees at Tata Trust. His reappointment as trustee for life is unlikely to go through. This after a majority of trustees have voted against his reappointment. Merely Mistry's term was set to expire on October 28, and ahead of that, Tata Trust had circulated a letter seeking views of different trustees on his reappointment. We're told that Noel Tata, Venu Srinivasan and former Defence Secretary Vijay Singh have voted against his reappointment. The only support for Mehli Mistry coming from Darius Kambata and Jahangir HC Jahangir. Now, in these circumstances, Mehli Mistry's reappointment cannot go through. In any case, reappointment of trustees for life has to happen unanimously. Even if one person had voted against Mehli Mistry, his reappointment would not have actually gone through. Now, tensions within the Tata Trust have been continuing for some time. This includes how Tata Sons should actually be controlled and whether Tata Sons should be publicly listed or not. Let's see whether Mehli Mistry accepts this. Before the reappointment of Venu Srinivasan, he had put a condition stating that he would support Venu Srinivasan only if in future all trustees of Tata Trust were reappointment unanimously and for life. Now we have to see whether Mehli Mistry will throw up a legal challenge or not.
Right, with that, let's talk stocks back again. We have a bunch of stocks which are moving around. Vivek joins in with that list. Vivek, what do you have today?
Well, thank you so much for that. Well, advance decline ratio was quite strong just an hour ago. But what's actually transpired is that, especially in the last half hour or so, you have seen that particular ratio come down quite significantly. There has been some amount of selling pressure at high levels. In terms of stocks that are doing quite well, Sun Pharma advanced to Spark, that particular stock, the top gainer as far as the NSE 500 index is concerned. Very good volumes on this particular name as well. Syrma SGS, yesterday a whole host of companies actually got the nod as far as electronic component manufacturing schemes are concerned. A key beneficiary is Syrma, up over 5%. JK Tyre, one of the few tyre companies in the last few quarters that's done quite well. So JK Tyre is doing quite well after posting a strong Q2, some margin expansion seen over there as well. And have a look at the entire metal pack. While the market is quite weak, most of the metal names are holding out quite steady. So names like Tata Steel, Welspun Corp, JSPL, all of them trading in gains anywhere between a percent and 4%. And lastly, in the list of gainers, Car Trade Tech, has been very volatile, but a strong Q2, profits almost doubling. That stock continues to stay high by over 7.5%. On the other hand, quite a few laggards as well in terms of stocks that are seeing quite a bit of selling pressure. The exchange names today, both BSE as well as MCX, both of these stocks are under significant pressure. BSE down over 3.5%. Entire PSU banking pack, has been on a roll last few weeks, but today most of them have cooled off a little bit from the day's highest point. Supreme Industry, yesterday a volume guidance came across. A lot of EPS estimates got cut. Stock down by over 4%. Hindustan Oil Exploration, a dispute that the company has with HPCL. The company has given a clarification despite that stock over 6% lower. And Bata VQ2 is something that has dragged this particular name lower as well.
Okay, Vivek, thank you so much for that, for the list of stocks that are moving around in today's trading session. As of now, Nifty at 25,850 levels, down almost 100 points in today's trading session. But on that note, we're going to slip into a very short break. After the break, we'll have Sachdan Nandatekar from Trade Bulls, who will join us to talk to us about trading strategies as well as technicals. Welcome back to Halftime Report on CNBC-TV18. Like we looked at the market just before going into break, 25,800 levels, approximately there, is what the Nifty is trading at. But it didn't sustain the 26,000 mark. Now, what does that mean? What's happening in the world of FNO right now? Let's go across to Mangalam, who's at the FNO desk. Mangalam.
We're in a bit of a range right now, and that's exactly what the expiry session is likely to play out as well as today, because you have the Nifty, which is lower. The Nifty Bank is lower as well. The Nifty Midcap Index is not as low as the other indices, and that's a mild positive, which tells you that this is just consolidation and not a major trend reversal for the frontline index. The only thing is that ahead of the expiry, and this is something that we've been pointing out for the last couple of trading sessions as well, the India VIX has been moving higher, which is indicative of some call writing. And, that's something that has kept the up move after a 1,200-point rally slightly limited. And that's something that we've seen over the last 5 or 6 sessions as well. 3 of the 5 or 6 sessions in the last week, we've seen the Nifty cross past that 26,000 mark. But none of those occasions, it actually closed above 26,000. So October 23rd, when it hit that 26,104 mark, it fell about 200 points from there. Thereafter, yesterday as well, the high was close to 26,000, a little over that, 26,006. We fell again from there, and today's high, 26,041, and we're a good 180 points away from that level too. But metals are doing well, so that's telling you there is some element of risk on. So Tata Steel, JSW Steel, Hindalco, all of them doing well. What's not doing well are some of these steady defensives. So we have financials which are not doing well, some of these consumer names not particularly doing well as well. And because it's expiry, a lot of the straddles are written. What is a straddle? Which is a call and a put at one strike price together. What's the closest strike price right now? 25,850. So if you look at the 25,850 call, has a premium of 60 rupees, almost 153 lakh options or 1.5 crore shares in open interest. And look at the 25,850 put. That too has a premium of almost 30 rupees, an equal number of shares in open interest, telling you that these two have been written fairly vociferously today. And a premium roughly of 50 rupees tells you that around 25,800 to 25,900 is the range that the street is expecting in terms of expiry today. But if it does sustain above 25,900, then those call writers may start feeling a little jittery, and a move towards 26,000 cannot be ruled out. Just watch out for a couple of these major heavyweight indices. So the Nifty IT and Reliance, those are the two that I'll be tracking along with Nifty Bank for any signs of recovery, and they will be the first ones to tell you if the Nifty will sustain above that 25,900 mark or not.
Okay, all right, Mangalam. Thanks very much for that. We have Sachitanan Uttikar joining in from Trade Bulls to discuss the technicals of the market now. Sachitanan, hi, welcome to the show. Well, it's turning out to be a session where we are seeing some amount of profit booking. We're probably going to see, the volatility pick up in the second half. How are you placed today?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly what we have been observing is that 26,000, 26,050 has been a kind of a resistance for the market for the last 4 trading sessions. But if you look at the overall setup, after 14 days of higher top, higher bottom sequence, it is 4 days of consolidation, which sounds very healthy for the next wave of the market. So I think from a trading perspective, we may see this particular consolidation getting carried forward. At least for the day, we don't expect the Nifty to close above that 25,920 mark. We are expecting that the expiry could be a bit lower than that. And on the lower side, in the last 3 weeks, the Nifty has defended its 5-day exponential moving average support very well. Now, this particular support is currently placed at 25,840 zone where it is currently trading. So I think it will be very significant if we see any slippages below the same, then there is a good chance that the expiry may also be closer to that 25,750, 740 kind of a zone. So I think it's a very tricky situation. It depends on the next half an hour. In case if we see a stable movement above that 25,840, 860 zone, then there's a good chance that we may see the expiry closer to that 25,900 level. But beyond that, the probability looks bleak. When we look at Nifty Bank, I think it has been one of the strongest. The consolidation is very healthy. We have a sequence of inside bar formations on the daily scale. Eventually, we see this particular index outperforming, and we expect that the November series could be very significant for this particular index. We are expecting a move towards 59,080 eventually. So here, I think any declines would be a good opportunity. Currently, the supports are placed at around 57,800 thereabout. So I think in case if we see further slippages, then that will be an ideal level to reposition or create some fresh long positions for an eventual target of around 59,000.
Sachatan, what are your top bets then?
Good afternoon, Vinny. We are looking at metals from the metal pack. JSW Steel is something that we are liking, what we have recommended to our clients. If you look at the 60 minutes chart, there is a broadening formation with a base at around 1150, which has been reconfirmed. Now, the overall expectation is that there could be an immediate swing towards the higher bound, which is placed at around 1220. So we are recommending building fresh long positions in JSW Steel futures. In the November series, the stop loss can be placed at around 1162 on closing basis for an immediate target of around 1220. The other stock that we have recommended to our clients is Naukri.com. Now, if you look at the overall sequence, the stock was in a low top, low bottom sequence. But if you look at last 15 trading sessions, it has managed to retain its swing support at around 1340, 1360 kind of a zone, which looks like a triple bottom formation in making. Now, this particular move will be confirmed once we see the stock, confidently trading above that 1380, 1400 mark. We are expecting that there could be a breakout soon in this particular counter. If you look at the ADX, it has started to trend up. We have already seen the stock confidently trending above its 520 and 50-day exponential moving averages. So I think the overall setup looks good. We are expecting a quick move towards 1440. The positional target is placed at 1470. The stop loss for the trade can be placed at around 1355 on closing basis. And then the stock can be added in your trading portfolio in the for the November series.
Okay. All right, Sachatan, and we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies at this point. Just want to point out that NetWeb is actually just about flying away in today's trading session. The stock is up around 6% It's gained around 11% just in these two trading sessions this week. And obviously, it's been a rank outperformer, up around 50% this year. The numbers come out on the 1st of November. The analyst meet will be held on the 3rd of November. The analyst call will be held on the 3rd of November, which is on Monday. So I think the street is really bracing themselves for what they could possibly report this Saturday in terms of their Q2 numbers. We'll take a short break, but up next, we'll get you our movers and shakers segment on halftime reports. Stay tuned. Welcome back. Well, it's a weak advanced decline ratio on our hands at this point in time, but we do have a lot of stocks which are buzzing in our movers and shakers segment, where we will be focusing on stocks which are on the move. First up, we do have Bata, which is in focus. Mangalam, take it away.
Well, it was a quarter which was disrupted by a few things, and that's reflected in the numbers and more importantly reflected in the stock price movement as well. Start of the quarter, one of their biggest warehouses saw some disruptions, as a result of which that impacted the quarter. Thereafter, we had the GST announcement that came in, so transition on that hurt as well, because 80% of their entire line is sub 2,500 rupees a pair, and that meant that there was some changes that had to be made out there as well. And to liquidate that inventory, the company had to go ahead and take markdowns on their prices, and as a result of which the gross margins and EBITDA margins saw a bit of a hurt. And add to all of this, there was this VRS, one-time voluntary retirement plan that they've started in one of the plants, and as a result of that, there was an 8 crore one-off expense, and the net profit as on the back of that saw a decline of 74% year on year. We did speak to the management, and a couple of things that stood out. One, festive season sales have recovered well. The premium products are doing well too. So on the back of some commentary from management, the stock saw amelioration, but it was a weak quarter and there was no taking away from that, and which is why the stock continues to stay under pressure with a cut of 4%.
Okay, that is Bata, but let's move on to the next one. And JK Tyre, that's also in focus today, right now holding on to gains of 3.5%. Sudarshan is here to talk to us more about that. Sudarshan.
So JK Tyre has reported a healthy set of earnings, and not only JK Tyre stock is up, all the other tyre stocks are also higher because of this, seeing a rub-off impact. And if you talk about all the headline numbers, all the numbers have seen a double-digit growth, and after several quarters, company has reported margin of more than 13%. It's an expansion of more than 200 basis points, and this has come despite an increase in the raw material cost that company has seen, both on a sequential basis as well as YOY. Now going, and remember, both the segments, India as well as Mexico, in both the segments, company has reported volume growth of 15%, 13% respectively. And now it's saying that going forward also, company will be able to maintain the margin of levels around 13 or more than that. And that would be led by the recent GST cut that government has announced, that is helping a increase in the demand across these segments. Company is seeing a double-digit growth in tractor segment, high single-digit growth in PV segment. Even from CV segment, the growth is of low single digit.
All right, Sudarshan, that's about JK Tyre. Sai Silks, that's been one stock which has been surging right from the word go on the back of their numbers. Good performance coming in, Vinny.
Absolutely good performance that's coming from Sai Silk. Overall good numbers that we're seeing, and management commentary when they spoke to us also has been good. So firstly, in terms of numbers, look at the net profit. That's up around 70% on a year-on-year basis. Revenues up 28%. Margin seeing an improvement as well. 16.2% is what the EBITDA margin came in versus 15.8%. The management also said that, they expect that 15% growth guidance that they've given, that is something that they will sustain for the full year. Though right now for the first half of the year, they've already managed to see 34% growth. But yes, they expect strong growth to continue through the year as well. Margins will remain stable around the 16% mark. And will be interesting to see increase in terms of margins, where they will go from here on. As of now, good improvement in terms of margins and what they've seen. And store openings is what they're positive on going forward as well, Ekta. So today the stock is buzzing in trade.
Okay, and now let's go across to Pasna, who's watching Keynes Tech and Sirma SGS. Tell us more.
Well, MEIT has approved projects, 7 projects to be precise, worth 5,500 crore under ECMS. This is mainly for manufacturing of copper-clad laminates, PCBs and even camera modules. Now let us look at the key beneficiaries on the back of this. So Keynes has received approval in all categories that they applied, that is multi-layer boards, HDI boards, camera modules and even copper-clad laminates. Sirma and Amber has received approval in only one category versus the various others. The category in which they've received approval is for multi-layered boards. Now coming to SRF, they have received approval for polypropylene films, is what we know. Now let us look at what the Elara Capital is saying on the back of this. Now Elara Capital expects the companies to benefit under ECMS similar to the PLI scheme that the government had announced. This is subject to meeting the requisite criteria. Now it also expects other EMS players such as Dixon Tech, PG Electroplast and various others under the other product categories to also be benefited in the subsequent approvals that will be coming through. Now, it believes that this will help to continue the EMS momentum that is going forward right now in the upcoming seasons as well. Even after the mobile PLI ends in March 2026, for which the main approval is awaited. So all in all, if we see, Keynes and Sirma are the key beneficiaries, which explains why they are leading the EMS.
Okay, thank you so much for that, Upasna. But we also caught up with the management of Keynes and Sirma SGS on the scheme. Listen to what they have to say.
Manufacturing is concerned, our land we have acquired, our building has come up already. We are almost in the completion stage. Whereas machinery we have ordered, it is in the pipeline. So considering all these things, to meet the timeline what ministry is expecting, we will be there well within the timeline.
The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity, with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month. I think in coming years, India will become a hub of component manufacturing. I think this is a very, very commendable step.
Okay, all those stocks buzzing around. Amber also included in that list. We'll take a short break, but we'll get you more on the markets and lots of stocks in focus, so stay tuned for that. Welcome back. Well, for the markets, the Bank Nifty has just about broken into the green now, so just about 60 points higher. Just watch out for Sai Life because that stock should show up for you. It's up around 2% at this point in time. There is news that they will be doubling their R&D capacity with their new Hyderabad facility. So that's the reason why you're seeing it buzzing in today's trading session. But besides that, they are also releasing their numbers on the 6th of November, which is basically the week after. So that's the reason why you're seeing some amount of momentum on Sai Life. So doubling R&D capacity, which will start possibly in September of 2026. So that's the news coming in for Sai Life. But let's shift focus. Our colleague Madiha spoke to Cochin Shipyard's Mad Nair on the shipping business opportunities in India and their order book. Listen in.
So if you want to look at numbers, then we are much lower than 1%. 3 countries in the world, which is China, Korea and Japan. Merchant shipbuilding, that's what I'm talking, is about 93% of the world. So it's lopsided at this stage. So, but let's not get disheartened by what we are saying. I think as a country, probably the focus had not been there. The focus is now pretty much strong. The Honorable Prime Minister has laid out the vision with our Maritime India Vision 2030 and the Maritime Amritkal Vision 2047 scheme of things. And your question, how much does it take to reach there? It takes quite a lot.
What is Cochin Shipyard's order book looking like right now in terms of making merchant vessels?
We are currently, our order book is about 20,000 crores, out of which about half of that is from the merchant vessel space. And as a company, we have already created a very large new dry dock. We are invested in ship repair. We have created a new international ship repair facility. Almost 3,000 crores of investments has been completed. So those are already completed last year. But as we are moving forward, we will create new core infrastructure. We will create infrastructure in Kochi, where we are our main dry dock, and the new dry dock has been set up. But we'll also on the west coast of India, in Gujarat, we'll set up a new ship repair ecosystem teaming up with the Deen Dayal Port Authority, the Kandla port, repair ships. So we will work on both shipbuilding and ship repair as we move forward, and there will be further investments.
Okay. Lastly, sir, how many MOUs are you signing at this year's Maritime Week?
At the Maritime Week, we are having 8 MOUs across different spaces.
Okay, could you please elaborate on how many and which are these MOUs?
We just completed a large one is with the HDKSY, which is Hyundai of Korea for shipbuilding. With Dry Docks World Dubai, we are doing ship repair. With Deen Dayal Port Authority, we are doing for the ship repair ecosystem. With the Dredging Corporation of India, with Cochin Port Authority for land to build up another fabrication facility, with IHC of Netherlands for dredger making. So these are the main ones.
What is the value of the MOUs, sir?
I wouldn't want to talk on the value, but then they are significant and substantial.
Right, with that, we'll take a short break. On the other side, we'll focus on Indus Towers. That's the stock that is reacting to its second quarter earnings. Stay with us.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty has seen a recovery coming in, especially in the last half an hour. 25,900, about that is what the Nifty is trading at. Just 26 points down in today's trading session. And apart from that, hourly gainers that we're seeing in the last 50-odd minutes, IDBI Bank, that's seen a jump up. We're seeing IDFC First Bank, Chennai Petro among some of the gainers, especially in the last 1 hour, that have come up from the day's lowest point, now trading almost near the day's highest point, are all these stocks. So keep an eye out on that one as well. Ola Electric, also you can see the update coming in at the bottom of your screen, so keep an eye out on that one. Ola Electric managing to hold on to gains of almost 1%. Clearly a recovery coming in the markets from the day's lowest point. Mid and small cap, mid cap actually is moved to the green side as well, so keep an eye out on that one. But let's talk about Indus Towers, right? That's surging in trade after its Q2 earnings. Rima is joining in with us to give us details on this front.
Thanks so much for that. So two positives in Indus's numbers this time. One, EBITDA beat. EBITDA margins expanding by 180 basis points sequentially. And this was aided by a reversal of provisions that the company used to make for Vodafone Idea. So in Q2, it reversed about 195 crore of provisions. And secondly, there was an acceleration seen in the tower. So the tower addition in Q2 at 4,300 was an improvement compared to Q1's level. Jefferies has upgraded the stock to a buy. They believe the risk reward is attractive because they're assuming about a 6% profit growth plus dividends to resume at some point, which will be a big trigger. So 7% dividend yield. So risk reward is favorable. Target price 425. IFL believes downside risk for Indus Towers, does not exist now because Vodafone Idea will survive. In fact, earlier they thought that, there was a 15% probability that Vodafone Idea won't survive. So they'd bake that into their analysis. Now they assume zero. So target price for IFL also goes up. And CLSA is the highest. High conviction outperformed with the target price 520.
Okay, all right. Target price of 520 by CLSA on Indus Towers. Thanks, Rima, for that. Well, for the market, definitely recovered. 25,941 is currently where we're at. So above that 25,900 odd level in today's trading session. We're just about 0.4% off the day's low at this point in time. With that, it's a wrap on Halftime Report. Business Lunch, however, will take all the action forward. Stay tuned.
Stocks recover some ground after a midday dip ahead of today's F&O expiry. Realty and consumer durables are the big drags, while metals and PSU banks are some of the top gainers. With the Supreme Court allowing the centre to review Vodafone Idea's AGR dues and following the recent collections, Indus Towers has written back a provision against dues from the beleaguered telecom operator. The move gives the stock a leg up. Indian Oil Corporation surprises analysts with a significantly stronger than expected second quarter performance on higher refining margins. The visible cutback in imports of Russian oil by Indian refiners recently, however, clouds the outlook. Trading at MCX fails to kick off as scheduled. The exchange points to a technical glitch for the delay. This is the second instance in the last 4 months where technical issues have disrupted trade at India's premier commodity exchange. The battle at the Tata Trust drags on. Sources close to the Tata Group say that the appointment of Melli Mistry to the board of Tata Sons is unlikely, with at least 3 trustees believed to have voted against the motion. This comes with Melli Mistry's term as trustee coming to an end today. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia, and there has been a significant recovery from the lows of the day for the markets. The Nifty has almost moved back into positive territory. It's almost a 100-point recovery now from the lows for the index. 25,941 is where the Nifty currently stands, almost back at that 25,950 mark. The recovery led by the banking names, the PSU banking names, the private banks also seeing some recovery from the lows of the day. And there you can see the Nifty Bank has already moved into the green, and that index also contributing to the recovery, as is the PSU Bank index. The dip at 11 o'clock, the day's low, and since then there has been almost a 100-point recovery from the lows there as well. So it is the banks that are leading the recovery on the index. 2 names that I wanted to highlight in particular, earnings reactions coming in. Car Trade Tech results came in just a couple of hours ago while we were in trading hour, and that stock at that time was up 12.5%, still holding on to gains of around 11%. Closing in on that 3,000 rupees mark is Car Trade Tech, a significant expansion in margins seen in this quarter. What has also seen an expansion in margins is TTK Prestige, and it is a 200 basis points expansion in their margins this time around. Their EBITDA was also up around 33% from the same quarter last year, and look at the spike that the stock has seen after the results announcement. 15% higher now on TTK Prestige. Another very sharp reaction to its results. Of course, we are counting down to a lot of other major results coming in over the course of the day as well. We'll keep an eye out on all of these names. But the big story that has been dominating proceedings all through the morning has been the trading delay in MCX. And this is the second instance in the last 4 months that this has taken place. The exchange continues to cite tech issues behind this. Manisha is now joining in with more on this. Manisha, tell us what's the latest on this trading disruption?
Well, it has been 4 hours and MCX is yet to start or commence trading for the day today. Remember, the trading for commodity derivatives as well starts at 9 a.m. and it's 1 past, and we haven't seen trading start yet. It also is a second such instance of delayed trading in last 4 months. The last time it happened was in July, and at that time, a 1 hour, 10 minute of a delayed start is what we saw on MCX. The last time you saw a 4-hour delay was in Feb 2023. That is the time that MCX also was changing its technology partner to TCS, and there were teething issues at that point in time, but it has been some time since then, and from then till time, this is the 4th such time that we are looking at a delay. But 4 hours is a long one, and it also is a kind of a day where you are looking at a lot of volatility in commodity markets, and traders, hedgers, manufacturers not able to change their positions on MCX or trade new positions as well. Remember, 98% of commodity derivative market share is held by MCX. Whether it is about precious metals or energy or base metals for that matter, MCX is the place to go to. Even as you do have commodities trading on BSE and NSE, but the trading volumes are low. There's absolutely no liquidity there. So even if the market participants participants wanted to hedge or trade opposite positions on the other exchanges is something that they perhaps are not able to do that right now. Well, apart from that, the brokerages do tell us that the trading orders getting confirmed is kind of delayed at many times. It also has been late arrival of settlement fees that they have been facing as well. So there are some technology glitches that the street in any case has been dealing with. MCX at this point in time says that commencement of trading is delayed due to technological issue. They also says that trading will start from disaster recovery side. That hasn't happened till time. There have been some reports suggesting that there could be some concerns at the disaster recovery site as well. But MCX says that the time of commencement of trading will be informed to the brokerages in due time. It's a concern that stands at this point in time. I have been talking to a lot of people. They tell me that the gold prices have declined by $50 since morning until time, and there is no place to trade, hedge, or for that matter, invest as well, because the MCX hasn't worked or open till time.
Manisha, thank you for that update. It's now been 4 hours since trading was disrupted. The session begins at 9 a.m. and there are still no signs of when will the session resume at MCX. In fact, we did also speak to Kunal Shah of Nirmal Bang Commodities and Jay Prakash of Adhan on this matter. Listen to what they had to say.
I don't think so that immediately today they can accommodate the volume, because I don't. If I'm having a position on MCX and I'm getting relatively illiquid depth, okay, in both of these exchanges, then I would be skeptical to forward or do counter hedge. So I think right now there is no option. But in the interest of the markets, if other exchanges are liquid and vibrant, then definitely that this would have been a very helpful day in this kind of moments. So I think the other exchanges should take enough effort by realizing that they do have a space. If this kind of event takes place, then they do have a marketplace where they can adjust and accommodate this kind of volumes and then eventually gain traction. So this kind of event will make sure that there is a need for other exchanges.
We don't have anything to do now, because it's all up to the exchange to let us know when they can resume the trading or when the trading can start. We have been representing the fact, through associations. The concern has been raised to MCX top management, and we hope that going forward, these kind of glitches are taken care of.
At the lowest point of the day is MCX still continuing to hold losses of around 2% after this trading disruption. But meanwhile, Indian refiners have now cut down on Russian oil imports amid the geopolitical tensions. Sonal is here on the commentaries that companies have shared with regards to these Russian crude oil imports. Sonal.
Thank you for that. Well, we just saw Oil India also looking at legal options because of the stake that they have in Russian sanctioned fields or companies as well. So there have been commentaries coming in from different companies because now sources are suggesting that November 21 is the hard deadline. Any supply from sanctioned entities will be turned away by Indian refiners from that date. But do remember, some of these companies have indicated that they are already cut in Russian oil supplies. IOC, for instance, reported numbers yesterday where they indicated they will comply with US sanction on Russian oil imports, and Russian crude intake has already reduced to 19% versus 24% on a sequential basis. And company also remains flexible with respect to any other source for crude sourcing. They are considering the US as well. Reliance Industries did indicate that they will comply fully with any guidance from the government with respect to Russian oil imports and sanctions from the UK and the US as well. We spoke to Chennai Petroleum yesterday. They said there has been a sharp cut in Russian oil imports from 40% to 20% now. And they indicated that they have started purchasing more from the US when it comes to crude price. And they will purchase from any source which gives better efficiency in terms of refining margins. But do remember, when we started, or the country started importing Russian crude, the discount was anywhere between $15 to $16 per barrel. But as we speak, this discount has narrowed to levels of $2 to $3 per barrel. And that's why some of the analysts are indicating that the impact of lower Russian crude will not be so much on any of these balance sheets and P&Ls as well. Jefferies put out a note where they said the outlook on refining is now weakened because the advantage that these refiners had with Russian crude has come down. But do remember, the discounts have also come down. So the indication is it could be an impact of 2 to 3% on most of these refiners.
Sonal, thank you for that update with regards to the refiners importing from Russia. with regards to their crude oil sourcing. Now, the government has announced that 6 companies have received approval under the government's electronics component manufacturing schemes. The investment that has been approved for the company stands at over 5,530 crore rupees. Union Minister Ashwini Vaishnav has said that with these approvals, India will save at least 20,000 crore rupees on its import bill. Listen in.
It's about 20,000 crore rupees import bill will be saved by these plants. But then there are many more plants which are in the pipeline. As you are aware, 249 applications are there, and we are working day and night to complete the entire process at the earliest possible time.
Let's also listen to what the management of Syrma SGS had to say on the same.
We have filed 4 applications. The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity, with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month, and by about December 26, we expect the trial productions to begin. The architects have been finalized, the contractors are being finalized, and we were waiting for this approval. And I think we would be there by December 26 with the trial production.
Staying with MCX, the big announcement coming in from the exchange that trading will resume at 1:20 p.m. The special session begins at 1:20 and normal trading will start at 1:25. So in just about 10 minutes from now, the special trading session begins for a 4-minute period, and then at 1:25 p.m. the normal trading session will begin from MCX. That is an official statement from the exchange. So we'll wait by for the next 10 minutes to see the latest developments there. Trading has been halted now for 4 hours and almost at par with what had happened back in February of 2023. That's MCX for you. We'll keep an eye out on this all through the show. But a big development in the Tata Trust's battle has also come about. Sources close to the Tata Group say that Meli Mistri's reappointment as trustee on the Tata Trust's board is unlikely. Parikshit is joining in with more on this. Parikshit.
This is indeed a big setback for Meli Mistry, the director of Meher Palonji Group and one of the key trustees at Tata Trust. His reappointment as trustee for life is unlikely to go through. This after a majority of trustees have voted against his reappointment. Meli Mistry's term was set to expire on October 28, and ahead of that, Tata Trust had circulated a letter seeking views of different trustees on his reappointment. We're told that Noel Tata, Venu Srinivasan and former Defence Secretary Vijay Singh have voted against his reappointment. The only support for Meli Mistry coming from Darius Khambata and Jahangir H.C. Jahangir. Now, in these circumstances, Meli Mistry's reappointment cannot go through. In any case, reappointment of trustees for life has to happen unanimously. Even if one person had voted against Meli Mistry, his reappointment would not have actually gone through. Now, tensions within the Tata Trust have been continuing for some time. This includes how Tata Sons should actually be controlled and whether Tata Sons should be publicly listed or not. Let's see whether Meli Mistry accepts this. Before the reappointment of Venu Srinivasan, he had put a condition stating that he would support Venu Srinivasan only if in future all trustees of Tata Trust were reappointed unanimously and for life. Now we have to see whether Meli Mistry will throw up a legal challenge or not.
Parikshit, thank you for that update. Take a short break. More news and updates on the other side. Welcome back. Now, US President Donald Trump is in Tokyo, the Japanese capital, in the second leg of his Asia tour. CNBC's Kaori Enjoji is here with more details.
Full court press by Sanae Takaichi and her team as she tries to woo Donald Trump in their first face-to-face meeting. The bilateral meeting is over. They met at Akasaka Palace earlier on this morning. They had a signing ceremony whereby the two countries agreed to work together on critical minerals and rare earths. And I'm told that the president has left Akasaka Palace and is heading back to his hotel, but there's a busy afternoon schedule as well. I think the afternoon will be interesting because this is going to focus on defense. The two are expected to go to Yokosuka Naval Base. I mean, the U.S. troops outside the United States, a big presence here in Japan. And Sanae Takaichi and Donald Trump probably are going to see eye to eye, probably the most on defense, because she's a hawk. And she, even before this trip, she said that Japan was going to spend more quickly on defense than was initially planned. What you're seeing right here is central Tokyo. A lot of people in Tokyo don't really know this, Stan, but there's a helipad right behind me. It belongs to the U.S. military. It's called, colloquially, Azabu Helipad. And this is where Marine One, the helicopter, landed last night to bring Donald Trump from the airport. And it is the talk that they are going to depart from that helipad very shortly. And it's very unusual for a foreign head of state to go into the Marine One helicopter with the U.S. president and make their way to Yokosuka, which is where the USS George Washington is based, and the president is expected to address the troops there. But I think, as Donald Trump said earlier on today, he expects more purchases from Japan in terms of defense. And certainly, in that sense, the fact that Takaichi said she's going to raise defense spending to 2% of GDP a lot earlier than expected has gone down well.
Now, the European Union is all set to hold talks with the Chinese delegation in Brussels this week over Beijing's rare earth curbs. CNBC's Elaine Yu is here with more details.
EU trade chief has invited Chinese authorities, including the Commerce Minister Wang Wantao, to Brussels this week or in the coming days to find, quote, urgent solutions to China's rare earth export controls. Now, you'll recall earlier this month, China dramatically expanded its rare earth export restrictions with tighter control over 5 additional elements, as well as processing technologies, permanent magnet materials, lithium batteries, and also products made with even trace China origin content. So some of these rules took effect already in October, and some will come into effect in early November and early December. And this has rattled not just the U.S., but also Europe, and European Council President Antonio Costa has met with China's Premier Li Qiang on the sidelines of the ASEAN summit, saying he's very concerned about the trade relationship with China, especially around these rare earth restrictions. And he said he urged Li Qiang to restore fluid, reliable, and predictable supply chains as soon as possible. Now, China's Li Qiang told Costa in turn that China is ready to work with the EU to deepen cooperation. But Ursula von der Leyen over the weekend struck a stronger tone, saying in the short term, we are focused on finding solutions with our Chinese counterparts, but we are ready to use all of the instruments in our toolbox to respond if needed. And they are also focusing on everything, she says, from joint purchasing to stockpiling. So over the long term, Europe's strategy is to cut that dependence on China. And von der Leyen also noted that more than 90% of Europe's consumption of rare earth magnets comes from China.
Interesting updates there from the Chinese rare earth front there. We'll take a short break, but just as we do that, here's a quick note for our viewers. If you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Pro. Get the daily expert calls, actionable charts, and insights to power your investing decisions. Plus, this festive season, there is more reasons to celebrate. Now, 10 lucky subscribers every day will win 1 gram of gold. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro. Welcome back. Now, Amazon is planning to cut as many as 30,000 corporate jobs starting today as the company pares expenses and compensates for overhiring during the peak demand of the pandemic. It reported the largest cut to its corporate workforce. Take a look at this report.
Amazon is planning its biggest job cuts since 2022. It's aiming to axe as many as 30,000 corporate positions starting Tuesday. According to 3 people familiar with the matter, the e-commerce giant is paring back expenses and compensating for overhiring during the peak demand of the pandemic. The figure is roughly 10% of Amazon's corporate employees. Cuts beginning this week may affect teams such as human resources, operations, and Amazon Web Services. Amazon CEO Andy Jassy said in June artificial intelligence tools would likely lead to more job cuts, automating repetitive and routine tasks. Earlier this year, he installed an anonymous complaint line for identifying inefficiencies. Sources say Amazon's 5-day back-to-office policy, among tech's most stringent, has failed to generate enough attrition. The sources cite that as another reason for the size of the layoff. Some of the employees who are not swiping in daily because they live far from corporate offices or for other reasons are being told they have voluntarily quit Amazon and must leave without severance, a saving for the company. Meanwhile, Amazon appears to be expecting another big holiday selling season. It plans to offer 250,000 seasonal jobs to help staff warehouses and other needs, the same as in the past 2 years.
Keep an eye out on the layoffs here at Amazon. But cyclonic storm Montha is expected to make landfall in Andhra Pradesh this evening. The Andhra Pradesh coast has been battered by heavy rains since the morning, resulting in waterlogging in several areas. Odisha's Ganjam district has also reported rough seas, strong winds and rainfall. Now, Andhra Pradesh Chief Minister Chandrababu Naidu has also directed officials to take action and evacuate residents from vulnerable areas. Schools across many districts in Odisha and Andhra Pradesh. There's some flashes on your screen with regards to SRF or the commentary ahead for the company. They have also mentioned that there has been some delay in procurement with regards to agro majors. They have been deferring procurement to the late second half of FY26. The raw material prices, though, appears to have bottomed out. That's the major takeaway from the management there on SRF. The stock not doing much, still around 0.5% higher. That's the commentary coming in from the management. Take your leave on this edition of Business Lunch. We leave you with the Nifty still around 25 points lower, recovering from the lows of the day. From me and the team, thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. It's the monthly expiry day, so there has to be a lot of volatility. After falling around 120 points from the day's high, we've recovered around 120 points from the day's low as well. So yes, it continues to be very volatile. 23 points lower on the Nifty as we speak. Bank Nifty has recovered and that is leading to the recovery as well. MCX, of course, on our radar. Trading has finally resumed at MCX. It's been about 4 hours, 15 minutes almost since it was halted. So there's some update coming in from MCX as well.
Good afternoon. Given the kind of volatility that commodity prices are seeing, it's very clear that there were a lot of traders who had their eyes on when MCX will open. Finally has resumed. It's been the longest halt that this particular exchange has seen, and of course, there will be questions raised as to what exactly has transpired. But we have a lot lined up on the equity markets as well. So let's start off with the top headlines. Stocks recover some ground after a midday dip ahead of today's FNO expiry. Realty and IT are the big drags, while metals and PSU banks gain. Midcaps in line.
Car trade tech surges after reporting strong Q2 numbers. Margin expands, revenue up over 25%, while EBITDA nearly doubles as compared to last year.
Keynes Technology and Sirma LGS surge in trade after MEITY approves first batch of 7 projects with an investment worth 5,500 crore rupees. Keynes tells CNBC-TV18 that they will meet the timeline set in the electronics scheme, while Sirma says India will become a hub of component manufacturing in the coming years.
Jana SFB is under pressure after RBI returns the company's application for voluntary transition to Universal Bank. Application returned due to non-fulfillment of the central bank's criteria.
Trading at MCX resumes after halting for more than 4 hours amid a technical glitch. This was the second halt in trading on the commodity exchange this year.
All right, those are the top headlines. Market is seeing some further recoveries. Just a 17-point cut on the Nifty as we speak. Banks are surging. And we do have the PSU banking index, which is leading to major moves on the Nifty as well. Metal index is also higher by 1.3%. And these are some of the reasons why we are seeing that recovery. Just quickly, let's take a look at SRF because it put out its presentation where it spoke about its commentary as well. And they do indicate that, yes, demand was impacted in some of the segments. Agro majors are deferring procurement to late second half of FY26. But they say raw material prices, they seem to have bottomed out. This is for the specialty chemicals business. And they also say that in the fluorochemicals business, their domestic gas demand is expected to recover in the second half. For their technical textiles business, they are talking about market conditions expecting to improve from the second half. The stock did recover, but quite flat right now with some positive bias.
That's right. Important comments there. A couple of conference calls that we'll be tracking. I'm sure you'll be looking at SRF. Even Industars today has its conference call. All eyes will be on the commentary regarding yesterday's Vodafone Idea judgment as well. But this is our special segment, Midcap Movers. Solution is standing by the wall to take us to the midcaps that are moving around in the session.
So amid the volatility on expiry day, we are seeing a big move on both these sides in some of the major names in the broader market. So on the top of the list is Supreme Industries. After that, there is a concern related to margin improvement if company will see, and also company has lowered its revenue growth guidance for FY20, volume growth guidance for FY26 to 12 to 14% from earlier guidance of 14 to 15%. That's the reason stock is under pressure. Indus Towers is sharply higher after company has reported an all-round beat in Q2. Similar trend can be seen for Car Trade Technologies as well as JK Tyre. Both these stocks are higher after strong Q2, while Sirma SGS is higher after announcements related to PLI by government. Some of the major mid-cap gainers, first one is GM Breweries. Over the last few days, you have been seeing that one day stock is up, another day stock is down, but today it's up another 8% with healthy volumes. IDBI Bank, there are certain reports about the stake sale and it's on the track, and that's the reason stock is higher, currently up more than 8%. Chennai Petro is also seeing a big move with healthy volumes, currently up more than 7%. JSPL ahead of its Q2 earnings, the stock is seeing big buying, currently up almost 4%. PSU banks, all the PSU banks have been seeing buying, and one of the strongest amongst all the banks is Indian Bank. Today also it's up more than 3%. Some of the mid-cap losers, first one on the list is Vodafone Idea. It's seeing profit booking after a big move that stock has seen over the last few weeks. Second name is HOAC. Basically, there are certain reports related to the agreement with HPCL, and that's the reason stock is under pressure. It's down almost 6%. PSP Projects, yesterday it was up almost 17%. Today it's seeing profit booking down almost 6%. DB Nifty Corp, after a big move that stock has seen yesterday after the reports led to government is planning to increase the ad rate after 5 years. Today it's down almost 4%. And last one, majority of the capital market names are under pressure, and BSE, you can see it's down more than 3%.
Okay, some interesting names there. Thank you so much, Sudarshan, for joining us as always and taking us through those names. It's a good time now to get a technical check on the markets. Let's welcome Shrikant Chauhan for just that. He's joining in from Kotak Securities. Shrikant, good afternoon. Thank you so much for joining in. Expiry day, what are you suggesting? What kind of moves will the Nifty see? What are the important levels to watch out for?
Good afternoon, Sonal, and good afternoon, Vivek. I think since last 2 days, we are seeing market is consolidating. It is finding difficulties to sustain above the levels of 26,000, but at the same time, it has excellent support close to 25,800 levels. So I am of the view that till the market is not breaking the level of 25,800, we could see market to remain in a range. But about 26,100, we are expecting breakout sort of formation in the market. Broadly, I am of the view that the major trend of the market is up. And in case if there is any correction, then it will be an opportunity to look for adding some long positions. On the higher side, I am expecting market to move towards the levels of 26,500.
Okay, Shrikant, and what are your individual trading picks for the day?
So yeah, there are a number of stocks which are doing really well. And in that specifically, we like HDFC AMC, which is currently trading around 56.40, 56.50. There we have target of 58.50 based on its technical formation. But in case if we see the longer term chart of the stock, then based on that, we can see the levels of maybe 6,000 in the near future. So at current levels, HDFC AMC looks quite strong bet to buy for. We can keep a stop loss at 55.50 for taking any trading long positions. The other stock on which we are bullish is Thyrocare. Currently, it is around 1320, 1325. There also, we are seeing rounding bottom sort of formation. And the stock is on the verge of crossing its previous high of 1450, 1475. So at current levels, Thyrocare also looks strong candidate to buy for with a stop loss close to 1280.
Okay, all right. Thank you so much for joining us with all those details, Shrikant. So that's a technical check, but this is our special segment now, Midcap Spotlight. Sudarshan is back with us. Sudarshan, how did the numbers of car trade tech look? The stock is surging.
It's another quarter of very strong set of earnings from car trade technologies. If you take a look at profit, it has increased to 60 crore from 28 crore that company reported in the same quarter last year. Revenue too has seen a healthy growth of 25%, and it's the highest ever revenue that company has reported in a quarter. EBITDA too has almost double, increased by 95% to almost 64 crore from the level of 33 crore in the same quarter last year. And margin too has seen an expansion of more than 1100 basis points, and it has come in at 33% against 21%. And this is led by all-round growth that company has seen in all the segments. Consumer group revenue is up 37%. Profit has seen an increase of 82%. Remarketing business revenue is up 23%. Profit has increased 30% here as well. For OLX India, revenue has increased by 17%, and profit is up more than 213% year-on-year. And company is saying that growth has been driven by operating leverage and integration of synergy. So because of an all-round beat and very good set of earnings, you are seeing a big move in the stock, currently up almost 16%.
That's right, Sudarshan. A sharp up move after the Q2 results just came out. A strong set, like you just highlighted for us. Well, here's a quick note for our viewers. If you'd like access to expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to Money Control Super Pro and get daily expert calls, actionable charts, and insights to power your investing decisions. Plus, this festive season, there's more to celebrate. 10 lucky subscribers win 1 gram of gold every day. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. You're still tuned into Midcap Radar. Well, JLL in its recent report says that apartments valued at 1 crore and above recorded 4% growth in sales in the first 9 months in 2025. Samantak Das, who is the chief economist and head of research at JLL, is joining us now to understand the dynamics in the real estate market, the demand and the supply going forward as well. Mr. Das, good afternoon. Thank you so much for joining in. Well, while premium housing has done well, if we look at the overall units in quarter 3 2025 versus quarter 3 2024, there has been a decline. What are the trends suggesting now? Where are we in the real estate cycle, and which are the segments which will drive growth from here on?
Hi, good afternoon, and thank you for having me on this show. Yes, overall there is a decline in terms of sales in the top 7 cities. However, what we have noticed is the premium housing, which we are defining as 1 crore and above, and this is keeping in mind the overall urban income, all India urban income. So this premium housing in the last 2-3 years, if you have noticed, that has become the new normal in the top 7 cities. So the ticket size or the house price or the apartment price is now 1 crore and above in most of the launches, if you see. And there are reasons why this has gone up, the apartments priced above 1 crore. Because if you see the share 3-4 years back, 5 years back, this 1 crore and above share was even 40%. Now it has gone up to 62%. So there is definitely a rise in the share of this segment. So some of the reasons I may just cite for understanding. One is definitely the land prices have shot up, exponentially, and more so in the top 7 cities and its peripheral locations. That's number one. Number two, very important to understand that buyers' choice for larger homes with holistic ecosystem and amenities, that choice has really moved. So we have seen the consumer preference going towards this type of housing. So that's number two. Number three, very important, is we have seen that the workforce in all these 7 cities, it's quite young, and whatever you call it, millennials or Gen Z, their preference is basically the tolerance of commuting is not more than 20 to 30 minutes. So they want to stay in the proper cities, and that's where the demand is coming as well. So all this together, with the cost of land, buyer's choice, and the commuting time tolerance, everything taken into account, this segment has really moved up. Now, going forward, our understanding is this structure of sales will remain. That means the premium segment, 1 crore and above, will have probably the lion's share, more than 50-60%. So that doesn't mean that in number, actual quantum, it will the affordable segment or the mid segment, which we are calling it less than 1 crore, the share may go down slightly, but the quantum will remain, because the total sales what we predict will go up, given the conducive environment of house pricing. There will be a plateau that we are expecting. The interest rate is quite now affordable. It has really remained quite low for the last couple of quarters. And going forward also, we understand that prices, there will be some plateau, because it has already risen in the last 3 years. I think on an average.
Samantak, yeah, we are just getting to that. The other point that you mentioned is, while you're expecting prices to plateau over the near term, you've also spoken about construction costs. So going forward, do you see a plateauing even in terms of new projects coming up? You're saying construction costs have actually gone ahead and hampered launches.
See, land prices have really gone up exponentially. Cost of construction has gone up in the range of 5 to 8-10% maximum, right? But if you see land prices, yes, if you see, there is a plateau already in the launches, if you see the numbers. So, there will be very, very selective launches, and developers are very cognizant of the fact that where the demand is, which locations within cities the demand is, very, very active. So keeping in mind, I think launches will be in the range bound only around, as per our estimate, the growth, there will be a growth definitely, but not to the extent of what we would see, earlier 5-6 years back.
All right.
The launches will be around 5%, 6% growth. In fact, the first 9 months we have seen a slight marginal decline in launches already.
All right. Okay, thank you, Mr. Das, for joining in. With that, we'll slip into a short break. When we come back, we'll put focus on TTK Prestige and Jana Small Finance Bank. All stocks on our radar today. Stay tuned for that. Welcome back. You're still tuned in to Midcap Radar. Well, TTK Prestige, that stock is surging trade after reporting Q2 numbers. Upasna is joining us with the analysis. Upasna.
Well, it's certainly a turnaround quarter for the company after reporting several quarters of weakness. Now, going to the revenue growth first, the company has reported a strong double-digit revenue growth of 11% after several quarters of tepid growth, and the revenue growth is likely aided by the company's cookware segment and also its increasing focus on premiumization. Now, if we look at the H1 FY26 revenue growth, that stands at 8%, well within the guided range of high teen single-digit growth given by the company earlier in Q4. And company had also told us that it is aiming for a double-digit growth within 2 years back in Q4 FY25. Now let's just look at the numbers. Revenue stood at 833 crore with an uptick of 11%. Gross margins have also expanded by 120 basis points at 42.4% versus 41.2%. EBITDA has seen a healthy uptick of 33%, and EBITDA margins have also seen an uptick of 190 basis points at 11.6%. PAT stood at 63 crore with an uptick of 21% on year-on-year basis. So all in all, it's a strong set of numbers for TTK Prestige this time around.
Well, thank you so much for joining us and taking us through the internals as far as TTK Prestige quarter 2 results were concerned. Well, moving forward, Jana Small Finance Bank actually faced a regulatory setback. Gaurav joins in with more details. Gaurav, what does this spell, the RBI diktat for Jana?
Well, yes, when we look at Jana Small Finance Bank, they had applied for the license of universal banking, but now RBI has returned the application, meaning that they have not given the application the rights for Jana Small Finance Bank to become universal bank. Now, when we look at the timeline, Jana Small Finance Bank actually applied for the license on 9th of June 2025. So, in just 4.5 months, RBI has returned the application. When we look at some of the instances that have happened right now, remember, AU Small Finance Bank, they recently received the universal banking license, and it took 11 months for RBI to give their verdict. When we look at Jana Small Finance Bank and the guidelines, there were a certain criteria that they had set by the RBI, like prescribed CRAR ratio that they had to maintain, gross NPAs below 3% and net NPAs below 1%. When we look at Jana Small Finance Bank, it seems that on the number basis, they were meeting the criteria. In fact, they fulfilled the criteria by the end of FY25, and right after that, they applied for universal banking license. But there were some hurdles. When we look at second quarter's results, we saw they already actually reduced the PAT guidance almost to 0 to 2% versus what they were guiding for 30% growth. They in fact also reduced the ROA guidance somewhere in the range of 1.1 to 1.5%. And at the same time, if we go back in time, we also saw Jana Small Finance Bank reporting net NPAs around 0.99% at times also during first and second quarter of FY25. And at that time, they made prudent provisions to keep it below 1%. So definitely a setback for Jana Small Finance Bank, and as a result, when we look at stock performance, it is down more than 2% today.
Well, absolutely right. Was down a lot more during opening, but since then has recovered marginally. But again, setback coming in as far as that particular name was concerned. On the other hand, IndusInd Bank, that particular stock has surged to the day's highest point. IndusInd Bank almost 4% higher. And the other stock that's doing quite well is IndusStar. That particular company came out with its results, some positive news flow regarding Vodafone Idea as well, aiding the momentum over there. But with that, it's all the time we have with this edition of Midcap Radar Mutual Fund Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Bhutra and with me as always is Vinny Motiwala. We are here to answer all your mutual fund related queries.
Motiwala Vinny also would be okay as long as it's not Moti Sonal.
All right, so today is the day where we answer all our viewers' queries, and for that we have our guest joining us now, Kirtan Shah, founder and CEO at Truvanta Wealth, and Rushabh Desai, who is the founder at Rupee with Rushabh Investment Services, joining us now. Gentlemen, good afternoon. Thank you so much for joining in. Guys, it's a laughter riot in the studio today, so we have to avoid that. But thank you so much for joining in. Let me go across to Keithan first up, because we have received a lot of queries today. Virat Joshi is writing to us from New Delhi. He wants to know 5 mutual funds to invest in for the long term and is looking to invest 2,000 in each funds. Keithan, let me start with you first up. Of course, we don't have the goals here, the risk profile as well. So those are certain things we need to consider as well. But notwithstanding all of that, do you have some names where the investor can invest, considering some of the conditions which would be obvious in certain cases?
Sonal, thank you so much for having me on the show. I think, of course, like you rightly said, we don't have anything else except for a one-liner. So it's kind of difficult to be able to tell him what will fit his actual requirement. But putting in some assumptions, let's say the investor has 8-10 years of investment horizon and can actually take the volatility which will come along with investing in probably a mid-cap or a small cap, then I think these are the 4 funds that I would rather recommend that he invests his money equally divided amongst all of these 4 funds. First is the ICICI Value Discovery. Second is the PPFA's FlexiCap Fund. Third is Edelweiss Midcap. And fourth is Nippon Small Cap. Now, the idea behind the 4 funds that I've suggested is pretty simple. They are diversified across market cap, across large, mid, and small. And also, they have a very decent diversification across the style that each of these funds follow. So I think this can be a good starter. Considering 8-10 years of investment horizon and the investor is okay with volatility.
Okay, thanks for that, Keithan. But, Rushabh, the same question to you. An afternoon, 5 funds that you would suggest the investor, they want to invest 2,000 rupees in each of these funds. What would it be?
Hi, Vinny. Thanks so much for having me on the show. As Keithan also mentioned that, the investor has just given one-liner. It's quite difficult to actually, recommend quite precisely. But again, putting an assumption that he has around 10 years of time horizon and has a high risk appetite. So these are the 5 mutual funds in my recommendation list for him. Number 1 is a Parag Parikh FlexiCap Fund. Second is Invesco India Contra Fund. Third is Motilal Oswal Nifty 500 Momentum 50 Index Fund. The fourth is the Edelweiss Midcap Fund, and the fifth is the DSP Small Cap Fund. So this portfolio, helps give a good diversification across different categories, AMCs. It also gives a good blend of different styles and different market capitalization as well. So having a good blend and well-diversified portfolio helps to boost returns, and definitely it also helps in minimizing underperformance risk. So I think, having a bit of active participation and passive participation will also work great in terms of boosting returns and minimizing underperformance risk.
Take that point. So there have to be some assumptions which have to be made, because it was a straightforward query with no goals written, no risk parameters also mentioned. So that needs to be kept in mind as well. Let's go across to our next query. Akash Pansari is writing to us from Jaipur, asks if it is better to invest in gold and silver ETFs or through fund of funds. Now, we are talking about it at a time when we saw the big rally come by in gold and silver. There was a time when silver ETFs were trading at a premium as well. Keithan, first up, a good time to invest in any of these ETFs or fund of funds which have a commodity or a precious metal exposure? And if yes, which is the better way?
I think, Sonal, it's just a flip of coin, to be very honest, to be able to judge whether or not silver or gold will do any better from what they've already done. But I think as an investor, you should definitely stick to your asset allocation and not try and get into the FOMO because a couple of assets have moved in a certain way over the last 1 or 2 years. And I think that's precisely the biggest mistake that most investors make, right? Look at the last 1 or 2 year returns and then try and allocate money towards a particular scheme or a particular asset. But to answer Akash's question specifically, Akash has to understand the difference. The difference is very simple, that when you invest in an FOF, the FOF actually ends up buying the ETFs at the end of the day. But the major difference between both of them is that when you buy FOF, you get the day-end NAV. But in ETF, you actually have the liberty to be able to, kind of buy silver or gold while they are trading during the live markets. But like you rightly pointed out, lately we've seen how there have been a premium in the ETFs at which they've traded. So I think ETFs largely, in my opinion, is meant for more sophisticated investors who can do the intraday timing. They can also understand whether or not the price is at a premium than the fair value, which is the INAV. For a retail investor, I would still rather suggest him or her to actually stick with the fund of fund. It comes at a very small cost of 0.10 or 0.20 bips over the ETF, but I think it's a fair price to pay, because you don't know how to calculate the premium, and whether or not, if you end up paying a very high premium, which happened lately, silver prices were trading at 12-18% premium to the fair price. I think there's too much to pay for not knowing how to invest. So I think retail investors stick to FOF, and professional investors can look at ETFs.
Okay, retail investors stick to FOF, and professional can look at ETFs. Let's move on to the next query. Rushabh, this is coming from Anup, who's writing to us from Bangalore. He's asking if he has a timeline of 10 years to buy a house, and his estimation of corpus that is required is going to be 5 crore rupees. He's asking if he goes full equity, can he fund his EMI using SWP mode? And after 10 years, he's also asking if 1 lakh rupees investment per month via SIP is something that would be sufficing him. How should he go about this whole process? Corpus that he requires is going to be 5 crores after 10 years.
Okay. So let's do the maths first, Avani. See, assuming 12% compounding returns in equity for the next 10 years, 1 lakh of SIP per month shall give him around 2 crores 32 lakhs. This is pre-tax. Okay. Now, out of 2 crores 32 lakhs, he can comfortably withdraw around close to 2 lakh of rupees via SWP route for the next 20 years. Again, these are all assumptions and pre-tax assumptions. That's very important. Okay. Now, depending on the loan tenure and the interest, this may be a little bit difficult, to fulfill, paying the down payment as well as, paying the EMIs. So this is what I would really recommend. Now to beat, because he needs to factor in inflation and taxation both. Now to beat inflation, taxation and the overall home loan, I think doing a 10% SIP top-up, annual 10% SIP top-up should do the job. If he does a 10% annual SIP top-up, I think it will be quite convenient in terms of taxation, in terms of beating inflation, as well as, beating the overall home loan as well.
Okay, that's very helpful, Rishabh. And these are the queries which we receive a lot of times, right? Because ultimately any investment is for a goal, and when it's very particular and precise, it really helps give that absolute answer as well. So let's go across to the next one, which is also for a particular goal. Madhu Mohan Babu is writing to us from Hyderabad. He says he wants to buy a house and he can invest 30,000 rupees a month through SIP. He asks which funds should he be looking at. I know there's no time horizon on when he would be looking at buying this house, but Kirtan, how should he go about it?
I think my advice or suggestion here would stay the same that we answered in the first question. Because look, again, the assumption here is that you have 8-10 years of investment horizon and you can take volatility. There is nothing much that you really want to do outside of 4-5 funds to build a portfolio put together. So I would still stick to the same funds that I suggested in the first question that came about, which was ICICI Value Discovery, PPFS, FlexiCap, Edelweiss Midcap and Nippon Small Cap. Now, there are 2-3 things that the investor has to understand here. You should actually only take up this portfolio provided you're okay with the volatility and you have some 8-10 years of investment horizon first. Second, you should try and split the 30K that you have largely equally amongst the 4 funds, because that will give you the balance across market cap and style of investing. And third, very importantly, let's say, for example, your goal is 10 years from today, right? Then at the 8th year, 8.5 year, all you have to then start doing is start moving a little amount of money from equity back to debt, because you don't want to be in a situation where you need money at the date of the goal, and then the markets have not performed well in the near term, and you are not able to redeem it because the markets are not doing well. So probably 12, 15, 18 months before you are supposed to hit your goal, start reallocating this money from equity back to debt so that the volatility on your portfolio reduces. And at the time of your goal, the volatility on the portfolio is very minimal so that you can use that money to fulfill the goal.
Okay, important, to start reallocating just before your goal and the time period comes in as well. That is also key to watch out for. But let's move on to the next query then. This is coming from Bala Subramanian, who's writing to us from Bangalore. He says that he has 43 stocks in his portfolio, 1 gold bond, 1 silver ETF, and of this total, he's saying 13 stocks are making a negative return. He's asking if it is prudent to invest in so many stocks at one time, or should he maybe invest in mutual funds for better returns? Rushabh?
See, number one, negative returns are part and parcel of the equity investing culture, right? 13 stocks is actually nothing, right? I mean, I'm glad that it's only 13 stocks which are negative out of the 43 compared to what markets we are in, which is, many of the indices and many companies are giving, subdued 0 to negative return. So 13 stocks is actually just nothing. So number one, if he's investing in 43 stocks, then I think going via mutual fund route is something what I would really recommend, because on an average, well-diversified mutual fund across different market capitalization would actually invest in anywhere between 30 to 70 stocks. Okay, so if he is, number one, able to time the entry and exit, because what happens in a stock is that you have to invest at the right time, and also the exit is also equally important when the price peaks out, which actually on the other hand the mutual fund manager beautifully manages and tries and times the stocks at the individual capacity. So I think going via mutual fund route, if he has 43 stocks, if he's not able to manage it, just stick with the traditional either a well-diversified index fund or a well-diversified active fund. This is something what I would recommend. But if he understands how to buy and sell stocks, then probably just keeping 15 to 20 stocks in his portfolio should do the job. 43 stock is a little bit on the higher side.
And that's a mutual fund in itself, right? 43 stocks in one portfolio. But we take that point. It's very helpful, Rishabh. But we'll slip into a short break. When we come back, we'll address more queries on the other side of the short break.
Welcome back, and you're still tuned into MF Corner. We still have with us Kirtan Shah as well as Rushabh Desai to answer all those queries that you all have sent us. Let's go on to the next query then, gentlemen. We have Reganta Nathan, who's writing to us from Chennai. He says that he has 600 units of Nippon Silver ETF purchased at an average price of 93.10. He's holding it for less than a year, and he's asking if he should buy more units of the fund. Rushabh, what's your view on this one?
When you see, number one, I wouldn't recommend buying additional gold or silver at this point of time. Specifically, he's just mentioned about silver. I really wouldn't recommend buying additional silver at this point of time, because silver prices have really gone way over the roof. And, even today, central bankers are buying, silver, and a lot of other institutional investors are buying silver left, right, and center. So I think, staying invested, for some more time. I'm understanding the investment is less than a year. So this is what I would recommend. Number one, don't buy additional silver. Number two, try and stay invested for a year. Once the one year is completed, if you are in profits, exit from silver as a product and book profits. I'll give you a very interesting data point, Vinny. See, when you are investing in silver from a returns point of view, it's very important to invest at a decent price and a time correction. See, over the past 15 to 20 years, I took out a very interesting data. Over the past 20 years, the last time silver had actually peaked out was somewhere in 2010, 2011. Okay. After that, it took 15 years for silver to peak out, which is today as we speak. So, the cycles, the cyclical cycles of silver is quite long. So I think investing at the right time and at the right price is something what I would recommend. Don't buy additional silver, but just wait for one more year, because we don't know what the trajectory of silver would be in the next 3, 4, or 6 months or so. Once the 1 year is completed, then just completely get out of the product.
All right, so that's the suggestion coming in on the query that we just received. Let's go across to the next query. B. Govardhana Reddy is writing to us from Visakhapatnam. He says he has invested 35 lakh rupees in mutual funds, out of which 50% are core funds and 50% are in sectoral funds. He asks if it is advisable to allocate that 50% in sectoral funds. Kirtan, we have done like so many shows on how sectoral funds work and when one should look at sectoral funds. I don't think your view has changed, but what is your view on this one? 50% of the total corp is there.
Sonal, I think I'm just glad that somebody is asking this question again so that we can reiterate the same point and reach out to a larger set of investors. I think in my personal portfolio also, while I would like to believe that I understand things better than retail investor, I cap it at 20% because I think I am slightly better in a position to be able to time sectorial funds. What investors really have to understand is that they should not invest in sector funds unless they can not only get the entry but the exit correct. Because we've seen that looking at the last 2-3 years of performance history of a particular sector, investors end up investing in that sector, and then that sector actually underperforms for a very long period of time, for 3 years, 5 years, and in some cases even 10 years to actually come back to the original price. So sector investing is for very sophisticated investor, and I would really suggest an investor not to keep more than 20%, even if that individual understands when to time the sector. And if you look at his portfolio that he shared with us, I would rather stick to only having, let's say, a pharma or a technology sector to be a part of his portfolio out of the sectors that he's mentioned. While we are positive on banks, but I would rather believe that in the core portfolio that he's invested, there will already be a lot of exposure to banks. So there is no need to have a financial or a BFSI sector fund to invest in, because they'll add too much of concentration. And the other two sectors that he's mentioned, I would rather exit. So have 20%, even if you understand how to time the sector, have 20% outside of your core portfolio into sector. And from the current funds that he has, pharma and technology is something that he can hold.
Okay, pharma and technology is something that he can hold, but apart from that, you would not advise there. Rushabh, it's never enough to actually keep telling them about sectorial funds. What is your view as well, in the sectors that he's mentioned as well as his core portfolio? What would your suggestion be?
Vinny, I more or less agree with what Kirtan had to say. Taking sectorial bets is absolutely very risky. And, capping it to around 10-20% is something what I would also recommend as well. So I think, you need to understand why are you entering in sectorial funds. Ultimately, you want to maximize on your returns, right? So if you want to maximize on your returns, I would strongly suggest just go for mid cap, small cap funds, or multi cap funds, which are more inclined towards mid and small cap. I think that should do your job. So I think rather than targeting individual sectors, just look at the broader index of mid cap and small cap. When there is a decent amount of price correction, valuation correction, just invest either in mid and small cap index funds or active funds. I think he'll be very well sorted. This is what my view is.
All right, take that point. Let's go across to the last query I think we have for the day. Shritish Khandelwal writes to us from New Delhi, wants to know which mutual funds can be considered for children's future. Of course, it can be for education, higher education, and other purposes. Ketan, let me start with you.
I think the first thing that I really want to address here is that they should not look at goal-based plans like the children mutual fund kind of funds available, because unfortunately I'm not a great fan of these products because they have a 5-year lock-in, and at the same time they are aggressive hybrid, which means they will have 65-70% in equity and 30-35% in debt. So if you're a long-term investor, it kind of forcefully pushes you to invest in debt, whereas your investment can actually be on the equity side. But I think these plans solve a major problem, and that problem is that a lot of people invest in insurance because it is linked to a goal. I would rather suggest that rather than investing in insurance, this is far better. But outside of specific children-related goal plans in mutual fund, I think if you really want to build a portfolio, keep it very simple. Have a large cap, have a mid cap, have a small cap. You can replace the large cap with a flexi cap and mid cap with a multi cap, right? So you can have a portfolio which has 1 or 2 flexi cap funds, 1 or 2 mid cap, multi cap funds, and 1 small cap fund. I think that should be a great portfolio if you have an 8-10 year of investment horizon to invest.
Okay. And Rushabh, your view for children's mutual fund, any suggestions there as well?
I agree with what Kirtan had to say, actually. I mean, the view is no different. I think, just keep one or 2 flexi cap funds or 1 or 2 multi cap funds. I think that should do the job. Just to add one more point is that, you can actually keep your child as a nominee. And once the child actually turns 18, you can gift the units via Demat account to your adult child when he or she turns 18. So I think going via the diversified active funds route or going into the pure mid and small cap route is something what I would recommend, and keeping the child as a nominee and gifting the units of the mutual funds when the child turns 18 via Demat account is something what I would recommend.
Yes, usually we talk about solution-oriented funds and go via those ways only. But as you both mentioned, it can be done in other ways. And as Rushabh mentioned, gifting is one of the options. This is something we also have to discuss because not a lot of people think or know about gifting of mutual fund units to another person. But it was a very insightful session, guys. Thank you so much for joining Ketan and Rushabh and taking us so patiently through all the queries that we received. With that, we'll take your leave on this edition of MF Corner today. But stay tuned. We have closing bell to take you through the last hour of trade. We'll get you more updates on that one.
beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a bit of a red screen that you're seeing, barring the Taiwanese index, which is just above the flat line.
249 applications are there, and we are working day and night to complete the entire process at the earliest possible time.
So you got a 40-odd point bump in the word go. That's the indicative opening as far as GIFT Nifty is concerned. Positive start, but mildly so. Nifty Bank just flitting between green and red.
AI is here. Is the business model broken? No. Is the valuation crazy? Yes, it's crazy.
What we have done is we have, as was also suggested and indicated by the government, we have passed on the entire benefit.
Nifty at the day's low. We started on the back foot, and that has continued to be the case as well.
In Q2, they reversed about 195 crore, which is higher than 88 crore that they reversed in Q1.
Our team has been regularly in touch since 9 a.m. in the morning with the exchange. But till now, there is no resolution which is in sight.
Reappointment of trustees for life has to happen unanimously.
After falling around 120 points from the day's high, we've recovered around 120 points from the day's low as well.
Okay, well, that's the day so far. Market's down about 150-odd points. Market breadth is slightly negative. So sideways across most indices except areas like metals, which are buzzing a little bit. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I am Prashant Surbi. Rima with me here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon. And the picture is vastly different from the open. We were up 40 points at open, and now we're down close to about 150 points in the Nifty. The Nifty is at 25,800, and the last 1 hour in particular has been extremely volatile. So that monthly expiry seems to be playing out. Well,
yeah, absolutely. If it's any consolation, I mean, we're not alone in this today. It's a general day of profit taking across global equities. I mean, whichever market you're looking at. Most of the European markets that are trading, the CAC, for instance, they're down not too much, about 0.25%, in sync with the kind of declines that we've seen. US futures are absolutely flat. That is the indication at this point in time. And many of the Asian regional markets as well, our neighborhood markets, they've had a day of profit taking. The Nikkei ended down about 0.6%. The Hang Seng was down. The Taiwan market was down. So in general, a bit of a profit taking day playing out, at least for now. Nigel?
Well, that's right. It's a typical expiry day. But I'll tell you what, this will still be the best series that we're going to be bracing for. It's close to around a 5% gain on the Nifty, which is the best all the way since June 2024 series. So we're going to end well, but for today it's an extremely volatile trading session as we pull the curtains down on this series itself, the October series, which has gone to the bull. So let's see how the last 60 minutes pans out.
Absolutely. We got lots of individual shooting stars once again, which is what we'll focus on and get you updates on as we kind of go along. But let me just quickly run you through what's coming up here on the show today. So we will, of course, decode the moves, final hour trade, volatile session ahead of FNO expiry. PSU banks are enjoying an upbeat session. IT is the space where I think there are more losses, which you can see. Stocks that's making the headline, MCX, the technical glitches, and I mean, I think one of the longest ever glitches where the exchange did not open, not through its main servers here in Mumbai or the disaster recovery side, but trading is now underway. Actually, stock slipped a little bit more after the trading started. And this is the second such instance in about 4 months. So more details with Manisha in a bit from now. Tata Steel and a few other stocks from the metal space are seeing some attention. That's the metals pack. Some brokerage upgrades. So Nigel gets us that in just a bit from now. And a strong showing in the second quarter is sent the shares of Indus Towers higher. We'll get you takeaways from the conference call that I think gets underway now as we speak in a bit as well. Car trade is the big mover. TTK Prestige is rallying hard. So earnings fine print on both those coming up in just a bit as well. So that's the overall picture as we begin this Tuesday's afternoon session. Okay, well, let's just quickly run you through what to do now in terms of specific trades. Mitesh Thakkar is with us to help us with that. Mitesh, good afternoon. Welcome back. What would you recommend?
Good afternoon, Prashant. Well, as I said, till we break this 26, 150, 220 zone, I think you will still see some kind of, volatility. The market could have come back to 25,800, which is my first support area. We are not very far away from that, actually, just about 20 odd points. But in case you break that, the pullback would be slightly deeper to about 25,600. I think look at the short to medium term structure. I think that should be the end of decline. So the bias is on the upside, but tactically we are not ready to show, or we're not showing strength to get past and break into fresh all-time highs. So I think that might take a few more days, and this choppiness might continue. So for index traders, I think you can take a trade at 25,800 with a 50 odd point kind of stop loss, or wait it out till about 25,600 in case we go there, which is something which I'm still debating. But yeah, I think around those levels, I would be aggressive buyer into the index. For the timing, I have one buy and one sell call. On the buying side is UPL with a stop at 685, buy for targets in the range of 720 to about 725, and Hutco is a conditional sell. If it breaks 224, take a shot with a stop at 229 and look for targets of 215.
Okay, all right, got it. Thank you for that, Mitesh. We'll come back to you a little later for some more trading ideas. Let's track some of the movers and shakers today. I mean, stocks that are moving on news flow or on earnings. Some of them, HOEC is an interesting one. HPCL is saying that HOEC provided the kind of crude that caused corrosion at Hindustan Petroleum's refineries. That stock's been down about 6%. There's going to be a charge as well at play because of that dispute that seems to be rising. Vodafone Idea is reversed. Yesterday's excitement is down about 5% as we speak. And then there are a whole host of result reactions that have not gone down too well, starting with, of course, Bata itself. Gurmeet Chadha of Complete Circle is with us to make sense of the market's mood. Gurmeet, I outlined some of the negative stocks, but let me open with the positives. There are enough movers on the green side today. IDBI Bank, there's excitement. Not sure if it has anything to do with the reports of, maybe more FDI being allowed for PSU banks or not. There's NetWeb, which is back to its winning ways, 7%. And some of these wire and cable stocks, RR Kabil, same time yesterday was up 5-6%. Again, it's up 6-7%. So let's get your thoughts. Maybe NetWeb and an IDBI Bank, since there's so much excitement.
So I think banking has got to do more with the more expectations coming. I think there've been different reports of 49%, FI stake being allowed, also having a relook at the voting rights, capped at 26%. Private corporates might be allowed to go beyond 10% on a case-to-case basis. A lot of things loading as far as banking is concerned, and that's why you've seen a rub-off. And we've seen the infusion of $7-8 billion in host of companies. I think that's helping. I think on the new age businesses and things related, I think it's more that in an earnings season where you have single-digit earning growth and probably better, anything which is growing faster is getting a lot of excitement, and it's happened with a lot of new age companies. Today, Cartrade, for example, the stock has done really well. The profits have doubled. I think there's a big impact coming because of Navratri and festive season, and perfect operating leverage, getting played. We've seen that with some other, so anywhere where the growth is very good. We saw very good numbers from, for example, again, not related, Chennai Petroleum, which is a refining company, stock up 7-8-9% today. So wherever there is good earning growth, I think market is trying to anchor towards it. And I think, which is what I've been saying for now, the only safe haven right now in a market like this is solid earnings growth.
Speaking of solid earnings, by the way, pull up Newgen. Stock is on a tear after the company came out with numbers. Let's pull up the intraday chart. It's up 6-7%. I think the profits up some 64%. The revenue itself is up 25%. Margins have shot up. I mean, what an expansion. There's from 14% to 25%.
But Q1 was particularly weak. So this is, it's got a seasonal element to it. And Q1, if you remember, was a weak quarter. So when you look at the numbers on a quarter-on-quarter basis, you are seeing that, additional pump up. But of course, numbers are good. Street likes it.
Absolutely. Any thoughts? Newgen, have you looked at the company, Gurmeet?
Yeah, we own Newgen, so happy with that because IT, we've been very selective in IT, underweight there. So we have KPIT and Newgen and a little bit of HCL Tech. But the weightage is, as I said, around 5-6% in the portfolio. And I think the mid-cap IT is actually showing the way and probably the ability to pivot from just a service business to align with the new challenges. So saw that with Coforge. Persistence has done quite well, and today Newgen, although Newgen is still like, I think the high was 1800 if I'm not wrong. So I think selectively, if you want to be a little contrarian on IT, I think be where the growth is coming on a sequential basis.
All right, stay on. Gurmeet, let's talk about the Indian refiners because they have cut Russian oil imports amidst all the geopolitical tensions. Sonal is here. She's going to, wrap up all the commentary that we heard from the companies about this. Sonal.
Thank you for that. Well, sources are also suggesting now that November 21st is the deadline now. Any more Russian imports coming in from there will not be taken up by the refiners. And that's an important update which is coming in as well. If we talk about what the companies are saying now on Russian imports, let's start with Oil India. Because company said it is seeking legal opinion on stake in sanctioned Russian oil fields because they do have dividends to the tune of $300 million, which are stuck because of the sanctions that have come by. So they are asking for more legal opinion which could come by on this one. As far as refiners are concerned, they have cut down meaningfully. Indian Oil Corporation yesterday indicated that they will comply with US sanctions on Russian oil. Already they have cut crude intake from Russia to 19% versus 24% on a sequential basis, and they will be flexible to source crude even be it from the US or any other geography wherever it is better for their margins overall. Reliance Industries did indicate that they will comply fully with any guidance coming in from the government with respect to Russian oil imports and sanctions that we saw from the UK and the US on two Russian majors. We spoke to Chennai Petro yesterday and they indicated that Russian oil imports are now cut from 40% to 20%. In fact, they've started importing more from the US and the sourcing mix has actually expanded to other countries as well. They also are just looking at efficiency and something that will improve their margins. Now, do remember when India started importing from Russia, the discount was to the tune of $15 to $16 a barrel. But now it has come to single digits. It's around $2 to $3 per barrel. So even if we cut Russian crude imports, it will not impact margins so much. Some of the analysts are suggesting it could be anywhere between 2 to 3%. However, Jeffries, on the other hand, says that now refining outlook has weakened a bit because the advantage that we were seeing in terms of Russian crude discounts, that will go away with. But do remember that discount has also narrowed down, so the impact will not be as much as it was expected earlier.
Sonal, thanks very much for that. By the way, Sonal, that HOEC, since we're talking about oil and refiners and oil, crude, etc., did you see that news item? I mean, I don't remember ever hearing something like this.
It hasn't happened earlier, Prashant. This is the first time even I'm hearing of a company supplying crude to an oil refiner, a state-owned oil refiner, and getting a complaint that it is not good quality. It has caused corrosion as well. Of course, HOEC is also saying that they are looking at it and the damages that have been asked by HPCL, they will respond to it soon. But yes, this hasn't happened before. So this is first time for me as well.
Yeah, I mean, we all thought oil is oil, right? But this is...
But there are different crude grades.
Yeah, no,
oil,
there are different varieties, but oil damaging a refinery.
Yeah, this
and it's material. It is a very material event because HOEC is just they just extract oil. They don't have any refining, etc. I think, right? I mean, so they're dependent on state refiners to refine that oil. That's the market for them. So we'll take it forward, try and get in touch with the management as well to understand where this is at in that sense, both HPCL and HOEC as well, actually. Gurmeet, I don't know if you have a view on HOEC. I know one or two value investors who own it. I don't know what their view now is, but otherwise, the other stuff that Sonal mentioned, what's the call?
So Prashant, we have Chennai Petroleum and we discussed it some time back, more as a value play because in terms of net worth, it was at 11,000 crores. And if you see a replacement cost for a refinery like this, that would be 35,000 crore. They reported very good GRMs and the cracks they are saying will sustain. in going quarter as well. No shutdown also expected now. Last quarter had a bit of a shutdown, and Q1 had a larger period of shutdown. Also, they made one point which is a little technical. Is that with the ban on refined products coming from Russia by EU and other places, the middle distillate cracks tend to go up, which is good for refiners like them. And there is a shortage of refining capacity with the focus which has been there on clean energy. So let's see, it's a difficult space. One has to be tactical. And if you make quick gains, might as well, maybe take some money off the table.
Okay, all right. Gurmeet, stay with us. Let's focus on the metal stocks. They're buzzing today. Tata Steel seems to be catching investor attention, in fact, of late. Nomura, remember, they went ahead. They initiated coverage on the stock with a buy rating. InCred, after being underweight, they upgraded the stock as well. And today it's the turn of Motilal Oswal, who has upgraded Tata Steel from neutral to buy with a target price of around 210 rupees per share. A couple of points they're making. They expect Tata Steel to benefit from the improving steel price realizations, the better operating efficiencies, and strong domestic demand outlook as well. So that's point number one, the industry tailwind. On earnings, they expect the overall earnings to remain well supported by the India business, which is projected to maintain its strong momentum. While the European operations, they are saying they're expected to show a nice improvement in their performance from year on. In terms of profitability, they've given us some numbers. Motilal Oswal expects Tata Steel Europe's EBITDA per ton to rise sharply from around $8 per ton in the first quarter of this year to around $70 per ton. That is for the European operations. Now, at the consolidated level, that means that the EBITDA per ton, they are forecasting that it increases to around 13,000 rupees per ton on the consolidated basis by 2028. That compares with roughly around 8,300 rupees per ton in the past fiscal, that's FY25. Let's turn our attention now to the aluminium players. And out there is some excitement as well because prices are witnessing a steady uptrend because of supply concerns have started emerging, and now from Australia. Rio Tinto, in fact, they have flagged off that its Tomago smelter, which is the largest aluminium smelter in Australia, with a capacity of roughly around 590,000 tons odd, that could face a potential shutdown beyond 2028. The reason? Well, they say the company is struggling to secure power at viable rates once its current power deal expires in 2028. So there's uncertainty post that. Now, this development basically highlights the key challenges for the aluminium industry, even at current prices, which are hovering around $2,800 per ton. Many smelters are finding it difficult to even remain profitable because of the high energy costs. This effectively is good news because aluminium prices, well, they'll continue to remain supported by this global demand-supply dynamics, while Indian producers, they could be in a sweet spot. Remember, the cost of production is roughly around $1,800 on a per ton basis. That's what will help them generate strong margins at current prices. So a bit of a, excitement that's playing out in the ferrous players. And for select aluminium players as well, which have been strong, this is a tailwind. Gurmeet, how are you all approaching the space? The metal sector, a little tricky, but for the time being, it seems to be getting, investor attention. For Tata Steel, in, I think, 7 to 10 sessions, there are 3 notes that have come out, all 3 of them bullish. Tell us.
So I think in an environment like this, Nigel, it makes sense to have some hard asset exposure, especially commodity, ferrous, non-ferrous, precious metals in the portfolio with the kind of environment we are in. At some point of time, the money will also, capital will shift from some of the new age AI related plays to more hard assets. So we like more non-ferrous right now. And one special situation we have is Mukan, which has been holding for a time. That's because it's really available cheap. Company is doing a lot of land monetization. They have just sold an 800 crore land parcel. Market cap is pretty low. Also, the machine tooling division has been hyped up, and that seems to be doing very well, supplying to cranes, etc. for different ports. So it's a bit of a small capex play coming there. And as I said, deleveraging of balance sheet, debt coming down, and they're targeting being debt free. So that's something we have in the portfolio.
What about car trade tech? Can you tell us a little bit about that? 17% up for the day, very strong numbers. Year to date, the stock is up 150%, 200% in the last 1 year. It's gotten re-rated. Numbers are looking good, and there has been a lot of investor interest also. We've seen in the block deals purchases by some of the marquee funds or HNIs.
So as I said, sitting on cash now, actually perfect operating leverage at play. one of the beneficiary of GST cuts and Navratri and festive season. And I think the numbers are showing probably the street is expecting another good quarter. And, you know, as I said, in a new age business, you got to make a basket. There is a bit of a liking now because a lot of mutual funds, institutional investors had this policy of investing only into profitable ones. And a lot of these new age businesses now have started delivering that operating leverage. So there is a lot of money chasing it and moving out from traditional pockets like, you know, some of the larger private banks, IT companies, FMCG names like the Lvls of the world, and chasing them. So you might see some bit of momentum here. But as I said, you know, in this cases, you may also horribly go wrong because, you know, there's no room for making any error when you're trading at such a high valuation. So better to have a basket approach. We have Eternal, we have Paytm, we have Geo Finance in the portfolio. We are adding, you know, some of the new names which are likely to get listed over next couple of months. So we have a slightly basket approach here, and hopefully, you know, some of it plays out.
Before we let you go, speaking of new age and technology, and we spoke about new gen, something you own, Gurmeet, I can't help but ask you about NetWeb again. You know, stocks up 7-8%. It almost feels like every time the Nasdaq goes up or Nvidia goes up, people don't know what to buy in India. They think, acha, aur kuch nahi hai, let's go and buy NetWeb again. You know, at least some sort of a, you know, play on deep tech and AI. But your thoughts on the stock, the valuations? Let's pull up a longer chart of NetWeb as well. This year, it's returned about 64%. In the last 1 year, that is, the return is about 64%. What now?
No, we don't have it. Some of our non-discretionary portfolios have it, Sulbi, to be honest, and that's more of a client call. It's an NCR-based company, by the way. But honestly, not tracked it, no call. I somehow, to me, it doesn't make sense, the kind of valuations it's at right now.
Okay, all right, Gurmeet, thanks a lot for that. Well, it's now time to highlight our Super Pro chart of the day, which is powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story that's driving the markets and helps you understand why behind the what. Now, here's today's chart for you and what it means for your next market move. PVR Inox, well, that's the stock that should come up for you on the screen. As you can see, there's a rising channel pattern and a reversal from the upper band. A rising channel reversal from the upper band indicates the price is facing resistance near the trend line. Sellers dominate, causing a pullback or a correction within the channel before the next possible move. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code that's up for you on the screen and subscribe to Money Control Super Pro. Plus, this festive season, well, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
stocks to watch.
Welcome back. Hormus is now joining in and he puts the spotlight on the top movers in the market right now. Hormus.
Boy, what earnings reactions we have seen today, and the volume spike as well. Possibly the star of the day today has been Car Trade Technologies. The stock is up almost, 18% now? Yes, it's 17.5%. The biggest single day gain since November of 23. And the street may have had a bit of an inkling about how the results are going to be, because of the fifth straight day of gains. The stock was up almost 5% yesterday as well. If you remember, last month on the 10th of September, JM Financial had downgraded this stock. The stock had declined 10% that day. And from those levels, the stock is up almost 30%. Now, in today's session, after the results, the stock has seen almost 50 lakh shares that have been traded today, and the 20-day average is just around 2.5 lakh shares. Now, an interesting bit here for Car Trade is that if it crosses levels of 3480, it's still some distance away, but if it crosses 3480, it will be a 10-bagger from the all-time lows that the stock had hit down back in March of 2023. Now, TTK Prestige is the other big earnings reaction. Is the biggest single-day gain and volumes that the stock has seen since March of 2022, and we have already had over 25 lakh shares that have been traded on the stock. The 20-day average is 25,000 shares. So you see the volumes at which the stock has moved after its results. As a result of this move, the stock has moved above all of its key moving averages, but still an underperformer this year, was down 10% so far, and last 2 years the returns have been zero because it was up 10% last year. The third one being Chennai Petro. Of course, the stock was up 8% yesterday, then came off those highs and ended in the red, and today having a fairly good day, up 9% now, extending its gains. Now, the stock is still, the volumes in today's session are still lower than what we had on Monday, which was yesterday. I had close to 1.3 crore shares that have been traded on Chennai Petro. The 20-day average is just around about 21.5 lakh shares, so almost around 5 to 6 times higher compared to the 20-day average. The stock is up 17%, was up 17% last month, and is extending those gains this month as well, and has taken the year-to-date advance to around 33%. As an underperformer last year, but the stock had more than tripled in 23 and doubled in 22. So it's done fairly well over the last few years. And lastly, Kirloskar Oil Engines, the fifth straight day of gains for this one as well. But over the last 9 days, the stock has gained in 8 out of them, almost 16% in this 9-day period that the stock has moved. We have had 35 lakh shares that have traded today. The 20-day average is just over a lakh, and the stock is above its 50-day moving average, and still an underperformer this year. But over the last 4 years, the stock is up 5x.
Hormus, thank you very much for that. So that's basically the buzzing stocks, the big movers this afternoon with Hormus as always. Nikhil Ranka is CIO, Equity Alternatives at Novama Asset Management. He's with us. Nikhil, good to have you with us here. Thank you very much for joining us. So is there clarity on whether the market's breaking out, taking out prior highs on the Nifty, Nikhil, or once again, things are starting to go sideways after a good run?
So good afternoon, Prashant, and thanks for having me on the show. So Prashant, the last time I was there on the show and markets were closer to 25,000 levels, I have clearly highlighted that, when we were discussing the underperformance of India with respect to other emerging markets, that one of the key triggers for the emerging markets to move was whenever there was certainty on the trade deals with Mr. Trump. Those markets had seen momentum and rallied. In our case, till that point of time, there was no certainty on when the trade deal would have happened. But when we started seeing news flow that, eventually we will strike a trade deal and the eventual tariffs could be between those 16 to 18%, that's when during Diwali time, we saw 5-6% up move in markets. We rallied almost from 25,400 to 26,200. If you look at the texture of that, FIs at the beginning of the month were almost short close to the tune of 40,000 crores. If you look at the data yesterday, they were net short by just 20,000 crores. So between beginning of the month and till yesterday, there was almost 20,000 crores of covering that has happened on index futures, and FI selling has also ebbed to a large extent in that sense. Earlier, we used to see 3,000 crores of net sell figures every day. That is now down to 500, 600 crores. So a combination of these things has meant that we've moved 5.5-6% in the month of October for us. However, having said that, what we have to now keep in mind is, 60-70% of the good news on trade deal is almost there in the prices. And post the quarterly results that companies have declared, if you see the FY27 EPS for Nifty, we are now standing closer to 1280 rupees, down from 1300 rupees. So we are about 20 times on FY27 earnings, and we are still not seeing traction in terms of those 14-15% earnings CAGR for Nifty. So my sense is closer to 26,200, 26,300. This rally will again start to see some resistance. And the trading band probably will shift a bit higher from 25,500 to 26,300.
Nikhil, so that point about earnings, 14-15% still looks to be a bit of a stretch for us to achieve. What's your own expectation at Nuvama now? Do you think this demand surge that we've seen in the festive season sustains in Q3, Q4? What are you all working with? And and if you could just break it down segment by segment.
Yeah, so Rima, if you look at it, the most optimistic earnings estimate that people were expecting post the GST rationalization was for the auto sector. Now, if you look at the initial estimates for auto numbers that are going to be released 3-4 days down the line, the expectation consensus is still building close to 8 to 10% volume growth for the month of November. Which doesn't seem very, very high given the fact that a lot of pent-up demand would have come through, rate cuts were there. And, if you look at the way stock prices have moved, some of the four-wheeler names have moved from 13,000 to 16,500 rupees. They are already building in 12 to 15% volume growth when you do projections for those numbers and do reverse calculation of valuations. If November itself sees just 8 to 10% volume growth, then my sense is clearly the street will get a bit disappointed post the auto numbers that come on the 1st of November. Also, if you look at the volume numbers that have come from most FMCG companies and the commentary that we are hearing, we are not seeing very big deviation. 3-4% volume growth is still what we are working with. So therefore, I think that it's not going to be a game changer for the markets in that sense, the Q3 earnings. What we are today at close to 7-8% quarterly earnings growth rate, that might move closer to 10-11%. But I don't see a number beyond that for Q3 earnings in that sense. And therefore, my sense is we will still stay in this band of 25,500 to 26,300 till we roll over to FY28 earnings.
All right. Well, hi, Nikhil. Good to see you in. Going by what you're saying, it appears that now you're tilting more towards the consumption names rather than capex. Turning a little bit cautious on capex themes, which, by the way, have done very, very well. The government has led the way in the last 5-8 years or thereabouts. But now there seems to be some people who are taking the foot off the pedal. And you're in that camp?
So, good afternoon, Anchal. I do think that given, we will have to see the sort of revenue projections that come through after the next 2-3 months. My sense is this fiscal year, the government will have some shortfall closer to 1.5 lakh crores in terms of the direct tax collections that they had budgeted. And there's also 40-50,000 crores of shortfall that could come through because of the GST rate cuts. Given that expectations, we clearly feel that there could be some slowdown in terms of capex spending towards the second half of the year. And given the way stocks have rallied, the capex plays, the incremental upside in a lot of these names seems very, very limited. And we have to sort of remember that last year it was very heavy towards the second half. So the base is also extremely high for most of the companies for second half of FY25. So the YOY comparisons will also not look that great when companies report for second half of FY26. So clearly, I feel that some amount of caution is warranted in this capital goods place from current levels.
By the way, for TVS Motors, those numbers are looking so good. I just want to point out that there is not just great volume growth, which we know, volume growth of in excess of 20% year on year, but even on pricing, TVS has seen pricing go up by about 5%. Stocks cooling off, numbers seem to be sort of in line with expectations. There's another story that's playing out on the ticker right now. IIFL Capital could be bringing in a large PE player as well, raising some money, and we'll get to those details. Which actually, Nikhil, hi, good afternoon. I anyway wanted to discuss financials with you because there's too much of hectic activity going on. First, tell us the companies which have already seen deals, banks or NBFCs, and whether it's a Yes Bank, RBL Bank, Federal. I mean, as an investor, what does it make you think now? Do you think that over the coming few months there is a case for a re-rating, or do you think it's more or less played in the price? RBL Bank, practically at lifetime highs. Yes Bank from the lows of 16, 17 rupees, it's already at 22 rupees. So how should investors look at these entities where the deal is either brewing or has just been announced?
So broadly for the banking space, if you look at it, our expectation was that from Q3 onwards, the NIM should bottom out and we should start seeing some recovery. So if you have close to 10-12% loan growth and some expansion of NIMs, then we were probably building in 13-14% NII growth for a lot of these banks. Now, what the consensus is starting to build in is that there could be another 25 basis points of rate cut as we move in December. And if the 25 basis points rate cut does come in December, then probably the NIM recovery will get prolonged to Q1 FY27, and you will still have flattish to 2-3 bips NIM decline for these banks, even when they report the Q4 earnings in that sense. However, having said that, a lot of these banks in terms of valuation, because the fact that, we have had time correction for the last 12-15 months, and earnings have still grown by 10-12%, meant that, in the case of RBL, it had come down almost to one times price to book. And given the large capital infusion that has happened, good parentage coming in, clearly, it's multiple re-rating that is happening for these banks. Similar is the case for Federal. It had come down almost close to 1.3 times, and earnings were largely in line. So Q1 FY27 onwards is when I think these stocks will again start showing PPOP growth of closer to 13-14%. Next 2 quarters could be similar to what we have seen in Q1 and Q2 in terms of high single digit to low double digit pre-provisioning profit growth. But clearly, I feel that on dips, these are some of the names that one could look to add from a 12 to 18-month perspective.
Okay. All right, Nikhil, got it. Thank you very much for the conversation today. Good to get that perspective from you. Well, that's a view from Novama. Market right now still 70 points lower. We're at 3 o'clock. So the expiry is going to play out. Let's go across to Nigel. Nigel, what's the latest? What do you make of it on looking at the F&O screen?
Well, it's a typical expiry that's playing out, Surbhi. And just take a look at the way the markets have actually recovered in the last few minutes or so. We're closer to around the 25,900 odd mark. At the start of the show, we were wondering whether or not the 25,800 mark was in a bit of a risk. Now, I'll tell you what, this is the best series that we have seen since June 2024. And it's a series that's a little better than the series that we saw earlier this year. That was March 2025, provided we end around these levels. So we have gained close to around 5%. This series goes to the bulls. Well, look at the options data, the 25,850 call, 25,900 call, both of them seen a good amount of open interest build up, and the premium has come down out there as well. And on the downside, the 25,850 put, well, that is fairly active. So the broad range you're looking at is, yes, the Nifty has defended the 25,800 mark. But if in the next few minutes we can get past the 25,950 mark, then we can see a big spurt on the upside. For the time being, the bears believe that they got covered, and that's why the expiry band is at around that 25,800 to around 25,950 mark. Couple of stocks that are coming to focus and a couple of underperformers actually. Suzlon is moving with good amount of traction. There's a big open interest build up as well, particularly for the next series. You also have UPL, another underperformer that's corrected from the top. Both those two, there are signs of fresh buying on both those two stocks. While Hindustan Zinc, a stock that did very, very well, when silver prices were strong. Now precious metals, they've corrected a little bit, and Hindustan Zinc is seeing unwinding of long positions, and there is some short build up as well. So keep an eye out on that one. In a matter of few sessions, that's corrected more than 10% from the top. Back to you guys.
Okay, all right, got it. That's the F&O queue for now as the expiry plays out. Let's now revisit those TVS numbers that were looking actually fairly decent, but margin expansion, the EBITDA growth was as high as 40%, I think, year on year. So Darshan's here with the breakup. So how's it looking?
So highest ever quarterly revenue, highest ever EBITDA, and highest ever profit before tax. These are the numbers for
TVS Motor in Q2 FY26. All the headline numbers have seen a healthy growth. Against expectations, these numbers are largely in line, and margin has come in line despite an increase in the raw material costs. Raw material costs have seen an increase of almost 30% year-on-year. But good part is, it seems like that company has taken a price hike that has helped an increase in the realization, which has increased by 5% year-on-year against our expectation of 4% sequentially, and on year-on-year, and on a sequential basis also it's flat against expectation of a downtick of in the range of 1 to 2%. And revenue growth that you are seeing of 29% is largely on the back of healthy volumes that company has reported. Both on a sequential basis it was up 18% and year-on-year is up 23%. But as we have been saying that for Q2 FY26 for automotive sector, more than the numbers, what will matter is the commentary, what exactly company talks about the trend that it's been seeing in the festive season, and if there is any increase in the outlook for this sector for FY26. As of now, for two-wheelers, the growth outlook is of high single digit.
Okay, all right, got that. Thank you very much, Sud, for the details on TVS Motors. Have to take a quick break, come back on the other side, and then, of course, as always, check on all the dealing room chatter of the day, and then some final trading calls coming up with Mitesh.
Welcome back. Well, a typical expiry playing out here. At around 2:30 p.m., you thought that the 25,800 mark was at a bit of a risk. Just take a look at the recovery that we have seen. The bulls are fighting back. The series goes to them. And I'll tell you what, if they can get another quick 20 points, then we can see a bigger move on the upside. Because as of now, positioning is 25,950 mark does hold out. That said, let's turn our attention to D3 chatter. Nimesh joins us to tell us what is he picking up. Nimesh, what are you picking up?
As expected, it was supposed to be a volatile day of trade. Yeah. It is turning out to be a volatile day of trade. But within that, I guess there is selling pressure today. Maybe it's the expiry factor, but apart from that, there is a MOC sell basket at leading FIDs. So maybe that'll play out in some stocks today. The sector clearly belongs to metals names today. A lot of steel stocks are buzzing in trade. There is a bit of buying as well in the metal stocks, especially the steel names. And the index is up 1%. But I guess for the November series, the fag of the earnings season and the Indo-US deal, these are the two big events to watch out as far as the big triggers to watch in the November series. So that's going to play out. But I guess today the volatility is largely on back of the expiry.
Okay, all right. What about individual stock, Nimesh? What are you picking up?
Well, so the first stock on my list is Glenmark Pharma. That's been under pressure of late. In fact, from the recent high of almost 2,100, now it's back to 1,800. But now I understand there's going to be a large block deal in Glenmark Pharma very soon. A leading FIB holder is the potential seller, and it's likely to be a clean-out trade. But that's a large block expected in Glenmark very soon, so that's the first name. The second stock is Indus Tower. As we speak, the con call is on. The management has clarified on some of the stuff. But in general, I believe some larger HNIs have turned active buyers in Indus Tower, especially after the big clarity on the AGR from the Supreme Court. So that's buzzing in trade. A couple of stocks where there is MOC selling, Inox Wind as well as NTPC, both stands out. The stock's not reacting on the negative side, but I understand there is MOC sell flows in both those names today. The last is Bank of India. Within the PSU bank names, Bank of India stands out today in terms of very aggressive buying. So I'll be watching out for the delivery stats very closely. Looks like there will be delivery-based buying in Bank of India today.
Nimesh, with Glenmark, if you have... So if you remember, there was that, I think it was the out-licensing deal, right?
Yeah.
And the stock had gone up 19-20%. Price is basically, I think, around back where it was before that deal, right?
Yeah.
And
so
now there is
almost
this...
corrected. It's almost corrected 10-11% from the recent peak of 2,100. So back to where it was. Again, one large FI seems to be selling out completely, so there's going to be a large block. And also there is a bit of a concern of a potential write-off in Glenmark Pharma. So that's a key concern on back of which the stock has underperformed as well in the last many weeks.
High was, that's the thing, 2284. So almost the high was 2300 in July. So that was the big high which was made after that deal was announced. And now, of course, it's back at about 1800 or so. That's a one to watch out for. So block, large foreign investor. Likely seller. Anyways, thanks very much for that. We'll track some of this stuff. Mitesh is back with us with what to trade in terms of, short-term trading ideas. Mitesh, what do you have?
BTST and mortgage property is at 2284 for targets of 2325. And the other stock, which I like, is Bank of Baroda. PSU banks are doing well. So Bob is a BTST with a stop at about 274.90 for targets of 280.
Thank you, Mitesh, for that. Let's go across to Manisha. The big story today was the outage at MCX. It lasted for more than 4 hours. Now trading, the website is up and running. The platform trading is resumed. But Manisha now joins us with what she's learned, the latest. Manisha.
Well, thank you for that. Yes, we have the latest comment from the exchange where they have said via press release saying that the trading was delayed because of the tech issue there. Also, operations are now shifted to disaster recovery side. They also say that the systems are functioning normally, but that is only since 1:25 p.m. Remember, the exchanges are expected to open at 9 a.m. and especially when it comes to commodity derivative exchanges, they are open from 9 a.m. to 11:30 p.m. So we've lost nearly 4 hours and 25 minutes of a trading time at a time when you are looking at a very, very volatile commodity markets there. We've seen quite a bigger sell-off come in case of precious metals, volatility also seen in case of base metals and energy as well. Interestingly, MCX caters to 98% of market share when it comes to commodity derivatives within the Indian space there. What MCX also tells us is that the probe is initiated on a priority basis and they are identifying the cause and implementing corrective measures for the same as well. Though MCX has not given any more details onto this one, but we've been talking to various people since morning, and sources tell CNBC-TV18 that MCX did face a problem actually with a trading system gateway, and that is the reason. That is when the exchange decided to shift it to this disaster recovery management, and that usually takes time and is the reason you took a very long time today as well. But usually this is back in a couple of hours. It took 4 hours and 25 minutes for the exchange to come back today. Well, the expectation also is that the exchange at some point in time will be writing to SEBI as well. Remember, there are SEBI guidelines on technical glitches and what you really need to do, and in sense of the disaster recovery system as well. So those details are still something that the markets are anticipating right now. But we have spoken to some brokerages as well, and they say that until 1:35 or so, there were still some problems with bid and ask and overall orders going through. But at this point in time, the functionalities seem to be quite normal. And this is not the first time this is happening really, but this is definitely the first time that we have seen exchange shut for such a long time. Before this, it was in July 2025 when we did see exchange start delayed by an hour, 10 minutes. And before that as well, it was in 24 and then 2017, 2018 as well. So there have been various instances. But currently, what seemed to have happened today is something that is clearly not going unnoticed at a time when the volumes have been hitting record highs, at a time that MCX just yesterday launched options on its bullion index. Quite critical, and 4 hours and 15 minutes. 4 hours and 25 minutes is pretty long time. The brokers also tell us that 15% of trade happens in the first 1 hour, and nearly 20 to 25% of trade would have happened in a time when the exchange was just not about functioning.
Manisha, so what caused the outage for 4 hours plus today? Do we know that?
We don't have the statements from the exchange itself, Prashant, but we do hear from sources, and this is to CNBC-TV18 saying that MCX did face a problem with one of its trading system gateways. Remember, there are 4 gateways to a trading system, and one of them went down is when the exchange perhaps decided to go on to the disaster.
But Manisha, the disaster recovery side should come up automatically, right? It's like to give an analogy, a poor one is like an automatic generator. Power goes off and the generator kicks in, right? It's supposed to be seamless.
It is. But when you move like that, it's sometimes slightly delayed. And I absolutely take your point in, Prashant, because when you go to the disaster recovery system, and if that takes 4 hours, I'm assuming that MCX will have to do a lot of explaining to SEBI as well as they write to them.
Yeah, that's right. Thanks a lot, Manisha, for that. I recall the NSE had their backup site on at Chennai, because it had to be on 2 separate coasts as well in case there was any calamity. And that's why they used to keep testing that. Well, the markets, that's the big story out there. When I just did the FNO check, I was telling you all that if the Nifty can get past this 25,950 odd mark, we could see a bigger spurt. It's just happened right now. And the Nifty Bank is the one that's leading away. So those call writers that were bracing for that 25,950 mark holding out, well, they're going to be in some trouble because we have close to 11 minutes to go out here. So just keep an eye out on the screen. Let's get in Jay Bala, though, of Cash the Chaos, who joins us on the show. Jay, every time you joined us, you said you believe that the markets are consolidating and bracing for a bigger move. Let's revise those levels. Where is the Nifty headed, and the time frame as well?
Hi, Nikhil. Thanks for having me on the show. See, the only real resistance for Nifty now is at the all-time high of 26,277. The recent high, I saw at 26,104. I think that's not the final high. At least a test of 26,277 is coming in the short term. And as I've been reiterating since April, the Nifty in the medium term is heading for 29,000. There's no change in that. So from a very short term perspective, I think Nifty is unlikely to print 25,330 if my thesis that 26,277 is getting tested. And it's quite possible that the low of 25,700 and change that it saw a couple of sessions ago, I think that itself might hold, if not 25,550. And from 25,550, I'm anticipating fresh 52-week highs, fresh all-time highs to come through for the Nifty.
Right. I think point taken, levels taken in, Jay. Good afternoon. Take a quick commercial break. Stay with us, Jay. Coming back with more questions. There's 9 minutes to go for close. So a quick break, right back.
Welcome back. Well, a couple of stocks actually are moving well. TTK Prestige came out with a good set of numbers. Not an apple-to-apple comparison, but Stovecraft that comes in from the same space, that stock in fact has seen a big volume spurt, and the stock actually has moved to the high point of the Razor Street for the time being. Seems to be betting on the industry itself doing well. So let's see whether that plays out. Pricing range is very different as well between both these two companies. But for the time being, Stovecraft at the day's high as well. Jay, it's a market that you want to know about stocks, and I believe you've got a couple of stock trading ideas for us. So help us out with two names at least.
That's right, Nigel. I like the OMC space, and I also, in a related space, I like the Kirloskar Oil stock. I had given this call on Kirloskar Oil in September. Today's move is a breakout, and I'm reiterating that call. It's heading to fresh all-time highs. And the new fresh call is on HPCL. The stock is possibly heading to 495. This is a short-term call. A stop loss of about 430. And the next one is Bharti Hexacom. Bharti Hexacom is breaking out of a inverse head and shoulders pattern, and a stop loss of 1720 with an objective of 2080.
Okay, all right. Stay with us, Jay. We just need to explain to our viewers about that story that was flashed for you on the screen with regard to IIFL Capital and some possible funds that are interested, or a PE that's interested. Yash joins us to fill us in with what he's picking up. Yash?
Well, that's correct, Nigel. So what we've been given to understand from our sources is that IIFL Capital is looking to get a big strategic investor in the company. What sources tell us is that TPG Capital, the private equity giant, is leading this race to acquire about 19.99% when it comes to IIFL Capital. As far as other contenders are concerned, sources also tell us that Bain Capital still happens to be in the same race to acquire that stake in the company. According to our sources, this deal could be valued at about 2,500 crore rupees. Now, as far as IIFL Capital is concerned, it is currently, involved in the businesses like institutional retail broking, wealth management, and financial product distribution. We've written to all parties involved in this particular transaction. TPG Capital has said that they won't be able to comment on this official query from CNBC-TV18. IIFL Capital, the response from them still remains to be awaited. Same goes for Bain Capital.
That's IIFL Capital. One more deal perhaps in the making as far as the financial services space is concerned. Yash, by the way, that's a fancy looking gadget. It's an iPad, or is it one of those reading devices?
No, it's just a phone. It gets difficult to read the minute font, so it's just a larger screen to read that.
That's Yash's Diwali gift, I think, to himself.
No, it's just dry fruits. Diwali gifts are just chocolates and dry fruits. This is not.
Fold it for us, Yash. Now it becomes a phone. Magic. All right, thanks, Yash, for that. IIFL Capital in focus. That's an exclusive story, and we will track this one as and when it comes to fruition. Jay is with us. Jay, did we do stocks with you?
Yeah, we did, Prashant.
Okay. What about is global markets and global indices? Anything really stands out? Metals, for example, is something Nigel has been highlighting. Steel has been doing very well. The one commodity within the metal space which is making new highs, I think copper is almost $11,000, right?
Yeah.
So that's the most bullish sort of base metal out there. Almost a consensus on very few individual stocks which give you that exposure. There is that Hindustan Copper, but maybe too many issues. But what's your sense here?
Yeah, I've been bullish on the Indian metal space, and I've been pointing out, along with autos, metals were likely to hit fresh all-time highs, and they've already done that. And you're talking about probably manufacturing copper. I'm going to be referring to COMEX Copper. COMEX Copper is probably completing a short-term bump up, and the sharp fall it saw in July, that's likely the start of a major trend, and COMEX Copper is likely to drop to somewhere up to about April 2025 levels. So watch it. There is a possible sharp reversal due if there is a print of 4.8 on COMEX Copper. Wait for the confirmation to come through. If that comes through, COMEX Copper is likely to fall sharply. When it comes to the Indian markets, metals, the Nifty Metals Index is still looking quite strong. 10,000 is likely to offer support for it. When it comes to the and then it likely head to fresh 52-week highs. And when it comes to the global metal space, the precious metals complex have clocked a significant top. Silver is likely to drop to at least 41, and spot gold is likely to drop at least to 3,400.
Just a quick word on gold. Does the correction extend itself, or do you see a bounce? What's the level on gold?
In the very short term, we could see a bounce. When I say very short term, from a 1 to a 4-day perspective, that could be a bounce. But the high it saw just before Diwali, that's possibly a significant high. We need further evaluation and evidence. But as of now, it looks like this is for gold and silver. We could be looking at the start of a multi-week to multi-month correction. The minimum I'm anticipating for spot gold is 3,400. Even if it's a bullish case, again, silver, there are two possibilities. One, a very bullish case, and one, a very bearish case. We evaluate as the market goes forward. But in both these situations, I'm anticipating silver drop to about $41.
And sorry, I missed gold, Jay. What are you anticipating level?
At least 3,400 on spot gold, London bullion gold.
Which is now 4,000.
It's not today. It printed 38.86, and I got late to the market as I was trading.
Were you trying to trade on MCX or not?
I trade on Comex Gold.
Comex Gold. Okay, got it. Jay, stay with us. We're going to come back with you on markets forward in just a bit. Allow us to just read out closing rates as they come in. So look at that. It's like a traffic light, red and green. 25,960, absolutely flat, nothing on it. Actually, something similar to, I think not how we started. I think we started very strong, but then the market topped out in about 30 minutes' time. Nifty Bank is much stronger, and I think it's got PSU banks to thank. So 58,270 on the Nifty Bank continues gains. It came back very strongly yesterday, the Bank Nifty, and continues the gains today. So PSU banks and metals are the two winners on the upside in terms of pockets where you would find gains. Otherwise, mid-cap index about nothing, 0.03%. The small cap index, I think, also goes home with nothing on it. 8-point change. But, don't let that fool you, because lots of individual movers which looked very, very good in terms of trade. Maybe I'll just give you a quick flavor of things. So take a look at this. NetWeb was up sharply today. Not quite back at the highs, but back to about close to 4,200. Chennai Petro is the other one. Big volume-led gainer today. Many of these are not, results related. Car trade, earnings related, big move. IDBI went up 6-7%. There's Sirma, which looked very strong. GM Breweries, Kirloskar, Hudson Agro, Bharat Wire, Greaves Cotton. No other winners. Deepak Fertilizers, Spark. There's something like Sami Hotels. And gives you a broad sense of what really did well. On the downside, again, some of them results related. Supreme Industries for one. There was Bata. We had the management with us. But you also had names like recent listings, right? There's Bluestone, Midwest, which is just 2 days old. SW Solar, I think, back to all-time lows, 200, 210 or so. So that's the kind of session that we had. Neither here nor there, but a very, very good recovery in the last 30, 40 minutes of trade on the Nifty Bank as well. We will say goodbye on this edition of Closing Bell, but don't go anywhere. Jay Bala is with us on Markets Forward, which comes up in just a bit.
Dalal Street sees a sharp recovery in the last hour on expiry day. Nifty gains more than 140 points from the lows to stay above 25,900. Metal stocks led the uptick while IT drags.
Trading at MCX resumed after halting for more than 4 hours amidst a technical glitch. The delay occurred just a day after MCX launched options trading in the bullion index. This was the second halt in trading on the commodity exchange this year.
Keynes Technology and Sirma SJ surge in trade after METI approves first batch of 7 projects with an investment worth 5,500 crore rupees. Keynes tells CNBC-TV18 that they will meet the timeline set in electronic scheme, while Sirma says India will become a hub of competent manufacturing in coming years.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormuz Fatakia. With me is Sonal Bhutra. Sonal, hi. It was a proper topsy-turvy session, right? It was a proper expiry session as well for the bulls, for the bears. Everybody had an opportunity today.
Yeah, they did, and that was something which is always expected, right, in monthly expiry. So today, the Nifty, it did recover from the day's low. Look at that surge in the last hour of trade. In fact, last minute of trade, 30 points there in the Nifty, but we did recover around 130 points from the day's low. Nifty Metal Index did really well, so that was the one which was batting it for the bulls. But what didn't do so well, it was the IT space. A big weight on the index, and that is something which did not do so well, and that also saw some recovery. But yes, it was still one of the laggards in the session today. Bank Nifty ended in the green. We did have PSU Banking Index that supported that index, 1.2% higher on that one. And that spike, IT and banks, they led to that recovery that we saw on the Nifty from the lows of the day as well. But of course, we have got you covered for the next 20 minutes with all the big news and the key developments on Dalal Street, top corporate voices and events to track ahead as well. So let's kick off with the big movers that we saw in trade today. In fact, we do have a lineup of what we have in store for you today. We start with top movers and shakers of the day with Vivek. Oil companies were in focus today as Indian refiners cut Russian oil imports amid geopolitical tensions, while TTK Prestige and Car Trade Tech zoomed in trade after reporting their earnings. Stay tuned as we'll tell you all the stocks that were buzzing in trade today. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session.
And to our first segment of the day, Vivek is here to tell us exactly what was moving around in today's session, earnings and non-earnings alike. Vivek, over to you.
Well, that's right. Thank you so much for that. What a topsy-turvy session. Like you mentioned, quite a few stocks that made all of the moves. Look at Sirma, this particular name, company got the nod for electronic component manufacturing. That stock high by over 6% today. The entire metal pack, retained its strength throughout the trading session. Most of the stocks in the Nifty Metal Index did quite well. Names like Welspun, Tata Steel, JSPL, all of these stocks doing quite well. Car Trade Tech, results came during market hours. Very strong set of numbers, over 17% higher. Good volumes well. Newgen Software, this particular name after a while saw very strong up move today. This was post the result announcement Q2 over 11% higher for this name. And TTK Prestige, again, another strong results candidate. Cookware and appliances segment for this particular company did very well. Stock higher by over 8.5%. On the other hand, quite a few laggards as well. Towards the end of the trading session, TVS Motors came out with its results, a marginal versus our estimates. Stock ended low by 2%. The exchange stocks, MCX of course dominated the news flow, but that particular stock and BSE, both of them saw selling pressure today. Supreme Industries, yesterday the management cut the volume guidance on our channel, and today a whole host of EPS cuts across consensus estimates was something that was witnessed. So Supreme Industries saw quite a bit of selling pressure today. Hindustan Oil Exploration in the broad end of the markets, a dispute with HPCL regarding quality issues. That stock ended low by over 5%. And Bata, very weak Q2. That stock too saw significant selling pressure, almost 7% lower for Bata by the end of the session.
Losing some grip there is Bata, 7% lower. Vivek, thank you for that update. Let's now go across to our guests, Jay Bala, the CMT at cashthechaos.com, and Mayuresh Joshi of William O'Neill. Gentlemen, thank you for sparing time and joining in. Jay, a word on the index first from you. The very sharp recovery seen in the last hour of trade, does the index have that room to go past that 26,000 mark? It's turned out to be a bit of a barrier in the last few days.
Yeah, hi. I believe that's just a breather for the market. I'm anticipating the Nifty to put pressure on the all-time high at 26,277. It could probably, 1 to 4 day time frame, pull back one more time, slightly below 25,700. I need have to, but 25,700 is an important support, and I don't think the market is going to print 25,330 before it puts pressure on the all-time high of last year at 26,277. So the trend is still up, and as I've been reiterating since April, the market is heading for 29,000 into 2026.
All right, so those are some technical levels to watch out for. But let's talk about an important stock and the big story of the day. Trading at MCX resumed after halting for more than 4 hours amid a technical glitch. This was the second halt in trading in the commodity exchange this year. Let's get in Manisha Gupta, who's here with all the details and what transpired with the exchange this time. Manisha.
Oh, well, absolutely. The normal trading on MCX commenced only at 1:25. This was a delay of 4 hours and 25 minutes from a normal timing of 9 a.m. Remember, the commodity derivative markets trade from 9 a.m. to 11:30 p.m. and today was quite a delayed segment there. So the participants did get 4 minutes from 1:20 to 1:25 to cancel any pending orders that they had, and the normal trading then began from 1:25 p.m. itself. Well, the MCX in its release has said that all systems are functioning normally after 1:25, that is, and that a probe now has been initiated on priority, and MCX is working to identify the cause, and everything will be ensured that this does not go on going forward therein. MCX, remember, will also have to write to the SEBI, the regulator, pretty soon on what went wrong, the cause of it, and of course what measures are being taken. SEBI, remember, has a guideline for technical glitches like this. They have measures in place as well. So there is going to be some back and forth as we anticipate onto this one. But also the other thing is that this is not the first time that this is happening. Brokerages for some time now have been complaining that there are delays with settlement fees, orders being confirmed as well. And the previous time that we saw MCX go through a technical glitch was all the way back in July 2025, which is just 3.5 months ago. At that time, the delay was 1 hour and 10 minutes. And before that as well, there has been a glitch in 2024 and then 2018 and 2017. But 4 hours and 25 minutes perhaps has been the longest till time. Interestingly, it was only yesterday that we did see MCX launch options on bullion index, and we also saw lower circuits on silver. This is an important time for commodity traders because we're looking at huge volatile moves for precious metals, for base metals and energy as well. Remember, 98% of all commodity derivative that is done, traded in India, is a market share that MCX has. So at a day like that, when you had huge volatility and a gap down opening, as we saw by the time at 1:25 that the exchange is open, so a lot clearly had been lost. There's a lot of complaints still coming in from brokerages, members, etc. We still are waiting for MCX to answer all of that. But at this point in time, what we understand is that trading is back to normal.
Trading is back to normal. Manisha, thank you for that update. Mayuresh, a word on MCX. Maybe fundamentals remain intact, but incidents like these always end up putting a dampener over sentiments in general. If you have a word on MCX.
No, you're absolutely right. I think it does shake the confidence in terms of sentiments, at least, if such instances are bound to happen. And therefore, I think the moves as an exchange that they take in ensuring that the platform runs seamlessly is going to be very, very encouraging. However, I think I don't believe personally, I was speaking to a lot of broker friends, that this will happen again. And as Manisha was pointing out, I think the other pertinent issues that are probably coming through, they're able to probably just smoothen that out as well. I think the processes should normalize as we go ahead. So I think a sentimental reaction, but nothing beyond.
Okay, just a sentimental reaction on MCX. It did see that small spike towards the end of this trading session. That's about MCX. Let's talk about the oil space, oil and gas space. Now, do remember, we've been talking about those sanctions that came by from the US and two Russian oil and gas companies. All these stocks were on our radar. The new update is that sources have told CNBC-TV18 that November 21 is a hard deadline, and any supply from sanctioned entities will be turned away by Indian refiners post the deadline. Now, IOC also reported numbers yesterday. Post that, they did indicate that they will comply with US sanctions on Russian oil imports. And right now, in Q2, Russian crude imports fell to 19%, which compares with 24% on a sequential basis. We did have IOC also saying that they remain flexible to source it from US or other crude offering best returns and best margins as well going forward. Reliance Industries also indicated that yes, they will fully comply with any guidance from the government with respect to any commentary coming in with respect to Russian oil imports. So that is something that they mentioned. Chennai Petroleum told us yesterday that Russian oil imports have come down to 20% versus 40% earlier. They've started importing from the US markets as well, and they are expanding their crude basket, whichever is most efficient for their margins going forward. Now, do remember discounts on Russian oil, that was around $15 to $16 per barrel when India started purchase of Russian oil. Now it has come down to $2 to $3 per barrel. So that advantage that refiners were seeing does not exist anymore. Some of the analysts did indicate at best there will be an impact of 2 to 3% if Russian crude imports are halted. Jefferies put out a note today. They did say that outlook now is little weaker because of these sanctions that have come by, because there will be lower availability of discounted crude. But again, remember, the discount has narrowed quite a bit, so it will not be that big an impact that we are seeing across the companies this time.
Interesting with that. A lot of companies coming out with updates on the Russian crude sourcing. Quick word on crude itself. Jay, where do you see prices headed? You've seen a slight rebound back towards 66 for Brent. Where do you see prices? And within the oil basket in India itself, what looks interesting on the charts? The ONGCs and the likes, or the oil marketing companies?
Hi, I've been projecting 55 level for the WTI crude, and it reached 55.96 or something just a few sessions ago, and then it rose 6%. And crude still continues to be on a downward trajectory, and I don't think WTI is going to rise past 66, and anticipating a final low to come through below the April low of $55, somewhere about 52 to 50. Within the oil and marketing space in the Indian market, I like all three. In fact, I have a call today on HPCL, but it's a short-term call. And I like Kirloskar oil within the related space. And more than the upstream oil and gas, ONGs, like the ONGCs, I like the OMCs. And even Reliance in particular is looking quite bullish, but it's got nothing to do with whatever is happening in the crude space. Possibly it's related, but I've been bullish on Reliance. I'm anticipating Reliance to go to somewhere about 1600 to 1700 in the medium term.
Okay, all right. So you're bullish on Reliance Industries. That's the pick from the oil and gas space. Let's talk about some more stocks now. Shares of TTK Prestige and Car Trade Tech surge and trade after they reported a robust set of Q2 numbers. Upasna Bhatt is joining us now with more details on these. Upasna, over to you.
First up, let me start with TTK Prestige. It was a good set of numbers. Company reported a double-digit revenue growth of 11% after several quarters of tepid growth. Now, revenue growth is aided by company's cookware segment and even its increasing focus on the premiumization. Now, if we look at the H1 FY26 revenue growth, it stands at 8% versus the full-year guidance of high single-digit growth given by the company earlier. So, it is well in that range. Now, looking at the consolidated numbers, revenue saw an uptick of 11% on a YoY basis. Gross margin saw an uptick of 120 basis points. EBITDA saw an uptick of 33%, and margins also saw a sharp up move of 190 basis points. PAT also saw an uptick of 21%. Now, coming to car trade, it has reported a strong Q2 earnings. The overall outlook given by the company also remains healthy, with a margin target of 55 to 60% given by them. Now, profit stood at 60 crores versus 28 crores. Revenue saw an uptick of 25%. EBITDA saw an uptick of 95%, and margins stood at 33% versus 21%. Now, company says that Q3 and Q4 tends to be stronger than Q1 and Q2. Hence, it expects better growth in the second half as well.
Indeed, and what a turnaround it has been for Car Trade Technologies. Upasna, thank you for that. And Mayuresh, a quick word on both of them. Car Trade, of course, you witnessed the turnaround from almost 350 levels to now almost 3,000 plus. Your word on Car Trade. And TTK Prestige, the numbers may have been good, but the commentary is not very impressive. They've spoken about tariff uncertainties, the MFI stress, and a lot more.
Absolutely. I think for car trade, I think the numbers have been exceptionally good this time around. And therefore, I think if these numbers keep on continuing, our own expectations are that it will reflect very, very positively in terms of not just very, very stable margins that they're posting at this juncture, but also expectations and stronger cash flows that will probably come through. Obviously, valuations are now a concern, almost as you rightly pointed out. And therefore, I think fresh investments at this level probably seems to be a little bit circumspect. But yes, anybody holding can continue holding. For TTK, again, I think numbers were good. And the expectation largely is that these tariff worries, if they ease out by any means or any measure of standard in the next few months, I think that is definitely going to be a respite in terms of the company financials going forward as well. In terms of new product launches, I think that is what the street is probably keenly awaiting. And if that probably happens, I think that can give an impetus in terms of the growth prospects, both in terms of new value-added products into their kitty, as well as added margins that can probably come through. So I think it seems to be observed on these dynamics, how TTK will probably perform until.
All right, take that point. Thank you so much, Mayuresh and Jay, for joining us with your insights fundamentally and technically on markets and specific stocks. With that, it's time for a short break now. We'll get to the top corporate voices along with the key market events to watch out for on the other side.
Welcome back. Now, the government has approved the first batch of 7 projects with an investment worth over 5,500 crore rupees under the Electronics Component Manufacturing Scheme. Now, this involves key component segments like manufacturing of copper-clad laminates, multi-layered printed circuit boards and camera modules. Now, the plan envisages production of components worth 36,500 crore rupees and creation of more than 5,100 direct jobs. Now, the approval follows a very strong response as the scheme had attracted 249 applications from both global and domestic companies, amounting to over 1.15 lakh crore rupees in proposed investments. Meanwhile, Union Minister Ashwini Vaishnav has said that these approvals, India will save 20,000 crore rupees on its import bill. Now, shares of these EMS companies, including Kaynes Tech and Syrma, all jumped after the announcements. As per Elara Capital, this is set to benefit Kaynes Tech and Syrma SGS. And that's not all. It expects approvals for players like Dixon Tech, PG Electroplast, other EMS players to be announced in subsequent batches as well. Listen into what some of these EMS players had to say after the approval.
Manufacturing is concerned, our land we have acquired, our building has come up already. We are almost in the completion stage. Whereas machinery we have ordered, it is in the pipeline. So considering all these things to meet the timeline what ministry is expecting, we will be there well within the timeline.
The first application is for multi-layer PCBs. This would be a plant with a capacity of 2.5 million multi-layer PCBs at full capacity with a targeted investment of about 765 crores. It is coming up in Andhra Pradesh. We expect to start the construction somewhere next month. I think in coming years, India will become a hub of component manufacturing. I think this is a very, very commendable step.
Okay, all right, let's go across to key corporate voices. First up is Bata. Around 80% of Bata's portfolio will see a price reduction following the proposed GST changes. The management says while Q2 was impacted by the GST transition, the company expects GST reforms and new categories to drive future growth. It saw an uptick in performance post-September 22. Further, the management expects margins to bounce back.
Next up is JK Tyre. The management says that the margins have expanded thanks to favorable raw material cost trends, and it's not just that, it expects the demand to remain steady because of the recent GST cuts. The tyre maker's domestic business has seen double-digit growth, with the management saying that the GST cut has given a boost to all the segments of the auto sector, and the impact will play out in the coming quarters. It also says that the underlying demand in auto is healthy and rural demand remains on firm ground.
And before we wrap, we bring you some key market events to watch out for. Upasna is back with us, standing by with the key events to focus for tomorrow. Upasna.
First up, let us look at the important results that we'll be closely tracking for tomorrow. Companies like HPCL, BHEL, L&T, Brigade Enterprises, CG Power, Coal India, Mahanagar Gas, NMDC, NTPC Green, United Breweries, PB Fintech, all these counters will be closely watching as they'll be reporting their Q2 FY26 numbers tomorrow. Also, on the global economic front, US will be reporting its crude oil inventories, and the most important, that is FOMC interest rate decision, will be out tomorrow night, followed by Fed Chair Jerome Powell's press conference at 12 a.m. in the midnight. And lastly, coming on the IPO front, Orkla India, a 1,700 crore IPO opens for subscription tomorrow.
IPO rush is back. Upasna, thank you for that. And with that, we call time on this edition of Markets Forward. From Sonal and me, thank you for watching. More news and updates continue on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A sharp recovery in the last hour helped the Nifty end above 25,900. The index gained over 140 points from the intraday low of the day. Metal stocks led the rally. IT stocks were the drag. India's largest commodity exchange, the MCX, suffers a technical glitch. Trading resumes after the longest ever trading halt of more than 4 hours. This is the second such instance in the last 3 months. MCX has not revealed the reason behind the glitch. Merely Mistry, Ratan Tata's confidant, likely to be ousted from the Tata Trust board after a majority of the trustees vote against his reappointment. Sources close to the Tata Group say Noel Tata, Vijay Singh and Venu Srinivasan voted against extending his term. Amazon is likely to announce the largest layoffs in the company's history. CNBC reports the company is likely to cut 30,000 corporate jobs. CEO Andy Jassy had warned of more job cuts in July as the company embraces artificial intelligence. Indian refiners start cutting oil purchases from sanctioned Russian entities ahead of the 21st November deadline. Indian Oil Corporation and Chennai Petroleum say their Russian crude intake has already reduced to 20%. President Trump signs a deal with Japan to secure the supply of rare earth minerals ahead of his summit with China's Xi Jinping later this week. Trump also pushes Japan to curb Russian energy imports but stops short of any punitive action. AI price wars heat up in India. OpenAI offers free access to ChatGPT Go for 12 months in a bid to expand subscriber base. This comes after rival AI company Perplexity offered 1-year complimentary subscription to Bharti Airtel's consumers. It's a red alert across Odisha and Andhra. Cyclone Monta bears down on the coastal region. Schools and colleges have been shut. Thousands evacuated from low-lying areas. All flights from Visakhapatnam airport cancelled today. Well, let's go straight to the big corporate story today. Merely Mistry, a confidant of the late Ratan Tata, is likely to be ousted from the board of Tata Trust. Now, sources close to the Tata Group say a majority of trustees voted against Mistry's reappointment. He's likely to be ousted from both the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust. Both trusts together hold a 66% stake in Tata Sons. Parikshit Luthra joins us now with more. Parikshit, this is, of course, a big development. Merely Mistry likely to be ousted on account of no unanimity within the trust on his reappointment. Where does this now leave the Tata Trust and the battle?
This is indeed a big setback for Merely Mistry, the director of Meher Palonji Group and one of the key trustees at Tata Trust. His reappointment as trustee for life is unlikely to go through. This after a majority of trustees have voted against his reappointment. Merely Mistry's term was set to expire on October 28, and ahead of that, Tata Trust had circulated a letter seeking views of different trustees on his reappointment. We're told that Noel Tata, Venu Srinivasan and former Defence Secretary Vijay Singh have voted against his reappointment. The only support for Merely Mistry coming from Darius Khambata and Jahangir H.C. Jahangir. Now, in these circumstances, Merely Mistry's reappointment cannot go through. In any case, reappointment of trustees for life has to happen unanimously. Even if one person had voted against Merely Mistry, his reappointment would not have actually gone through. Now, tensions within the Tata Trust have been continuing for some time. This includes how Tata Sons should actually be controlled and whether Tata Sons should be publicly listed or not. Let's see whether Merely Mistry accepts this. Before the reappointment of Venu Srinivasan, he had put a condition stating that he would support Venu Srinivasan only if in future all trustees of Tata Trust were reappointment unanimously and for life. Now we have to see whether Merely Mistry will throw up a legal challenge or not.
Well, that is the big question, and it doesn't look like this is going to end just here. Parikshit, many thanks for joining us. And of course, it's important to point out that there has been no official communication from the Tata Trust on the way that the vote has taken place or where this now leaves Merely Mistry. But on to the day's market action. The Lal Street has seen sharp recovery in the last hour of trade. On expiry day, the Nifty and the Sensex ending flat with a mild negative bias. However, the Nifty managed to end above the 25,900 mark, so it came off its intraday low. The Sensex down by 150 points. The Nifty Midcap closing absolutely flat. Similar story for the Nifty Bank. And the story there really will be in the intraday move that the markets have seen. But let's talk about what happened to India's largest commodity exchange today. It suffered a technical glitch. In its words,
trading eventually resumed after the longest ever trading halt of more than 4 hours. Now, this is the second such instance in the last 3 months. MCX has not revealed the reason behind what it calls was a technical glitch. Sources say the exchange faced problems with the trading system gateway. Manisha is here. Manisha, more questions, no answers at this point in time in terms of what seems to have happened today to cause that almost 4-hour outage.
Oh, well, absolutely, yes. There are more questions than answers, and the trade and the street absolutely looking for that. Even now, as we're speaking, we do understand that members, brokerages and clients as well are asking all of those questions, which MCX eventually will have to answer. What we do know is that normal trading finally commenced on the MCX at 1:25 p.m. A special session was held for about 4 minutes before the members were allowed to cancel their pending orders and start putting in newer ones as well. The exchange has said, though, that all systems are now functioning normally. A probe has been initiated on priority, and MCX is working to identify the cause and implementing the necessary corrective measures. We also learned from sources that the delay was due to an issue with the trading system gateway. There are 4 of them, and one trading system gateway perhaps saw some glitches. Sources also tell us that the decision to move operations to disaster recovery site is exactly what took time. As per the SEBI guidelines, MCX will have to report to the regulator the cause and impact of delayed trade. There are SEBI guidelines also on the kind of measures that exchanges need to take in case of a technical glitch there. Now, this is not the first time that the exchange has faced an issue this year. A trading glitch was also reported on July 23rd this year itself. Trading began after an hour's delay at 10:15 a.m. at that time. The MCX cited repetitive database issues as the cause. There was at least 2 such instances also last year. On July 9th, trading commenced at 10 a.m. after a delay after an hour, and while a glitch forced a shutdown of operations for 4 hours in the month of Feb as well. The trading commenced on that day only at 1 p.m. after several delays, leaving traders perplexed. This was reportedly linked to MCX migration to a new trading platform. In October 2023, the new software developed by TCS met some teething troubles. The exchange did face some initial delay in updating trade-related information. Trading was halted twice on the MCX on July 11, 2018. Following tech glitches, a problem was first encountered at 11:46 a.m., but normal trading resumed after an hour. However, it was halted again at 1:43 p.m. and resumed after 2 hours. In another instance, trading was stopped on the platform for more than 45 minutes in September 2017. The exchange had started the trading system and a special session was held again at 7:25 p.m. So there have been instances like that, but the markets do believe that this time it's different and there would be a lot of question answer that would go forward between the exchange, between the members and, of course, the regulator.
All right, Manisha, many thanks for joining us. In Earnings Corner, TVS Motors posting a steady quarter, meeting expectations. Strong volumes aided revenue growth. Net profit up 37%, revenue up 29%, ahead of estimates. Margins, which were in line with expectations, came in at 12.7%. Global earnings, HSBC posted a 14% drop in Q3 pre-tax profit. The company's bottom line was hit by a $1.1 billion charge after losing part of an appeal in a lawsuit tied to Bernard Madoff's Ponzi scheme. Operating expenses also rose 24%, while net operating income declined 5%. However, net interest income up 15%. The bank also upgraded its income forecast for the year. Indian refiners are unlikely to purchase oil from sanctioned Russian entities after the 21st of November. According to sources, any supply from sanctioned Russian entities will be turned away post that date. Sonal Bhutra is here with a commentary from top companies. Sonal, take us through what the OMCs, the oil marketing companies, are now saying on dealing with the sanctions on Russian crude.
Thank you for that. Well, sources are also suggesting now that November 21st is the deadline now. Any more Russian imports coming in from there will not be taken up by the refiners. And that's an important update which is coming in as well. If we talk about what the companies are saying now on Russian imports, let's start with Oil India. Because company said it is seeking legal opinion on stake in sanctioned Russian oil fields because they do have dividends to the tune of $300 million which are stuck because of the sanctions that have come by. So they are asking for more legal opinion which could come by on this one. As far as refiners are concerned, they have cut down meaningfully. Indian Oil Corporation yesterday indicated that they will comply with US sanctions on Russian oil. Already they have cut crude intake from Russia to 19% versus 24% on a sequential basis, and they will be flexible to source crude even be it from the US or any other geography wherever it is better for their margins overall. Reliance Industries did indicate that they will comply fully with any guidance coming in from the government with respect to Russian oil imports and sanctions that we saw from the UK and the US on two Russian majors. We spoke to Chennai Petro yesterday, and they indicated that Russian oil imports are now cut from 40% to 20%. In fact, they've started importing more from the US, and their sourcing mix has actually expanded to other countries as well. They also are just looking at efficiency and something that will improve their margins. Now, do remember when India started importing from Russia, the discount was to the tune of $15 to $16 a barrel, but now it has come to single digits. It's around $2 to $3 per barrel. So even if we cut Russian crude imports, it will not impact margins so much. Some of the analysts are suggesting it could be anywhere between 2 to 3%. However, Jeffries on the other hand says that now refining outlook has weakened a bit because the advantage that we were seeing in terms of Russian crude discounts, that will go away with. But do remember that discount has also narrowed down, so the impact will not be as much as it was expected earlier.
All right, Sonal, many thanks for joining us. Hindustan Aeronautics and Russia's United Aircraft Corporation signed an MOU for the production of civil commuter aircraft SJ-100. The arrangement gives HAL the rights to manufacture the aircraft for domestic customers. This is the first time a complete passenger aircraft will be produced in India. The SJ-100 is a twin-engine narrow-body aircraft. That's the latest from HAL. President Trump signed a deal with Japan to secure the supply of rare earth minerals after meeting the country's new Prime Minister, Sane Takaichi. Speaking on board the USS George Washington, which is docked in Japan, Trump said Toyota will invest $10 billion to set up plants across the U.S. Remember, Japan pledged to invest $550 billion in the U.S. in July. However, the two sides are still working out the details. Kauri and Joji joins us with more.
You know, this trip has all been about, a charm offensive by Japan, especially because Sanae Takaichi is only 1 week into her premiership. And I mean, they've bathed the city in red, white, and blue last night. It's about to happen right behind me as Tokyo Tower lights up in the colors of the U.S. flag. And this is because they want to stay in the good graces of the U.S. president. And I think so far the consensus is she's done the best she could, especially because she's relying heavily on the relationship that Trump had with the late Shinzo Abe. And Trump calls him a good friend, and Sanae Takaichi calls him a mentor. And so I think they brought that out, and his wife might be attending the meetings later on tonight as well. And there's been a gift of a set of golf clubs that the former prime minister used when he made these golf trips with the president. But I think at the end of the day, it's going to rely on a lot on the defense issues, because I think these are the geopolitical issues that are at the forefront of everyone's mind in the region. So let's take a listen to what Trump had to say earlier in the day about that.
I was just told by the prime minister that Toyota is going to be putting auto plants all over the United States to the tune of over $10 billion. So that's Toyota. So go out and buy a Toyota. And that's a lot to do with, because right now we have all the AI plants. We have so many things happening in the United States. And it's because of November 5th, Election Day, but it's also because of tariffs. The tariffs have been so good. We're taking in trillions and trillions of dollars.
On the day, I think this fresh investment for Toyota should be a big win for Sanae Takaichi and overall Japan Inc. They're trying to put together a united front as they welcome Trump to this region.
Well, Kauri and Joji there on Trump's visit to Japan. The European Union is set to hold talks with China in Brussels over Beijing's restrictions on rare earth minerals. A European Commission spokesperson has said that the Chinese officials will visit the city later this week. This comes after China's Commerce Ministry tightened export controls on minerals. Commerce Minister Piyush Goyal met with European Commissioner for Trade in Brussels to discuss the conclusion of a free trade agreement. The talks focused on key areas of the trade pact like market access and non-tariff measures. In a post on X, Minister Goyal said that the discussions focused on giving impetus to the India-EU FTA negotiations. The visit follows 14 rounds of negotiations on the FTA. The big global story, Amazon set to announce sweeping job cuts with plans to eliminate up to 30,000 corporate roles as it looks to rein in costs and correct overhiring during the pandemic boom. According to a Reuters report, the layoffs expected to begin this week will impact about 10% of Amazon's 350,000 corporate employees, making this the largest job reduction in the company's history. The cuts will span multiple divisions, including human resources, operations, device and services. The company last executed major layoffs in 2022, where it cut 27,000 jobs. That's a big one there from Amazon. US-based investment firm ARK Invest CEO Cathie Wood has flagged the risk of an AI market correction. Speaking to CNBC, Wood said there is a possibility of, and I quote, a reality check on AI valuations. However, she rejected the notion of an AI bubble. Further, Wood also said that as interest rates begin to rise, there will be a shudder in the market and that interest rates are likely to rise from the current levels next year.
I'm not saying there will never be any corrections. Of course there will. As many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Is AI in a bubble right now?
I do not believe AI is in a bubble. What I do think is on the enterprise side, it is going to take a while for large corporations to prepare themselves to transform.
Well, AI, a reality check as far as valuations are concerned. That's Cathie Wood there. In a bid to capture more subscribers in India, OpenAI is offering ChatGPT Go free for 12 months. The move comes after Perplexity offered its AI services as complimentary to Bharti Airtel users for a year. Rachna joins us now with the details. Rachna, ChatGPT Go was already priced much lower than the original offer. The AI price was clearly heating up in India with ChatGPT deciding to go free for a year.
That is correct. And when it comes to India's AI race, OpenAI may have fired its biggest shot yet, with company announcing that ChatGPT Go, like you mentioned, their already cheaper priced plan, which was about 399 rupees a month, will now be completely free for 1 year to all users in India starting November 4th. That includes everyone, the new signups or the existing Go subscribers. They will all receive a 12-month extension. Now, it is the strongest pricing move yet from OpenAI, what is now its second largest market globally. Now, ChatGPT Go was launched in August as an affordable and a faster version of ChatGPT with 10 times higher usage limits and double memory. The company claims that this entry-level subscription helped it double its subscriber base, and now it is free. But let's rewind a little. When it was launched in August, after that, users did complain of limited conversations with the free version, and they would keep getting prompts to update to Go. And $399 was a sweet price point. But now that becoming free changes the game even more. So let's look at the competition. At the basic level, all major AI platforms, that's ChatGPT, Google Gemini, Perplexity, and Grok remain free but limited. So the real battle is in the middle tier. OpenAI's Go plan at $399 is now free for a year. Like we discussed, there's Perplexity's Pro, which is normally priced at $20 a month, which is about 1,700 rupees, is also free for a year through its Airtel partnership. Coming to Google's Gemini Pro, which is the highest priced in all of them at 1,950 rupees a month, is also free for buyers of the Pixel 9 Pro or any other model upwards of that. And then comes Elon Musk's Grok Premium, usually costs about 700 rupees a month, but now free for all verified X users, meaning anyone with a blue check on Twitter gets full access to Super Grok. OpenAI, Google, Perplexity, and XAI. With all these mid-tier plans, they're all betting on reach over revenue, using India as a testing ground for the global AI race. So at the top end, paid plans are still ranging from 2,000 to 20,000 rupees a month, going all the way up to $300, but that's for enterprise users only. So in this race, the advantage is not just about technology anymore, it's about access, and more importantly, creating an ecosystem, getting users hooked to the mid-tier premium plans till monetization resets in 2026. But till then, what a great time to be in India and access world's best AI tools and their ever-evolving features all for free.
Well, yes, free for now, at least for the next 12 months. Many thanks, Rachna, for joining us. And speaking of artificial intelligence, Qualcomm has announced it will release new AI accelerator chips. The company said that the AI 200 will go on sale in 2026 and the AI 250 will be released in 2027. As per McKinsey's estimate, nearly $6.7 trillion in capital expenditure will be spent on data centers through 2030. Now, Google has announced its plans to revive a nuclear power plant in Iowa to meet the growing energy demands of the tech major's AI infrastructure. The company will partner with American electrical utility giant Nextera to restart the facility. The plant could begin operations in 2029. Once it is operational, Google will purchase power from the facility, which will be 100% owned by Nextera. Let's take a short break, but up next on Business 360, it's a red alert across Odisha and Andhra Pradesh as Cyclone Montha bears down on the coastal regions. That and more when we return. International news, despite the ceasefire, Israeli forces have attacked Khan Yunis in southern Gaza, killing at least 2 people. Hamas has handed over the remains of another deceased captive. This after the Palestinian group came under increasing pressure from Israel to retrieve and return the 12 remaining bodies. Ukraine has said it's ready for peace talks but will not withdraw troops from additional territories demanded by Moscow. President Zelensky added he is open to negotiations anywhere except in Russia itself or Belarus. Meanwhile, Russia claimed that Ukraine targeted Moscow with drone attacks for the second consecutive night. The Russian military said air defense units destroyed 17 drones, including one headed towards the capital. India's services sector remains the strongest engine of growth for the economy, contributing 55% of the country's GBA. This according to a new report released by Niti Aayog. However, the report warns that widening gaps in job quality, gender equity and regional opportunities demand urgent fixes. Shivani is here with more. Shivani, take us through what Niti is saying.
Well, yes, India's services sector continues to be the backbone of the Indian economy, contributing 55% to the country's GDP and employing around 188 million people. That's about 30% of India's total workforce. The latest Niti Aayog report shows that the sector added 40 million new jobs in just 6 years, and employment elasticity has almost doubled post-COVID, signaling a faster pace of job creation. But challenges remain. The report suggests India's services employment share is still well below the global average of 50%, and most workers remain outside formal jobs and social protection nets. Rural, urban and gender divides are stark, with rural women earning less than half of men's wages. Now, the report urges state-specific strategies, greater formalization of gig and informal work, and a strong push for AI and digital skilling to future-proof the skilling workforce. It also calls for building services clusters beyond metros and integrating services with manufacturing to create more value and more jobs in the future. Back to you.
Many thanks, Shivani. A red alert has been issued in Andhra Pradesh. Cyclone Mantha is expected to make landfall along the coast later today. The Met Department has said that it has intensified into a super cyclone in the Bay of Bengal. Officials say over 14 lakh residents could be affected and disaster response teams have been deployed. The IMD has also issued a red alert for Odisha. News 18's Navesh Mohanty joins us now from Andhra Pradesh's Kakinada. Navesh, वहाँ की परिस्थितियों के बारे में बताइए कि किस प्रकार से साइक्लोन मंथा को डील करने के लिए एडमिनिस्ट्रेशन काम कर रही है।
देखिए, अभी हम काकीनाडा के उसी जगह पर हैं जो जगह ज़्यादा अफेक्ट कर सकती है। और देखिए आप अभी से समुद्र का जो हाल है, रोड को तोड़ती हुई समुद्र की लहरें अंदर तक आ रही हैं। और ये जो नज़ारा देख रहे हैं ये तो कुछ भी नहीं है। जब ये साइक्लोन लैंडफॉल करेगा तब ये इसकी स्थिति क्या होगी आप इसका इमेजिन कर सकते हैं। जो ब्लॉक्स लगे हुए थे वो ब्लॉक्स सब धीरे धीरे करके हवा और पानी की वजह से ऊपर की तरफ धंसती हुई आ रही है। पुलिस और यहाँ के जो जिला प्रशासन है सभी ने हिदायत ये जारी किया है कि यहाँ किसी को भी आने ना दिया जाए, सिर्फ मीडिया पर्सन ही यहाँ आ पा रहे हैं। और अभी ये जो जगह है 8 किलोमीटर का जो बीच रोड है, ओपड़ा जो बीच रोड है वो बीच रोड अभी अनसेफ है। आगे स्थिति बहुत ही खराब है और आगे जो रोड है वो कट ऑफ हो चुके हैं। समुद्र का पानी आगे बहुत अंदर तक जा रहा है और देख सकते हैं समुद्र का पानी रिहायशी इलाकों में वो घुस रहा है। अभी ओपड़ा एक गाँव है, एक बहुत बड़ा मंडल है और वो गाँव अभी पूरी तरह से समुद्र की पानी के घेराव में आ चुका है।
Well, that is the situation there in Andhra Pradesh, in Kakinada, as Cyclone Mantha is ready to make fall. With that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC-TV18. Stay tuned. We're back in a minute with a lot more.
India's largest commodity exchange, MCX, suffered a technical glitch which led to a trading halt of nearly 4.5 hours, the longest till date. Normal trading commenced at 1:25 p.m. instead of the regular 9 a.m. A special session was held for about 4 minutes before that to allow members to cancel their pending orders. The exchange has said that all systems are functioning normally now. A probe has been initiated and Priority and MCX is working to identify the cause and implementing the necessary corrective measures. We learned from sources that the delay was undue to an issue with the trading system gateway. Sources also tell CNBC-TV18 that the decision to move operations to the disaster recovery site took more time. As per the SEBI guidelines, MCX will have to report to the regulator the cause and impact of delay of trade. Now, this is not the first time that the exchange has faced an issue this year. A trading glitch was also reported on 23rd of July in 2025 itself. Trading began after an hour's delay on that day at 10:15 a.m. The MCX cited repetitive database issues as the cause. There were at least 2 such instances last year also. On July 9th, trading commenced at 10 a.m. after the delay of an hour, while a glitch forced off shutdown of operations for 4 hours in the month of Feb. The trading commenced only at 1 p.m. after several delays, leaving traders perplexed. This was reportedly linked to MCX migration to a new trading platform. Then, back in October 2023, the new software developed by TCS met with teething troubles. The exchange faced some initial delay in updating trade-related information. Trading that day also was halted twice on MCX on July 11, 2018, following tech glitches. A problem was first encountered at 11:46 a.m., but then normal trading resumed after an hour. However, it was halted again at 1:43 p.m. and resumed after nearly 2 hours. In another instance, trading was stopped on the platform for more than 45 minutes. This was way back in September 2017. The exchange restarted the trading system and special session was held at 7:25 p.m. To discuss the implications of these tech glitches, we are now joined by Ajay Kedia. He's director at Kedia Commodities. We have Dinesh Somani, founder at Pro IntelliTrade Services, and Rakesh Jain is president of Commodity Participation Association of India. Gentlemen, hi. Thank you so much for joining in. We also are, of course, joined by Navneet Damani from Motilal Oswal. This really has been a bit of a concern, would you say, Ajay, because while it has happened twice in this year itself, it has been happening for some time now, especially since MCX moved on to TCS. There have been teething problems and then there have been some other technical glitches as well. But right now, I mean, in today's day and time, a 4-hour and 25-minute of a delay that we were forced with today, especially at a time when we did see gold and silver prices cracking down. There has been volatility in energy and in base metals. And given the fact that 98% of commodity derivative trading happens on MCX, this is a difficult day for traders, right?
Yeah, surely, Manisha, because see, one thing is very much clear, the system has already been upgraded and TCS is a very well-known face in market. After the migration, everyone was expecting the things would be very smoothing. But frankly, in last 4-5 years, the volumes on exchanges has tragically, we have seen gains. The participation or volume has been rapidly increased. Maybe because of that, but yes, in last couple of years, there were issues related to the connectivities or we can say broadcast or files. But whenever we talk to our client, generally brokers, generally we come to know that there were delay in some files. But today definitely is going to be a very important day because already we have seen the n number of events are happening in global market, and during this panic-like situation was there in the morning because no one was know what is the next step when it is going to be resumed. And today was the delay was almost more than 4 hours. The trading has resumed around 1:25. But now things have been in control. We can say quotes have been going very well. Trades have been smoothly going on. But yes, whenever this type of glitches come, definitely the sentiment or we can say the trades are being disturbed and definitely impacting the investor also and brokers also.
Well, absolutely. It does impact the broker and the investor as well, and not a good thing really, where you have no trading absolutely, and there's only one exchange in India does that so much of commodities. Mr. Somani, hi, what is your sense of, because even after 1:25, there were some reports that there are delays, and then it perhaps took another half an hour before we saw smooth trade come back to markets.
Yes, definitely, Manisha. As you said, there are a series of instances where the glitches are happening every now and then. This is, I mean, second time in 4 months that the glitches are happening, and this time it was more than 4 hours. After even the market resumed, the orders were not getting executed instantly. Secondly, there were instances wherein the volatility was too much. Prices were trading at a gap of almost 300, 400 rupees in terms of gold and 200 rupees in terms of silver. We have a gap down of almost 2,000 rupees, and it indeed is a big pain for the traders who bought yesterday. So even everyone is a sufferer at the end of the day. Probably just because somebody has shot it, it is only the gainer for it. For the brokers, for the clients, for the hedgers, everywhere it was a kind of a mess initially. I think this has to be taken seriously. And the technical team has to be on the close. As far as the exchange is concerned, this is one of the biggest exchange, the highest volume maker in terms of bullion. So overall, I think the things has to be taken care of.
Navneet, what is your sense and what did you and your clients face today? Because as is being said, people had positions being held. There was open interest on, and the way we saw gold, silver especially continue to decline, I assume, as Ajay also points out, it must have been a panic at one point in time.
Well, these two gentlemen have spoken about what the glitch was and the kind of duration we had to suffer. But largely, it is silver expiry, silver mega contract and mini contract expiry today. And on the COMEX also, it's the expiry day for gold and silver contracts, which is leading to immense volatility in these counters. And as we have seen of late, there has been reasonable amount of volatility in the last few sessions for gold and silver, where correction has been very part of the everyday scenario. So I think in such a scenario, trading getting delayed or the start of the market getting delayed has triggered some kind of a panic. And during the 4 hours of gap, market probably on the international front corrected by about 2% for gold and about 1% for silver. That triggered more uncertainty and more difficulty for people who were having positions in the market. Had it been a normal day scenario, it wouldn't have mattered much. Of course, it would have, but not to the extent where markets opened with a gap of 2,000, 2,500 points for something like gold and silver. So that has led to some kind of uncertainty and jitters in the market. But eventually, technical issues have been there in the past also, and the companies come out victorious of the same. So we expect that these kind of issues can be taken care of and be mitigated in the future.
Well, that really is the hope that the company can or the exchange can come out of this and go back to normal trading in the years to come. Mr. Jain, hi, thank you so much for joining in. As you've heard all the brokerage representatives here, that it was unnerving. There was a panic in the markets as well. And on a day like this, when you have huge volatile moves coming in for the commodities, a 4.5 hour rather of a shutdown like this does not help anyone. My question to you really is on what is it that the Commodity Participation Association of India is going to be talking to exchanges? Does there need to be a plan B on this? What is it that can make it better and what measures need to be taken? So what is it that you are proposing to the exchange from here on?
Manisha ji, we talked to the management of the MCX today. They told us there is a problem in database of the system. That's why the market could not open for 4 hours. We just seek a meeting with the chairman of the MCX, and probably going to be held in 2-3 days. They will suggest that there should be कि कुछ जो MCX कर रहा है वो एनफ नहीं है, उनको कुछ ना कुछ स्ट्रांगली करना पड़ेगा और इस सिस्टम को रेक्टिफाई करना पड़ेगा, because the problems are repeating again and again in the last 3 months, and the participants and clients are very much concerned about this. So this need to be done. MCX need to be done more. What they are doing is not enough, and I think this system should be rectified immediately.
Oh, well, absolutely. Mr. Jain, as you said, you've spoken to MCX top management and they say that there is a database issue onto this one. Is there more clarity that these kind of glitches can be taken care of and more measures are being put in place?
Yeah, of course. They told us the investigation is going on, and what the real cause that will come out by the end of the day or day after tomorrow, and then we'll work on it, and we'll meet with the chairman of the MCX along with the management. They will suggest what measures can be taken, but whatever जो भी आपको करना करिए, but that system should be completely robust and correct.
Ajay, as you said, a situation like this puts in a lot of panic there, and there are more and more people now joining in commodities. There is more interest than ever before. We've seen record volumes come in. It was just about yesterday that we saw options on bullion index come in as well. We've seen huge movement come into the market. I get your point that the exchange has been around for a long time and would perhaps, and always has come out victorious, as Navneet as well said. But this is the time that perhaps it needs to be more stricter on what really goes in. And an hour and half an hour and 15 minutes is a long enough time as well. But 4.5 hours is way too long to discuss.
But definitely, I think whenever we talk with exchange or even any brokers, whenever we speak to them, generally we have a backup plan of that could be resumed in 15-20 minutes, or let's say 1 hour. But definitely, it's a 4 hour. It's a very long period. But I think exchange has already been in line with the technology team. But yes, the impact is worse because what is happening. Now prices are started moving lower, and with every day we have seen 2% downside. So generally the sentiment among the investors is being totally shaken, and I think morning around from 9 to at least by 10:30 also we were continuously on call because no one knows what is the opening, what will be the opening, and today now prices are gap down opening. So in this scenario, definitely exchange has to, Rakesh ji has rightly spoken on this, that exchange should have a plan B. We can say already they are taking their best effort. No one want to be in this limelight with the glitches. So I think they are taking their almost up. But frankly, one thing is very much clear: the volumes, what we have observed in commodity in last couple of years are very moments are quite high. Participation are improving. So I think maybe because of this, we have faced this type of connectivity or glitches.
Ajay, what is the kind of volume that we are looking at today now? I mean, I understand that much of the volume happens as the market opens, and then, of course, when there's a major movement and after the New York session opens as well. I mean, it's a long day for everybody who deals in commodities from 9 a.m. to 11:30 p.m. But is there a loss of volumes is what we've seen until time?
Yeah, because right now it's around closer to 4:30, 4:45. We have lost our 4 hour trading, and generally in last few couple of months we have seen China, whenever the China market opens, then the momentum is quite high in last couple of months. So first half is going to be very always is going to be very crucial, and that has been lost. Let's see what is the day volume, but I think the volatility is right now is too high right now, which is complementing the volumes also. But yes, 4 hours lost trading will be never recovered. Let's hope if things going be normal, it will be helpful. But definitely the green period, we can say the first opening market because it is aligned with the Chinese market. So definitely it has been impacted.
Oh, well, yes. 4.5 hours of trading day lost, of course, is a loss of volumes as well. And there was a lot of panic. A lot of people could not close their positions, and the markets kept falling when it comes to gold and silver. And that is where the major volumes also are. But the exchange has come out with various new products in this year. In that sense, it has been doing quite well. But what is it that the brokerage as a community looks at in sense of the kind of glitch that we have today? And what is a plan B that they would want to discuss with the exchange is something that we will talk after this very short break. Don't go anywhere. Welcome back. You're watching Commodity Champions. We're discussing a day that wasn't so great, especially for the commodity derivative traders, where we saw MCX not open shop for at least 4.5 hours and only start to trade by 1:25 p.m. Mr. Jain, the year has been quite good, really, when you look at 2025 overall, because MCX as an exchange came out with 5 different products and instruments there. We've also seen volumes hit a string of all-time highs, given the fact that commodities itself has done quite well. But a day like this just dampens up or scares a bit. What is it that the exchanges overall need to do? We do understand that SEBI has a regulation, has measures in place in time of technical glitches across exchanges therein. We do understand that, as you said, in next couple of days, we'll have more clarity on what really happened, why it happened, and how is the exchange really looking to counter it. But from where we stand right now, what is it that you would want to propose to the exchange and the regulator in an event like this?
Yes, Manisha ji, this is a matter of a great concern for our participants or for clients or for CPI, because in today's scenario, the market is going well and the volumes will increase in the coming years also. MCX is doing very well, but these glitches are not acceptable because the market should not be halted at any cost. So we'll suggest to the MCX कि भी you should make arrangements कि भी किसी भी कीमत पे किसी भी हालत में मार्केट बंद नहीं होना चाहिए, क्योंकि उन केसेस में हमारे जो क्लाइंट्स हैं और पार्टिसिपेंट्स वो सफर करते हैं. तो इस तरह का कोई ना कोई मेजर होना चाहिए. इसके लिए नेक्स्ट 1-2 दिन में जो भी मीटिंग्स होंगी हम इसमें सजेशन देंगे और समझेंगे कि भी व्हाट इज द एक्चुअल प्रॉब्लम एंड हाउ इट कैन बी सोल्ड आउट.
Navneet, just to get a sense, we do understand that there have been some technical glitches instances in other exchanges as well. Nothing as long, because this is the longest glitch ever that we've seen in an Indian exchange come in. With 4.5 hours of that, what is it that SEBI usually has in sense of a measure? Because we do understand there are penalties, there are fines perhaps on exchanges as well. When you talk about disaster recovery side, that does mean that it's a generator of sorts. If nothing seems to be working here, the disaster recovery side should immediately come up. But that took 4 hours today.
Well, SEBI has set a set of parameters and mechanism already in place, and after 1 hour of trigger, there is some penalty which has been imposed on the exchanges. And mind you, MCX trades for about 15 to 16 hours long a day, and volumes in the exchange has gone up very significantly over the last couple of years. So I must take the side of the exchange also, that they have done a fantastic job of getting a lot of volumes on the exchange, a lot of participants on the exchange, and the kind of momentum we've seen in some commodities, that has been part of the MCX as well as the growth story of the Indian domestic commodities market also. But these kind of glitches technically has taken some bit of say excess steam which has happened in the last few days and weeks. I typically think that MCX as a team are also as worried as the exchange participants as well as the CPI, which are going to represent the broker forum and take some concrete measures. But I think I would leave it rest for the CPI and the exchange team to have it in place and discuss it with SEBI, and what are the mitigations and what are the better opportunities that they can have in place, where the systems can be up and live in a matter of no time, where the DR site, if there is an alternate for a DR site which also is needed, that also has to be in place. So these kind of technically what has to be done and needs to be done, because 4.5 hour of gap is definitely not acceptable. But I think they will be the best judge to come up with an answer over the next couple of days.
Navneet, I absolutely take your point home. You know, if 15 minutes and a half an hour and 1 hour is something that you let go, but 4.5 hours where almost a productive day goes for a toss is the reason that we're talking to you guys as well. Longest delay yet when we have seen in an exchange not opening up on time there. Mr. Somani, this one is to you. And I absolutely take Navneet's other point as well. An exchange wouldn't want to be in this position where they are when everything seems to be going well for them. Today it does it comes out as a day which can be absolutely avoided, would you say?
Definitely what Navneet says is exactly true. The exchange did added value to the commodities, because I mean the volume, the way volumes are generated, the volumes are flared, the options are flourished, everything added to the broker's kitty. I mean, if you trade a single lot in gold, it adds volume of 2.5 crore rupees. None of the exchanges in India that gives so much of volume. So definitely exchanges perform very well, but since the volumes have shifted from equity market to the agri market to this MCX exchange, we need to be very vigilant. This 4-hour delay is almost 1/3 of the day, and that's a big hit. I mean, that to be taken care of. The disaster recovery side should not take more than half an hour, and that should be the case. That is what the disaster is all about. So that needs to be taken care. Plus, I mean, the exchange would be more in appropriate position to come out with what technical glitches is all about this.
Well, yes, it is day one, and I'm assuming the exchange would be working hard on this and should give them a couple of days to understand on what really went wrong, so that, and obviously they are answerable to all the trading members therein as well. Ajay, the way commodity markets have been, and it's been a couple of decades and a stronger one at that, and yes, MCX needs all the credit for that, because almost 95 to 98% of the overall volumes do actually happen on MCX right now. With the way we are moving, and if we keep this day aside for a minute here, how are you looking at the overall Indian commodity markets, the kind of volumes, the push that the SEBI has been making, whether it is about deliverable contracts and then, of course, the indexes as well? How do you look at this growth going forward?
Yeah, I think since 2003 onwards, we have seen a greater rally of commodity volumes in India. We have already seen the rally from 2003 to 2008, 9, 10. There was a tremendous volumes and participation was there. Then we have already seen CTT and impact also. But frankly, in last 10 years, since SEBI has been a regulator for commodity, we have seen a number of new product introduction. Even UCC has increased. No doubt participation is increasing now. Mutual fund are also participating. So I think the overall living to today's instant, overall I think still there is a good way has been pending for commodity market, what we see international market, and there is a vast difference from international and domestic market, because in India we are commodity rich country. I think there is a various participants are still pending from tier 2, tier 3. So I think humongous opportunities are being there in commodity market for India, but definitely still today's glitch shows that where actually we are standing and where we have to be improving, because the volumes are going to be increased, participation are going to be increased, but this type of glitch has to be taken care so that trades or participate or trust would be continue to be there for commodity.
Mr. Jain, this one is to you then, and every time there is a glitch, which is far and few by the way, but every time that there is, we see some brokerages come out and say, oh, MCX is not working, you could trade in BSE and NSE for that matter. And today that happened many a times. There were things being pushed on X and a lot of messages moving around on WhatsApp as well that you could be trading on other exchanges. Why is it done only on these days? Because yes, there is a commodity platform alive and kicking on BSE and NSE as well, but there's not much trade. There's very low liquidity and not too much trade done there. Why do we wait for these kind of days? Why isn't commodity as overall pushed? This is a day that reminds you that monopoly perhaps is not the best idea.
Yeah, of course, Manisha ji, monopoly is not a good idea, no doubt. But now the NSE and BSE both are coming in commodities also. But there is a lot, volumes are very less. Secondly, the products which are running on the MCX is not on the NSE. NSE के ऊपर पूरे product नहीं है जो MCX के ऊपर हैं, इसलिए उसके अंदर बहुत ज़्यादा trade नहीं हो पाता है, और अगर इस तरह के glitches में हम उधर switch over भी नहीं कर सकते हैं क्योंकि वो product available ही नहीं है. But over a period, the future of the commodity market is very bright. हमारे जो अभी नए चेयरमैन ऑफ सेबी जो आए हैं उनका भी व्यू बड़ा क्लियर है. ही वांट टू बी दिस कमोडिटी मार्केट टू बी डेवलप्ड वेरी फास्ट. हम लोग उनसे मिले थे तो उन्होंने एग्री कमोडिटी के लिए भी 2 कमेटीज का फॉर्मेशन किया था जिसमें डिस्कशन चल रहे हैं. दे वांट की जो एग्री कमोडिटीज में वॉल्यूम्स घट गए हैं वो वापस आने चाहिए और कमोडिटी मार्केट ग्रो करनी चाहिए. तो वी आर वर्किंग ऑन दैट, ऑन दैट. सेबी इज आल्सो वेरी पॉजिटिव ऑन दैट. So I feel in the future the commodity market will rise, growth will be there, and we will ensure with the MCX with this type of the glitches should not be, happen again at any cost. So this is our motto.
All right, Mr. Jain, thank you so much for joining in. Thank you so much, Ajay and Mr. Somani and Navneet for joining in as well for that discussion. I understand it's a difficult day for all of you. All of you do a lot of commodity volumes on the exchange therein as well. And while the exchange volumes have been increasing, as we spoke about today, the issues in some sense have been increasing as well. And today's 4.5-hour glitch does not do well at all at a time when the markets are volatile. But we do understand that right now the trade is running smooth. It would be very interesting to see on how 9 a.m. arrives for most of us in the day tomorrow. But thank you so much for joining in today. And with that, that's all the time that we have on this episode of Commodity Champions. Thank you for watching.
Hello, welcome to News Centre. I'm Parikshit Luthra. Mehli Mistry, a close confidant of Ratan Tata, is likely to be ousted from the Tata Trust board. capping a months-long bitter boardroom battle with the Noel Tata-led camp. Sources close to the Tata Group tell us that a majority of the trustees voted against Mistri's reappointment to two cornerstone trusts of Tata Trust. We're talking about the Sir Dorabji Tata Trust and Sir Ratan Tata Trust. Noel Tata, the chairman of Tata Trust, Vijay Singh, the former defense secretary, and Venu Srinivasan, the chairman emeritus of TVS Motor Company, voted against his reappointment. Jehangir H.C. Jahangir and Darius Kambata, as per sources, voted in his favour. Tata Trust controls 66% stake in Tata Sons, the holding company of the behemoth. Mehli had joined Tata Trust in 2022. He's a cousin of the late Cyrus Mistry, who was ousted as Tata Sons chairman in 2016, leading to a bitter corporate battle. Mehli is a director of the Meher Palonji company, and also this is a company with interests spanning from logistics solutions to shipping to finance and insurance. The big question that we're asking now, where does this leave the $200 billion conglomerate? Number two, have we seen the last of the boardroom battle between Noel Tata and Mehli Mistry? Joining me now to take this forward are Dr. Thomas Mathew, author of Ratan Tata's biography, H.P. Ranina, senior advocate at the Supreme Court, also with us. Thank you very much for being with us, gentlemen. Dr. Mathew, if I can begin with you, does the ouster of Mehli Mistry end the differences, the divide within the Tata Trusts, or, according to you, we're now going to see a long, protracted legal battle play out?
Thank you, Parishit, for having me on this show. I do not want to be very pessimistic about the situation in Tata Trust now. I understand that there has been a certain amount of upheaval in the Tata Trust, but I would not subscribe to the view that there's going to be a long legal battle. It is normal for trustees to come and go. And it is also normal when there is a transition for certain groups to take different positions. But I hope that, as Tata veteran Mr. Soonawala said, I hope that it doesn't lead to anything which would be subservient to the goals of Tata Trust that Jamshedji himself actually was emblematic of. As you know, I don't want to elaborate on this at this juncture. I can only be hopeful that the flames of distrust today would get soon extinguished.
That's an important point. Let me now go across to Mr. H.P. Ranina. Mr. Ranina, Mehli Mistry, according to sources, had put a condition while supporting Venu Srinivasan last week. And this is what we've come to know via sources. The Tata Trust has not put out a statement, but according to sources, he put a condition that he is supporting Venu Srinivasan on the condition that the reappointment of all future trustees is going to happen unanimously. And if that doesn't happen, he can withdraw support. Can someone withdraw support retrospectively? And does he have grounds for a legal challenge if he were to approach court? Everyone has that legal right, but what is the legal basis for that right, according to you?
Well, first of all, let me thank you, Parikshit, for having me on the show. I agree with what Mr. Mathew has said, that things should be settled amicably. Now, coming to your point, Mehli Mistry, I think, acted on the basis of the resolution which was passed, I believe, in October 2024, I think 17 October 2024, when it was decided unanimously by all the trustees of the Tata Trust that all future appointments will be done unanimously and will be for life. Now, having passed that resolution, so I'm told that this resolution was passed. Of course, I am subject to clarify to any correction. But in case this resolution was passed unanimously by all the 7 trustees, then it would not be right for trustees today to have a vote, because they have already committed themselves to have a unanimous approval of all trustees hereafter, and that approval would be for life. So that unanimous resolution passed on 17 October 2024 cannot be ignored. It's like almost like a family settlement. When a family comes to a settlement unanimously, that settlement cannot be gone back on by 2 or 3 few family members. If at all it has to be rescinded, it can only be rescinded by all the family members unanimously. It's the same thing which goes for a trust. They've already passed a resolution unanimously. Then future all trustees will be appointed for life and unanimously, and there'll be no conflict, there'll be no vote. So I'm surprised that there was a vote at this time. Where was the need for a vote at all, when they had already decided 1 year ago that all trustees would be appointed for life when the appointment comes up again? Now, whether it will lead to a legal battle or not, I don't know. I think all options are open to the contesting parties. I hope it doesn't go to that way and things are resolved amicably and harmoniously, because I'm told even the government wanted this to happen harmoniously. Now, those who voted against Ministry have obviously not agreed with this view of the government itself. But they have not agreed with what they passed 1 year ago. And that makes me a little wary, because you can't go back on a resolution which you had agreed upon 1 year ago. And this was done immediately after the passing away of Ratan Tata, if you remember. So you must honor the memory of Ratan Tata and make sure that this resolution passed is upheld in letter and spirit. And if that happened, then what happened today should have been avoided. It is avoidable. I'm very sorry that this has happened, but there was a distinct decision to appoint every single trustee for life unanimously hereafter.
Right. That is indeed an important point. Dr. Matthew, you would be familiar with the working of the Tata Trust. What does the rule book really say? Does it say that all the trustees have to be reappointed unanimously? Number two, now as far as the 17th October 2024 resolution goes, is there something within the Tata Trust rule book which says that the members can vote against? Because one of the camps, of course, says that reappointment is a mere formality.
Parishit, while I largely agree with the legal luminary, Mr. Ranaina, I have a slightly contrarian view with regard to the October 17 resolution. The October 17 resolution talks about a unanimous approval to appoint a trustee for life. My understanding is that when the term ends, or when the term is about to end, the trustee should unanimously vote for the continuation of the trustee for life. So to my understanding, there is a positive affirmation that is required, and that has to be unanimous. I personally, I'm not taking names here. I really don't think that imposing a condition on an approval would stand the test of law, my personal opinion. That is because normally for a condition to stand the test of law, there has to be a priori legal requirement or a condition precedent. In other words, maybe if it was a part of one of the trust deeds or provision, that conditional approval is also a method of approval. If that is not there, I do not know how it would actually play out in the courts if it comes to that. Let me give an analogous situation. It'll be extremely difficult to find a similar situation, but what I can think about immediately is this. You have a council in a municipality, okay? A person X says, I'm giving approval for Y to be chairman. on the condition that when Y becomes the chairman, he will appoint me chairman of a housing committee. And suppose he doesn't approve, what happens? This is vote gets invalid because of the condition. The answer logically should be no. So to my understanding, plus also you need to also realize that Sir Dorabji Tata Trust also has a provision that majority decision shall prevail. 3 of the trustees present and voting will be considered as an approval to a decision. So the situation is complicated. Now, just one last point. If after the October 17 resolution, if there was no need for another approval, then the question of a condition of unanimous approval should not have been brought into the resolution itself. So this is my point.
All right. Mr. Ranina, now coming back to you about some of the other major issues that the trust was grappling with, including the public listing of Tata Sons. Do you think that process may get easier now?
No, public listing of Tata Sons, you mean?
Public listing of Tata Sons.
Tata Sons, yeah. So obviously that's a decision which the shareholders have to take. And since 66% of the shareholders are the Tata Trusts, that's a decision which they have to take. But even here, I'm told that there has been some resolution or some commitment given that as far as possible, Tata Sons should remain private. Of course, they can always revise that decision if they so wish. But certainly, if at all they decide to go public at this juncture, where there's all this dispute going on, I think it won't be the appropriate time to do so. So certainly, I think let things cool down. Let us see how it pans out in the next few months. And hopefully, if things are resolved amicably and harmoniously, that is the best thing that can happen to not only Tata Sons, but to the entire Tata group of companies.
All right. Dr. Matthew, if we were to ask you about the genesis of this problem, yes, there was a problem that we saw with the removal of Vijay Singh from the board of Tata Sons. There were also differences on the day-to-day working control of Tata Trusts over Tata Sons. Then also the issue of public listing as well. But Mehli Mistry was someone who was considered as close to Ratan Tata, a close confidant of Ratan Tata. When did you think this problem between the trustees began to arise, come to the forefront?
See, Parishit, I can't exactly pinpoint, but I can tell you something. If X was close to Mr. Ratan Tata, so was Y. Let me take you back to 2012. Mr. Vijay Singh was one of the closest confidants of Mr. Ratan Tata. And please understand one point. Mr. Ratan Tata was not only close to Mr. Vijay Singh, Mr. Ratan Tata's father, Neville Tata, had also very cordial relationship with Mr. Vijay Singh's father. So this relationship has been going on actually in a very warm way for the last 3-4 decades. So in terms of proximity, Mr. Vijay Singh, and also in terms of the confidence that Mr. Ratan Tata reposed in Vijay Singh, according to me, is second to none. Okay, that's number one. Now, when did this actually arise? I really do not know, but there was simmerings, there were difference of opinion. But Parishit, is only natural when there is a transition to have a certain difference of opinion. But at the end of the day, I still believe that the trustees are mature enough to settle their differences without rocking the boat or doing anything that would disrupt such a huge organization like Tata Sons, which is almost as big as a country and extremely important, not only for India's economy, India's prestige abroad, and is too big to fail. like you say in the United States. So therefore, I think they will find a solution. I really don't believe that anybody would go to the courts in order to find a resolution to this. And I personally believe one thing. Now, let me tell you one thing which I personally believe. I'm not trying to take sides at all. See, Tata Trust, we need to understand, it's not an ordinary trust. Tata Trust is actually a conglomeration of the trusts of the family members or the ancestors or relatives of Mr. Noel Tata. Mr. Noel Tata is today the flag bearer or the torch bearer of the ideals with Jamshedji Tata started this philanthropic activity. He is from the same bloodline, according to me. When Mr. Ratan Tata was there, everybody agreed to what Mr. Tata said. Similarly, I really do not understand when there is a trust which is wholly dedicated to philanthropy and only philanthropic activities, and you have a Tata as a head. I really do not think that you should be opposing him, provided every decision is debated, every decision is discussed without bad blood. Just like when Mr. Ratan Tata was there, there used to be a lot of discussions, there used to be a lot of debates. Right. Mr. Tata himself used to tell me that. But at the end of the day, once a collective decision is taken, or they will defer to the head of the Tata Trust. And I think if that tradition is continued, I think we will not see this kind of feud or fratricidal battle, as I would put it.
All right, we're going to take a short break, but don't go anywhere. This conversation with Dr. Thomas Matthew and senior advocate HP Ranina continues on the other side on the divide within Tata Trust and the ouster of Mehli Mistry, which looks very likely at this stage. Welcome back. We still have with us Thomas Matthew, author of Ratan Tata's biography, HP Ranina, senior advocate at the Supreme Court. Gentlemen, thank you very much for joining us on the program today. It is a big day. Clearly, the divide and tensions within the Tata Trust will continue. They will spill over the next few weeks. And why is that? This is because Mehli Mistry, the director of the Meher Palanji Group, one of the key trustees of the Tata Trust, has been ousted. According to sources, 3 key trustees have decided to vote against his reappointment. So a majority has voted against it. Whether Mehli Mistry accepts this or throws a legal challenge, that remains to be seen now. Let me go across to HP Ranina again. HP Ranina, beyond the legal challenge, we are yet to see whether Mehli Mistry will challenge this. Having said that, what are some of the future governance issues that Tata Trust will now have to decide and be very clear about? Issues such as the way independent directors are appointed on board Tata Sons. What is the relationship between Tata Trust and Tata Sons, and how both of these groups will function independently, and where would be the areas where Tata Trust will exercise control over Tata Sons, considering it has a 66% stake in the parent company, Tata Sons?
I think it's a very fair question which you have raised, Parikshit. The important point is that Tata Trusts have to be guided by certain principles laid down by the Tata family and by Mr. Ratan Tata. I just want to bring out one important point which seems to have been missed out. Mr. Ratan Tata resigned as a director of all the companies when he reached the age of 75. And there is an unwritten code, nothing in writing, but unwritten code that at the age of 75, everybody should step down from not only an executive position, but even as directors. And Ratan Tata set an example of stepping down when he reached the age of 75. This is well known. Now, having said that principle, and if we all believe in the ethos of the Tata group and the Tata family and their sense of corporate governance, I think it has to be applied even to Tata Trust. But as far as Tata Trust is concerned, the question of age does not apply. It is only in the case of listed companies or public companies that this age applies. But even from Tata Sons, which was a private limited company, Ratan Tata chose to step down when he reached the age of 75. And this example cannot be forgotten. In fact, there is a good practice of corporate governance. This has to be accepted by all Tata companies. This is an unwritten law. I still remember, because I was sitting on the board of the Reserve Bank of India along with Mr. Ratan Tata and Mr. Narayan Murthy, another stalwart of corporate governance. And we all believed in the principles of corporate governance, that after a certain age, you have to step down. And perhaps this is the reason why Mr. Vijay Singh had to step down. Now, coming to another issue. Mr. Mehli Mistry has been ousted. There must be some credible reason, because otherwise it's defamatory. You cannot defame a person by asking him to go unless there's something involved, because obviously there'll be something in the minds of people. Why has he been asked to step down? Has he done something wrong? This is certainly defamatory as far as Mehli Mistry is concerned, or anybody else is concerned. So I would think that this has to be sorted out. And as your question is right, the Tata's company's ethos must continue. Ratan Tata's principles must be upheld. Simply because he has passed away doesn't mean that you should just forget it. And if Ratan stepped down at the age of 75, I think all of them should follow that example and step down at that age. That is a good principle of corporate governance.
Right. Dr. Matthews, so far we've not seen any statement from Tata Trust. Do you think it's very important for the trusts to go out and explain why this decision has been taken? The trustees have not put out any statement. There is no word from the Tata Trust. And beyond that, the differences that we are seeing play out within Tata Trust, do you see this impacting the functioning of Tata Group companies as well?
Yeah, Parikshit, before I go to this, let me answer one small point about 75 years being the guillotine year. Okay, Mr. Ratan Tata did step down when he touched 75. But it needs mentioning, it needs underscoring that Mr. Vijay Singh had passed 75 years when Mr. Ratan Tata himself decided to continue him in Tata Trust. Which means wherever there is a rule, there is an exception. And my learned friend, Mr. Rainana, would certainly agree with me that in the United States, Supreme Court judges do not retire. They walk into their grave. So I'm not trying to dispute anything else. I agree that there should be a retirement age, but if there are extraordinary circumstances that demand the continued appointment or tenure of an individual, just like Mr. Ratan Tata did with the case of Mr. Vijay Singh, we should not consider it as something immoral or wrong or illegal. That's point number one. Now, next question which I wanted to answer was whether the turbulence at the moment would disrupt the functioning of Tata Sons. The answer to me is no. They are two different entities. You have members who are appointed in the board of directors of Tata Sons by Tata Trust. But in Tata Sons, and Tata Sons is headed by Mr. Chandra, who is the chairman of the group. They function independently from Tata Trust, unless, of course, there are important decisions like dilution of shares, etc., the resolution of which will have to have the affirmative vote of the representative of Tata Trust. This will shake. This will cause slight tremor. But I don't think that this is going to disrupt the organization in any way. It is too strong. It is not a monolith. It is a huge establishment with multiple legs to stand on. And I'm sure Mr. Chandra, who is a techie and a techie intellectual, will be able to wade through this slow commotion or wave more successfully than many others would. This is my...
All right. We've completely run out of time, but thank you very much, Dr. Matthew and senior advocate H.P. Ranina for joining us. A lot of questions there before Tata Trust in the days to come. We'll have to see whether there's a legal challenge. We'll also have to see what happens to the public listing and the decision taken by the RBI, and whether Shapurji Palonji, which has been mulling and looking to exit with a certain amount of stake sale in Tata Sons, is allowed to do so or not. All of those questions have to be answered in the days to come. But thank you for watching. Goodbye.
But the much-awaited Lenskart IPO opens for subscription later this week. Remember, the company is seeking a post-money valuation of almost $8 billion and 7,300 crores worth an IPO size as well. We have with us the CEO or the founder, Piyush Bansal, and the CFO of the company joining in as well. Gentlemen, thank you so much. It is a fairly momentous occasion in the journey of the company. And to be very honest, it's a brand that needs no introduction. Everyone in India, the nooks and crannies, do know about Lenskart. And at the same time, if I look at your revenues, 18% comes in from sub 2,000 rupees a pair and 18% above 10,000 rupees a pair. That tells you that it's been accepted as widely across the price range. And the only other brand that comes to one's mind is Decathlon, which has cut across this price value positioning equation. So congratulations on creating that business. More importantly, let's talk about the growth from here on, because what has happened so far is great. Now you're entering the world of capital markets. Now every quarter people will be asking you tougher questions. So the growth that you guys have been, reporting over the last 3 years on a compounded basis, do you think that sustains, or can you grow faster than that?
See, I think overall, if we look at eyewear as a problem or eyewear as a market, today almost 7 out of 10 adults need glasses.
Yeah.
And this number has been growing from 5 or 6 to about 7. Even if you look at children, about 20% kids used to have myopia. Now that number, as of FY25, has become 40%, and we are seeing that number is growing. If we keep that in mind, our view is that the market will continue to grow. Market will continue to grow. And at Lenskart, as long as I think we can do more and more eye tests, which we have been compounding more than 50%. To FY23, we did about 6 million eye tests. And FY25, we did 16 million eye tests. And India needs light. We have almost, very soon going to have over 500 million people who need glasses, without glasses. So I think as long as we can continue to do that, there's a lot of opportunity.
The organized market obviously likely to grow nearly 1.6 times the unorganized market. Let me ask you the numbers specifically. What rate is the market projected to grow at? In the past, what have you been growing versus the market? And is that sustainable in the future as well?
So Indian market in eyewear category has been growing at about 13%, caused by both the increasing myopia rates, increasing adoption, and people buying more eyewear per head. We have been outperforming the market, and we think we will continue to do that in the foreseeable future.
By a factor of how much?
Similar to what we have done in the past.
What has been that number in the past?
We did about 24-25% growth. And we've been adding to our share.
So 2x of the market is a number that is sustainable. Let's talk about the margins as well. Your operating leverage has begun to kick in. The international operations, which have a lot more margins as well, all of that has meant that your margins are just sub 18% at the end of the previous quarter, the numbers that you've reported so far. What are the levers for the margins to go further from here, and what's the headroom here?
Yeah, if you see our last 3 years, we have increased our EBITDA margins by almost 8 to 9%. And that has come as a combination of product margin expansion, operating leverage, and marketing efficiencies. So all these 3 levers continue to be relevant. And as we look at future, they will keep adding to the margin profile. There is a natural operating leverage in our business. And given that this is a high product margin business, the flow-through helps in overall, EBITDA expansion.
Gross margins of almost 68%, employee costs at 25%, your EBITDA margins are close to 18%. So realistically speaking, if all things work, your margins have a headroom to go all the way up to 25 to 30%. Is that directionally an aspirational number?
I would not get into direction of margin right now. I think as a business, I would still say that we are very early in the journey. Like I said, right now, of course, the business has hit a certain scale, and we like to believe that we are creating a lot of value for the customer, and we want to do that even further. It is too early, I think, in the journey for us to really set expectations for the numbers that you're talking about right now. I think our goal right now is how do we take our 16 million eye tests to 100 million eye tests a year. As long as we can do that, I think we would like to be focused towards that. Margins is a outcome. They have been, we have been fortunate that they are coming along, and let's see where they go. I'm sure we continue to surprise everybody.
Well, you have to. You better be surprising people. The reason why I say that is because, you're saying you don't want to set expectations for people so early in your journey and speak about adding value to customers and all of that and stuff. In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are, offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
But now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal.
Can you give us the full perspective then? Because what people have right now from the RHP are the numbers that I just spoke about, trailing PE of over 234 times. How do you justify that? Especially because, coming from a person who's been speaking on national TV to startups and asking them about valuation. So if you could give us a sense.
See, we have had very detailed feedback from all the investors of the world, including domestic mutual funds, foreign long-only investors, including our advisors, and based on that, the investors and the sellers have kind of decided the price. From a business standpoint, what I can say is that as a tech company, when the operating leverage starts kicking in, the bottom line grows much faster than the revenue growth.
The EBITDA growth CAGR over the last 3 years has been over 90%. Obviously, there has been operating leverage which has kicked in. How much more is left ahead versus what has happened already? Can you tell us a sense?
As our revenues grow, we will continue to compound and continue to add margin.
All right. Let's talk a little more about the objects of the issue. A large part of the money that you're raising, the fresh issue that you're raising, will be deployed towards company-owned stores. Can you explain to us the strategy of having company-owned stores at a time when a lot of the retailers are looking at franchise-owned stores? How does that...
Lenskart, our model is not like a traditional retail.
Yes.
Our model is, we are a centralized supply chain model.
Yeah.
So what you're doing really in the retail stores is booking an order. We don't actually keep inventory in the retail store.
Got it.
Plus, as a company, we believe that we do not want to open a franchise store to pass any risk. Even, we have a few franchisees, and in that franchisees, we still continue to carry all the inventory risk ourselves. So in our model, we believe that, the company-owned store or a franchisee store doesn't make a lot of difference. As of now, the stores have been paying back quite well. I think we are also an evolving model. We continue to reinvest in the store experience because we want people to have a surprising experience all the time. So keeping all those factors in mind, we continue to still open a mix of both, but largely, yes, we have more company stores than franchise.
So roughly 2150 stores as of now in India, around 600, 700 stores abroad. How is that number likely to evolve over the next 3 to 4 years?
India is a very large market. If you see the optical density in India, it is about 60 stores for 1 million people.
Yes.
If you think about that, it is 1/8 the size of pharmacy and 1/20th the size of jewelry stores. For a modern day epidemic, which is affecting at least half of the population, and with only 1/3 penetration levels, the number of stores are bound to grow, right? So it is a very large market. It is growing very fast, and and we will continue to try and address it.
Let's talk about one of the other risks as well, which was the kind of supply that you got from China. That was about 55% a few years ago. That number's come down to around 45%. How much more are you looking to indigenize? What's the capex plan for, manufacturing in India, and how does that turn your return ratios?
Overall, I think for most categories, including frames particularly, we are dependent on international markets for import. We have not had a supply chain ecosystem for manufacturing of frames, particularly in India. I think we are, as one of the key players in the market, we are making a lot of investment into bringing that supply chain ecosystem. It requires all aspects on the supply chain, from molding, from plating, from tools to come into the picture. We have initiated on that journey. Over the years, you would see us moving more and more manufacturing into India.
Could you give us a target?
No. Not that now.
No, because the new plant which is coming in, right? If you could give us a sense.
So we are making the investments, right? We are coming up in Hyderabad.
Exactly.
And we are making investments in terms of setting expectation of what percentage would move by then. We would refrain from that right now. But our steps are in that endeavor that we move more and more manufacturing to India.
All right. Let's talk a little more about the international business as well. You guys have, because of some of the acquisitions that you've made, one of a brand in Spain recently, and the Japanese companies, etc. You've now gotten about 40% of your revenues coming in from international business. But more importantly, that business has a little over 500 basis points margin advantage over what you're doing in India as well. How is that mix likely to evolve over the next few years?
See, overall, if you look at the journey of Lenskart, it depends on where are you standing and looking at. If you feel Lenskart as a company is just about there and now there is little room, I think as far as we are concerned in this category, the market is just beginning to open up. I mean, the amount of digital penetration we have in all markets, including India, the amount of the rate at which myopia is growing, one has to assume that you haven't done much right now. So keeping that in mind, there is a long journey for us. As part of that journey, there are two aspects that are very important for us. One is, how do we bring selection to our customers?
Yeah.
At Lenskart, we operate like a house of brands. We don't operate under one particular product brand. In Lenskart, we see it as a platform brand. I honestly feel that unlike apparel and shoes, eyewear has that mid-layer of D2C brands missing,
yes,
which will be the brands of the future. So, I mean, you have a Zara, you have an H&M, you have an Uniqlo in apparel, but in eyewear, you either have the luxury brands or you have non-brand. So we are trying to create these brands of the future. And in that same strategy, we acquired Mela, which is a Spanish-based eyewear brand. We think it's a very cool brand. You should try it out. They've really created a huge sensation amongst a certain section of the population. And we are launching that brand in India as we speak right now in a few stores and going to more stores. And similarly, if you see Ondays, which was earlier the brand that we acquired, which is a Japanese brand, that is more around precision eyewear. And that brand is now a big part of the Lenskart story in India, as well as what we want to do in international.
while I don't wear prescription glasses, I have to tell you that I am a customer of Lenskart purely from a fashion standpoint. I don't know why, but I do have a feeling that maybe eyeglasses are the sneakers of the future, where earlier you had one shoe and now you have more. Speaking about that itself, what is the opportunity on non-prescription eyewear for you? Fashion glares, have you seen thought of that as an opportunity?
See, overall, yes, there is opportunity there. And Miller, the brand which we have acquired, is predominantly a sunglasses first brand right now. So even in these sunglasses, a lot of work that we are doing is towards prescription sunglasses, right? And you mentioned like on the fashion side, actually, I think eyewear is going to be more fashion than anything else. I mean, this is the product that we wear on our face throughout the day. So I know the market feels that sunglasses is fashion and this is utility. Actually, we see the two converge, and already, I mean, the number of pairs that people buy at Lenskart is already about 3.6 pairs every 2 years, which used to be much lesser earlier.
What's your revenue mix right now? How much comes in from prescription? How much comes in from sunglasses? How much comes in from non-prescription? And how much comes in from your app? How much comes in from offline? If you could give us that sense.
See, majority of our business is prescription, right? And on the channel side, we are a truly omni-channel player. It is a combination of online, offline, store. Even the people who are punching the orders at the stores, 45% of them engaged with us online, tried the virtual try-ons, checked out the reviews, and then they wanted an eye test, and that's why they went to the store and punched there. So it's a good mix of omni-channel.
And what about the ROCE accretion that happens to the fees that people pay for being premium members, for being gold members, etc.? The last number was over 100 crores that you got annually from these fees. Do you have any target on how you expect that to contribute to your overall?
We don't have a target, but overall we feel that we need to allow people to own multiple fares. I mean, that's the whole genesis of the Lenskart membership, to get people to enjoy owning multiple pairs. Ironically, one would think that if I make you buy multiple pairs, you would use them in a sequence. But what we see is people actually use them together, and then they have this subconscious desire to buy more. Right? So I think we would see that habit is only going to grow more and more.
How's competition in the international market? Because in India, obviously, you are 2.5 times bigger than the next biggest person in this business, the organized player, that's Titan Eye. How is competition in the international business, and have you faced any difference in the competition there versus here?
See, all the markets that we are present in, they are highly fragmented and unorganized, and the traditional optical stores continue to be the a large part of the market. So the value proposition that we bring to our customers in India, whether it is quality, whether it is value for money, whether it is the design element of it, whether it is the functionality, I think we have seen that hold equally true for all our markets and all types of consumer segments, whether it is Indians living outside India or the local residents of these markets.
We don't really have players which are trying to organize the whole market. But the demand is very high. If you look at, I was reading the Singapore government website, they say 83% people get myopic now by the age of 80. And myopia rates there are very high in terms of the prescription levels. It's not -1, -2, -4, -5. And the solutions that are available across these markets are quite expensive. And there's a big gap in the number of optometrists that are available to do the eye test and the number of people who need eye test. So I actually think there is a huge gap here, and it will require a certain amount of scale to be able to solve this problem. And I think so we are looking at this as a combined market, India, Southeast Asia, Middle East, and Japan. And India is definitely at the core of the technology and the supply chain that we are building.
What do you make of people who wear contact lenses?
I mean, we have a brand called Aqualens, which is been growing again. We have been trying to use the fashion approach on color lenses. It is one of the key brands right now, and in prescription also it is.
What's its size right now, and where do you see that going?
It is, I mean, overall contact lens market in India is only, I think, in somewhere in the $100 to $200 million size. So it is a market which I think in the years to come will explode. There are events in the Southeast Asian market and China market where, I still remember a story in Southeast Asia. There was a lens that was launched, which wasn't a color lens, but it would make your eyes look bigger. And that's what exploded the market. India, I think, will go through a phase like that. Contact lens, if we see in our markets like Japan, in Singapore, this is a key, key component of the market, as a key part of the fashion. I don't see this as a substitute for eyewear. I just want to clarify that, because I see people who are wearing contacts are also wearing glasses. Contacts, overall, my senses is about, again, fashion overrules everything else, right? And there's a color market, or there is you want to look good. Eventually, eyewear is about looking good.
What about tech eyewear? Because everyone's now talking about smart glasses. Obviously, Ray-Ban has the Meta glasses, etc. And the next wave of tech accessories, wearables, are likely to be from the glasses point. And where have you been on that one?
So our approach on this has been full stack, right? We clearly feel that at Lenskart, being a tech company, we don't want to just be on the frame side or on the distribution side. We actually also want to be on the data side. So we have partnered with Qualcomm. We would have a camera-based glasses coming out in the near future. We recently integrated with UPI, where you can make payments. So the way at least I'm looking at the world right now is that we had laptops, and then we had mobile phones, and laptops still are a big part of our everyday life. But there are activities that move from the laptop to the phone.
And similarly,
there are activities which I think would move to the smart eyewear. One such example is payment. Second such example is monitoring the diet that you're eating every day. I mean, it is kind of uncomfortable to take out your phone, scan, and check the calories. So similarly, for visually impaired people, this is a huge use case. In corporates, for delivery ecosystems, in warehousing, there'll be a lot of use cases. So I think what we are doing is we are investing in the full stack. I think it's time that we start innovating this. So at Lenskart, we are taking a slightly longer term bet. So we have put a team together. We are designing the hardware, we are designing the firmware, we have all the best partners, and we want to create world-class smart eyewear out of India.
All right, we take that point. Let's wrap this up with a quick rapid fire, and we'd like you to, give as many numbers or as many, nuggets as possible in as little time. So let's start with the first one. Let's, market share.
No projections.
No projections. Current market close to 70,000 crores. Your revenue 6,600 crores. Sub 8% market share in India. Where do you see this headed?
Well, it's too early. I mean, we would want to, like I said, Maruti gave the comfort of four-wheeler to India. We would like to give the comfort of vision to India. We would want to give vision to 1 billion people eventually.
All right. Your margins from here on go how much higher?
Higher.
Much higher, not much higher, or very much higher?
I would say,
I think priority is right now growth. We are very small market share.
Okay.
But we will, the naturally flow through will be the compounding of margin.
All right. And
very early in the journey, let's see.
Revenue growth aspirations. You said growth is your target, India and international markets. Give us a sense. And
we have been growing well. I think can we do more? Yes.
30% CAGR over the last 3 years.
I won't set any expectations.
That's been happening over the last 3 years. So obviously.
Yeah. Let's see. I think I would say that we are still very early in the journey.
Okay. 60% revenue from India, 40% internationally. Does that mix stay the same?
It will keep changing depending, how things are at different stages. Right now in India, we are in a high scale mode. We have been adding about 300 plus stores a year. International, we are integrating our tech. I think less relevant, I would say. It is something that you will see will evolve over the years. But international continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say.
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes. Right? Out of that 80,000, let's see how many Lenskart adds.
All right. Your favorite Lenskart pair?
Hustler.
Yours is Hustler as well?
As of now, but very soon it's going to be something else. I'm looking forward to wear our camera glasses. I keep playing with them. There's one in my bag right now. I don't want to show anyone.
I like the new Meller as well.
You like the new Meller as well?
Actually, yes. The Meller is quite cool.
A competitor's product that you really admire?
Decathlon. Not a competitor.
Right. I'm all about Uniqlo. I am top to bottom Uniqlo.
1,000 crore PAT by 28, FY28. Is that possible? On a 10,000 crore revenue base?
I won't comment on that right now.
Our Q1 numbers are out. You can look at them.
All right, if we do that, thank you so much for joining in. Wish you good luck for this IPO, and more importantly, valuations. You've said that they're based on certain parameters. There is a growth opportunity here. Let's see what the market says. So as they say, over to the markets.
Thank you.
Thank you.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A sharp recovery in the last hour helped the Nifty end above 25,900. The index gained over 140 points from the intraday low of the day. Metal stocks led the rally. IT stocks were the drag. India's largest commodity exchange, the MCX, suffers a technical glitch. Trading resumes after the longest ever trading halt of more than 4 hours. This is the second such instance in the last 3 months. MCX has not revealed the reason behind the glitch. Merely Mistry, Ratan Tata's confidant, likely to be ousted from the Tata Trust board after a majority of the trustees vote against his reappointment. Sources close to the Tata Group say Noel Tata, Vijay Singh and Venu Srinivasan voted against extending his term. Amazon is likely to announce the largest layoffs in the company's history. CNBC reports the company is likely to cut 30,000 corporate jobs. CEO Andy Jassy had warned of more job cuts in July as the company embraces artificial intelligence. Indian refiners start cutting oil purchases from sanctioned Russian entities ahead of the 21st November deadline. Indian Oil Corporation and Chennai Petroleum say their Russian crude intake has already reduced to 20%. President Trump signs a deal with Japan to secure the supply of rare earth minerals ahead of his summit with China's Xi Jinping later this week. Trump also pushes Japan to curb Russian energy imports but stops short of any punitive action. AI price wars heat up in India. OpenAI offers free access to ChatGPT Go for 12 months in a bid to expand subscriber base. This comes after rival AI company Perplexity offered 1-year complimentary subscription to Bharti Airtel's consumers. It's a red alert across Odisha and Andhra. Cyclone Montha bears down on the coastal region. Schools and colleges have been shut. Thousands evacuated from low-lying areas. All flights from Visakhapatnam airport cancelled today. Well, let's go straight to the big corporate story today. Merely Mistry, a confidant of the late Ratan Tata, is likely to be ousted from the board of Tata Trust. Now, sources close to the Tata Group say a majority of trustees voted against Mistry's reappointment. He's likely to be ousted from both the Sir Ratan Tata Trust and the Sir Dorabji Tata Trust. Both trusts together hold a 66% stake in Tata Sons. Parikshit Luthra joins us now with more. Parikshit, this is, of course, a big development. Merely Mistry likely to be ousted on account of no unanimity within the trust on his reappointment. Where does this now leave the Tata Trust and the battle?
This is indeed a big setback for Merely Mistry, the director of Meher Palonji Group and one of the key trustees at Tata Trust. His reappointment as trustee for life is unlikely to go through. This after a majority of trustees have voted against his reappointment. Merely Mistry's term was set to expire on October 28, and ahead of that, Tata Trust had circulated a letter seeking views of different trustees on his reappointment. We're told that Noel Tata, Venu Srinivasan and former Defence Secretary Vijay Singh have voted against his reappointment. The only support for Merely Mistry coming from Darius Khambata and Jahangir H.C. Jahangir. Now, in these circumstances, Merely Mistry's reappointment cannot go through. In any case, reappointment of trustees for life has to happen unanimously. Even if one person had voted against Merely Mistry, his reappointment would not have actually gone through. Now, tensions within the Tata Trust have been continuing for some time. This includes how Tata Sons should actually be controlled and whether Tata Sons should be publicly listed or not. Let's see whether Merely Mistry accepts this. Before the reappointment of Venu Srinivasan, he had put a condition stating that he would support Venu Srinivasan only if in future all trustees of Tata Trust were reappointed unanimously and for life. Now we have to see whether Merely Mistry will throw up a legal challenge or not.
Well, that is the big question, and it doesn't look like this is going to end just here. Parikshit, many thanks for joining us. And of course, it's important to point out that there has been no official communication from the Tata Trust on the way that the vote has taken place or where this now leaves Merely Mistry. But on to the day's market action. The Lal Street has seen sharp recovery in the last hour of trade. On expiry day, the Nifty and the Sensex ending flat with a mild negative bias. However, the Nifty managed to end above the 25,900 mark, so it came off its intraday low. The Sensex down by 150 points. The Nifty Midcap closing absolutely flat. Similar story for the Nifty Bank. And the story there really will be in the intraday move that the markets have seen. But let's talk about what happened to India's largest commodity exchange today. It suffered a technical glitch. In its words, trading eventually resumed after the longest ever trading halt of more than 4 hours. Now, this is the second such instance in the last 3 months. MCX has not revealed the reason behind what it calls was a technical glitch. Sources say the exchange faced problems with the trading system gateway. Manisha is here. Manisha, more questions, no answers at this point in time in terms of what seems to have happened today to cause that almost 4-hour outage.
Oh, well, absolutely, yes. There are more questions than answers, and the trade and the street absolutely looking for that. Even now, as we're speaking, we do understand that members, brokerages and clients as well are asking all of those questions, which MCX eventually will have to answer. What we do know is that normal trading finally commenced on the MCX at 1:25 p.m. A special session was held for about 4 minutes before the members were allowed to cancel their pending orders and start putting in newer ones as well. The exchange has said, though, that all systems are now functioning normally. A probe has been initiated on priority, and MCX is working to identify the cause and implementing the necessary corrective measures. We also learned from sources that the delay was due to an issue with the trading system gateway. There are 4 of them, and one trading system gateway perhaps saw some glitches. Sources Sources also tell us that the decision to move operations to disaster recovery site is exactly what took time. As per the SEBI guidelines, MCX will have to report to the regulator the cause and impact of delayed trade. There are SEBI guidelines also on the kind of measures that exchanges need to take in case of a technical glitch there. Now, this is not the first time that the exchange has faced an issue this year. A trading glitch was also reported on July 23rd this year itself. Trading began after an hour's delay at 10:15 a.m. at that time. The MCX cited repetitive database issues as the cause. There was at least 2 such instances also last year. On July 9th, trading commenced at 10 a.m. after a delay after an hour, and while a glitch forced a shutdown of operations for 4 hours in the month of Feb as well. The trading commenced on that day only at 1 p.m. after several delays, leaving traders perplexed. This was reportedly linked to MCX migration to a new trading platform. In October 2023, the new software developed by TCS met some teething troubles. The exchange did face some initial delay in updating trade-related information. Trading was halted twice on the MCX on July 11, 2018. Following tech glitches, a problem was first encountered at 11:46 a.m., but normal trading resumed after an hour. However, it was halted again at 1:43 p.m. and resumed after 2 hours. In another instance, trading was stopped on the platform for more than 45 minutes in September 2017. The exchange had started the trading system and a special session was held again at 7:25 p.m. So there have been instances like that, but the markets do believe that this time it's different and there would be a lot of question answer that would go forward between the exchange, between the members and, of course, the regulator.
All right, Manisha, many thanks for joining us. In Earnings Corner, TVS Motors posting a steady quarter, meeting expectations. Strong volumes aided revenue growth. Net profit up 37%, revenue up 29%, ahead of estimates. Margins, which were in line with expectations, came in at 12.7%. Global earnings, HSBC posted a 14% drop in Q3 pre-tax profit. The company's bottom line was hit by a $1.1 billion charge after losing part of an appeal in a lawsuit tied to Bernard Madoff's Ponzi scheme. Operating expenses also rose 24%, while net operating income declined 5%. However, net interest income up 15%. The bank also upgraded its income forecast for the year. Indian refiners are unlikely to purchase oil from sanctioned Russian entities after the 21st of November. According to sources, any supply from sanctioned Russian entities will be turned away post that date. Sonal Bhutra is here with a commentary from top companies. Sonal, take us through what the OMCs, the oil marketing companies, are now saying on dealing with the sanctions on Russian crude.
Thank you for that. Well, sources are also suggesting now that November 21st is the deadline now. Any more Russian imports coming in from there will not be taken up by the refiners. And that's an important update which is coming in as well. If we talk about what the companies are saying now on Russian imports, let's start with Oil India. Because company said it is seeking legal opinion on stake in sanctioned Russian oil fields because they do have dividends to the tune of $300 million, which are stuck because of the sanctions that have come by. So they are asking for more legal opinion which could come by on this one. As far as refiners are concerned, they have cut down meaningfully. Indian Oil Corporation yesterday indicated that they will comply with US sanctions on Russian oil. Already they have cut crude intake from Russia to 19% versus 24% on a sequential basis, and they will be flexible to source crude even be it from the US or any other geography wherever it is better for their margins overall. Reliance Industries did indicate that they will comply fully with any guidance coming in from the government with respect to Russian oil imports and sanctions that we saw from the UK and the US on two Russian majors. We spoke to Chennai Petro yesterday and they indicated that Russian oil imports are now cut from 40% to 20%. In fact, they've started importing more from the US and their sourcing mix has actually expanded to other countries as well. They also are just looking at efficiency and something that will improve their margins. Now, do remember when India started importing from Russia, the discount was to the tune of $15 to $16 a barrel, but now it has come to single digits. It's around $2 to $3 per barrel. So even if we cut Russian crude imports, it will not impact margins so much. Some of the analysts are suggesting it could be anywhere between 2 to 3%. However, Jeffries on the other hand says that now refining outlook has weakened a bit because the advantage that we were seeing in terms of Russian crude discounts, that will go away with. But do remember that discount has also narrowed down, so the impact will not be as much as it was expected earlier.
All right, Sonal, many thanks for joining us. Hindustan Aeronautics and Russia's United Aircraft Corporation signed an MOU for the production of civil commuter aircraft SJ-100. The arrangement gives HAL the rights to manufacture the aircraft for domestic customers. This is the first time a complete passenger aircraft will be produced in India. The SJ-100 is a twin-engine narrow-body aircraft. That's the latest from HAL. President Trump signed a deal with Japan to secure the supply of rare earth minerals after meeting the country's new Prime Minister, Sanae Takaichi. Speaking on board the USS George Washington, which is docked in Japan, Trump said Toyota will invest $10 billion to set up plants across the U.S. Remember, Japan pledged to invest $550 billion in the U.S. in July. However, the two sides are still working out the details. Kauri and Joji joins us with more.
You know, this trip has all been about, a charm offensive by Japan, especially because Sanae Takaichi is only 1 week into her premiership. And I mean, they bathed the city in red, white, and blue last night. It's about to happen right behind me as Tokyo Tower lights up in the colors of the U.S. flag. And this is because they want to stay in the good graces of the U.S. president. And I think so far the consensus is she's done the best she could, especially because she's relying heavily on the relationship that Trump had with the late Shinzo Abe. And Trump calls him a good friend, and Sanae Takaichi calls him a mentor. And so I think they've brought that out, and his wife might be attending the meetings later on tonight as well. And there's been a gift of a set of golf clubs that the former prime minister used when he made these golf trips with the president. But I think at the end of the day, it's going to rely on a lot on the defense issues, because I think these are the geopolitical issues that are at the forefront of everyone's mind in the region. So let's take a listen to what Trump had to say earlier in the day about that.
I was just told by the Prime Minister that Toyota is going to be putting auto plants all over the United States to the tune of over $10 billion. So that's Toyota. So go out and buy a Toyota. And that's a lot to do with, because right now we have all the AI plants. We have so many things happening in the United States. And it's because of November 5th, Election Day. But it's also because of tariffs. The tariffs have been so good. We're taking in trillions and trillions of dollars.
On the day, I think this fresh investment for Toyota should be a big win for Sanae Takaichi and overall Japan Inc. They're trying to put together a united front as they welcome Trump to this region.
Well, Kauri and Joji there on Trump's visit to Japan. The European Union is set to hold talks with China in Brussels over Beijing's restrictions on rare earth minerals. A European Commission spokesperson has said that the Chinese officials will visit the city later this week. This comes after China's Commerce Ministry tightened export controls on minerals. Commerce Minister Piyush Goyal met with European Commissioner for Trade in Brussels to discuss the conclusion of a free trade agreement. The talks focused on key areas of the trade pact like market access and non-tariff measures. In a post on X, Minister Goyal said that the discussions focused on giving impetus to the India-EU FTA negotiations. The visit follows 14 rounds of negotiations on the FTA. The big global story: Amazon set to announce sweeping job cuts with plans to eliminate up to 30,000 corporate roles as it looks to rein in costs and correct overhiring during the pandemic boom. According to a Reuters report, the layoffs expected to begin this week will impact about 10% of Amazon's 350,000 corporate employees, making this the largest job reduction in the company's history. The cuts will span multiple divisions, including human resources, operations, device and services. The company last executed major layoffs in 2022, where it cut 27,000 jobs. That's a big one there from Amazon. US-based investment firm ARK Invest CEO Cathie Wood has flagged the risk of an AI market correction. Speaking to CNBC, Wood said there is a possibility of, and I quote, a reality check on AI valuations. However, she rejected the notion of an AI bubble. Further, Wood also said that as interest rates begin to rise, there will be a shudder in the market and that interest rates are likely to rise from the current levels next year.
I'm not saying there will never be any corrections. Of course there will. As many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Is AI in a bubble right now?
I do not believe AI is in a bubble. What I do think is on the enterprise side, it is going to take a while for large corporations to prepare themselves to transform.
Well, AI, a reality check as far as valuations are concerned. That's Kathy Wood there. In a bid to capture more subscribers in India, OpenAI is offering ChatGPT Go free for 12 months. The move comes after Perplexity offered its AI services as complimentary to Bharti Airtel users for a year. Rachna joins us now with the details. Rachna, ChatGPT Go was already priced much lower than the original offer. The AI price was clearly heating up in India with ChatGPT deciding to go free for a year.
That is correct. And when it comes to India's AI race, OpenAI may have fired its biggest shot yet, with company announcing that ChatGPT Go, like you mentioned, their already cheaper priced plan, which was about 399 rupees a month, will now be completely free for 1 year to all users in India starting November 4th. That includes everyone, the new signups or the existing Go subscribers. They will all receive a 12-month extension. Now, it is the strongest pricing move yet from OpenAI, what is now its second largest market globally. Now, ChatGPT Go was launched in August as an affordable and a faster version of ChatGPT with 10 times higher usage limits and double memory. The company claims that this entry-level subscription helped it double its subscriber base, and now it is free. But let's rewind a little. When it was launched in August, after that, users did complain of limited conversations with the free version, and they would keep getting prompts to update to Go. And $399 was a sweet price point. But now that becoming free changes the game even more. So let's look at the competition. At the basic level, all major AI platforms, that's ChatGPT, Google Gemini, Perplexity, and Grok remain free but limited. So the real battle is in the middle tier. OpenAI's Go plan at $399 is now free for a year. Like we discussed, there's Perplexity's Pro, which is normally priced at $20 a month, which is about 1,700 rupees, is also free for a year through its Airtel partnership. Coming to Google's Gemini Pro, which is the highest priced in all of them at 1,950 rupees a month, is also free for buyers of the Pixel 9 Pro or any other model upwards of that. And then comes Elon Musk's Grok Premium, usually costs about 700 rupees a month, but now free for all verified X users, meaning anyone with a blue check on Twitter gets full access to Super Grok. OpenAI, Google, Perplexity, and XAI. With all these mid-tier plans, they're all betting on reach over revenue, using India as a testing ground for the global AI race. So at the top end, paid plans are still ranging from 2,000 to 20,000 rupees a month, going all the way up to $300, but that's for enterprise users only. So in this race, the advantage is not just about technology anymore, it's about access, and more importantly, creating an ecosystem, getting users hooked to the mid-tier premium plans till monetization resets in 2026. But till then, what a great time to be in India and access world's best AI tools and their ever-evolving features, all for free.
Well, yes, free for now, at least for the next 12 months. Many thanks, Rachna, for joining us. And speaking of artificial intelligence, Qualcomm has announced it will release new AI accelerator chips. The company said that the AI 200 will go on sale in 2026 and the AI 250 will be released in 2027. As per McKinsey's estimate, nearly $6.7 trillion in capital expenditure will be spent on data centers through 2030. Now, Google has announced its plans to revive a nuclear power plant in Iowa to meet the growing energy demands of the tech major's AI infrastructure. The company will partner with American electrical utility giant Nextera to restart the facility. The plant could begin operations in 2029. Once it is operational, Google will purchase power from the facility, which will be 100% owned by Nextera. Let's take a short break, but up next on Business 360, it's a red alert across Odisha and Andhra Pradesh as Cyclone Montha bears down on the coastal regions. That and more when we return. International news. Despite the ceasefire, Israeli forces have attacked Khan Yunis in southern Gaza, killing at least 2 people. Hamas has handed over the remains of another deceased captive. This after the Palestinian group came under increasing pressure from Israel to retrieve and return the 12 remaining bodies. Ukraine has said it's ready for peace talks but will not withdraw troops from additional territories demanded by Moscow. President Zelensky added he is open to negotiations anywhere except in Russia itself or Belarus. Meanwhile, Russia claimed that Ukraine targeted Moscow with drone attacks for the second consecutive night. The Russian military said air defense units destroyed 17 drones, including one headed towards the capital. India's services sector remains the strongest engine of growth for the economy, contributing 55% of the country's GVA. This according to a new report released by Niti Aayog. However, the report warns that widening gaps in job quality, gender equity and regional opportunities demand urgent fixes. Shivani is here with more. Shivani, take us through what Niti is saying.
Well, yes, India's services sector continues to be the backbone of the Indian economy, contributing 55% to the country's GDP and employing around 188 million people. That's about 30% of India's total workforce. The latest Niti Aayog report shows that the sector added 40 million new jobs in just 6 years, and employment elasticity has almost doubled post-COVID, signaling a faster pace of job creation. But challenges remain. The report suggests India's services employment share is still well below the global average of 50%, and most workers remain outside formal jobs and social protection nets. Rural, urban and gender divides are stark, with rural women earning less than half of men's wages. Now, the report urges state-specific strategies, greater formalization of gig and informal work, and a strong push for AI and digital skilling to future-proof the skilling workforce. It also calls for building services clusters beyond metros and integrating services with manufacturing to create more value and more jobs in the future. Back to you.
Many thanks, Shivani. A red alert has been issued in Andhra Pradesh. Cyclone Mantha is expected to make landfall along the coast later today. The Met Department has said that it has intensified into a super cyclone in the Bay of Bengal. Officials say over 14 lakh residents could be affected and disaster response teams have been deployed. The IMD has also issued a red alert for Odisha. News 18's Navesh Mohanty joins us now from Andhra Pradesh's Kakinada. Navesh, वहाँ की परिस्थितियों के बारे में बताइए कि किस प्रकार से साइक्लोन मंथा को डील करने के लिए एडमिनिस्ट्रेशन काम कर रही है।
देखिए, अभी हम काकीनाडा के उसी जगह पर हैं जो जगह ज़्यादा अफेक्ट कर सकती है, और देखिए आप अभी से समुद्र का जो हाल है, रोड को तोड़ती हुई समुद्र की लहरें अंदर तक आ रही हैं, और ये जो नज़ारा देख रहे हैं ये तो कुछ भी नहीं है। जब ये साइक्लोन लैंडफॉल करेगा तब इसकी स्थिति क्या होगी आप इसका इमेजिन कर सकते हैं। जो ब्लॉक्स लगे हुए थे वो ब्लॉक्स सब धीरे धीरे करके हवा और पानी की वजह से ऊपर की तरफ धंसती हुई आ रही है। पुलिस और यहाँ के जो जिला प्रशासन है सभी ने हिदायत ये जारी किया है कि यहाँ किसी को भी आने ना दिया जाए, सिर्फ मीडिया पर्सन ही यहाँ आ पा रहे हैं। और अभी ये जो जगह है 8 किलोमीटर का जो बीच रोड है, ओपड़ा जो बीच रोड है, वो बीच रोड अभी अनसेफ है। आगे स्थिति बहुत ही खराब है और आगे जो रोड है वो कट ऑफ हो चुके हैं। समुद्र का पानी आगे बहुत अंदर तक जा रहा है और देख सकते हैं समुद्र का पानी रिहायशी इलाकों में वो घुस रहा है। अभी ओपड़ा एक गाँव है, एक बहुत बड़ा मंडल है, और वो गाँव अभी पूरी तरह से समुद्र की पानी के घेराव में आ चुका है।
Well, that is the situation there in Andhra Pradesh, in Kakinada, as Cyclone Mantha is ready to make fall. With that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC-TV18. Stay tuned. We're back in a minute with a lot more.
and welcome to Startup Street. I'm Arundhati Ramnan, and joining me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. Amazon announces 14,000 job cuts as it invests more in artificial intelligence. This amounts to 4% of its corporate workforce. Amazon says the cuts make the company leaner and less bureaucratic.
Optimo Capital has raised $17.5 million in a Series A funding round that was led by founder Prashant Pitti. Other investors in the round include Bloom Ventures and Omnivore. The NBFC has also raised a debt of 110 crore rupees from IDFC Bank and Axis Bank for its loan book.
The Gruhast Collective Consumer Fund has closed its maiden fund at 100 crore rupees, achieving the target corpus in under 1 year since its launch. The fund will now initiate a greenshoe option of 50 crore rupees to further expand its investment capacity.
Uber for Business has appointed Ritu Raj Chaturmohta as its Senior Country Manager for India and South Asia. He will lead the company's growth strategy in the region, focusing on partnerships and enhancing enterprise mobility solutions. His experience in platform businesses and the Indian market is expected to be critical for strengthening Uber for Business offerings.
AI price wars heat up in India. OpenAI offers free access to ChatGPT Go for 12 months in a bid to expand subscriber base. This comes after rival AI company Perplexity offered 1-year complimentary subscription to Bharti Airtel's consumers.
Well, full stack enterprise voice AI platform Smallest.ai today has announced an $8 million seed funding round that was led by Sierra Ventures with participation from 314 Capital and Better Capital. It plans to use this funding to accelerate its global expansion across North America and India, strengthening its product innovation and skill adoption across regulated sectors. Now, Smallest AI's full-stack voice AI platform enables real-time, human-grade voice conversations, and it already counts Paytm, Make My Trip, and ServiceNow among its clients. For more on the company's plans ahead and the significance of this funding, joining us now is Sudarshan Kamath, who is the founder and CEO of Smallest.ai. Sudarshan, thank you so much for your time here on CNBC TV18. It's a pleasure to have you. Start by telling our viewers very briefly about the company you started in 2023. Already have the kind of clients that you do. Walk us through what makes your tech stack really stand out from other global voice AI players.
Thank you so much, Ritu, for having me. Pleasure to be here. So Smallest AI, we started in 2023 when voice AI was at its inflection point. We built one of the world's fastest text-to-speech models called Lightning. And this was the first real-time text-to-speech model that could enable voice agents to have human-like voice quality. So that was one of our first flagship models, and it took off. We got a lot of major Indian clients to be our first customers. And from there, we expanded our portfolio. Today, we are building speech-to-speech models. And what we do is we help large enterprises in the banking financial space, in the travel space, automate their contact centers using AI. I think what specializes us, what differentiates us is that our approach is a very, very contrarian approach. We do not believe that LLMs are gonna, have complete control on how intelligence progresses, and we can achieve the same amount of progress using SLMs. And that's what we are focused on, and I think we're gonna continue to do that.
Smallest AI it is, but tell us how the architecture really is designed for regulated entities like BFSI, like healthcare. What kind of technical and compliance related challenges does servicing sectors like this bring?
This industry, as you know, which is regulated, it cannot have hallucinations in production, right? You could have issues like, the stock price could go down. You could have financial information going out. And so we need a lot of control and predictability and understanding of how the AI works. And so for us, our background has been, me and my co-founder both, we come from a background in self-driving cars. And as you know, the AI built here cannot fail if otherwise someone can die. So we apply the same level of scrutiny when we're training these models focusing on explainability much more than everything else, so that they can work in production and get deployed on premise for these financial enterprises, so the data does not have to move out to other third-party cloud providers or other countries. And so that allows the level of security compliance that we are able to achieve when we deploy AI solutions, which has generally been a challenge for other providers.
Right. Let's quickly get to that $8 million seed investment that you've got for Smallest AI. At this stage of your journey, how do what benefit will this bring? How do you plan to deploy it?
I think for us, we are a research-first company. 50% of our team is in research, and a lot of this is just going to go in expansion to our new model. We are releasing a model called Hydra. It is a multimodal speech and text in, speech and text out model that's going to be full duplex work in real time. And this half of this capital is just going to go in training Hydra and making sure it's robust enough for enterprise use cases. The remaining half is going to go in expansion for go-to-market across India and US. We have had great customer success initially, but we are still a very small company. We're just 30 people. And so we are going to focus on how can we make sure we have the resources that some of the larger companies have. We are obviously also forward partners to OpenAI itself. So we work very closely with them to understand how we could distribute and our models and their models can work in collaboration in a multi-agent kind of framework. And some of this research is going to go into that kind of a partnership and multiple partnerships across the globe that we can expand into.
Okay, that's interesting, the kind of partnerships you're talking about, and of course your work with OpenAI. But, the voice AI market itself is expected to surge almost 20 times in the next decade. What are the newer use cases that are emerging where you think you'll gain faster traction?
I think voice is the most natural interface of communication. Humans like to communicate with each other in voice. We are communicating in voice and not texting each other because of the same reason. And for businesses, today, there are very, very simple use cases that were being solved because voice was not as realistic as human-like. As voice becomes more human-like, imagine the entire user interface, even like the let's say you're using a SaaS platform, all of that, the input, output can be handled through voice, where you could just talk to the SaaS system instead of going through complicated, especially, enterprise workflows are extremely complicated. You have to do multiple things. Things like customer support that can be completely automated. Imagine customer support for a 30,000, 50,000 employee large enterprise. It's extremely complicated. To do that in the most natural, efficient way, voice is the most efficient mode of communication.
Okay, very briefly, we're running out of time. The longer-term vision for Smallest AI, do you see AI becoming the default interface for enterprise engagement globally?
Yeah, I think just like for humans, voice is going to be the default interface. It's going to be the most natural interface for communication between humans and AI. Today, that is not the case yet. And for us, we're going to be the layer of infra that empowers that interaction at a population scale. 1 billion people speaking to AI every single day on voice. That's our vision.
Well, Sudarshan, we'll leave it at that. Thank you so much for your time here today. We wish you the best with this venture, and we'll watch out for what you do next.
Thank you so much, Ritu. Thanks for having me.
On What's Brewing today, Amazon has announced 14,000 job cuts as it invests more in artificial intelligence. This amounts to 4% of its corporate workforce. Amazon says the cut will make the company leaner and less bureaucratic. Shilpa Ranipeta is here with all of those details. Shilpa, take us through what Amazon is saying.
Well, Amazon says that this is part of a larger effort to reduce bureaucracy, remove layers, and operate more leanly. But Andy Jassy's commentary from earlier this year makes it very clear that this move comes as the company looks to invest heavily in artificial intelligence across functions. Now, on the latest layoffs, communication to impacted employees will go out today. Now, in a letter to employees, Beth Galeti, Amazon's Senior Vice President for People, Experience and Technology, said that most impacted employees will be given
given 90 days to look for another job within Amazon, and those who don't find a new role or choose not to look for one will receive transition support. Now, in her letter, she also said that the world is changing quickly, calling this generation of AI the most transformative technology since the internet. And so Amazon, she said, needs to stay more organized with fewer layers. Now, the move also builds on what CEO Andy Jassy had outlined earlier this year in June, that Amazon is investing quite expansively in generative AI, calling it a once-in-a-lifetime technology. Jassy had said Amazon already has over 1,000 Gen AI applications in progress across business functions and is betting on AI agents as the next big leap, systems that can automate routine work. He had also alluded to having fewer managers, indicative of the potential job losses. Now, with this announcement, Amazon joins a list of other companies, including Meta and Microsoft, that also announced layoffs this year tied to AI-related restructuring. Back to you.
All right, Shilpa, thanks so much for joining in with that 14,000 job cuts at Amazon. We'll move on to the Investor Eye today, where we have a major call coming in from Bessemer Venture Partners. That is the Silicon Valley VC, which is back LinkedIn, Pinterest, and whatnot. They've just unveiled their AI services roadmap, projecting India's $264 billion IT sector to surge past $400 billion by 2030 as AI fundamentally transforms how the world outsources work. Now, this report argues that while legacy IT giants like TCS, Infosys, and Wipro remain resilient, a new generation of AI-first challengers are emerging in firms like Lena AI, Graph AI, and others that combine automation, data, and domain expertise to deliver outcomes at a fraction of the cost. Joining us now to unpack this, we have Nitin Kaimal, who is the COO and partner at Bessemer Venture Partners. Also with me is my colleague, Arundhati. Nitin, thanks very much for being here with us and welcome on the show. You're projecting the IT sector to reach $400 billion in the next few years. That's a big call. What's driving this kind of confidence amid the pricing pressure, the automation risks? And we just heard from our colleague, major job cuts linked to AI, at Amazon, for instance.
Hi, Ritu. Thank you for having me on the show. The confidence actually stems from the fact that, yes, you're right, there is currently short-term pricing pressure because of AI being used as a means for enterprises to say, hey, you're obviously getting productivity gains, and therefore can you pass on some of that to me? But according to us, if you look at it from a 5-10 year perspective, and if you look at how outsourcing has panned out, outsourcing started with the most basic activities like chatting or call centers, and then over a period of time progressed to much more complex activities, for instance, order to cash, procure to pay, and so on and so forth. It's been a slow, steady sort of trend where more and more of work done by large enterprises across the world has been offshored to, and India has been a big beneficiary of that. I think what's changed is with AI coming in, there is already, and it's early days yet, a big step change in the complexity of tasks that can be done either by software or with a combination of software and smart people. And therefore, a lot of things which are traditionally considered extremely difficult or complicated to outsource, which involves a lot of cross-functional coordination, it involves very complex problem solving, it involves interaction with multiple suppliers and customers. Gradually, as AI gets better, as AI tools get better, a lot of that we think can also be solved either by AI-first software or AI-enabled services, as we call it. And therefore, we think there'll be a big step change in outsourcing and software products, and Indian service companies, Indian software companies can be huge beneficiaries of that.
All right. Hi, Nitin. Arundhati stepping in here. In your report, you say AI won't kill IT services, but sort of reshape it, right? So what does that really mean for traditional outsourcing models?
The way we look at it is that all enterprises, so we've spoken to so many buyers across large enterprises, right? And all of them they are investors, their boards asking them questions on, hey, what are you doing to either improve revenue growth or improve your bottom line using AI tools? And therefore, there's an interesting sort of point in time opportunity where these enterprise buyers, these CXOs are, of course, used to working with all the legacy IT service providers, all the big names we know of. But they're actually saying, hey, I'm not going to put all my eggs in that basket. I know AI is new technology. The incumbents have a good shot at it. But I'm willing to experiment with cutting-edge founders, cutting-edge startups who also come to me with interesting demos, products, options, etc. Right? And therefore, they're actually putting material budgets aside, maybe it's 20-30% of their spend, to give a shot to these startups, right? To come and say, hey, like help us out, do it at one plant, do it with one customer. And if you do a great job, I'm ready to give you a lot more of my budget. So there is this tension that will play out between the incumbents and the startups. Whoever does a better job and is able to use AI better to sort of move KPIs or move sort of metrics that matter to clients, they are the ones who will grab this.
Well, Nitin, we're running out of time. So very, very briefly, you contrast the 1.5% R&D spend for IT services versus 20% for product companies. Are you betting that startups and not the incumbents will actually build the new AI platforms for services?
We think they are better positioned. That doesn't mean the incumbents will not do it. They're obviously going to try very hard. They have a very good shot at doing it as well. But this means a lot of IP creation. It means a very different kind of engineering talent. It means deep AI expertise. It needs nimbleness, responding to client feedback very quickly, iterating on the product. And from our experience, it's the nimble founders, the nimble startups who are best positioned to do this. It will nonetheless be a tough battle with the sort of large incumbent players, but we are sort of, we are very keen to back founders who are playing in the space and going up against these incumbents.
Sure, and global IT M&A spend has nearly doubled since 2022, right? So is consolidation the best survival play for incumbents?
I think consolidation is interesting. It obviously gives you operating leverage, but I think a lot of these players are will try to solve for M&A as a means to bridge this IP gap that I spoke about, right? So if you can't build it yourself, and if there's a great sort of founder-backed startup that has created some interesting AI-first technology, a lot of them are and will continue to evaluate, hey, can I go and acquire that? But in our experience, just acquiring a startup is just 10% of the answer, right? The 90% is then, can you maintain that ethos of a startup, the nimbleness, the agility, the customer centricity, the sort of R&D orientation, the investment. So it's a lot more than just doing a deal. Can you actually then take that IP and sort of actually monetize it well and maintain that same sort of performance culture? All of that is not so easy to do. And therefore, we think like a whole new generation of these, what are today's startups, will become sort of the next billion-dollar giants and challenge a lot of the incumbents.
That Nitin, that is the next question. What is going to be your call to investors? Who is the new emphasis of the AI era, so to speak?
Too early to say, Ritu. I think that will pan out over the next 4-5 years. Literally in every vertical and every horizontal that we are spending time on, there are anywhere between 30 to 50 startups trying to play an AI-first game and go head along and compete with the incumbents. Most of these startups are still in sort of the 1 million to 10, 15, 20, 30 million. So nowhere comparable to the giants of the industry. But the kind of growth that the top 5% among them who are really showing value to the clients, they're growing at 300, 400%, every 6 months, every 9 months, right? Because clients are happy, they give you a lot of business in sort of AI first cases, right? So very early to sort of give names, but I'm pretty sure as we speak, the seeds of those companies are being sown.
The seeds of those companies are being sown. All right, Nitin, thank you so much for taking time out and being here with us on Startup Street.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, Michejo Sports, a company which is building world-class facilities across the country, has raised $2.5 million in a pre-Series A funding round. Stay tuned as we speak with Maharishi Sridhar, the CEO of Michejo Sports, on the other side. Welcome back. You're still with us on Startup Street. On the hot seat, Michezo Sports, a Bengaluru-based company building world-class facilities across the country, has raised $2.5 million in a pre-Series A funding led by Center Court Capital and Rain Matter by Zerodha. The investment marks one of the first major venture capital bets in India's largely unorganized sports infrastructure sector, a key pillar in the country's ambition to host global events like the 2036 Olympics. Michezo has already delivered over 350 projects across India and now plans to expand into public-private partnerships and new infrastructure verticals. Joining me now to discuss the firm's growth plans is Maharishi Sridhar, the CEO of Michezo Sports. Maharishi, thank you so much for taking time out and being here with us on Startup Street. You know, Michezo is one among the first to formalize India's sports infrastructure sector, right? So if you could tell us what's the larger vision driving this mission and how do you sort of see it shaping the future of Indian sport?
Thank you for having me. The larger vision is to have a holistic sports infrastructure company where we are able to go forward and backward integration and get into manufacturing of sports surfaces, which is not there in the country as yet, and also go into trading even for smaller companies in the country to take it from there. But majority of it is to design, build, and maintain sports facilities for all the upcoming schools, universities, colleges, you know, even government, semi-government, everybody is starting to build sports in this country. It is basically to cater to all of that.
Sure, there is a larger focus on sports in India for sure. You know, you've raised this $2.5 million, right, in this pre-Series A round. How will this funding sort of help scale your operations and expand into infrastructure verticals across the country? And what are these other verticals that you're looking at now?
We're looking at a few verticals, which some of them have already kicked off. One is getting into the swimming pool division. We've always stayed away from pools, so now we will get into pools. We're getting into manufacturing. We're going to be the first manufacturing setup for sports surfaces and equipment. We will be getting into the GCC market, which is the Middle East. We've already set up our office there, and we are going to expand into that. And majority of it is team augmentation and other geographical areas.
So Middle East is what you're looking at. Any other geographies across international geographies that you're eyeing at this point for expansion?
Well, we have executed a project in a country called Benin in Africa. The idea, the immediate goal is to set up the one in Bahrain and cater to the Middle East market. And from there, slowly and organically move into other markets. The manufacturing will definitely help us move globally and start selling it to many other nations outside of India.
Sure. And, you know, you've already completed over 350 projects nationwide, right? Which categories or types of facilities like football, athletics, or racket sports are seeing the strongest demand right now?
Well, football is growing very, very big in India. Well, as a nation, there are pockets. The Northeast is very big into football. There are certain states which focus on athletics. But one of the biggest things we are seeing is sports arenas, which are, you know, multi-sport arenas of pickleball, paddle, badminton, football and cricket together. So these small arenas are the ones we are seeing grow probably the biggest. And that's probably also going to be the biggest advantage for people getting into sport, where it's available close to their home and they can go and learn some sport or the other.
Absolutely. There's a big boom in the pickle and paddle court arena for sure. Can you sort of share how the company's revenues have grown over the past few years and the kind of growth trajectory you're targeting post this fundraise? Also, what do you expect the revenue mix to be between the geographies?
Well, the company grew at 100% the first 3-4 years. We are looking at a growth of anywhere between 30 to 40% realistically over the next 4-5 years. We have an order book of about 100 crores, and we wish to grow that because our focus is always on order books. I see a lot of growth happening in the government spend. So that's why we've started our tender division this year. Government spends are going to be the largest, and we really, really need it. A city like Bangalore has one athletic track, so we definitely need a lot more of these.
Absolutely. And, you know, you preempted my next question. You've mentioned working with state governments through public-private partnerships. How crucial are these PPPs in making world-class sports infrastructures, you know, accessible to communities and schools? Like you said, Bangalore has just one athletic track. So how do you sort of plan to grow this through these PPPs?
So the thing is that some of them, the bigger ones in the government, are not going to be public, partnerships. They're going to be pretty much the spend by the government in stadiums and these large athletic tracks and football stadiums and all of that. But I think the PPP will come into these multi-sport facilities. And I really wish a lot of the other state governments also take a cue and start opening this up, because there is a lot of investment coming into sport and people wanting to go and play. So yes, the public-private partnership of multi-sport arenas is the one which is going to become big.
All right. And India's sports infrastructure sector is still largely unorganized. So how big is the opportunity here, and what gaps is Michezo uniquely positioned to fill?
The industry is very unorganized, and our goal, and my co-founders, what we bring in, they come from a background of being in Infosys and running large companies, is to professionalize this company, to professionalize this sector, and to make it even accessible for people to say that they can join an industry like sports infrastructure and build a career out of it. That's probably one of our biggest goals. But yes, the whole idea is to make it into an organized sector. I'm pretty sure the way sport is going and the way people have started playing sport in the country, even at an amateur level, it's only a matter of time before it happens. And my guess is maximum 5 to 10 years.
Maximum 5 to 10 years. You've built facilities that meet global standards from FIFA to World Athletics. How does that tie into India's broader sporting ambitions, including, a potential bid for the 2036 Olympics?
So India is definitely very, very capable of building these. We've been very lucky to be part of this project called the Dravid Center for Sports Excellence in Bangalore. And anybody walks into a project like that will be able to make out what we're capable of building in this country. And a lot of the Olympians train there. And we probably need 1,000 of these centers to get to that Olympics and perform and actually participate and win medals. I don't think it's about if it will happen, it's about when it will happen.
It's about when it will happen. All right, Rishi, thank you so much for taking time out and being here with us on Startup Street.
Thank you.
All right, on that note, we're going to wrap up this edition of Startup Street. Thanks very much for tuning in, but stay with CNBC-TV18. More news and updates will continue on the other side.
Welcome to Indianomics. We stick with banks. The ecosystem for banks is getting more dynamic. In the past 6 months, 2 foreign banks and 1 private equity have bought stakes in Indian banks for nearly 50,000 crore rupees. I'm referring to, of course, the NBD in RBL, SMBC Bank in Yes Bank, and Blackstone more recently in Federal. Separately, the Reserve Bank is removing old constraints on Indian banks. For the last 2 decades, Reserve Bank had insisted banks should only lend for capex, that is, create fresh assets, not to help corporates buy one another's assets. Now the Reserve Bank has announced draft rules allowing banks to do acquisition financing. More generally, ECB financing rules have also been eased. Does all this mean more business for banks and more competition? Will more foreign banks be attracted to India? Joining me to discuss whether we are on the threshold of a brave new banking in India, or at least an inflection point in Indian banking, are 2 veterans, Zareen Darwala, former CEO and Managing Director of Standard Chartered Bank, and Srini Varadarajan, another veteran banker who has done stints in Axis, as DMD. Before that in ICICI, where he probably worked with Zareen and was in the capital markets division along with JP Morgan. Zareen and Srini, thank you very much indeed for your time. Zareen, for starters, we saw Stanchart and Citi actually reduce their, businesses in India. But now we have two banks from different geographies, Japan and Middle East, coming in to buy huge stakes in small Indian banks. Will we see more of this?
So first of all, Lata, I don't think Stanchart reduced its business in India. I'll clarify.
Okay.
It globally decided to exit unsecured lending, and that was a global decision. Otherwise, very much a large presence.
Okay.
Coming to, after SMBC and NBD, will more foreign banks buy? Yes, absolutely. I feel banking is a good barometer for the Indian economy, and we will see a lot of the smaller private sector banks which need more capital, certainly looking at this optionality. Also, I think the segment that we will see more attention coming in a few years is the small finance banks. Clearly, there will be some consolidation that may come through in that segment. And I think the last 2-3 deals are also a sort of reflection of the good geopolitical relationships in India-Japan corridor, UAE-India corridor, and the whole business momentum in these corridors will pick up, which will help these banks in their business in India. And I feel there'll be a trickle of strategic stakes, not a flood.
Oh, okay, trickle. Well, a similar question to you, Srini. On the one hand is the foreign interest, which of course will have to go through this voting rights issue as well. But separately, how many Indian promoters will be willing, sellers or... I'm only referring to banks now. Will they be willing to give up a strategic stake to banks?
Yeah, I think if you look at the shareholding of banks and what RBI tries to achieve is to have a diversified shareholding. And to that extent, you do not have any large shareholder as such in a bank, other than barring a couple of banks right now. So the opportunity for someone to take, and therefore most of these banks are professionally run. And therefore the opportunity for a financial investor or a strategic investor to come in and take a reasonably large chunk, which is broadly around 10%, and in some cases, as we're seeing, where RBI is slightly more liberal to more strategic stake, where a controlling stake is also happening. I think it's possible, but I don't think so there's any sponsor looking to sell. It is just banks clearly have need for capital, and that capital requirements can be met through incremental issuance to existing investors and domestic investors. But again, if there is strategic comes in and they believe have deep pockets, I think it's useful for the bank from a growth point of view to try and get those investors on board. And I think that's what we're seeing that's happening.
Okay. Well, Yes and RBL Yes has the advantage of being a digital bank. It's a new bank. And RBL has reasonable branches, not many. But, will the ROI be justified for, any global bank? Srini, you go first on that.
Yeah, I think if you look at the geographies from which these investments are coming from, I think these are really cash-rich geographies, and they are seeking long-term investment, and the threshold returns which possibly they're expecting is more related to the growth in these entities rather than actual return on equity, which possibly will happen over a period of time. It gives them access to a market and customers which continue to grow, and the visibility of growth is very high. And they will ride the wave through the cycles. And I think that's the way I think both the RBL and the Yes transactions have happened. In Federal Bank, I think it's more a financial transaction. I think it's a good, well-run bank, and therefore nothing changes from the way the bank runs, and it's a financial investor coming on board.
Yes, it's only a private equity. It's not a bank. But Zareen, you said that you don't see a flood but a trickle. It is a long way to build a retail interest in Indian banks. And the giants are already there. The top 5 banks are really big in India. So is that what is making you a little skeptical that foreign capital may not rush in?
No, I think the number of entities which are available or platforms is not that many for a foreign bank to come and, if you take the next tier of banks, they are quite small, some of them like Karnataka, Karur Vyasa, right?
Yeah.
And it's quite possible that some of those entities may not be very exciting for foreign banks.
Okay.
While RBL and Yes were much bigger banks, in the Indian scheme of things. Having said that, if a bank is very keen to have a ready-made platform, then yes, it provides a ready-made platform. But then culture-wise, it becomes a challenge for the foreign bank also sometimes, to sort of revitalize the culture, which is suited to global aspirations.
Yeah, I think in Federal Bank, the advantage was that they got a Stand Chart banker for a good 15 years. And then perhaps even now, it's only a private equity capital. Okay, Srini, time permitting, I'll return to this. But basically, you also agree that there could be a flood of capital.
I agree with Zareen. There's got to be no flood of capital. I think the thing is the visibility of growth is there, and therefore people are interested to invest for the long term or strategic perspective.
So more private equity than banks?
But as you said, I think the return expectations need to be moderate. I don't think so you can expect exciting returns or blockbuster returns from these things in a 3 to 5 year period. It's a long haul. I think foreign banks have struggled in the Indian context, as you said. The top Indian banks have given the foreign banks a run of their money, and clearly building a business here, both wholesale and corporate, both wholesale and retail, has not been easy for foreign banks. So I think it's more having a foothold in a market which is growing and trying to find your way rather than trying to say, I'm going to get exciting returns here.
Okay. Fine. Time permitting, I'll return to this. The bigger, excitement for the entire Indian banking sector is the draft rules on providing money for acquisitions. Until now, banks could not do that. They will start from April 2026. Now, the rules are that the banks have to, the limit is 10% of their tier 1 capital for the entire banking system. That comes to about 4 to 5 trillion rupees, not a small amount. And the rules also are that it should be a profit-making bank. It should be a profit-making company whom they are financing, listed and profit-making for 3 years. Zareen, is this opening up a big line of business for Indian banks?
I would say it is definitely a segment which for many years has been close to Indian banks. And to a large extent, most of the M&As were getting funded from FPI or NBFC or AIFs. To that extent, it's clearly an area of opportunity for Indian banks to sort of step in. Having said that, as you rightly said, there are boundary conditions like debt equity ratio of 70-30. Similarly, the acquiring company has to be a listed entity. So there are boundary conditions, and also it eats into the CME exposure of banks, which is not a big headroom that banks have. A lot of banks have, CME exposure is sort of not that much headroom is available. To that extent, it is a new area and it's an opportunity for Indian banks.
Okay. Your thoughts, Srini? It's not just these constraints. Also, as Zareen pointed out, the overall 40% of Tier 1 remains as a cap for all capital market exposure. Will banks be interested? Banks have not shown much penchant for corporate lending itself.
Yeah, I agree that I think, again, here also one should moderate the excitement in terms of what investors and outside stakeholders think about what the RBI regulations will achieve as far as the banking sector is concerned. If you look at the tier 1 equity of banks, broadly it's around 25 lakh crores. So if you look at 10% of that, it's about 2.5 to 3 lakh crores is what you will get.
Okay.
This is a limit which is not going to increase over the next at least 3 to 5 years. And if you look at any bank, I don't think so they're going to achieve 10% in 1 year. So if you assume they're going to achieve this 10% over 3 to 5 years, and you're talking about 50,000 crores. Okay. And similarly, as you said, that ICICI, HDFC Bank and SBI are almost 45 to 50% of the banking sector net worth. Yeah. So almost if you're 2.5 lakh crores, 1.25 lakh crores is with these guys. So the whole thing is, if one of these guys don't show much interest because other capital market exposures offer them much better returns, the amount of banks financing which can happen for this is much lower. So I would think it's a window which is open for exception trades to happen, meaning some trades will go through where listed entities which are acquiring good targets, I think, and highly rated will get financing. But to believe that every acquisition is going to be financed by banks, I think it's far away. I don't think so. Business of NBFCs and IIFs are anyway going to be affected by this. I think they play in a different segment. Sponsor financing is a big part of that. And any acquisition debt, typically good corporates find a way to finance it through entities which offer almost slightly higher than debt financing rate. So sponsor financing is unaffected, and I think banks will slowly scale up. So I don't think so. One should expect immediate growth from this. It will be a good start.
Okay. Well, thanks for pouring some cold water into, enthusiasm of the naive. Zareen, what's your take on this? Would you say that, this 3-year listing and 3-year profit should go? I mean, that will reduce the terrain so much. Do these guys, 3 years profit making and listed stocks, even want bank money?
No, so I think, sorry, I didn't get your question.
No, see, the rules are that you can finance acquisition only if the acquirer is a listed company and has 3 years of profit-making record. Such people will not even want money. No, they will have their own money. So do you think this is too restricting a qualification?
I think most M&As, there is some funding because even if a company has surplus cash flow, they may have commitments for capex, etc. So they do come to the market. There are very few who are zero debt companies, like the tech companies or some of the MNCs who don't come for borrowing. So to that extent, I would say even if they're listed and they're profit making, they will access bank finance, stroke NBFC finance for acquisitions.
Okay. Well, I'm not done with my questions. There is another set of
Lata, I just want to add one thing. I think the way I'm looking at how RBI has changed its mindset here is that till now you are trying to tighten NBFC regulations to make it on par with banks. Now it's happening the other way, where RBI is saying, I will relax banking regulations to make it on par with NBFCs. So that process is starting, where you're trying to level the playing field. You level the playing field from one side. Now you're saying from the other side, I will level it.
Okay.
So we get to somewhere in between.
Okay, that is actually a headline. Yeah, Zareen?
I'd just like to say that what Srini said, this is a new lane which is created, not an autobahn.
Oh, that's a nice metaphor. It is only a lane that has been opened and not an autobahn for Indian banks. Point taken. Well, I have more questions for both of you on the ECB rules that have been relaxed and whether that opens up an autobahn. Those questions after the break. Welcome back to Indianomics. We have been discussing the many changes to the Indian banking space with two veteran bankers, Zareen Darwala, formerly of Standard Chartered Bank, and Srini Varadarajan, formerly of Axis, and before that with ICICI as well. Srini, Zareen, thank you very much for your patience. I want to also discuss the ECB rules which have been relaxed. Primarily, companies wanting to take over can now raise foreign capital for foreign loans, for buying up Indian companies. Also, there are no price restrictions. Absolutely no price restrictions. You can raise the loan at any price, and you can raise it for shorter terms, 3 years, and not necessarily 5 to 10 years, which were the older rules. Again, draft rules. Well, Zareen, do you see this as... Now, this is more an India Inc. question. Do you think this will be resorted to a great deal?
Yes, I think it's a great development. See, the minimum tenure was a constraint. So being from a foreign bank, I can share that clients would prefer to borrow rupee because they could prepay anytime. Minimum tenure of 5 years, average maturity, was something that clients were saying, listen, if I have a surplus, then I'll not be able to prepay. You can prepay, but with RBI approval. So there was a procedural leg to it. The other, I think, very important thing that is there is the cap on the interest rate.
Yes.
Actually, enables triple B rated kind of corporates also to access the bond market, for example, globally. It enables A minus kind of companies also to access the global markets in a different form. It may not come through ECB, but maybe a dollar bond. So those kinds of flexibilities are certainly there. Also, allowing companies to borrow more than $750 million, which is $1 billion or 3x their net worth, that also enables the large corporate conglomerates to also go and access the dollar market when the pricing is attractive. So there are multiple things. And then the end use restrictions, which is, now you can use it for general corporate purpose.
You can use it for real estate development, which was clearly not allowed previously.
I think the real estate, again, a very, very good development for the builders because they have to pay for the FSI, floor space index. And, that used to be extremely expensive. They could borrow from the NBFCs or from private credit. Private credit rates were 16, 18%. Better rated builders will be able to access ECBs for the floor space index. So that's a really good development for the real estate sector also.
Okay. Srini, your thoughts? Do you think together, with both ECB relaxations and bank financing permissions given, at least an initial okay, banks with foreign branches will be at an advantage? Is the complex of rules good for banks and India Inc.?
No, I think first looking at the banks, I think it's good for foreign banks. I don't think so. Indian banks will participate.
What Indian banks with lots of foreign branches like BOB, SBI?
I think the NIMs are so low. If you look at they are triple B entities and they borrow dollar money at almost close to rates which India Inc. will also borrow in terms of when they are triple B or double B. Okay. So the NIMs on these transactions for Indian banks is going to be very well. So therefore, that's why you don't see Indian banks expanding actually dollar balance sheets as much. And if you see that as a percentage of their global balance sheet, I think offshore balance sheet is not growing as much, will not be growing because the NIMs offshore assets are much lower. So therefore, I would think it's, as Zareen was saying, it all helps for India Inc., gives them more flexibility in diversifying their sources of finance and gives foreign banks an opportunity to lend to them at good rates. So I would think it's a big plus for foreign banks. I don't think it's as much a gift for Indian banks as much as foreign banks.
But certainly for India Inc.
India Inc. it benefits. I think you should look at ECBs as diversifying sources of finance. If you look at guys who are borrowing ECBs, are primarily NBFCs over the last few years, where they need all the money they can get, whether it's ECBs, whether it's bilateral loans, club loans, whether it's bonds. I think they've been big borrowers. Otherwise, people who have dollar earnings, I think, are the ones who access ECBs because cost of funds becomes lower. Otherwise, for people who have a pure rupee P&L with revenues and costs in rupees, rupee financing has been cheaper, and you would resort to ECBs only when rupee financing is not available to the extent you need. And therefore, things don't change much for them. Okay. So it's mainly for people who want to diversify away from Indian sources of finance, as well as access banks who otherwise are not here.
Okay. Well, winding up thoughts from both of you and pluses and minuses, I would like to hear from you. Zareen, is this a sea change in regulatory attitude? Will we see an inflection point for banking business? First, the positives.
I think it's very positive because it opens up a gamut of areas where you can sort of bring ECBs, InvITs, REITs, which hitherto were not able to borrow. So I think the whole spectrum of industries and borrowers is really widened. Secondly, it allows, if you read the guideline, it even allows an NRI to lend. Yes. So, it's really opening up from the borrower side and the lender side, a whole new segment of people who can come to the market. Just one thing I wanted to mention, that for foreign banks, while the cost of funds is low, but the India risk-weighted assets becomes higher. So for example, a foreign bank where the parent is, say, AA rated, actually India becomes triple B. Okay. And to that extent, the risk weight at the parent level is higher.
It's going up, yeah.
Premium that you need, while your cost of funds may be low, your risk premium that you need for lending to an Indian corporate is always higher. that extent, the Indian banks also, for Indian banks, a AA corporate will be, the spread will be much lesser than for a foreign bank lending to a AA rated corporate, because the risk premium is higher.
Okay, so you'll be able to keep lower risk weights compared to the foreign bank. Srini, I wanted your opinion on the entire complex. In the last 6 months, several things have happened. More foreign interest in Indian banks, acquisition finance, ECB. Your comment on the whole thing, and also the negative. You know, foreign banks did worry when we had the last financial crisis. So, you know, should the Reserve Bank and the authorities be a little wary? Like, you know, will we see through the downturn as well?
No, I think this is a good start. I don't believe this is any inflection point. This is just testing the waters, I would believe. I think I would believe that the banks have learned a lot over the last 10 years in terms of the cycle they've gone through. Banks have been a lot more risk averse than what possibly even the regulators anticipate. So that's why you see corporate lending, in spite of the cycle having fully played out, I don't see much pickup in corporate credit. So the thing is that banks will be tipping their toes, not jumping in. This is just a starting point, not necessarily inflection point, which shows bank credit growth just sort of skyrocket from say a single digit level. So I would think it's a good starting point, but banks will be cautious. Banks will take their time in terms of trying to build their own risk management capabilities as far as these are concerned. The last thing they would want is to repeat of the previous cycle. And therefore, I believe that it'll be a slow turn up. And as I said, I think the idea is that banks are better credit intermediaries than NBFCs. NBFCs have been growing faster. And I think the ability that and the sort of progress banks have made, capabilities they have, I think gives RBI the confidence that they can, to some extent, go into areas which have been sort of explored by NBFCs before. And that confidence is what is reflected in the sort of regulations.
Got it.
So I wouldn't say negative. I think from the capital market perspective, the only thing is, I would still think on the retail side, when there's a bit of exuberance, whether timing is something which could have been different. That's the only thing I'm tentative about.
Thank you very much, Srini and Zareen, for joining me and helping us understand these changes. We wrap up on economics. On that note, more news and headlines await you.
If you are trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's was written from here. So I think these are things that one would remember always.
कौन इस मकान में अपना घर बसाता है? हर घर चुपचाप से ये कहता है कि अंदर इसमें कौन रहता है?
India is a funny country. Numbers don't show you everything. There is a heart and the number which has to be matched.
The heart of incredible India, Madhya Pradesh.
What is the story behind this mustache?
Number one story is that I keep with the times, so it's totally organic.
Do you feel कि यार बस हो गया अभी नहीं कर सकते?
Why am I thinking of leaving? Otherwise I should leave. It's my place.
नया सेंटर शॉक च्युइंग गम हिला के रख दे.
I think I get it from the people of India. I see so much of energy around me. I think it's just one life, Shireen, and let's make the most of it.
on life and make the most of it. This is Remembering Piyush Pandey, a special show where we pay our tributes to a creative genius, a cultural storyteller, a visionary who changed the grammar, the soul of Indian advertising, and more importantly, believed that advertisements must touch hearts and souls. Padma Shri Piyush Pandey, the iconic ad filmmaker, passed away earlier this morning at the age of 70. Born in Jaipur in 1955, he began his journey far from the boardrooms of big agencies. In fact, he dabbled in cricket, under 22 in Rajasthan, tea tasting and even construction before finding his true calling. In 1982, as a 27-year-old, he joined Ogilvy India, and over the next